session. A 24-point uptick is what the implied open is currently suggesting, and it's a slight recovery as well, because the implied open at the start in the first ticks was in the negative, and it's still building on to those gains. But to set you up for today's trade, our research team is here with the trade setup, the stocks that are likely to be in the news, and cues from the F&O market as well. First up, Gaurav joins in to get all the market cues that we need to watch out for. Gaurav, good morning. What are you watching out for today?
Well, yes, yesterday when we look at Nifty, we have seen actually some shade of green in Nifty. It increased almost by 0.3%, so a marginal increase. But apart from that, even if we look at the options data and the option chain, which suggests that Nifty can actually turn green today as well. So if we look at the support level, 25,500 will act as a support, and at the same time resistance will be seen somewhere in the range of 25,700 for Nifty. Apart from that, today is also Nifty expiry, so definitely let's watch out on how it is going to perform. Other than that, when we look at sectors, yesterday we saw Nifty IT and Nifty Pharma were the biggest gainers. So let's see if there is some just left in these sectors, or if some other sectors will take over and these sector will take a back seat. When we look at the DI data, we have already seen DI have been advancing. They added positions worth 5,800 crores, and versus when we look at FIIs, they sold position worth around 4,000 crores yesterday. But apart from that, we also have some key results today. First, let's begin with Tata Power. Then we have Biocon, Fortis Healthcare, GMR Power, Jupiter Wagon. All of these numbers, all of these companies actually react on the numbers. When we look at National Fertilizers, Rides, Thermax, all these companies will report their results today. Apart from that, from the IPO space, we have Pine Labs IPO. Today is the last day for subscription. Remember, this IPO is still struggling to get that fully subscription mark. And at the same time, PhysicsWallah IPO will also begin today. From the Asian markets, we've already seen some green signs. US market is not showing any strong signs as so far. And when we look at Gift Nifty, it indicates some kind of shade of green in the opening today.
We'll watch out for all of these cues. Gaurav, thank you for that. Over to Vinny now, who would list out the stocks that you need to keep an eye out for. Vinny, good morning. What's on your list?
Good morning. So firstly, I'll start with Bajaj Finance. In terms of numbers, overall an inline set of numbers that came in from the company. But the concern that comes in is the management has cut the AUM growth guidance from 24-25% to 22-23%. NII is 22% growth, gross NPA at 1.24%. So a bit of a deterioration that we have seen in the asset quality. Keep an eye on that, because the net NPA is also at 0.60% versus 0.5% last quarter. Bajaj Consumers, on the other hand, good set of numbers, strong performance that's coming from the company. Whether you look at the revenue growth, strong growth of around 13%, profit growth of 33%, and margins have seen a very strong expansion as well, 17.8% versus just 13.9%, almost near a 16-quarter high in terms of the margins. Bangladesh revenue also has managed to see a decent amount of pickup there as well, high single-digit revenue growth in terms of the Bangladesh side of business as well. Good performance there. Now, Gopal Snacks, on the other hand, a weak set of numbers. Revenue seen a decline of almost 7%. Profits are down for the company as well, and margins have seen a sharp contraction of more than 500 basis points. So let's watch out for that one. Sirma SGS, revenue growth good over there, 38% revenue growth. Margins have seen an expansion, so operating performance has been very good as well, and profitability also seeing a very, very strong and sharp jump up there. Sula Vineyards, on the other hand, again a bit of a muted performance that's coming from the company. Revenue is down almost 1%. Profits of the company are down by 58%, and margins also have seen a sharp contraction of around more than 500 basis points. Gujarat Gas, weak performance there as well. Profits are down, revenues are down as well, and margins also have seen a contraction. Vodafone Idea, largely in line, but that is mostly reacting to what the government does. But margins 41.9%, they've remained flattish on a quarter-on-quarter basis. Growth in terms of revenue at 1.6%. And Britannia is another one we're keeping an eye out on. Varun Berry has resigned as the MD and CEO with effect from November 10th, so keep an eye out on that one. And Rakshit will take over as the MD and CEO with effect from 15th of December. Tata Motors, also keep an eye out on that. Listing date for Tata Motors CV is going to be 12th of November.
Vinny, thank you for sharing all of those stocks with us. Lastly, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. Came off the highs in yesterday's trading session, but what is the F&O data indicating?
So today it's a weekly expiry day. We might see a bit of volatility, but as far as options data or F&O data is concerned, it's indicating that we might have another day of positive move. And for Nifty, range is likely to be between 25,400 to 25,700. Global cues are also looking largely positive. We have seen a big move in on the Wall Street. All the frontline indices had seen a big move. Nasdaq had moved higher by almost as much as 300 points. And now also there is a positive commentary coming in from US President Donald Trump, who has talked about India trade deal and saying that we are very close to the deal. Let's see what happens over the next few weeks. As far as the flows are concerned, yesterday also we have seen that FI is selling more than rupees 4,000 crore, while DI is sitting on the buy side. Yesterday also they have bought almost 6,000 crore. In the index futures too, FIs have sold almost 1,000 crore and they have added more short positions, but the quantum was less than the previous day. Yesterday it was almost 14,000 contracts. Yesterday just around it was 5,000 contracts. From the options data, 25,650 call has seen an increase in the premium, while on the put side, 25,500 put has seen a fall in the premium from the level of 73 to the level around 20. Now, support for Nifty, immediate support would be around 25,500. If we fail to hold that, the next support comes around 25,400. Resistance, 25,660. It's also 20-day moving average. For Nifty Bank support, 57,650. First resistance, 58,100. Next resistance comes near record high. Three stocks, LIC is seeing fresh shorts, BHEL and Hinz are seeing fresh longs.
Sudarshan, thank you for that update. And the other one on your radar that should be on your radar later in the day is Britannia, and that's because Varun Berry has resigned as the Vice Chairman and Managing Director with 4 years left in his tenure. Shilpa joins in with more on this. Shilpa, take us through the company's succession plan.
Well, it is a surprise move that Varun Berry has resigned as the Executive Vice Chairman, Managing Director and CEO of Britannia. Now, the board has approved a waiver of his notice period and he will be relieved with effect from the close of business hours of today, which is the 10th of November. Now, this is despite the fact that Berry had offered to serve his notice period as per his contract in the resignation letter that he had written to Mr. Nusliwadia. Now, meanwhile, the board has appointed Rakshit Hargave as the CEO and now also the MD of Britannia with effect from the 15th of December. Remember, Britannia had announced Rakshit Hargave's appointment as CEO and Executive Director on the 5th of November, and he joins the company from Birla Opus. Now, talking about Varun Berry had joined Britannia as COO in 2013 and he took over as the Managing Director in 2014, and during his tenure, Britannia's stock rose more than 24 times and its revenues grew nearly tenfold, and it cemented its position as India's leading biscuit maker, and he's credited for a lot of innovation and consistent volume growth. And if you remember, under his leadership, Britannia also diversified its portfolio beyond just biscuits. It successfully launched a whole variety of products and new categories such as wafers, croissants, milkshakes, cheese, with a lot of new brand launches as well. Now, till Rakshit joins Britannia as on the 15th of December, Britannia's CFO Natarajan Venkatraman will take charge as the interim CEO with immediate effect, but the MD position that will remain vacant till Rakshit joins on the 15th of December. And this is still ahead of notice because Varun Berry's term was set to actually end on the 31st of March 2029. So he has resigned well before, and till Rakshit joins on the 15th of December, the CFO will take over as the CEO, but the MD post will remain vacant. Back to you.
Shilpa, thank you for that update. Keep an eye out on Britannia in today's session. Take a short break, get you all the latest updates from the White House in our special segment, Trump Watch, on the other side. Stay tuned. Welcome back. Now getting you the latest on Donald Trump related developments. Dia joins in for our special segment, Trump Watch.
US President Donald Trump says Washington is pretty close to finalizing a trade deal with India. He added that the US would at some point look at reducing tariffs on Indian goods, calling the potential deal good for everybody. Listen in.
Well, right now the tariffs are very high on India because of the Russian oil, and they've stopped doing the Russian oil. It's been reduced very substantially. Yeah, we're going to be bringing the tariffs down. You know, we're making a deal with India, a much different deal than we had in the past. So right now they don't love me, but they'll love us. Again, we're getting a fair deal, just a fair trade deal. We had pretty unfair trade deals. They're very good negotiators, sir. Just you have to take a look at that, if you would, please. But we're getting close, Scott. I think we're pretty close to doing a deal that's good for everybody, right?
Meanwhile, the White House has thrown its weight behind a bipartisan agreement to end the U.S. government shutdown. Officials say President Trump has wanted the government reopened since the very start and sees the deal as a positive development. Calling it a very good compromise, Trump praised the agreement to end what has now become the longest ever shutdown, stretching beyond 40 days. Moving on to the conflict in West Asia, U.S. mediator Jared Kushner and Israeli Prime Minister Benjamin Netanyahu met on Monday to discuss the second phase of the Gaza ceasefire. This comes as Washington is intensifying efforts to ensure the truce holds. And lastly, in a diplomatic moment, Syria's President Ahmed al-Shara met Donald Trump at the White House on Monday in unprecedented talks, just days after Washington removed him from its terrorism blacklist. That's all for today. Now back to you.
Dia, thank you for that update. And major indices on Wall Street closed higher last night after Senate lawmakers took a critical step towards a potential deal to end the historic U.S. government shutdown. The Dow Jones gained nearly 400 points. The S&P 500 was up over 1.5%, and the Nasdaq was an outperformer, gaining over 500 points. Nvidia, Broadcom, and other AI stocks led the gains after dragging the broader markets lower last week on concerns over elevated valuations in that segment. Shifting focus, Jefferies' David Zervo spoke about the concerns about the labour market and added that the current cycle is driven by productivity and not the labour market. Listen in.
What I have a little worry about is labor, and I'm seeing cracks. I think we're all seeing some cracks, the Challenger data, but also just the confidence. People are getting inundated with statements every day about AI taking jobs, and people are looking at that and getting a little nervous. And I don't know when that feeds into the consumer. The consumer's been okay. But I think, I really hope the Fed takes notice of that and starts to put a little bit more weight on what's happening in these labor markets that have been weaker and got revised in the last 2 or 3 months, significantly weaker. Remember, we've revised away almost 1.5 million jobs that we thought were created in 2024 and the beginning of 2025. This is not a strong labor market driven growth. This is a productivity story.
Take a short break here on Power Breakfast. Cues from the commodities market on the other side. Stay tuned. Welcome back, and now moving on to the latest from the news from the heart of Delhi. At least 8 people have been killed in a car explosion near the Red Fort. While it is not yet clear what caused the explosion, security has been stepped up across Delhi and other parts of the country, which remain on high alert. Home Minister Amit Shah has promised an in-depth probe into the incident, and Prime Minister Narendra Modi and the President Draupadi Murmu have expressed grief over the loss of lives. Abhimanyu is joining us now for more details on the same. Abhimanyu, tell us, what are you picking up as the latest update?
Well, for now, all the roads to the blast site, they have been cordoned off, and vehicles are also being stopped at several areas, and vehicular movement has been subjected to checking, and there have been diversions, traffic diversions since last night itself. The road we are standing on right now is otherwise a thoroughfare, but we see barricades which have been kept out here. There's also a parallel road where barricades have also been installed. So the entire area has been cordoned off, even as specialized teams had already reached the site last night, and still investigation is underway to ascertain the cause of the blast and to find out more about the details. The injured, meanwhile, are being rendered treatment in LNJP hospital, and the government, through several functionaries, had already reached out to the injured, to the families of the injured, to the families of the deceased, and investigation is still underway as far as the entire incident is concerned. But most of the areas around the blast site, all the roads leading to the blast site, continue to remain cordoned off, and more updates are likely to come in from the Delhi police and from the government as the time progresses, even as the investigation is still underway.
Abhimanyu, thank you for that update. Let's also listen in to Home Minister Amit Shah speaking after visiting the hospital last evening.
करीब करीब शाम को 7 बजे हुंडई i20 कार में एक ब्लास्ट हुआ है, और ब्लास्ट के कारण कार और कार के आसपास की 3-4 व्हीकल और खड़े हुए लोग, ऑटो में बैठे हुए लोग इंजर्ड भी हुए हैं और कुछ मृत्यु भी हुई है। अस्पताल के सूत्रों के अनुसार अब तक 8 लोगों की मृत्यु हो चुकी है। कुछ लोग इंजर्ड हैं, इनका इलाज यहां पर चल रहा है। हम सभी एंगल को खुला रखते हुए इसकी गहन जांच शुरू कर दी है। जैसे ही ब्लास्ट की सूचना मिली, दिल्ली पुलिस स्पेशल सेल, क्राइम ब्रांच, एनआईए की टीम, एसपीजी की टीम, एफएसएल की टीम मौके पर पहुंच गई है, और सभी प्रकार की जांच हम तेजी से कर रहे हैं।
And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Well, I'm looking at the precious metals hormones, because that is the area that clearly seems to be buzzing after consolidation that we've seen in the last couple of months now. The gold and silver prices have gained up anywhere between 2 to 4% overnight. This is because the US dollar index has seen a decline. Markets also reacting to the weak US data, whether it has been about the consumer sentiment, which is the second lowest reading on record, or the U.S. jobs layoffs, which have surged to the highest in 20 years, now growing expectations of a Fed rate cut in the month of December. So we are back above 4,100 for gold and back above $50 an ounce for silver prices, making very strong gains in the first half of the November month as well. But the gains also have come in for copper, where markets are looking at 1-week highs onto this one, even as the historic U.S. government shutdown may soon end, but the markets are looking at lower productions continuing to support copper prices.
Manisha, thank you for that update. And the second and the final phase of polling of the Bihar Assembly elections is currently underway. It will see 1,300 candidates, including several state ministers, contesting across 122 seats. Around 37 million voters are eligible to cast their votes at over 45,000 polling stations, most of them in rural areas. The first phase on the 6th of November recorded a turnout of 65.08%, which the Election Commission termed a historic high. The key districts voting in this phase include several along the Nepal border. The phase is crucial for both the NDA and the India bloc. We take your leave on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for this weekly options expiry trading session.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with me, my colleagues Surabhi and Nigel. And before I sort of toss it across to my colleagues, just want to say that the blast in Delhi, the blast near Red Fort in the national capital, 8 confirmed casualties, and of course, a number of people injured. Our hearts go out to the families, hoping for a speedy recovery to those who were injured in those blasts. As we understand it, of course, investigations are still underway in terms of what really was the cause behind it. We'll keep you up to date in terms of, what really comes out of it. But very, very, terrible tragedy, really, absolutely unexpected, happened yesterday evening. Guys, hi.
Absolutely, Prashant. Thoughts and prayers go out to the families of all those who've been affected, and we hope that there is a conclusion to investigations and clarity emerges in a speedy manner. And our best wishes, of course, to those who are also injured. So starting with that somber note this morning, and more on this as we go along.
That's right. Heartbreaking visuals there coming up for you on the screen. Prayers and support to all our brothers and sisters in the capital. Need to, stay strong, and our investigative agencies will try to pull out, all the required information. But really heartbreaking scenes out there.
All right, absolutely. And I think, as I said, we will have our reporters there, and we'll get you some live updates in terms of what's happening at this point in time as we go along. But, to take it to the markets now, sort of pivoting to what happened overnight, and of course, what's the scene like this morning. Strong rebound, by the way, in U.S. equities. S&P 1.5% higher. NASDAQ was up about 2%. So this is a very strong rebound, actually, if anything. There was no major macro news flow. The only, of course, thing was that the weekend progress, which was about ending the government shutdown. The Senate has voted in favor. It's moved on to the House. And of course, betting markets, etc., are all hoping that the government will reopen by the middle of November. Actually, which is now, right? Now, this is the best one-day rally in the NASDAQ since May. The NASDAQ was down 5% last week, and it went up nearly 2.5% yesterday. Nvidia up 6%. Names like Palantir up about 8.5% if you can move the graphics along. And there you go on your screen. And I'm mentioning these two names, Nvidia and Palantir, because these are the names which took the largest knocks. Nvidia had lost about $500 billion in market capitalization, yesterday. The thing is, and I said this yesterday as well, a lot of skepticism around the return on investment on AI and whether this is a bubble, etc. There are two things on the other side, two arguments on the other side. One, of course, is the fact that you've got the breadth of earnings beat across corporate America, which is very, very strong, the strongest since 2021. And this is not just limited to Magnificent Seven companies. And point number two, you got an environment where the Fed is expected to perhaps ease more in December. We got a cut last. There is there are perhaps noises and a bit of a turn towards fiscal expansion as well. So those are not conditions for the end of any bull market, but we'll have to keep an eye. Now, reports that Apple, and just to continue with that tech bit, reports that Apple is going to delay release of next year's version of the iPhone Air, and this was reported by a publication, and the reason being cited is that the first edition did not do all that well, so they want to postpone the next version. In terms of the semiconductor ecosystem, AMD, which is the large player, is going to host its Analyst Day in New York later tonight. And I think this will be important for no other reason but just to kind of, as investors, try to gauge the strength, the sustenance of this big spend towards building out AI infrastructure. The 10-year macro markets, nothing very much, 2 basis points higher. Oil was up about 0.7. We're at about $64 on Brent. Later today, bond markets are closed. And this is the Veterans Day holiday. Cash bond markets are closed. But equities, etc., are trading. Before I get to levels, just one more thing. Today, of course, locally speaking, in terms of queues, it's the last phase of voting as far as Bihar state elections are concerned, which means that later today, by about 6:30, 7 o'clock, you'll have exit polls, which will come, and we will put out those exit polls as well. And I think that'll be interesting and important at the margin if those exit polls were to show something very unexpected. Markets, of course, are are expecting the incumbents to come back to power. So those are visuals. So today is the last phase, and the exit polls come out later today. The election results, the final results, are on the 14th. Something to track later today. Now, just to tie in the levels here, Nifty, of course, is breaking out of a falling channel, a downward sloping falling channel. We nearly hit the 20-day moving average. We fell short by about 4 or 5 points. So the 20-day is 25,658. The high was 25,653 yesterday. So that's the first level. We're almost there, but very near-term levels. And then, of course, 25,800 is the next resistance level, near-term. Support stands at the swing low of 25,318. Bank Nifty near-term target is 58,300, which is basically where a bunch of highs are bunched up together. And support is a 20-day moving average, which is 57,665, and then the low of 57,157. All very close by, within 1.5–2% for both the Nifty and the Nifty Bank as we put those levels out. GIFT Nifty gives you a quick sense of how we're likely to start, and we'll look at more things. So 30 points higher on the GIFT Nifty. What's the F&O stats and the positioning looking like? Nigel is standing by with exactly that. Nigel, over to you.
Well, the two big cues that we're going to be tracking from here on the global front is going to be the India-US trade deal. So all eyes on that. You got some sound bites overnight, but hard to get a direction on that front. And the Bihar election outcome as well in terms of the domestic cue that you're looking at. And the street will be hoping that the ruling BJP comes out tops out there. So those are the two big cues. In yesterday's trading session, the FIs, they returned to their selling ways. So they sold close to on 4,000 contracts. Not just that, they went ahead and they added some short positions as well. They added close to on 4,000 short positions in yesterday's trading session, around 4,900 contracts on the short side. And that took the short positions to around 87%. So from the start of the series, you've seen a big jump in terms of the short positions coming from the FIs. In percentage terms, it had gone down to the 70s. Now we're back at around 87% or thereabouts. The good news, though, is the last couple of trading sessions, they're writing more puts than calls. So for the second session running, there is some writing that we're seeing from the FIs on index options. Moving to the strikes that we're looking at, well, the 25,650 call, yes, we saw a good amount of open interest build up. The premium out there is roughly around 50 rupees. On the downside, the 25,500 put as well did add close to 60 lakh shares. And out there, you had a mix of activity. There were some signs of buying as well. Premium ballpark around 20 rupees or thereabouts. Remember, today is the weekly expiry, so expect an additional big move in the final 60 minutes or so. You have the last phase of voting in Bihar as well. You'll get some murmurs that will be coming in there. So I'm expecting a big swing in the last hour of trade, given that it's weekly expiry as well. In terms of levels that you're looking at, well, just punching in, the options data level, as well as where the 20 DMA comes in at, 25,700. That seems to be a bit of a resistance mark. On the downside, last week's low, that becomes the important mark. And for the Nifty, it needs to get past the 20 DMA, while the Nifty Bank, it needs to protect that 20 DMA on a closing basis. And that's what happened even in the last week. We breached it in today, but we managed to close above that. Two stocks I'm looking at, Britannia, because Mr. Varun Berry, after the kind of change and transformation he's brought about at the company, well, he's going to be moving on. It was on expected lines, but maybe the announcement has come sooner than expected. So you could expect some bit of pressure on this particular name. And the other one is SAIL. Yesterday it was moving very, very well. It's moved into the F&O band. We'll keep an eye out on this stock because after a while, SAIL has been moving quite well. Big open interest build up, 2.5% higher as well, moves into the F&O band. So both these two stocks on my radar.
Yeah, absolutely. And that news on Mr. Berry indeed was a little surprising because there's zero handover and he resigned. His notice period was waived off and he moved on from immediate effect. So in that sense, there's a bit of a vacuum and we have an interim CEO taking charge and no one as MD at the, at Britannia for the next 2-3 weeks till the 15th of December. So more on this as we go along. By the way, before we introduce our first guest on the show, let's take a look at the latest that's coming in from the US president. He was speaking to reporters yesterday and he said that there will be a deal with India, but it's going to be a different kind of a deal. Take a look.
Well, right now the tariffs are very high on India because of the Russian oil, and they've stopped doing the Russian oil. It's been reduced very substantially. Yeah, we're going to be bringing the tariffs down. We're making a deal with India, much different deal than we had in the past. So right now they don't love me, but they'll love us. Again, we're getting a fair deal, just a fair trade deal. We had pretty unfair trade deals. They're very good negotiators, sir. Just you have to take a look at that, if you would, please. But we're getting close, Scott. I think we're pretty close to doing a deal that's good for everybody, right?
Okay, so doesn't leave us too wiser. But he's saying there will be a deal at some point, and those tariffs will come down at some point. Matt Orton, Chief Market Strategist at Raymond James Investments, is with us. Matt, great to have you in. Thank you for joining in. So yeah, we live in hope, right? Actually, let me just start right there, and we'll come down to individual stocks. We always discuss individual names with you, but Whenever this deal gets signed, do you think it's going to be a major pivot moment for the Indian market? Will it like bring in a rush of dollars? Or do you think that the market's kind of moved on and it continues to focus more on earnings?
Hey, good morning, Serbian. First, I'll just say my condolences and thoughts are with everyone impacted by the tragedy in Delhi. And to answer your question, I don't know if we get a rush of buying towards India, but I can say that it fits with this narrative of getting more and more constructive news with respect to the narrative around India. We've seen growth hold up despite all of the tariffs. Getting a tariff deal will certainly, I think, improve investor sentiment. But what's been most important is the fact that earnings season has actually been pretty good. In India, there's been a lot of, I'd say, optimism around the results posted for this quarter, as well as what guidance looks like going forward into the next quarter. And I think that's what's enabling the market to make higher highs, lower highs, and hopefully through this trade deal, maybe we'll see some of the pressure on the rupee stop. And I think that's going to be really, really important to getting a lot of the foreign investors to take action rather than just feeling more optimistic, but continuing to wait.
All right. Hi, Matt. Morning. Good to see you. I want to know how you're rejigging your India portfolio. But first, I wanted to ask you about the mother market, the US market. Last week, after a while, we saw some signs of profit taking out there. Valuation-wise, it's trading above its averages. And it's, the good news is out there, actually, the earnings still look pretty good. What's your view on the mother market? Do you think it's run its course? Now we should be in for a bit of a consolidation phase, or maybe not rule out a pullback as well? Because some of those stocks, they seem to be moving at very, very high and elevated valuations. Your take?
Yeah, I think a lot of good points wrapped up in there, Nigel. And I would say I absolutely do not think the path forward for the U.S. market has come to a close. I'm still quite optimistic about where we're going to go into next year. We just printed another fantastic earnings season, not only around all of the AI names where there were questions around the sustainability of earnings, but we've seen the broader market actually post very, very strong margins. And on top of that, corporate margins and earnings have been very, very strong. So I think the path forward looks very good. I think what we saw last week was more of a wobble. It's not a breakdown with respect to the trade. We've gone from April 8th to where we stand today without more than a 3.6% correction on the S&P 500, which is pretty incredible. So it's helpful, if not even healthy, for the market to have a little bit of consolidation, especially in pockets of froth that have appeared maybe in some of the crypto names and some of the nuclear associated names or quantum computing type of names that were arguably very, very extended and perhaps detached from fundamentals. And I think today, the marginal progress we're getting with respect to the government going to reopen again, getting economic data, which should allow the Fed to reaffirm its course going forward, I think all of that will further support the idea that over the longer term, rates are coming down, earnings are strong. Both of that continues to support the overall market.
Matt, since you always take a keen look at stocks here in India, and you've had an interest in financials in the past, we've discussed, for instance, ICICI Bank. You've also had an interest in some of these new consumer internet companies like Swiggy and Eternal. So then let me ask you, what about the IPO market here? I'm not sure if you participated, but there's so many new red-hot issues, including Lenskart. There's Grow, which is a huge stockbroker here. Any thoughts? Anything new?
Yeah, Serbi, I don't participate in the IPO market in India, but what I can say is it's really exciting to see companies going public in India, and it's also exciting to see a good reaction to a lot of the companies that are going public. So there was a ton of enthusiasm earlier this year with respect to Hyundai. That, I think, was a successful IPO. And what's really, I think, helpful, and these IPOs are a good reminder to the rest of the world, that India is an innovation center. A lot of people are staying in India, developing companies in India that cater to, the 70% plus consumer-based economy. And I think that is very, very constructive. So while I'm not participating in IPOs, I think it speaks to the fact that sentiment looks positive, and it fits with this idea that earnings overall have been very, very strong. So I'm definitely encouraged by earnings, especially around some of the auto names that have been long-term winners like M&M. Absolutely fantastic results. I am incredibly excited about the path forward for that company. And you're also seeing decent results and call it some more companies associated with the industrial economy. L&T has done very, very well. We're seeing good results from Adani Ports, which is a newer name of mine. So I'm encouraged by where the path forward is. And while some of those new commerce names have not been as strong as I would have liked them to be, I think it gives me time to wait and eventually start to build more of a position as I see some sustainability to the path forward in the price action.
Matt, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. Well, I think, we'll take a quick commercial break here. We're going to come back with our research team. But before that, let me just quickly run you through the interactions which are lined up here on the program. 8:35, the KEC International Management will be with us to talk about the second quarter numbers. Elara Securities the analyst at Elara will discuss Britannia's reshuffle at the top, right? Varun Berry leaving. 9:20, Ashwini Agarwal of Demeter Advisors is with us on markets. 9:30, HUDCO Management to talk about their second quarter earnings. KPIT Technologies numbers came yesterday. 9:50, we'll have the management of Jindal Stainless to discuss their second quarter earnings as well. And towards the end of the program, Lata discusses the sharp rise in aluminum and copper prices with Gregory Shearer, head of metals research at JP Morgan. Coming up.
Time for a quick break. We've got a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Vodafone Idea, Jindal Stainless, Ather Energy, HEG, Syrma SGS, and CarTrade Tech. While on the flip side, you'll have Britannia, ONGC, and Gujarat Gas that will be reacting to negative news flow, and expect a mixed reaction on Bajaj Finance. Take a break, come back, get into further detail on all of these names.
Invest.
Welcome back. Actually, the exuberance that we saw on Wall Street, not all of that has translated into an equal gain across Asia, actually, because many of the regional markets are actually negative. You could say they rallied yesterday in anticipation. Yeah, so that was the US market performance. Now, if you contrast that with Asia, actually, Japan is the only major market that's showing some green. Mainland Chinese markets, even Hong Kong is slightly lower. There's a little bit of green on Taiwan. So in this context, let's pull up our implied open. And see what it's indicating right now. Can the bulls continue to build on? Because yesterday the problem was that we were slipping from the high levels of the day. Right now indication is about 30 points higher, and then we'll see where it goes from there. Lots of stocks to track, plenty of earnings after market hours. So let's straight away get to it with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. But actually, before we talk earnings, the corporate developments at Britannia have taken top spot. Manglam, I mean, what do you think the street is going to make of this? It was always happening. It's just that how quickly Mr. Berry has gone, maybe that's a bit of a surprise.
Yeah, so let's put things into context. You know, Varun Berry's term as MD and CEO was supposed to end in 2029. Ever since the appointment of Rakshit Hargave as CEO, it was assumed that, 6 months, 7 months down the line, maybe the start of the next financial year, Varun Berry would perhaps retire as MD as well, and thereafter there would be smooth transition for Rakshit as MD and CEO. But, the board accepting his resignation with immediate effect and waiving notice, this despite Varun's email saying that he's willing to serve notice, does not go down well, largely because Rakshit Hargave was joining as MD and CEO or as CEO in December 15th itself. So it could have been a month for sure. In the interim, they've named N. Venkatraman, who's the current CFO, as the CEO, and the company will not have an MD for a month at least until Rakshit Hargave joins in formally on December 15th. And this is an abrupt ending to what was an extremely glorious corporate career, right? Under Varun Berry, you know that Britannia, revenues grew by 2.5 times, the profits grew by 6 times, you had the EBITDA also jumping, margins jumping twice, and the stock moving 18 times. So maybe the abruptness of this end is something that the street will not like, and perhaps going with red on that stock.
Yeah, no, absolutely. Let's see, I mean, if the market's willing to read through this, one day hiccup, or whether there's something that lingers, we'll have to build on it. The other interesting one is, of course, Bajaj Finance. We've got Gaurav joining in on this one, and I'm pretty sure there's going to be a debate around that asset quality. Otherwise, numbers looking okay, Gaurav?
Well, yes, when we look at Bajaj Finance, the numbers look fine. In fact, we were expecting good set of numbers, and they have delivered good set of numbers. So let me take you through the numbers first. Net interest income PPOP that grew almost by 22% on a year-on-year basis, while profit that increased almost more than 23% on a year-on-year basis. In fact, when we look at net interest margins, they remain stable. At the same time, credit cost that inched up a bit, but it was just by 3 basis points, and it is almost, we could say, a flattish on a sequential basis. Gross NPAs and net NPAs, now they have moved up, but company said that this is because of the number of days and the calculation that they have done. Apart from that, they do not see any kind of stress. What remains a key thing to watch out is that the AUM guidance. Now they have cut the AUM guidance to 22 to 23% versus what it was guided at 24 to 25% earlier. What they are saying is that this is because of the lower growth that they are seeing in the mortgage and SME business. In fact, for SME, they're expecting around 10 to 12% growth in this year itself. Other than that, FY26 credit costs, they had guided in the range of 1.85 to 1.95%. Now, the company says that it will remain at the higher end of the guidance at around 1.95% for the entire year. And in FY26, we will see some easing off coming up. Net interest margins, although cost of fund is going down, but they say that net interest margins will remain flattish. In fact, in this quarter also, we have seen cost of funds going down, but they said that they have passed the benefit on to the customers, and that is the reason why net interest margins remain flat. So definitely, in terms of number, good set was expected, in line delivery by the company also. But in terms of the AUM growth guidance, there may be a little bit of negative reaction from investors, specifically given that stock has shown some rally a few days ago.
Okay, all right. Thanks a lot for that, Gaurav. Well, hopping across to Sudarshan, he's here to tell us about ONGC's numbers. Sud?
So operationally, it's looking like the company has missed estimates in the Q2 of FY26 because crude production has declined for second consecutive quarter. Even gas production was flat. Realization has seen a minor uptick. It was up 2% on a sequential basis. Revenue was up 3%. And because of the fall in the crude production as well as the gas production, we have seen EBITDA falling by almost 3%. And there's a sharp drop in the margin. It's down almost 500 basis points. It has come in at 53% against 58% last quarter, and that's the reason I'm going with red for ONGC.
All right. So thanks very much for that. Vodafone Idea, right? I mean, there's a lot of interest. Earnings came through. The story, of course, the bigger story is not around earnings, but it's, of course, relief around AGR. That's a separate story. But numbers provide an interesting picture here. Rima is here with details. Rima, over to you.
Hi, I think the most interesting number is the fact that losses have narrowed by nearly 1,100 crore. In Q1, the loss was about 6,600 crore. And in the September quarter, it's come down to 5,500 crore. Part of it is on account of, revenues went up 1.6%. They held on to margins. But there was also a one-time interest expense reversal that boosted the company's profitability. The problem is, outside of these numbers, the debt on the books continues to remain in excess of 2 lakh crore. The company is losing subscribers, 1 million subscribers lost on a quarter-on-quarter basis. ARPU is inching up, but it's still much lower than peers. So, for instance, Bharti is well above 250. For Vodafone Idea, ARPU came in at 167. There is a conference call today at 2:30 p.m. and there perhaps we will get, I'm not sure if we'll get clarity on, the bigger picture about the AGR relief, but let's see what the management has to say about the Supreme Court verdict, which granted the government some flexibility to work out a relief package. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, I'm looking at Jindal Stainless and the numbers look quite good actually. Top line growth was close to 11%, operating profit was up by close to 17%, and the margins on a year-on-year basis did improve. That's because the gross margins itself improved by close to around 300 basis points from 38% to around 33%. The net profit number as well, that showed a growth of close to around 33%, which is a bigger growth in comparison to the operational profit growth because finance costs was down and other income was higher. Now, look at the operational matrix. The sales volume growth was more than 15%, which is, encouraging on a year-on-year basis. Even if you compare it on a sequential basis, it looked quite good. And the calculated EBITDA per ton, which I've done on the consolidated numbers, that in fact is higher than 21,000, which has been their range, 19 to 21,000. So that looks good as well. The cherry on the cake is that they went ahead and they reduced some debt. We'll be talking to the management, later on, at around 9:50 a.m. to talk about their numbers. So we'll get a better sense. But otherwise, these numbers go down as a pretty good set.
Okay. Well, let's move on. There is also Ather Energy and Gujarat Gas. Both the companies reported numbers. Back to Sud. How do they look, Sudarshan?
So first talking about Ather Energy, earnings as far as it looked like a mixed set of earnings, but two important parameters or metrics. First one is revenue. It continues to see a healthy growth in Q2 of FY26. It has seen revenue growth of 54%, and that has been led by the market share gain that company continues to see. If you remember, recently for the month of October, that data was released. Company has taken over Ola Electric and climbed to the third spot amongst all the electric two-wheelers. And in Q2 of FY26, its market share has increased by more than 500 basis points to more than 17%. In South region, it continues to lead. It's at number 1 spot. Now in Q2 of FY26, the biggest gain that company has seen in states like Gujarat, Maharashtra, Madhya Pradesh, and they call that as Middle India. Also on EBITDA loss, it has come down. In Q2, it was at 132 crore versus 138 crore. And revenue growth was mainly led by the volume growth that company has seen. Both on a sequential basis, it was up 42%, and on YOY, it was up 67%. But the reason the stock has seen a huge gain in the last 3 to 4 months. For now, I'm going with minor green. As far as Gujarat Gas is concerned, like ONGC, it has reported a weak set of earnings. Volumes continue to see a decline. Even total volumes were down 3%, and it was mainly industrial volumes which has dragged the numbers. Industrial volumes were down almost 12%, and because of that, EBITDA per SCM has slipped almost 11%. Talking about the headline numbers, revenue was down 2%, EBITDA has fallen 14%, and margin has slipped to 11.8% from the level of 13.4%. So I'm going with red for Gujarat Gas.
Okay, all right. Thanks a lot for that, sir. Well, looking at HEG then, those numbers actually look pretty okay. Top line growth of close to 23%. That looks pretty good. Operating profit keeping in step, that as well was up 23%, which told you that the margins were constant at around 17%. Power and fuel costs, that was up only 13% when you have more than a 20% growth on the top line, telling you that operating leverage played out. And the net profit, that surged up. But you need to keep in mind it's because of the other income. Remember, they have investment in Graftech, and they account for it on a mark-to-market basis, which explains why the other income was much higher. And on a low base, the finance cost was down. Remember, the second half of the year should be much better for the company. So going with green on HEG, and we'll try to get the management for you during the course of the day. But going across to Vinny, she's there to tell us about Syrma SGX. Tell us, Vinny.
Hi, good morning. Syrma SGS, good set of numbers that's coming from the company this time. Look at the revenue growth, around 38% in terms of revenue growth. Operationally, also a very strong performance that's come for the company. More than around 150 basis point expansion in terms of margins. 10% is the EBITDA margin at versus last year 8.5%. Profit seeing a very good growth. Now, obviously, in terms of the segments, the IT segment, IT and railway segment has seen a very strong growth of 73% as well. And other than that, consumer segment, that is the one that has been a bit muted, 23% decline that. But apart from that, everything has done well and seen a strong growth. IT and railway leading the growth for them. Now, obviously, there's one more announcement that's come in that Syrma SGS is going to be acquiring majority stake in defense and maritime electronics. So obviously, this is an entry that comes in there for Elcom integrated systems. They'll be acquiring 60% stake first at a price of around 235 crore rupees, and the remaining 40% will be done in 3 tranches. We're expecting green coming in here on the back of this news flow as well.
Okay, all right. Thanks very much. Now to an exclusive, CNBC-TV18 exclusive. CarTrade is in focus, and we broke that story yesterday evening. Vivek and Rachna bringing you that story about CarTrade looking at buying, CarDekho. Vivek, take it away.
Well, that's right. This is an CNBC-TV18 exclusive. Our colleague Rachna last evening, did inform our viewers about this particular proposed transaction that is in the works, and we understand that this particular deal may be announced, within this particular week or fortnight itself. So we'll quickly run through, what is the proposed transaction. CarTrade Tech, which is an online operator and runs platforms such as CarWale as well as BikeWale, and along with that also has a large classified section known as OLS, is in advanced talks to acquire CarDekho. The parent company is Grinnard Software. We understand that the due diligence is underway and final term discussions are being chalked out. Along with that, we understand that at this point of time, there is a little bit of more negotiation that is pending as far as Insurance Dekho business is concerned. So the Insurance Dekho business acquisition may be relooked at a later stage. We reached out to both CarDekho. Amit Jain told, refused to comment. No comments was his response. CarTrade Tech yet to respond to our queries. Now, in terms of what exactly this means for CarTrade, remember, they will be acquiring this particular business at a lower multiple than they currently trade at. As far as the markets are concerned, it's going to be a value accretive transaction, and they also expect to benefit from much higher marketing spends, especially as far as the OEMs are concerned, as far as distributors are concerned. So all in all, they will be going ahead with this particular transaction, given the fact that it is expected to be a value accretive transaction. We will be updating our viewers as and when this particular transaction does play out.
Okay, all right. So CarTrade on the radar as well for today. Thank you for that, Vivek. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them would be Vodafone Idea, Jindal Stainless, Ather Energy, HEG, Syrma, and CarTrade Tech. Stocks with negative news flow would be Britannia, ONGC and Gujarat Gas, and mixed views coming in on Bajaj Finance post the numbers. Okay, so that's the stock list for the morning. Let's now figure out what's happening in the world of commodities. Manisha is joining in with the latest. Manisha, good morning. So what's the headline?
Well, the headline clearly seems to be coming in from the precious metal prices. After consolidating for nearly a month, you have the gold and silver prices surging yet again. So gold gained up by 2% and silver surged by 4% in the overnight market. It has to do with the decline in dollar index and expectations that, after all, a U.S. Fed rate cut for the month of December perhaps is a possibility. The markets also are looking at very strong global central bank buying in sense of gold. China has bought for a 12th straight month for the month of October, and the markets are looking at nearly 650 tons bought between the central banks until this year till time. The other thing to watch out for is the copper prices. That one is also trading at a one-week high. The markets do believe that with the addition of copper in the U.S. mineral list, this could lead to further gains. And in any case, Codelco and Glencore, Anglo-American, all of them have talked about lower production in the month of September and October as well. And given a lower guidance going forward, is supporting copper prices yet again.
Okay, all right. Got that, Manisha. Thanks very much. We'll take a quick break on that note. Come back on the other side and we'll get into more fundamental stock talk. We'll have Parag Thakkar of Fort Capital joining in.
Welcome back. Hope you're having a good morning. Well, let's get in Sudarshan. He's here to give us some brokerage calls of the day, and I believe the OMCs are on his radar. So tell us more.
So there is an interesting note from Citi on OMC. So what it's saying that in Q3, basically Q3 till now, two things have happened. Refining cracks, so both gasoline and diesel cracks are trending higher, and this quarter it's up in the range of $4 to $5 per barrel. Second, crude prices have fallen, and it's fallen by $4 per barrel. What now, because of this, what has happened, integrated margin for these OMCs has moved higher. But Citi is concerned about the fiscal slippage that government might face. And as of now, it's in the range of 35,000 to 60,000 crore for FY26. But it increases the possibility of a excise duty hike that city believes government might announce after Bihar election. So if there is an increase of 1 rupees per litre, government may generate revenue of almost 17,000 crore. But it will have the biggest impact amongst OMCs on HPCL, and the least impact will be on IOC. Now, Citi had the positive catalyst. It had opened positive catalyst on OMCs, but it has closed that positive catalyst, but maintains the constructive stance on all the three names.
So, this is, of course, if it happens at the margin, it is negative for oil marketing companies. But where are they getting this from? I mean, this is their thesis?
This is their thesis. This is their thesis.
That this may happen.
And I believe they are assuming that if government increases the excise duty, they will ask OMCs to absorb it. If you remember last time also, government had asked OMCs to absorb, and by saying that already we are giving the compensation for kerosene and other compensation. So if OMCs are asked to absorb, it will be negative.
Remember 2-3 days back, I think in the last 5 days, right? So we've covered BofA has come out with a note, Goldman has come out with a note. I think there was Morgan, all overweight. Of course, I mean, all of it came, and stocks have done well, even before many of these notes came. But we'll see. Thanks very much. And today, of course, is the last phase of the Bihar elections. And as we've been saying, exit polls later today. Parag Thakur is with us with, his perspective on things. Parag, good to have you with us here as always. Thanks very much. Oil marketing companies, I don't know if you have a view, but it's interesting, right? As these notes started to come through, the outperformance, the run-up basically ended. Typical of markets, right? So that is one. Second, I know you have a view on SBI, so we want to talk about that as well. Go on, but.
Yeah, so first of all, my sympathies to yesterday, what happened in Delhi and the casualties due to that. Am I audible?
Yes, please.
Yes, please go ahead.
Yeah. So first coming on OMCs, see, I think that the oil and gas minister had made it very clear they want to create market cap for OMCs, and they are not happy with that market cap. Of course, after that, the stocks have rallied. Because oil has remained low and refining margins, as highlighted in the City note, refining margins are on the rise. So I would not like to think that anything negative, anything which creates a negative sentiment around any PSU company, for that matter, that I think will not be done by government. That is my view. So coming back to SBI, I would like to draw everybody's attention to this particular fact that this is a bank which is available at just 1.1 time book. 44 lakh crore book with a credit cost of below 50 bps. That kind of tells you and reflects to FIIs that how India is doing. 20% of the loan book of the country where credit cost is below 50 bps. I'll give full marks to the management of SBI chairman, Mrs. Sethi, to manage this, because it takes a huge amount of efforts. I would say very prudent lending to arrive to this kind of a thing, right? And you have surprised the market on NII growth because of your CA growth of 18%, current account growth of 18%, and fee growth of 25%. So best asset quality, best NII growth, and you are saying that you are at the bottom of the margins, and margins will see U-shaped recovery. Plus subsidiary value. See, immediately after the result, they said that they want to, they'll monetize 6.3% stake in SBI AMC, which is valued at close to around 1 lakh crore. So that releases another 6,300 crore kind of capital for them. Although they don't need capital after this QIP of 25,000 crores. But still, and they have many other things. Their stake in NSE is valued at 50,000 crores. So the subsidiary value, which right now analysts are ascribing it, say between 220 to 280, can be even higher to 330, 340 once this starts monetizing. So I would say that, and I would like to put a disclaimer, it is my top holding in the portfolio. I would like to continue to hold it for a long time. And if this trade deal also happens, I think the overall sentiment of FIIs might turn positive. They might see that rupee will not depreciate from here, at least. And some of the sector headwinds like textile or jewelry and various other labor-intensive sectors might really have a good relief.
Yeah. Parag, the Bihar elections are the last phases today. The exit polls are today evening. And many have been kind of pushing forward their view. I mean, this trade deal has to happen at some point, that maybe now after Bihar elections, we will see some movement. Last night, President Trump said, but it was a very non-committal kind of a thing. He said, well, you know, Russian oil purchases have been brought down and the tariffs will be brought down at some point, his words. But do you think markets will start positioning for this outcome now, and in what way?
Right now, GIFT 50 is not reflecting that.
Yeah.
Right. It is hardly up. So I would say that gradually things will build up, in my view. It will gather pace after the Bihar election exit poll comes out. If it comes favorable.
Let's put out the chart of Gokuldas exports. I mean, I call it the India-US trade deal indicator. You know, it's gone up to 900 plus, then comes back to 800. Where is it now? 830. So we'll see. But go on, Parag. Finish that point.
No, I completely agree with you. Gokuldas export, Welspun Living are some of the stocks which are, of course, we don't have it meaningfully in our portfolios, but I would say that these are the clear reflectors of how market is perceiving trade deal to be.
Yeah, and then we really need to see the details as well, when that deal happens, as it happens, and whether these companies continue to enjoy the competitive advantage they did in the US, their largest market in many cases. Parag, just hold on. We'll come back and we'll have more questions for you in a bit. But I think we have our colleague Abhimanyu now joining in. Okay, we'll get to Abhimanyu in just a bit because he's been on ground at the location of the blast site in Delhi, and he'll get us the latest from there in a bit. But before that, one more corporate conversation. KEC International is the company on our radar. We have Mr. Vimal Kejriwal, MD and CEO of the company, joining in to take a couple of questions. So Q2 is done. 3 key points to focus on. We need to understand whether execution has picked up in the quarter. Now, margins, as we know, have been, at least in the quarter, they've been below the company's guided range of 8 to 8.5%. So is that just a one-quarter phenomena? What's the outlook? And finally, just some color on the net working capital days as well, which have increased. So let's try and understand more on this. Mr. Kejriwal, thank you so much for joining in. I'll have to start with that margin question, right? Because I think the market's really looking out for that. Because from a guidance of 8.5%, you're down and there was pressure on the margin. So just explain to us what happened. Was it a change in mix? Was it monsoon impact? Just the details.
Surabhi, good morning. So one thing is that we have given an annual guidance of 8%. Okay, so I think, and typically if you look at our numbers, H2 has always been very heavy. The revenue is also around 60%, so leverage impact would also come in. So I think we are still comfortable or confident that, margins would be around 8%. Also, if you look at year on year, our margins have gone up significantly by 80 basis points from 6.3 to 7.1. And the other pieces, if you look at my PBT and PAT, we've gone up by 88%. So I think overall, we think that we are there on track. Okay, 10, 20 basis points here on there could be this. Okay, otherwise, I don't think we are worried about what is happening on the margin front.
Okay, so you're on track for 8 to 8.5%. That's good to know. So let's talk about the top line growth itself and, how things have been looking up. Just give us some perspective on each of the businesses, T&D. I think on the civil side, because of, this being the monsoon period, there was a bit of a lull. But how do you see both of these segments play up in the second half?
So one thing is that the margins would probably be closer to 8 than 8.5. I think we will stick to 8% rather than 8.5 right now. But on the growth, we did 19% growth for the quarter, and which I think is a decent one considering it was a monsoon quarter. But the maximum impact of the monsoon and all the festivals was on the civil side, which is where we actually had a negative growth on the civil business, while T&D grew by 44%. Okay, civil did not grow. I think there are 2 or 3 reasons. One was obviously it's India, so the rainfall played a role. Workers, I think they have increased, but they are still a little bit short than what we wanted to be. Third is I think we clearly continue to face problems of payment on the water sector, which is one of the reasons when we talk about NWC. And because of that, the water execution is pretty well regulated from our side. Depending upon whatever money we get, we are putting in that. So I think that's the way. But overall, I think we still maintain our 15% growth trajectory for the year on the top line.
All right. Hi, Mr. Kejriwal. Good to see you again. Sir, but this 8% as well will look challenging because you'll have to do 8.8 to 9% margins in the second half of the year to get to that average of 8%. Doable, right? Since the second half of the year is normally better.
I think we are pretty okay with that part of it. 8.8, 8.9 is what we expect to do in the second half. Yes.
Got it. All right.
Just to finish that point, Mr. Kejriwal, on margins, steel, aluminum, copper, right? Big raw materials for you. The big rally in copper prices that we're seeing, and expectations are that they, it's headed up actually across primary metals, but copper more than anything else. You think that dampens efforts to improve margin going forward? You'll have to sort of negotiate pass-throughs, etc., or is that all that automatic?
So, Prashant, what happens is steel is something which we normally do not hedge, and we are seeing the advantages of steel in our numbers, in T&D numbers especially, which are more than double-digit, because steel is almost down by 4,000 to 5,000 rupees from the typical estimate which we had for steel. As far as the base metals are concerned, whether it is copper, aluminum, or zinc, we'll say we are more than 90-95% hedged always. So the moment I get an order, we go and hedge it in the market. So I don't see an impact of that on my revenues or margins right now. But what is going to happen, and which we'll start seeing a little bit, which we're already seeing in cables and all that, is companies are deferring their manufacturing and etc., saying, okay, let's hold on for cables, we'll wait for copper prices to come down. So although I don't expect a margin impact, but there could be a marginal impact on revenue, especially on the cable business where there is a copper impact. Okay? But not on the margin itself.
Got it. Because you're hedged, you're saying. As soon as you get an order, you go and hedge it.
Yes.
But volumes, revenues, maybe, right? And I think
maybe.
Any way to gauge? You must be getting that sense, right? Some pushback, some deferment, etc.
But Prashant, for me, my cable revenue is roughly around 8-9% of my total turnover. So even if there's a marginal impact, there could be 50-100 crores here or there. I don't think it will move the needle anywhere.
Mr. Kejriwal, you mentioned water continues to be a problem. I think we've been discussing this for the better part of the year, right? Those receivables. Last you told us that I think the pending dues were around 700 crores. So have you received any money at all or not? Or have the dues only piled up?
No. So the dues have not piled up. They've gone up by 20-30 crores or something. We did get close to 500 crores since March. Okay. But what has happened is that because we need to complete the projects, we have reinvested the money in that same business. Okay. So my dues remain where they are, but all the old dues have come in. And typically, if you look at our water portfolio, we are in two states, MP and Orissa. MP has been pretty regular in paying. Orissa has been a significant laggard, although we did receive some money in the last month or so. So there has been, I'll say, very marginal improvement, but now we have been told that we'll pay. We'll keep our fingers crossed. That's one of the reasons why our working capital is also high, and also civil is showing a negative number.
All right, Mr. Kejriwal, we leave it there, sir. Thank you very much for joining us. It's always a pleasure, and good luck as you and your team continue to execute.
Thank you.
Thank you. At the bottom of the screen, the flash is there. CarTrade has confirmed the CNBC-TV18 news break from yesterday. Our colleagues Vivek and Rachna had put this out. Rachna sort of got that information when we broke the story yesterday evening. Vivek sort of, coming in this morning with this one, that CarTrade intimation to exchanges essentially confirming that they are in talks to acquire CarDekho and BikeDekho. Of course, there is some more detail here, but basically the news break getting confirmed. It's going to be a large transaction, and really will CarDekho, by the way, is not a small entity. CarTrade, of course, is very large as well, and the news seems to suggest that both are going to come together in an M&A transaction. So that is CarTrade for you. Parag is still with us, and we have a bunch of more questions for him. Bajaj Finance, for example, and others as well. Sudarshan and Vitesh also come in on the other side with technical trading ideas. Stay tuned.
Welcome back. Well, keep your eye on the bottom of your screen. The he-man of Bollywood, has passed away. Dharminder has passed away at the age of 89 in Mumbai. He was ailing last night. We had a lot of tops, both his sons, a lot of other Bollywood, actors, had visited him last night. But this morning, the news that's come in there, we'll miss him. The he-man of Bollywood over the last many, many years. He's been known for his physique, the muscles. I recall, growing up and mom and dad, mom particularly was the he-man of...
this is a terrible, terrible month, right? We were just discussing in the break. I think we had Mr. Asrani who passed away. Satish Shah, Pankaj Dheer, Mahabharat fame. And I think, I can't remember, but I think we've had a bunch of these veteran actors who've passed away. It's really terrible. But that's information which is coming in at this point in time, and we'll try and get you some sort of visuals, etc.
Condolences to the family and strength to the family, the children, wife, as well as the daughters out there. So a legend moves on to another phase. Well, moving on to the latest news coming in from the heart of Delhi. At least 8 people have been killed in a car explosion near Red Fort. Let's go across to Abhimanyu, who joins us with more details on the same. Abhimanyu?
Well, the entire area around the Red Fort, around the blast site, continues to be cordoned off. Now, behind me is that area where the blast had taken place. And that is exactly the place where we can still see a huge pause of security personnel who have been deployed since last night. Sample collection, forensic sample collection is still underway. There are several shards which have been collected in the past 1.5 hours, as we have seen. Forensic teams from the Delhi police and from several specialized units have been stationed on the location since last night, and several top-level officials from the Delhi police had already visited the site earlier too. Now it remains to be seen how early the sample collection is going to be over, and the forensic investigation subsequently will continue taking place to ascertain the entire cause behind the blast and the extent of that too, since the shards, the glass shards and shards of several other materials which were torn due to the blast, they are still being collected. So the entire damage is yet to be ascertained, and also the injured are being tendered treatment. So it remains to be seen that post that whether there would be any eyewitness accounts which are going to emerge, which will possibly form the basis of the investigation by the Delhi police.
Okay, all right, Abhimanyu, thank you for that. So investigations continue in the aftermath of what transpired last evening. Thank you for that. Well, with that, we'll take a very quick break, come back on the other side. We'll have the pre-opening trades, and our technical experts, Darshan Sukhani and Mitesh Thakkar, will join in with some trading perspective. Welcome back. Just about 30 minutes to go before the day's action kicks off. So let's straight away get to our technical experts. We have Sudarshan Sukhani and Mitesh Thakkar joining in. Gentlemen, good to have you as always. So let's straight away start with the index first. Yesterday we had a bit of a gain but didn't quite close at the highs. Mitesh, what would your approach be today?
Good morning, Sunny. So, we talked about 25, 350, 400 as the support area. We kind of bounced back from there. And I said, till we cross 25, 800, I think this will still be a bounce back. So I think the first level which I'll watch on the upside is 25, 800. Let's see how the market reacts once it gets there. If it fails to get past 25, 800, then I think 25, 350, 800 could be a consolidation zone. And then we'll get a directional movement. But if we continue to rise and get past 25, 800, I think then I would look for a retest of 26, 100.
Okay, got that, Mitesh. Sudarshan, what about you? How do you approach trade? I think GIFT Nifty is suggesting a mild positive start.
Yeah, good morning. Well, yesterday morning we thought we'll go long at the open itself, and that was a good day. As Surbhi said, it did not close at its highest, but the problem is that markets will do what they want. The short-term trend appears to be up. So if you are long, stay long. Otherwise, look to go long in the morning in some kind of small consolidations or dips. There's a small warning because again, we have that weekly expiry today and that can do a lot of drama. So stay with the course, stay on course by having a view that we want to be long in this market. Keep a little wide stops, but don't get puzzled and stopped out.
Got it. All right. Don't get puzzled and stopped out. Sudarshan, you continue then. Tell us what are your picks for the day?
Well, it's Angel One. After a long time, it comes in my buy list with a stop under 25.50. Chola Finance is a buy with a stop under 17.20. It's an excellent chart. Otherwise, also National Aluminium is a buy, and all metals are doing well with a stop under 255. My only intraday short is Balkrishna Industries with a stop above 23.45.
Got it. Okay, Mitesh, you come in. Tell us what are your calls.
I have 3 buys to sell as well. On the buying side is Aurobindo Pharma with a stop at 1136. Look for targets in the range of around 1195 here. HCL Tech, and IT generally had a better day yesterday. So HCL Tech had a good candlestick pattern. A buy with a stop at 55.25 for targets of 1570. Zinc is the next call. Buy here with a stop at 475. Look for targets of 500. And one sell call, that's Irida. Sell with a stop just above 152. Look for targets of 141.
Got it. All right, gentlemen. Thanks a lot for your calls. Well, let's go back to Parag Thakkar. Parag, any view on Britannia? That's name, in fact, did very, very well under Mr. Berry. They went from a commoditized business doing margins of 6-7% to high teens. And the growth as well was spectacular with the market capitalization moving up multiple times. He's moving on now. But what's your view on the stock?
So definitely I would like, it was a big shock that on the call, Mr. Varun Berry said that we are set for a double-digit growth in the second half. So all the commentary was very, very positive. And now this has happened. It's a very, very big shock. And I think Mr. Rakshit, who has come from Birla Opus, will do a good job. And I think things can improve. But in the interim, definitely there will be uncertainty and stock will go down. That is my view.
Got that. Parag, any thoughts on Bajaj Finance?
So Bajaj Finance had been my favorite stock and I have bought it at around 680 and all those kind of prices. But now we don't have in the portfolio because I feel that, see, the NBFC, some of the NBFCs who make very high NIMs, high ROAs, the segments where they lend to, like MSME or in case of Bajaj Finance, captive two-wheeler, three-wheeler or financing business, those were having stress. And that is reflected in the credit cost of 2%, right? Against that, if you see SBI kind of name or HDFC or ICICI kind of names, they have a credit cost of below 50 bips. Although they lend to a lower yield segments, but their valuations are also cheap, right? SBI is 1.1 time while Bajaj Finance is trading at 5 times. So I would definitely go for names like SBI now or HDFC kind of names now, rather than buying Bajaj Finance at 5x book value. Nothing wrong with the company, but just that current environment is such that if you are lending to a safer segments like mortgage and corporates and retail, for example, SBI Express Credit Loan book, which is around 3.5 lakh crore book. Now I am expecting it to grow because government employees will spend more. There's 8th pay commission, plus the GST cuts have reduced the price of cars and all. So I would say that right now the environment is in favor of PSU banks or HDFC and ICICI kind of or federal kind of banks who are not yielding to very high, who are not lending to very high yielding segments, but their segments are safe and the credit costs are low.
Okay, got it. Parag, request you to stay with us. Let's hop across to Vivek and revisit the story that he told us earlier about on CarTrade. They are looking to grow inorganically, and there's a confirmation that's coming in there. So, Vivek, kudos on this story. Fill us in with further details.
Well, that's right. This is a story that both our colleague Rachna as well as myself, told last evening to our viewers, where we had highlighted that CarTrade Tech, which is the listed entity, is looking to acquire its rival car platform as well as bike platform, which is CarDeco. So, we had also told you that this particular deal, at least at the initial stage, will not look at the other businesses that CarDeco has, which include auto financing as well as the insurance business, which is Insurance Deco. So, in a clarification and in a confirmation of our news break to the exchanges, CarTrade Tech has said that yes, they are in talks with CarDeco, and these talks are limited to the acquisition of the car as well as the bike platforms, which is CarWale as well as BikeWale. So this is seen as a strategic fit, and this is seen as a complement to both of the platforms that CarWale as well as BikeWale that CarTrade also runs. And we also understand, while this particular detail has not come out in the press release, we also understand that this is expected to be a value accretive transaction as far as CarTrade is concerned. Now what we are awaiting is, number one, the final contours of the deal, number two, at what valuation it is done. So it's going to be an important development, and especially as far as the online marketplace for automobiles is concerned, this is a significant development because this entity will now become the single largest entity, giving it significant bargaining power, especially when it comes to advertising that they garner, number one, from OEMs, from distributors. So it's going to be an important development. It'll be interesting to see how this plays out and what kind of impact it will have, especially as far as the valuation multiples that CarTrade Tech going forward will enjoy in the market.
Yes. Parag, any thoughts on CarTrade? Vivek, thank you very much.
You're asking me, CarTrade?
Yes, CarTrade.
So basically, see, this is a company, one of the platform businesses which makes profit. I saw them making a 64 crore PAT last quarter. So it's a decent company and a good platform business, and they're acquiring another big platform business. So it's a good combination. Let's see. I don't have it in the portfolio, but definitely it is worth a look. Of course, the stock has rallied a lot, and I saw the trailing P is above 70. But whenever it cools off, I think it's a company to look at. It's one of the platform businesses and tech-enabled businesses, as they call it, which is making profits at least.
Tech-enabled businesses, yes, absolutely. Most businesses that list these days, they call themselves tech businesses, Parag. That's the other interesting trend in the market, right? Speaking of, other platform companies, Parag, what's your view on Swiggy? Because ever since Swiggy announced this 10,000 crore rupees fresh equity raise, the stock has been coming under pressure. It fell about 3% yesterday as well. Your views?
So, see, I will not buy this kind of stocks. Simply because, see, they have got some $800 million cash already, and they are burning around $80-90 million of cash every quarter. And they are building this war chest because Zepto has recently raised money, and the competition is intense. So they want this money from the shareholders, from the stock market, because stock market has been very kind to fund this kind of businesses, and they will burn cash, they'll strengthen their position again.
Okay.
I don't understand these maths, and I am sorry, but I would say that I would not like to. This doesn't align with my thoughts.
Okay, so no to Swiggy, and very quickly, last 10 seconds, Lenskart at 402.
So Lenskart, see, basically Lenskart, I would say that 40% business is global. The global business makes more margins. All these things are out, but let's see the numbers first. I think let the numbers come, and let the numbers which are completely recurring numbers, because I think the last numbers which Lenskart reported had some one-off. So I would say that let them get listed. Let's see the history. By the way, this Lenskarts of the world and all these companies are trading at a market cap which is more than Colgate's of the world. I think, let's see. We have seen Colgate from last so many years. Let's see for 1 or 2 quarters.
Okay, fair enough. That's no arguing against that. Absolutely, let them prove their mettle in the market with more sustained numbers. Fair point. Good to have you in this morning, Parag. Thanks for joining in. You have a good day. Let's quickly get back to our technical experts. The pre-open session is also settled, so good time to get in our final 9-10 call. Sudarshan, which stock are you going with?
Well, it's Chola Finance. Buy with a stop under 1720.
Chola Finance. Okay. And Mitesh, what about you?
I'll go with the buy on Aurobindo Pharma for targets of around 11.90.95.
Oh,
yeah. No, got that. So those are, individual trades coming through. There's about 3 minutes to go for market open. Bajaj Finance, we want to put the spotlight on once again. Gaurav is here with that. Gaurav, take it away.
When we look at the numbers were in line. Net interest income, PPOP, that increased almost by 22%, while profit that increased more than 23% on a year-on-year basis. In fact, it was in line set of number from Bajaj Finance. But what remained cautious is that, first is that they have cut their AUM growth guidance from 24 to 25% versus 22 to 23%. Now, this is specifically because they say MSME growth will be slow. In fact, for SMEs, they're expecting just 10 to 12% growth in FY26. Apart from that, when we look at credit costs, now although in this quarter it has remained flattish, and they have also guided that credit cost will remain in the range of 1.85 to 1.95, they said that it will come to the higher end of the guidance that they had given earlier. Now when we look at gross NPAs and net NPAs, we saw a bit of an increase on a sequential basis. This is because of number of days calculation, but in terms of some stress that they are seeing is specifically coming up from the SME space, and that is the reason why there is a bit of a caution. In fact, in credit costs also, they are saying that they have cut their MSME unsecured book almost by 25%, and after that we saw some mixed reviews from brokerages as well. As a result, when we look at the stock performance, we will be definitely watching out on how it performs, given that it has already shown some rally in the last few days.
Absolutely, and this is exactly what we were flagging, Gaurav. You remember earlier I said I'm very sure there's going to be a debate around that asset quality, and right now there's some nervousness. We'll see if it recovers. By the way, Britannia is also down 3%. Just wanted to point that out. But again, let's see if the dip gets bought or not, because anyway, there is the new entrant and his path is very clear. It's just this abrupt departure of Mr. Berry that seems to be weighing on the stock this morning.
Absolutely. Let's look at the India-US trade deal indicator, Gokuldas exports, and see if that is showing any signs of enthusiasm. It's up 2.5%. So 20 odd rupees on Gokuldas exports at this point in time. I think we've got a minute to go for market open. And we will sort of come back to many of these rates. CarTrade is another one, right? Maybe we should look at this. This is the CNBC-TV18 exclusive, which is now being confirmed by the management as a disclosure to exchanges. Stocks done phenomenally well already over the last couple of years. And 2% higher on CarTrade, 3,044 is on your screens. OMCs maybe? I mean, that Citi note striking a slightly disconcerting tone there with regards to this thesis that OMCs are going to go higher and higher. We don't know if what they're saying will come true, that excise duty hike, companies being asked to absorb some of the increase, etc. What do we have? 25,630 on the Nifty, about 0.25% higher. The Nifty Bank is absolutely flat, nothing at all. The small cap index is up about 0.2%, and I think the mid cap index will come up on your screen. And you got about 0.17% gain as well. 60,223 or so on the mid-cap index is what you have. 1,100 stocks are higher, about 600 stocks are lower, and that's a market open. Nifty 50 heat map gives you a quick sense of where things are landing, right at the word go, in the green zone or the red zone, mostly in the green zone. So BEL, Infosys, Mahindra on one side, Bajaj Finance, Bajaj Finserv on the other end of the spectrum. But bulk of what is starting in the green right now. The Nifty's accumulated about 40 points. This is, of course, the first 90 seconds of market open. Let's talk about stocks. Surabhi.
Okay, and then on stocks, we have to talk about Bajaj Finance. And if you're wondering what happened, what went so wrong, 6% down on the stock. Well, two things. Slight reduction in their AUM growth guidance. They've reduced it by 2 percentage points. That's one. But the other thing which the market has not seen across any lender this season, I mean, any large lender or mid-sized lender, is asset quality stress. And in Bajaj Finance's case, the gross NPA levels have moved up from around 1 odd to I think 1.2. We'll get the exact numbers once again with Gaurav in just a bit. The company has explained that this is because of a new method of calculation of NPA. But whatever it is, the markets are nervous about it right now. In fact, even Bajaj Finserv has fallen after that, 3.5% down on Bajaj Finserv as well. Britannia is the other casualty of the morning, 5% down. Clearly, the market's sort of uneasy about the manner in which Mr. Berry has left, literally gone in a day after a legacy of so many years. So that's weighing on Britannia. So those are the two big newsmakers of the morning. Now let's see what else is happening on the Nifty. Since we're talking about the losers, Tata Motors, Tata Steel, these are some of the other stocks that have a little bit of red. Otherwise, the Nifty is fine. I mean, beyond these 3-4 big newsmaker names, there's not too much on the downside. On the upside, BEL 1% higher, Max Healthcare 1%, some buying on M&M, some buying continuing on IT from yesterday, by the way, HCL Tech, TCS, Infosys, between 0.5% to about 1% on these stocks. So IT is still a bit of a support, as is Reliance and ITC, the big boys. Reliance is up 0.5%, ditto for ITC. But overall, all things put together, Nifty is very, very uneasy. It's just about 9 points up, and the Bank Nifty is now already slipping into negative territory. So beyond the Bajaj twins, keep an eye out on names like SBI and Kotak Mahindra Bank. All have a tinge of red on them. Nigel.
Well, a few stocks actually from the broader markets are calling for attention. Vikran Engineering, the numbers look quite good. Vivek had told us about that. That stock, in fact, is up and about. KEC, they are saying that they're sure that the second half of the year is going to be much better and the margins will improve, which have to come at the upper end for it to achieve that 8% that they're talking about. So that's another stock that's trading in the green, come off the top. Syrma was up close to around 2%. I think that as well has come off a little bit. Bazaar Style Retail, that's another stock. Syrma still holding with a 3% gain. Bazaar Style Retail, one of the top volume movers. It's moved into the red. It was up 3% just a few minutes ago. HEG continues to hold on to gains. Basically, it's it's the stock that's pulling back yesterday's losses. Was down 6% yesterday, pulling back 3% today. On the flip side, HLE Glasscoat, that stock is down more than 10%. The street clearly doesn't like those numbers. Stock getting slammed as we speak. You have Subros, that's another one that's getting hit in today's trading session. I think they had their call as well yesterday. Not Subex, Subros should come up for you. That stock, in fact, is down 5.5%. And transformers and rectifiers, for the second day, well, that stock is getting a bit of a knock. So fair bit of reactions, both on the positive and the negative terrain. Transformer and rectifiers now down close to around 10% as we speak. Sharp knock. And Ola Electric had that one-way move from 40 to 70. Guess what? It's at 43 yet again. So that one, in fact, has come in for some solid selling pressure. Translated Lighting, I think we were talking about it yesterday. It was weak, but that stock is popped up today. It's up close to around 4% or thereabouts.
Okay, more stocks as we go along, but you've got what? Markets now blinking red and green. The initial pop on the 40-50 point gain and the Nifty's been given back. We are at about 550 or so. Ashwini Agarwal is with us, founder and partner at Demeter Advisors. Ashwini, good to have you with us here. Thanks for joining us. Any thoughts on Bihar, Ashwini?
Morning, Prashant. Not really. It's too close to call. Voter turnout's been extremely high, and that usually is a signal that many voters want change. But it's going to be a very close call, so I don't want to really take a pot shot at that.
Will it matter?
I don't think so.
You don't think so? Okay.
So,
and why not, Ashwini?
Okay, so the fact is that the economic policy has separated itself from politics, by and large. If you look at what's happened over the last 2 years, despite the kind of narrow margin of victory in the central elections, the government's continued to press ahead where it can. And I say where it can because some of the harder calls that need to be taken by India, and I don't mean any political party, but by India, can't be touched, such as administrative reforms or reforms for the judiciary. But at the end of the day, this government has gone and done tax cuts for the middle class. It's simplified GST structure. It has enabled investments in core infrastructure and in electronics manufacturing, and everything else that you guys have been very good at pointing out over the last 2 years. So I think the government's doing what it can, and I don't think the poll results of a state or two states make a huge difference. I think the politics of the day also believes in giving away a lot of goodies, which I don't really like as a market watcher. and as an economics enthusiast. But that's the way politics has evolved in this country, and every party seems to be doing it. So I don't really see the Bihar elections making a turn in the economic policy of this government. So that's why it doesn't matter.
Fair enough. I'm just going back to Bajaj Finance and seeing the stock reaction now. 7% down on Bajaj Finance. Now, what has gone so wrong? I mean, actually not much. If you try and look at it, from a slight distance, the NPA has moved from about 1 to 1.2. The credit cost has gone up 3 basis points. But look at the stock now. Now look at the one-year trajectory, and that's the issue. Bajaj Finance has rallied well over 40% this year, in a year where the market otherwise has been so range-bound. Let's put up a one-year chart on Bajaj Finance there. 50% rise in 12 months. Now, after a 50% rise, always, that fear of heights and profit-taking at the smallest hint, perhaps. So comment on this, Ashwini. Hi, great to be speaking with you. I'm now pivoting back to earnings because I guess that's all we can really track, right? We don't know what's going on with the US president and the deal, or politics, as you're saying, is beyond us. Now, on earnings, why I want to pick up Bajaj Finance as a case study is that sentiment still seems to be so nervous and jittery at the slightest hint of something going wrong in numbers. So, your sense on these large NBFCs, and then, what does it tell us about the market mood and psyche overall?
Surabhi, I think you've picked the point that I've been scratching my head about over the last few days. There have been several stocks where earnings have either narrowly missed estimates or actually have been in line with estimates, and the stocks have got sold off, and the punishment being meted out is quite severe. In the mid-cap, small-cap space, there are several stocks which are down like 15, 20% on numbers which, to one's eye look reasonable, and, reasonable growth on a year-to-year basis, a reasonable, performance in what can be termed as reasonably challenging environment, and the stocks have got sold off. So I think what's happening is that the market's underlying tone is slightly nervous. We are not seeing any significant support from foreign investors. The amount of paper flow continues to be very high. New listings are not providing the kind of leg up that investors are hoping for. And in this environment, the single biggest question on the investor's mind is, where can I take profits off the table, or where can I take money off the table? And that's what's happening. My sense is that people are also very unclear about the demand outlook for the next 6 months. So while, many of us are hoping that the cut in GST rates will propel demand, not just for the festival season, as we have seen, but for the longer term, there are some question marks around rural demand recovery, with extended rains having hurt crops. There are some concerns that post the festival rush, demand may slow down again. And people are worried about all of this. So, this is what is showing up. Specifically on NBFCs, while the commentary is positive about the direction of credit costs, Q2 continued to be challenging on many fronts for several lenders. Some of it is basically the tail of the MFI credit costs still feeding through to the system. And in some cases, it's new stress emerging on MSE. The amount of stress is small, and it shouldn't merit the kind of punishment some of these stocks are being meted out. But it, again, is a function of how demand revives over the next 6 months. If demand is indeed weak, and this festival rush was just that, a festival rush, then we have a problem.
All right. Hi, Ashwini. Good to see you, Ben. One of the points you mentioned was this fresh supply of paper, right? What do you make of the recent IPOs? Lenskart, everyone was looking at it through a lens. To be fair, it's had a pretty decent listing, though the float is very, very limited, as of now, like we see in most of the IPOs. Stock was down yesterday 10%. Today, it's one of the top volume movers. And the last I checked, it was still in the green. Any view on this name?
I wouldn't want to comment on the name, but I find a lot of the new IPOs quite expensive. They don't really leave a lot of upside on the table from the near-term perspective. It reminds me a lot about the IPO rush that we saw in the third calendar quarter of 2021. And frankly, I've stayed away from most of these IPOs, or pretty much all of them, and I don't see any value in them whatsoever. So that's the real issue. You know, these IPOs are being priced to perfection. And when investors don't make money in IPOs, it slowly sours the mood. So it's, in a way, it's actually positive for secondary markets because, you know, if the IPO flow slows down, that's actually a positive for secondary markets.
You know, lots of stuff moving now, right? I mean, look at a bunch of this stuff. So Sirma, by the way, is the number one volume-led gainer right now. It's up 5%. Garden Reach Shipping Corporation are up 3% and 6% respectively. So there is some movement in that space. You've got CarTrade, which is up 3%. That's the CNBC-TV18 exclusive story. So big one, which is in terms of the transaction. Ather is up about 3%. Numbers, of course. Jyoti CNC, small move. Urban Company, I mean, you know, listed at 160, went up to 200 plus, and then fell to about 130, 140. It's coming up about 5%, so there's a bit of a recovery afoot as far as Urban Company goes. Thangamile, of course, it's just a rocket, absolute rocket in Thangamile. From 2,000 to 3,000 in, I guess, what, 10 days? Thangamile, right? So that's something. Craftsman Auto, another one of those steady compounders, 2.5% higher. MTAR Tech had a bit of a wobble. It's back up about 3.5%. So lots happening. Although I must point out that just purely numerically, more stocks are down than up. About 1,400, 1,450 stocks are lower. And you've got about 1,100 stocks which are higher right now at this stage. MapmyIndia is down about 5.5% as well. So, yeah, I mean, there is stuff moving around. HBL, which was up 12% yesterday, just some profit booking, nothing more, 3% lower. It's got volumes as well. HLE Glasscoat, I think Nigel mentioned it, 14% lower on decent-sized volumes as well. So that's the picture. Ashwini, we'll leave it there. Thank you very much for joining us. A pleasure having you here on CNBC TV18. Thank you very much. 45 points lower on the Nifty. Surabhi.
Okay, well, with that, let's pivot back to corporate conversations then. And the company that we're looking at next is HUDCO. Reported a pretty steady set of numbers for the second quarter. Net interest income is up a little over 17%. And the company continues to show, a solid margin trajectory for the first half as well. The cost of funds has been coming down. We have with us Mr. Sanjay Kulshrestha, Chairman and Managing Director at HUDCO. Mr. Kulshrestha, thank you very much for joining in. Looks like another, pretty steady quarter for you. And you've already given us that guidance. You've said that as your book keeps shifting more and more to urban infra, your margins will improve. I think for the first half, you're just under 3% net interest margin. And what you told us earlier was that by the end of the year, you will get to about 3.3%. So is that trajectory on track?
Yeah, very well. I think we are on the track, and it's a half-yearly result. And you also understand there are so many businesses that we are doing, and a lot of business potential is there in the urban investment. And I'm pretty sure that we will be maintaining the figure of 3.3 in the net interest margins. And at the same time, we will keep the business ongoing in the same rate.
Okay. All right. Hi, Mr. Kulshrestha. And
Hi. Good morning.
Good to have you on the show. So we got the point out on NIMs. What about growth? You'll have to revise the estimates, right? Because going by the half-year number, it's looking spectacular. So give us the fresh guidance, both on disbursements as well as on the AUM target. Because as of now, those numbers, I mean, they will need to get revised. So for the year, what are you looking at?
Yeah, you are right. We need to revise our number, and we had started revisiting the projects and the potential on. Since we had signed a lot of MOUs, you may have seen that around 8 to 9 lakh crores of the MOUs are signed, and there is a tailwind, and we have now launched this urban invest window also, which will become a platform for all urban investment. So we need to revise our targets. That is the guidance that we had given of 1.5 lakh crores by FY26. So we had revisited, and the initial figures we are targeting is 1.6 lakh crores by FY26. But we had not worked out for FY2030. We are maintaining it as 3 lakh crores as well.
Okay, got it. So that's the numbers out of the way, both on the growth of the loan book and the margin. It's looking really, really solid this year. Now, give us a little bit of qualitative color on this. For the rest of the year and going into next year, which are the urban infra projects that are going to drive this growth? And I just want to understand which of the projects are most profitable for you from a margin perspective as well. So which ones will you bid for more aggressively?
I think if we see the greenfield projects, they are more profitable. If I compare with the refinancing kind of projects, the road sector is giving quite a fairly good kind of spreads and the NIMs for the books. We are only compromising on the social sector, that is the housing, that too for the affordable housing. And this is coming out as a counter requirement of the state governments. Presently, they are not coming up to take these kind of loans, and they are managing themselves. So I didn't look that we will be compromising on our names, but all greenfield sectors, and I think they are very promising, and we will be maintaining our spreads on these kind of sectors.
So yields are highest, you're saying, on the road infra side?
Yeah. On the surface infra side, if you see, there are good projects which are lined up, and these are huge capital which has to be infused, and there is a proper planning also. And now we had also started this private sector lending in 5 sectors, including road, port, airport, which is all mobility related. Others are the energy or power, and last one is the real estate, which is our niche sector. So I'm very hopeful that with all these kind of initiatives like private sector or urban invest window, our growth momentum will keep on going.
You know, sir, one more question, because speaking to you, we also get a pulse of the overall capex movement in the economy, right? And clearly there's a lot of infrastructure spending happening, and your book is telling us that. So can you give us some split between private and public? You know, how is your book looking now? And are you getting a lot of fresh inquiries from the private sector as well? And if yes, then for what kind of projects?
We are getting a lot of fresh inquiries and entire spectrum of the project, but we will remain selective towards the private sector projects, and will not compromise either on the entity side or on the project side. Project should be well placed with all the approvals in line, including land availability. And at the same time, they will be backed by the good concessionary agreements, maybe HAM kind of projects. And the entity should be really strong to take our funds. So
what's the contribution, sir? What is the contribution of the private sector to the book now?
Presently, there is no performing asset or from the private side. Maybe it will start growing, maybe 3-4%. But we have not set any target for the private sector.
All right, sir, I just want to push you a little bit. The AUM target of 3 lakh, by 2030, that means you'll have to grow in high teens, but you're talking about growing in mid-20s. So actually, that 3 lakh crore could actually come in closer than, that 2030, if I could just quiz you on that. And also, I missed the number for this year, disbursements, sanctions, what is the number likely to look like for FY26?
So I will start from the disbursement. Last year, we had disbursed around 40,000. This year, we are targeting around 50,000 crores. Similarly, on the sanction side, last year we had achieved slightly more than 1 lakh, around 1.2, 1.23. This year we are targeting 1.5 lakh crores. We had already achieved around 93,000 crores in the sanction pipelines. And we are hopeful to achieve around 1.5. And you are right that we need to revise and revisit our targets for 2030. But it is too early to comment on that, because there are a lot of potential which we see, and including the Urban Challenge Fund. And just on the weekend, there was a urban conclave also, and we were discussing that how to lift our face of the cities, and we have to create around 50 global cities. So a lot of investment is required in the city side, and they will become the growth hub. And as we all know that they contribute about more than 60% of our GDP. So we are working on the cities, we are working on the infrastructure, because cities are the face of our country, and to become the Viksit Bharat, around 80 lakh crores of the city investment is required. It means around 5 to 8 lakh crores of investment per year. So it's a huge investment in the cities, and we are planning our financials and the ratios so that we will be positioning in the best way.
Yeah. Final question, sir. Going back to the margin, where you're saying that you'll definitely be above 3%, 3.3, right, by the time the year ends. What is the borrowing mix looking like? Because your cost of funds has been coming down. Obviously, interest rate cuts here locally would have helped. What's the current mix like, and what are you thinking for the second half?
I think regarding income, definitely 3.3 is an achievable level, and a couple of projects we are on the advanced stage of resolution. So we were expecting the Q2 only, but nevertheless, we are on the right track, and the income will come from the resolutions as well. At the same time, we are expecting that market is projecting that there will be another rate cut from the RBI, and we are very hopeful. So we had managing our treasury in such a way that the benefit of the rate cut will come as soon as possible. It is decided by the RBI. We are also planning ECBs in yen denominated, and we are also planning the GMTN. So since Fed has already started some melting down, but we are it's a kind of wait and watch that we are doing because USD. We are planning to take some USD loans also, but we have to see what kind of interest rate they will come. But at the same time, domestic funding is coming very aggressively, and very good options are there. And with the expectation of the rate cut, I am very hopeful that most of our funds will come from the loans and the bonds, and around we are planning around 500 million from the international commercial borrowings.
Sir, we'll leave it there. Good conversation. Thank you very much for joining us, and really appreciate you being with us. Yeah, appreciate it. Well, we'll take a quick commercial break here. We are back with the management of KPIT on the other side. They reported numbers and a large deal as well. Stay tuned. Coming up. Welcome back. As promised, we have the management of KPIT Technologies joining us now. So, muted set, but the company is guiding for much better second half. Some growth in third quarter, but much better growth in the fourth quarter, and a promising F527 as well. We have Mr. Kishore Patil joining us, Managing Director and CEO at KPIT Technologies. Thanks very much. Good morning, Prashant this side. I want to, of course, start by talking about this big strategic deal that you've announced, sir. $100 million plus is the TCV. And this is spread out over 3 years. Could you talk to us a little bit about how much this could add in terms of, top line, what it could mean for margins as well?
So, generally, as I said, our general growth comes through a regular increase in the business. But in some cases where there is a more strategic strategic engagement with a new client, typically then this kind of a deal can happen. And in this case, it is a multi-domain, multi-year kind of a thing where we are taking the full ownership of certain domains of the client, which include basically electrification. It includes a digital cockpit and some part of autonomy. And that's how it's this kind of domain we are taking. And generally, I mean, all these deals would not be any would not have any margin dilution. The ramp up would start from already during this quarter. We have already started the engagement, but you know, and it will keep on increasing. And over the next year, it will ramp up fully, and then next 2 years we'll get the highest returns. That's how it.
All right. Hi, sir. Good morning, and good to see you, and Mr. Patil. You know, I was looking at your constant currency revenue growth. It was around 0.3% quarter on quarter. Caresoft acquisition, that would have contributed ballpark 2.5%, which means the organic growth actually was negative. Could you explain this to us? And in quarter 3, do you get back to a positive organic growth number?
Absolutely. I think what we have reported is minus 2.3% negative constant currency growth, while the reported growth is higher. But we have said that in the Q3, organic growth will be flattish to positive, and in Q4, there will be a meaningful growth. So absolutely, that's what we are seeing, and that is not only on the back of this deal, specific deal, but it is also back of overall recovery we see. I mean, we see the positive discussions with our client. We see a positive traction in certain segment. Europe seems very positive. We see India very positive. We see certain areas in terms of autonomy, digital cockpit very positive, and aftermarket diagnostics very positive. And based on some of these technologies and regions, we see this as a way going forward.
Okay, all right. And Caresoft for the year will contribute around 5% to the revenues?
Caresoft would be, yeah, roughly I would say, less than that. But yes, because we have been doing some business with them also in the past. Okay. So looking at that, net addition would be anywhere between 3 to 4%, maybe around that. But yes, but I think it will be there will be a growth now going forward in all the in Caresoft too.
All right, but you're sticking to second half of the year will be better than the first half of the year, and Absolutely. If that is the case, you know, you said that organic growth, one quarter is down, next quarter is flattish, quarter 4 will be better. For the year, what kind of organic growth should we work with?
I would not give still a number. I will give you in the next quarter end. But it is very obvious that will be there is a clear growth which we have been showing on quarter to quarter. So I think from that perspective, we will continue to go this. I will be in a position to give you a number next quarter.
But sir, you can't give us a number, Mr. Patil. Morning, sir. But can you give us some idea about what makes you confident? Because the lack of organic growth is something that's been weighing on the market's mind as well. So what are the kind of deals that you're hoping to close? What are the sort of conversations you're having with what kind of clients that you think can get you back to growth?
I don't think I can say anything more than that, because we have already $230 million of wins. But more importantly, one large deal, which we have said. We said that we have already started working on that. It will start ramping from the next quarter. We have said that we see a very positive part of the commentary from the client. We have talked about the markets, Europe and some part of Asia, where we see a very good traction. We see also good traction in terms of off-highway and commercial, even in US and other parts. So I think these are the areas will give us growth.
So this is a large deal that will start ramping up from the current quarter, Q3.
It has already started during this quarter, but I'm saying it will go. It will ramp up next quarter and quarter after.
Okay. And sir, then what are the implications for margins? I mean, you're saying that growth will start coming back, organic growth. On the margin front, you're at 21%. So
I think, yeah. So basically two things. One is, as I think you would appreciate that with all the volatility, we are one of the companies which maintained our margins. And the thing is, there are 2 to 3 reasons why we believe we will be in a position to continue to do this. First is we have moved a lot of our business to, I would say, higher-ended service, which is solutioning. And from last year, we have doubled the revenue. About 18% of our business is in solutioning. I think that gives us a little higher margin, and that is one part. The second thing is we are, of course, bringing efficiency in the operations with both of these kind of things, and we have not seen much pressure on the pricing.
Yeah.
So with all this, I think we will be in a position to maintain the margins.
Okay. That's an important. So just a question on the margin. That's an important point that you made, that you're not seeing pressure on pricing, and we're going to keep that in mind. But isn't there a wage hike? I'm not sure if you've already taken it in the third quarter. Are you planning to take one? So can you maintain 21% even in Q3, Q4?
I will give you two data points, and I will come to your specific question. Our fixed price projects have gone up significantly. If you look at it, it is, and that means that we have a fixed price project. We are not looking at rates in terms of per person, but overall project, and bringing the efficiency through AI and automation. All that we are doing, and that helps us to do that. Absolutely, we backed the increments. We will give some increments next quarter to many of the junior grades, and then from the quarter after to the senior grades. It's selective for the high performers, which we are giving. And that is backed in what the numbers we are giving and the margins.
Mr. Patil, just one question from my side. We had another IT services company, which essentially, I'm paraphrasing, but what they said is that because clients are focused so much on AI and boosting spending towards that, especially in the TMT sector, existing sort of business, perhaps, I mean, the focus, there's a limited amount of resource, so you're focusing on one and maybe at the margin at the expense of the other. I think you've also in your, release characterized that AI-led holistic solutions are eating away at the existing revenue base. There was some number that you specified. Could you just talk to us about this? I mean, what's the direction of travel? Is this likely to, chip away at the existing revenue base?
Yeah, I think we have gone away from the model where we believe that there is a ODC and there are certain headcount, and that's what will continue to give us the revenue, and then you add certain headcount. I think the industry has moved away from that and is moving away significantly. So from our perspective, basically, the whole purpose for us is we expand and give a more holistic solution, not only what we have been doing, but much more than that, and take the full ownership of a project. And that we do along with the AI and other things. So our basic objective is to continue and maintain the revenue as far as possible, naturally what is relevant, but give a much higher productivity to the client. And that is what we are trying to do.
But it will not eat away from the existing base of revenue, all of this? No.
But in some existing, so what I'm saying is existing part of the revenue will get transformed. But of course, the growth will come from the places where I mentioned. But this will actually give us a higher margin and also some additional revenues. So I think it's a process which we are taking, because when the initial projects you take, it's different. But we believe actually on the back of this, there will be a larger revenues we can take from the client.
Okay. All right. And of course, as you said briefly, productivity gains as well, which perhaps come in. Yeah, thanks very much, Mr. Patil. Appreciate you joining us, and good speaking with you. As you said, it's a transition phase, I think, not just for you, but for many other companies. As all this is underway at this point in time. I'll just take a quick look at the market, which is down 80 points now. So I think we're at the day's low. I mean, or at least we're in the first 1 hour of trading, and we are at the low point of the day so far. So 25,488 or so is where we find ourselves at. Jindal Stainless, Nigel, is the next management with us.
Well, that's right. Jindal Stainless, that's the next management on our radar. The company reported actually a good set of numbers. The EBITDA margins did show some kind of improvement. To discuss this, what went on in the past quarter, what's the way ahead, we're joined by Mr. Tarun Kulbe, the CEO and CFO at Jindal Stainless. Hi, sir. Good morning. Good to have you on the show, and interested to hear how was the quarter and the way ahead. Let's focus first on volumes. I recall you telling us that volume growth should be in the vicinity of around 9 to 10%. At the half-year mark, you've done around 11.5%. So for the year, what kind of volume growth will you be looking at? And also touch upon exports. That market continues to be in a bit of a tizzy. I recall when you used to do more than 15% of your volumes were exports. Now, Europe is a key market for you in terms of the exports. They will be implementing carbon border adjustment mechanism. Will this lead to lower volumes out there?
Thanks, Nigel. So, so far as we as a company is concerned, you're right that we consider export market also important. And while predominantly we are a domestic focused company, so for us in the export, US and Europe, both are definitely one of the true major markets. And as we can see that uncertainty in the global market is there as of now. In fact, for the past some months, that uncertainty is constantly prevailing. Because geopolitically and globally, the policy changes, whether it is in US and also in Europe, so many changes constantly are happening and creating a lot of confusion in the market. Now, another aspect which you have touched, that is also true, that CBAM is going to get triggered from the month of January in Europe, and definitely that will also have certain impact. Beyond that, some quota and all also is in discussion. But the point is, there again, a bit of uncertainty because the Eurofur has to come out with clear guidelines, clear benchmarks, so confusion remains. Now, under the circumstances, while we are constantly watching these markets and dealing in the exports, wherever we see the kind of opportunity, but we remain focused on our domestic market, which is growing, which is constantly growing, and we are finding that opportunity. Looking at this, I will say that so far as our volume growth of 9 to 10%, whatever we have, the guidance what we have given, we are confident that we will be meeting that. But export, we will be watching and trying to do more as a balancing number under the current situation. But overall volume growth, whatever guidance we have given, we are still maintaining that.
Okay, all right. Let's focus on the profitability then. You have done better EBITDA per ton than the guidance, right? Earlier, you were guiding for 19,000 to 21,000. What contributed to this? And do you want to upgrade your guidance on terms of EBITDA per ton? Also, tell us about the pricing trends internationally on stainless steel. Is it higher in quarter 3 in comparison to quarter 2?
Okay, so on one hand, I just talked about that the volume growth, what we have given. So all this volume growth, there are another aspect of that is that constantly we have been saying, even at the end of the last quarter call also, I had said that we as a company are constantly focusing on the value-added products and the products which are higher end applications and all that. And our subsidiaries are now performing much better, and we are more and more value-added product like cold roll we are able to sell into the market. So all these aspects, along with the increased volumes, is helping us in improving our EBITDA numbers. Or obviously, the cost is also they are helping us in keeping a bit in control, and we are able to hit our EBITDA numbers.
But do you want to upgrade it, sir, from 90 to 21,000? Do you think now it can be towards the higher end, 21,000 rupees per ton?
So, Nigel, at this stage, we would like to be watchful. As I said, that there is a continuous, so many uncertainties which are floating around. So, we would like to maintain our guidance, but and we believe that at this stage, we would like to maintain that.
Okay, 19 to 21,000 with 9 to 10% volume growth. Pricing, how is it internationally? I understand that prices have improved for stainless steel, correct?
So prices, again, on one hand, the prices are a factor of the raw material all along we have been saying in the stainless steel. Okay. But yes, there are sentiments also which impact. So when these kind of uncertainties come, sometimes the pricing pressure also comes. Now in India also, I think you must be aware of like the uncertainties due to different government decisions regarding TCO, allowing import, not import. That also impacts the pricing pressure. So, but at the same time, as I said that for us, it is more of raw material, and then we try to see. So as of now, I'll say in India, there is a somewhat downtrend in the pricing we can see, but internationally also it impacts that way.
Okay, all right. In India, it's a little bit of a downtrend. I think some checks tell me that, globally prices have improved, but as of now, you're seeing no big trend on that front. So we take that point on board. You briefly mentioned that VAP, that's the focus area. VAP as a percentage of sales, what is it? Where is it headed? And briefly, you could tell us defense. That's another focal point for you all. You all have mentioned that numerous times. It is a smaller part. Where is it headed? Currently, how much does it contribute?
So defense, Nigel, if I say that it is more of a niche product, and that is something we take more proud, because by doing that, we are able to demonstrate our even capability on the quality front and the quality standards. And this helps us to substitute many imports which are used, because in this defense, whatever material we give, it goes into the niche products of even missile launcher and submarine launcher, those kind of applications. And this also supports, of course, Atmanirbhar Bharat. So this is a beginning, I will say. So far as but we are building on it. We are building more of our capabilities. Yes. We have made some investments into the facilities which will help us in becoming more and more equipment, more and more grades, so that we can supply for these applications.
Final question then, sir, and I'm looking for numbers here. CAPEX guidance for the year, how much is it? If you could tell us how much have you spent, CAPEX? And net debt number has come down a little bit despite the CAPEX that's underway. Where is this number headed? CAPEX.
Okay, so CAPEX guidance, Nigel, we had given 2,700 crores for this FY 26, and out of that, 1,260 crores now in the H1 we have already done. So we are on course of that. And so far as our net debt is concerned, which was around 4,000 crores in March 25, we had given a guidance of 3,500 to 3,700 for this financial year. And at the end of H1, we are at around 3,650. So I think that is also, and our ratios, whether it is debt to equity and debt to EBITDA, they all are very much in control, one of the best in the industry.
Okay, all right, sir. It's a pleasure having you on the show. Thanks a lot for joining in. You've given us a brief idea, a sneak peek into how you've seen things panning out. The last quarter was good, actually, but we'll track you to some of these numbers. Thanks a lot for joining in.
Okay, that's Jindal Stainless. By the way, I think we'll put out important news updates from Delhi coming in on a separate matter, not the blast. But our colleagues in Delhi are reporting that I think Delhi is going to be implementing stage 3 of the Graded Response Action Plan. Because of the severity of the air conditions. It's actually in severe category. That's what Parikshit is telling us, that AQI is at 425. And with this, restrictions like stopping all non-essential construction or demolitions, all that gets put on hold. And there will be a restriction on usage of BS3 and BS4 vehicles as well, basically, with the old emission norms. So those are some of the emergency measures that come into place in Delhi. However, coming back to the market, just an eye back on these stocks. They continue to be in focus, both Bajaj Finance as well as Britannia. We'll get in Manglam on Britannia in just a bit. Bajaj Finance is still down about 7%. We'll just get you some broker notes as well on Bajaj Finance on what people are saying. Morgan Stanley is saying that this dip is probably a good chance to add Bajaj Finance. Bernstein is one of the biggest bears on Bajaj Finance because of the asset quality issues. So more on it as we go along. But for the time being, let's get to our technical expert. Siddharth Rai Mangla of Stockbox Technologies is with us. Siddharth, give us your view on the market, any stock trades, and maybe a specific view on Bajaj Finance as well in terms of the technical levels now.
Yeah, sure, Nifty. Hi, Surabhi, sorry. Good morning, and thank you for having me on the show. See, So we talk about Nifty first of all. The data that has built up since opening today is not very encouraging for bulls, Surbi. Just in the options data, if we look at the options data, more than 60 million new call option writing positions have been added just in these three important strike prices from 25,500 to 25,600. On the other side, in the puts, on the put side, there's the addition in put writing positions is less than 1/3 of this. So the resistances have become very, very strong now, and Nifty spending time around 25,500, playing up and down below around 25,500 will only weaken Nifty's momentum. And I do think that if Nifty goes down around 2,500 and 25,500 and spends some time below 25,500, we might be seeing a quick dip towards 25,350, 25,300 because all these put writing positions will start unwinding the positions. So the data is not looking very good for the index specifically.
Okay, Siddharth, stocks, what would you trade?
Yeah, sure, Prashant. Hi. See, there are two stocks right now. I do think that it will be much better to keep a balanced approach. There are definitely some pockets where we are seeing some strength. Defense is one of them. So the first one is from the defense space. We have to buy this one. The stock's name is Bharat Electronics, BEL. See, today we saw an open low being made in this counter. Stock started running exactly from the point where it opened, and it tells us that the stock is in a very good momentum. BEL can be bought right now. The spot is trading around 423. We can buy it here. The stop loss will be 417, and the targets being first target 430, the second target around 435. The second stock is Indian Hotels. This one we have to short because the stock looks very weak. The structure is very weak. Just a couple of days ago, the reaction to its quarterly results was very bad. And post that, I'm seeing a continuation to that weak momentum because the stock is maintaining it around below 700 levels. That's a very big mark for the counter. So this weak momentum can continue. Indian Hotels we can short. Right now, the November futures are trading around 698, 699, somewhere around that region. So we can short them there. The stop loss will be 707, and our targets being the first target 680, the second target 675.
Okay, all right, Siddharth, thanks very much. Those are trades coming in from Siddharth this morning. Well, Britannia is taking a bit of a dive. Let's just revisit that story with Mangalam. Context and perspective, right? I mean, the background, I think, is important on this one. Mangalam, take it away.
Well, it's the abrupt nature of Varun Berry's exit which has the street a little worried. That he was likely to retire was pretty much on the cards ever since, the company announced Rakshit Hargave from Birla Opus as its CEO with effect from December 15th. The belief was that maybe Varun stays on as MD for a bit before, handing over the entire company as MD and CEO to Rakshit Hargave, and this was something which was pretty much expected by the street, especially at a time when the second, the third and the fourth quarter were supposed to bring out better results for the company fundamentally as well. But what caught the street by surprise was the board's immediate acceptance of Varun Berry's resignation without any notice as well. So Varun Berry in his resignation letter did write that he is ready to serve notice and also, help with the transition, but the board's immediate acceptance of that has the street a little worried, largely because it comes, within less than a month of Rakshit Hargave actually coming in as CEO. So they've appointed an interim CEO in the form of N. Venkatraman, who's currently the CFO, and that uncertainty is something that the street does not like, and which is why we are seeing the stock take a sharp nosedive.
Okay, all right, Mangalam, thanks very much. 5% lower as we speak. We take a break. On the other side, Manisha joins in with what's the latest as far as the commodity action is concerned. Stay tuned.
Welcome back. So the equity market is having a bit of a dull morning, 60 points lower on the Nifty. But let's find out what's happening in commodities. Earlier, Manisha told us that obviously gold is back to its glittering ways. Let's see what she's tracking now. Manisha?
Oh, yes, I'm looking at precious metals because this is a segment that seems to be coming out from its consolidation period, which we did see last almost like a month there. But look at the gold prices, and we've seen 2% of gains in the overnight market. All-time high has been 43.80, and we are trading at around 41.50 at this point in time. When the correction did come after hitting those all-time highs, we did see gold prices go down to 39.25 on the lower side as well, but trading not just above 4,000, but above 4,100 as well. Same is the case with silver, 4% of gains in the overnight market. All-time high has been 54.5. We've seen prices decline below 48 as well, but we are trading above 50.5 at this point in time. So a very strong comeback from the kind of lows that we have seen in gold and silver both. I mean, remember, those were overheated levels, and some profit taking is something that the markets were anticipating, and there's a smart rebound from there on. The support also comes in from the fact that there's a growing expectation now of a Fed rate cut in the month of December. This is on the back of weak economic data that we have seen come in from US. So the US consumer sentiment is at the second lowest reading on record. That tells you that the rate cut perhaps is an important thing. Apart from that, the labor market also shows weakening signals. The US jobs layoff surge to the highest in 20 years when that data came in the previous week. So that has been quite supportive as well. And because of this weak data, you have the US dollar index, which has declined yet again. We did see dollar index go to 100 and plus, but that has not been the case in last couple of trading sessions therein. And then apart from that, this has been the ever longest US government shutdown in history. While there is consensus that we would see the US government reopen on the 1st of Jan, but until then, the kind of missing of data and the impact that it has had on spending and budget is something that the street is taking cognizance of. And then this is the most important one. The global central banks have bought 634 tons of gold between Jan and September. The last 3 months perhaps could see another 150 to 200 tons. Remember, for last 3 years, the gold buying by central banks has been up to the north of 1,000 tons every year. And that perhaps is exactly what you could be looking at as a number this year as well. Chinese central bank buying has been constant for the last 12 months, and that clearly has been very, very supportive. This is after this recent jump is what we've done in sense of gold and silver prices in this year until now. So gold is up 57% and silver is gained up by 76% in this year till time. But I want to focus slightly more on gold and the expectations for 2026 now. Most of the global banks have started to come out with their forecast for the next year. Morgan Stanley has talked about 4,500 by mid-2026, and then they will take a call on how the second half looks like. Wells Fargo talks about 4,700 by the end of 2026. 4,700 is by March 2026. A possibility is what UBS has come out in sense of a report. But the most common and agreed upon price really is $5,000 an ounce by the end of 2026. That is the view coming in from JP Morgan, also by HSBC. JP Morgan also says, by the way, that in next 3 years, they expect the gold prices to consolidate, keep moving higher, and $6,000 an ounce is an expectation going forward as well. But then take a look at Bank of America, Society General, Goldman Sachs. They're all talking about 5,000 to 5,055 of a level by the end of next year. So clearly, higher highs is what the markets are anticipating. Till time, we've almost done $4,400 an ounce. And from these kind of levels, another $600, $700 of a gain is what you could perhaps see by the end of next year as well.
Okay. All right, Manisha, thanks very much. Interesting stuff there. Well, we'll take a quick commercial break here. Coming up on the other side is our special segment. It's the economy. Lata discusses the sharp rise in aluminum and copper prices with Gregory Shearer of JP Morgan. Stay tuned. That conversation is coming up next.
Welcome to It's the Economy. Actually, we are continuing where Manisha left off. Today, we are discussing metals. Copper and aluminium prices have gone through the roof over the past 6 months, from lows of about $8,700 per ton for copper in April. Copper prices have jumped nearly 23% to over $10,800 today, while aluminium prices too have risen by about 25% from their April lows. As a result, metal stocks like Nalco, Hindalco, Tata Steel and JSW Steel as well have been big outperformers on a year-to-date basis. To understand where metal and steel prices are headed, we have with us Gregory Scherer, the head of base and precious metals research at JP Morgan. He's joining us all the way from London. So, Gregory, thank you very, very much indeed for joining us. Let me start first with aluminium prices, because there are significant Indian listed companies in this space. What's your guess? Are we going to continue to see aluminium prices ramped up in 2026 as well?
Yeah, so from our perspective, we see aluminum prices heading towards 3,000 by the first quarter of 26 and remaining quite elevated through the first half of 26. We're in a market here that in the very near term remains very balanced with supply risks. We have outages in Iceland. We have potential for significant capacity in Mozambique to go offline from March 2026. And Chinese capacity is still capped and running up against their 45 million ton cap. On top of that, and I'm sure we'll get to this, we remain quite bullish on copper and think that there's a magnetism higher from copper prices, which continue to pull aluminum up towards around 3,000 in the very near term as we look to the first half of 26. Now, broader speaking, we do think that Indonesian supply growth, as we look to 26, 27 and beyond, is very much the real deal. We have something approaching almost 1.5 million tons of additional Indonesian supply growth over the next 2 years. And that will begin to sort of undercut the market, but we don't think that's a story until later into 2026. And particularly, we think at prices close to 3,000, those Indonesian producers are going to be very well incentivized to bring on supply, but in the very near term, still looking like a very sort of tight balanced market, with particularly copper tipping the scale and pushing aluminum prices higher as well.
Okay, so aluminium higher because of copper. Actually, I did read your report, and I ought to have started with copper. It's just that there are more listed aluminium stocks and hence more viewer interest. But let me come to copper itself. What is the sense? Are you getting a sense that copper prices are also headed even higher?
Yeah, we actually think copper prices on the LME are headed towards 12,000 in the first quarter of 2026. What you see in copper is a market that we see two important dynamics. The first one being we're in a very dislocated inventory environment. The US has over-imported by over 600,000 metric tons. But at the moment, because of the potential for there to be a refined copper tariff on imports into the US later in 26 or in 27, US COMEX prices continue to stay above LME prices. And that has two important key dynamics. A, all of that copper that's been shipped to the US is essentially locked in the US until you see prices change. And B, the US continues to take near normalized around 60 KMT a month imports despite having significant levels. So what that's really done is drained inventory from the rest of the world, and Asia in particular. Then you enter significant disruptions, which has basically led to our forecast that we see in the fourth quarter already a significant refined deficit emerging. And then over the course of 2026, given the outages we see at Grasberg in particular, about a 300,000 metric ton deficit. So ultimately, what we really see is that this is quite a very bullish near-term setup. The Asian refined copper market, which is feeling stress from both the US as well as Europe, getting very tight, and that the front of the curve, and particularly LME prices, we think are headed towards around 12,000 in early 2026, have much higher to go. The big risk right now, Chinese demand is a bit soft every time we test 11,000, but we ultimately think, look, these supply disruptions are not going away. And from that perspective, we do embed a bit of a weaker Chinese demand environment, but ultimately see us going towards a place where China is essentially going to have to almost stop into this, and that really much tighter dynamic of a market as we look to 2026 is quite influential to driving prices higher for copper.
Okay, so $12,000 in copper. Well, let me come to steel. We saw major disinflation in steel, with Indian steel makers actually demanding anti-dumping duty on steel coming into India. Any guesses on how Asian steel prices go from here on? Are we likely to continue to see steel disinflation in Asia?
Yeah, so from an India perspective as well, our equity analysts who are metals and mining equity analysts who cover the Indian steel market do still see through the March end quarter about a 3,000 rupee per ton increase in Indian steel HRC prices. Not only are they expecting post-monsoon to see a recovery on the demand side in terms of construction, we're also expecting a bit of a continued extension on the dynamics you were talking about, anti-dumping. The big risk here is that we are seeing still oversupplied levels coming out of China. That is, in our view, not going to drive a surge higher in steel prices. But ultimately, they're also not really embedding any significant sea change in terms of Chinese stimulus, which could change their sort of domestic S&D dynamic. And that remains one of the most bullish risks out there in terms of Asian steel prices.
Okay. Well, this anti-involution policy of the Chinese government, capping of steel output, wouldn't that make for, some definite level of bullishness?
Yeah, ultimately, down the road it does, but there's still a decent amount of work to be done on the oversupply. So it's setting the groundwork, and this has been something that's kind of been a give and take throughout, many different, a few years here now. But as we look forward, it sets the groundwork, but we're still working through a bit of some oversupply in China.
Okay. Well, now let me come to the, reserving the best for the last, gold and silver. We did see a dip in gold prices, below the $4,000 mark, but it's come back strongly. What's the guess for gold up to the end of the year and early next year, early 2026?
For gold, in the very near term, what we've seen is we saw a pretty exceptional level of demand in the third quarter of 25. Just to put it into context, if we think notionally, it was almost $105 billion of demand across both central banks as well as investors, so inclusive ETFs, retail, bar and coin, as well as futures. To put that in context, that's almost 80% higher than what we've seen in the previous 4 quarters. So the market's digesting that now. We had a lot of ETF flows as prices ran up towards and above 4,000. What we think is that this correction is ultimately quite healthy, right? We need to digest that level of inflow. As we look to 2026, nothing has structurally changed in our view. We remain very bullish. We have a year-end 26 target of just about touch over $5,000 per ounce. What that looks like is we think, in the very near term, you're in sort of a level between 42, 43, and then you begin to move higher as we go into, into year end and early 2026. And what you do actually see is some pretty strong typical seasonality around year end and into the first few days of January. And we do think that could be kind of a catalyst here. So, to recap, near term, digesting some pretty impressive inflows on the demand side, particularly in terms of ETF growth. As we look to next year, still expecting central banks to be buying something around 760 tons. On top of that, expecting investors on ETFs to be adding something around 360 tons. When we add all that together, still very much a bullish trajectory, and expecting prices are, next stop is towards $5,000 per ounce.
Oh my God, $5,000. Well, can you just give me, for 2026, the average for gold and the approximate range?
So in terms of the average, what we're seeing is something that comes in roughly around 4,600 to 4,700 on average. And then from a silver perspective, ultimately, we do think that what you saw was a bit of an illiquid move higher with very exceptional Indian demand pre-Diwali, ETFs creating, and this worries about Section 232 critical minerals, keeping metal in New York. as we look towards 2026, we do still think you're headed towards a range that's something around 55, 56 by the end of 2026, but a little bit more orderly and following gold higher as we go deeper to next year.
Would you say silver will follow the same trajectory?
Yeah, we think ultimately that how we kind of think about that is in the gold to silver ratio, which we ultimately think is at fair value between an 85 to 90 ratio range. We dipped down towards 80. We think that was a bit of silver outperformance given some of the liquidity issues that we saw. Ultimately, we do think we're probably past that peak, really significantly backwardated London market, restoring a bit of free flow tons. And from that perspective, see it being a little bit more orderly of an increase as we look to 26.
Okay. All right. Let me end with a question that's designed more for your economists. For a better part of 2025, economists were telling us that Asia will be ridden with disinflation. But with this bullishness in some metal commodity prices, will Asian disinflation go away? It won't be that severe. Will Asia see any bit of inflation?
So, yeah, we have been seeing, and our economists have been tracking disinflation across Asia, particularly driven by, Chinese exports. We are beginning, it's quite interesting because they've been tracking recently a bit of a turn in Asian inflation. That's mainly so far been driven by food price inflation. Where we're actually still seeing trends of disinflation and that kind of continuing to move forward is in EM Africa, as well as sort of EM Edge Europe, where actually the disinflation that Asia had been feeling for most of this year is now kind of moving a little bit further abroad. We do think that there will be this sort of dynamic higher from a raw material price, particularly on the metals side. Yet we're still thinking, our oil strategists are still looking for prices sort of in the upper 50s to lower 60s for Brent. So we do think that that is still relatively constrained, which keeps things relatively orderly.
Okay. Yes, there is, of course, crude is heading lower, or at least not able to break even $65. Thank you very much, Gregory. It was a pleasure having you with us and for a 360-degree perspective on all metals. Thanks a lot for joining us. We have to wrap up on Bazaar on that note. Chartbusters coming.
Bajaj Finance reports a strong quarter in line with expectations, but the stock slips 7% as the company has cut its AUM growth guidance by a percentage point from 24-25% to 22-23%.
Britannia also slumps 5% as the MD and CEO, Varun Berry, resigns with immediate effect. N. Venkatraman takes charge as the CEO in the interim ahead of Rakshit Harge's appointment as MD and CEO from 15th of December.
HEG rallies 9% following a strong second quarter. Revenue grew 23%, whereas the profit surged 75% in the quarter gone by.
Vodafone Idea surges 6% as losses narrow in the second quarter. ARPU also rises by over 1% sequentially.
CE Infosystems under pressure after a weak second quarter. Stock slumps over 5% as the EBITDA falls 30%. The margins contract 13 percentage points.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as you can see to the top of the screen, the markets are clearly a bit nervous this morning. Both the Nifty and the Nifty Bank are lower, and the breadth of the market is in favor of the number of stocks declining. Two big triggers in store. One is the outcome of the Bihar elections. We could get the exit polls later this evening, which could be making the street a little bit nervous. And the other factor is, do we get a trade deal at some point of time with the United States? So we'll keep an eye out on both those two factors. Mangalam?
Keep an eye out on both those two factors, Nigel. And, this 25,400 to 25,450 mark has been a bit of a support in the past. So let's see where that goes from here on as well. But let's, get chatting about the primary market. It's been a fairly busy period for IPOs, and this one comes in again. We have Prateek Maheshwari, who's the co-founder and whole-time director at PhysicsWallah, as their 3,100 crore fresh issue and a little more than that in terms of secondary issue hits the street today. Thanks a lot for joining in, Prateek. It's an interesting space to be, because as Nigel and me as students would have definitely learned from a lot of the coaching centers, etc., that came by. Unfortunately, we had passed out of school before PhysicsWallah actually was of any use to us. But, when it comes to the investment space, there were so many companies in the education space. There was, I can think of, Treehouse, Zealand, MT Educare, Everon, Career Point, and in the unlisted large space, there was Byju's as well. What makes you confident about sustained growth and path to profitability, especially when you're asking for 10 times sales? And it's a large, good macro opportunity that everyone speaks about, but history suggests very otherwise when it comes to the education space.
Thanks, Mangalam. Fundamentally, all these companies which you have mentioned, none of them have ever seen 4-digit CR revenues in their lifetime. We are a tech company, using mobile and website technology to provide access to Hindi heartlands and tier 3, tier 4 cities of country. See, fundamentally, what we have what makes us a unique company is, one thing is our community building playbook. Currently we have 12 crore students on 800 different social media channels with us, so that keeps our CAC near zero, to acquire these students on our mobile application. And second thing is, we are giving highest quality education at a very affordable prices, so our average course fees is 4,000 rupees for entire year of live learning, doubt solving, mentorship, revision put together in just 4,000 rupees. For India's toughest examinations like JEE, NEET, UPSC, SSC, banking, CA Foundation, commerce, everything put together. And if you see historically, we are the fastest company to reach 3,000 crores of top line, not just education, not just consumer internet. Any company who has been come to public markets, less than 5 years, we have reached 3,000 crores of top line. And very healthy bottom line as well. Our revenue have jumped 4 times in past 2 years. EBITDA is also jumped almost 4 times in past 2 years.
Okay, all right. Hi, Prateek. Good to have you on the show. So we take your points on board, and congratulations on on developing a business, a unique business. What the market has to say, that we'll know in the time to come. But you'll have definitely put together a very good and interesting business, which will help a lot of the youth of the country. So kudos to you all. Let's understand a couple of factors then. As you said, growth has been beautiful. Cost of acquisition is virtually zilch. But what about the path to profitability? Because market appreciates a good story and a good business, but ultimately shareholders will say, where's the profit? So is the path to profitability on?
Yeah, so path to profitability is not a challenge at all. It will come very soon. See, if you see our FY24 numbers, cash from operations were close to, more than 200 crores. In FY25, cash from operations were almost 2.5 times, more than 500 crores we have generated from core cash from the operations. If you see leverages in terms of people cost as a percentage of revenue, FY24 it was 60% of the total top line. FY25 it declined to 49%. And similarly, there are a lot of leverages in marketing cost, in tech as a percentage of total cost. As well as people as a percentage of total cost will come in future. See, we operate on a mega classrooms where thousands of students study together in an AI powered live learning environment. Every additional students brings additional EBITDA to us. So it's a very, very unique business model where 500 online teachers are teaching 50 lakh.
Right. We understand the uniqueness of the business model, and we understand that there would be leverages accruing from lower employee costs, lower technology costs, and higher student enrollment, etc. as well. Can you give us a sense on by when you will turn profitable, and how much more can your margins expand from current levels?
See, unfortunately, I cannot give you any definite forward guidance, but path to profitability, it's it's very near. See, in India, there are 30 crore students, and we are teaching only 1.5% of this market. So this is a huge, huge market, lying out there. And especially our price point and, the amazing technology stack, which we have cracked, allows us to, to capture that market. 3 years before we have ventured into, offline, tech-enabled offline learning mode as well. We are the fastest growing offline chain in the country. We have opened 170 centers in past 2 years, which is
Prateek, and that is reflective in your numbers as well. Your top line has compounded at over 100%. You are seeing some benefits of that coming into your operational performance. But what we also want to understand is you've moved from 28 stores in FY23 to about 300, offline places. This is also more EBITDA dilutive, also more ROCE dilutive, because you are opening these stores. Each of these, centers have a payback period of over 2 years. So what I'm trying to understand is, while business is growing, you will have to also keep on investing to cater to this under-penetrated market that you're talking about right now, right? So when you look at growth and when you look at your investments, put both of these things together, what could be a predictable growth rate? And I'm not asking you for specifics. You can give us a direction. What could be the predictable growth rate on the revenue and the EBITDA front be for you?
See, growth is not a challenge at all. As I mentioned, we are fastest Indian company to achieve 3,000 crores of top line in less than 5 years of the timeline. See, offline, you rightly mentioned, offline at a steady state is a 15 to 18% margin business. But I'm number 5th player in offline. My market share is less than 7%. So there's a huge, huge headroom to expand. It will be a compounding story for next 10 years. The stores, the 170 stores which we have opened recently will turn profitable. So the second year is the year when the offline stores turns profitable, and third year is when the offline stores start generating return of capital happens at third year. And if you see my market penetration, it's not even 7% as compared to my competition. So there's a huge headroom to expand in offline, which will give me enormous revenue growth. But at the same time, online, which is we have a market dominance. We are teaching 20 times more kids in online mode of learning than our competition. And that makes us a very unique company. My offline learning centers are linked to online. 80% of my offline admissions happens through online. So that keeps our CAG very low in offline mode of learning as well. While any center, when we decide to open, we look at our internal data. If we have a critical number of students in online learning in any pin code, we just open a center there, sends a notification to the students and bring them into offline event, and our centers get filled. So it is a very unique business model. We are riding the wave of internet and and delivering great outcomes for the students as well.
Correct. All right, Pratik, I'll tell you what. Today you have joined in, you have educated us about your business and given us some insights. And as you repeatedly said, it's a unique tech business. Next time around, we're inviting you. We're looking forward to hearing more about the numbers, the path to profitability, how much more money would you require, in the time to come to grow the business, and also the high attrition rate. We'll talk about a few of these factors. For the time being, all the best with the IPO. On listing, re-inviting you to come back on the channel. And in fact, we'll quiz you a little bit more on some of those numbers.
Yeah.
For the time being, slip and short break, come back, continue to focus on markets. Sneha Seth of Angel will be waiting for us.
Welcome back. The market now seems to have extended its cut a little bit more. When we started the show, it was closer to 25,490. Now it's at 25,450. And what's taken it lower? It's the usual ones. We are seeing extended cuts on Bajaj Finance, Bajaj Finserv. But ITC too has taken a leg down, currently at the low point of trade. And we are seeing some selling in Axis Bank as well. Good time to bring in Sneha Seth, who is the derivatives research analyst at Angel One, joining in with some picks. Sneha.
Now, if you look at the market today, we have seen some profit taking, and the IT pack has been showing some strength in last two sessions. So I believe one counter which I'm liking at current level is persistent system. Now, if you look at this counter, after a strong move, this counter was consolidating. finally it has managed to surpass its resistance zone placed around 5,950. So I believe we can see follow buying coming in this counter, because the previous up move was supported with volumes. So I believe one can go ahead and long this counter for the target of 6,200. Stop loss can be maintained around 5,870. Apart from this, the another counter which I'm liking is from banking space, that is IndusInd Bank. Now here the chart structure looks quite good over here. After a long time, this counter has managed to surpass the 20 demo on the weekly chart structure. So I believe we can expect further upside over here. So I would recommend buying this counter with a strict stop loss of 507, and the target expected will be around 850.
Okay, all right. Good to see you in Sneha. Thanks for those picks. But tell us on the index itself, on the Nifty, we're down 120 points. We're approaching the lows that we saw last week, which was ballpark 25,300. You think we are in for a bigger correction from here? And what are the levels you're looking at?
So overall, if you see Nifty, what move we have seen, there was a resistance, the rising trendline resistance, which was placed around, say, 25,400, 25,300, that zone itself. And the counter, Nifty managed to surpass that. Now we have seen some profit taking. So I believe 25,300, 350 should be acting as a support. And on the higher side, 25,700 is the resistance zone. So this is the range for Nifty. Looking at the overall structure and especially the FI's activity, wherein the long short ratio is around 30. So I think it is quite oversold. And if we see some buying interest coming in from the FI's front, even I would say that that would be a positive development. So as long as Nifty is managing to sustain above 25,300, 25,250, I would use this kind of a dips to go long.
All right, 25,300 and 25,250. We take that point. Thank you, Sneha, for joining in and giving us your picks and a view on the index. Let's talk about one of those index losers today, Bajaj Finance. Down 7% as we speak, closing in on that 1,000 rupee mark. Gaurav joins in. Gaurav, what is it that the street did not like so much? It was an AUM cut of just 1%.
Well, as when we look at the numbers, actually numbers are in line. In fact, the profit that increased almost by 24% on a year-on-year basis. But let me take you through some numbers. What happened is that, remember, Bajaj Finance is one of the key players of who was expected to be beneficiary of GST cuts and rate cuts. And AUM growth guidance that they had given earlier was at around 24 to 25%. Now they have cut the guidance to 22 to 23%, and this is specifically because of the MSME and the mortgage segment. In fact, in MSMEs, they are expecting just 10 to 12% growth on a year-on-year basis for FY26, and that is something which has dragged the AUM growth guidance. Apart from that, when we look at asset quality, now gross NPAs and net NPAs, although they have moved an inch higher on a sequential basis, but management said that this is because of the difference in number of days. But even on a year-on-year basis, when we look at gross NPAs, they have increased almost by 18 basis points. And out of these 18 basis points, 6 basis points of increase is attributed to MSME. So specifically, they are calling out for some stress in the MSME segment. In fact, they are also saying that almost 25% of their unsecured MSME is something where they have slowed down their portfolio. So, and at the same time, credit cost. Now, they are guiding credit cost to be at the higher end of the guidance that they have given of 1.85 to 1.95%. That is something which is actually concerning the street, because Bajaj Finance, if you look at the stock price and the valuation, it trades somewhere in the vicinity of 5 times price to book. So definitely at that high valuation, if there is some slowdown which is indicated by the management, there is some caution which is shown by the market as well. And as a result, when we look at the stock performance, it is down more than 7% today.
Okay, all right, Gaurav, thanks a lot for that. Well, let's shift focus to our special segment. We get a few ideas for profit from Money Control Pro. Sachin Paul of moneycontrol.com joins us to talk about a stock that is tracking closely. Sachin?
Integrated solar cell and module manufacturer Premier Energies delivered a very strong set of numbers in the second quarter of FY26 with a revenue growth of almost 20% year-on-year. This was primarily aided by a 63% jump in solar module production volumes for the quarter gone by. Solar cell volumes, on the other hand, were largely flat year-on-year, primarily due to capacity constraints. However, the company has recently set up a 1.2 gigawatt TOPCon solar cell facility, which is currently under trial runs, and is expected to reach almost 80% capacity utilization in the next 3 to 4 months. The company's earnings visibility remains very strong on the back of a very strong order book, which is also strengthened on a quarter-on-quarter basis. Well, the demand environment continues to remain very strong for the company, and recently the ministry has also recommended an anti-dumping duty on Chinese solar cell imports, which should again have a very strong environment, especially for companies like solar, for the premium energy, which have a very strong presence in the solar cells. The company is in fact preponed its capex plan for almost 18 months and is looking forward to reach an excess capacity of almost 10 gigawatts in solar cell by the end of 2026. Well, in terms of the stock price performance, the stock price has been consolidating since its listing in September 2024 and is currently trading at almost 28 times FY27 estimated earnings. Given the consolidation in the stock price, we recommend an accumulate trading on the stock.
Okay, all right. Just keep an eye out on the bottom of your screen. City gas distribution companies will be in focus. The PNGRB has published a high-level expert committee with regard to natural gas, and they've made some crucial recommendations which have sent these stocks higher. I think we should get some of them up for you on the screen. Sudarshan has sent a few of us. They're talking about restoration of APM allocation for CNG, which is the transport segment. They're also talking about inclusion of CNG as a cleaner fuel in vehicle scrappage policy. Now, that's a big one as well. And the mandatory use of CNG in public and commercial vehicles in highly polluting areas. So, explains why these stocks have moved up. Basically, it's incremental use of CNG. And the CGD company as well, they are celebrating. I think a lot of them, IGL in fact, is seeing a big spike up.
It's more for IGL than just MGL also, because, IGL has the higher allocation coming in from APM. So if that happens, then, it's a bigger positive for IGL than MGL. Definitely a positive for MGL because the overall volumes will increase for, city gas distribution companies itself. But IGL stands to benefit a little more with higher APM gas allocation. In fact, we'll continue to track this story. We'll probably get Sudarshan to explain a little more on this as well. But for now, take a short break, come back, focus on the markets. Well, we were talking about the city gas distribution companies. Let's talk about all of them in greater detail. Sudarshan joins in with more. Sudarshan.
So in 2024, Petroleum and Natural Gas Regulatory Board, that is known by PNGRB, had formed this committee which was headed by D.K. Saraf. He is a known face in the oil and gas sector. Now, his led committee has come out with its recommendations, and committee has made some of the important recommendations, especially for the city gas sector. And if these recommendations are implemented, we have to understand that these are the recommendations. These are not the final outcome. These are the recommendations that made by committee. So first recommendation is that restoration of APM allocation for CNG segment. If you remember, in the last 1 to 2 years, APM allocation has been reduced drastically. It's reduced by almost 40%. Earlier, it used to be almost in the range of 75 to 80%, but it had first fallen to 40% after there was a minor increase, which had gone to around 50%. So he is saying that APM gas restoration should be done for the city gas. Second, inclusion of CNG as a cleaner fuel in the vehicle scrappage policy. If that is also done, the more CNG fuel can be used in a more proper way. Third, it's mandatory use of CNG in public and commercial vehicles in high polluting areas. So basically, the committee means that whatever the vehicles are running on petrol and diesel, it has to be converted in the CNG, and there should be a support from the government in the form of policy for the conversion. And next is fleet conversion mandates. It should be made mandatory for the conversion of petrol and diesel vehicles after a certain period of time in CNG. And that can also be taken positive for these city gas companies. And last one is life of CNG retrofitted trucks may be extended by 5 years. So whatever the term is there as of now, the committee is recommending that it should be extended by 5 years. So if these recommendations are implemented, it would be a huge positive for all these city gas companies.
Take that point, Sudarshan. Thanks a lot for that. With that, we'll wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormuz Fatakia. Markets have opened in the red, down nearly 90 points at 11 o'clock. The Nifty below 25,500, snapping yesterday's winning streak. Benchmark indices are lower by close to about 0.3%. Lots of factors perhaps contributing to the decline. One, Asia is a mixed picture. So markets across Japan, China, Hong Kong are all slightly muted in trade. So they've got a red tick going for themselves. Yesterday, remember, the FIs were large sellers. More than 4,000 crores sold by the FIs in the cash market. And plus, there are IPOs open, large one. Today is day 3 for Pine Labs, Grow, that's a mega one, which opens today. MV Photovoltaic is also open. So that perhaps is also on the sidelines, sucking liquidity out of the markets. And not to forget, today is the Nifty weekly expiry and then some disappointing earnings, particularly the Bajaj Finance, which has dragged down Bajaj Finserv too. We'll get talking about all that. That's the picture across the markets right now. Let's put the spotlight on the top movers in the market. Hormuz joins in with more. Hormuz.
And the earnings reactions, as you mentioned, and there are quite a few. And of course, as has been the trend over the last few quarters, they've always been on the extreme on either side. Start off with HEG, the top gainer on the Nifty 500 today, snapped a 5-day losing streak. And before this 5-day losing streak, the stock had gained for 8 days in a row previously. And the stock has had more than 90 lakh shares that have traded in today's session. The 20-day average is only 4.5 lakh shares. So gaining on strong volumes, the stock took support at its 50 and 100 DMA levels, which is at around 520, and has rebounded from those levels. And as a result of today's move, the stock continues to remain positive on a year-to-date basis. HBL Engineering was among the top gainers yesterday, is among the top losers today, has given up more than 50% of Monday's fall, now down almost 8%. And volumes today are still 1/6 of Monday's volumes. Monday's session had more than 3 crore shares that were traded. Today we have had almost 50 lakh shares already traded in the first 2 hours. The 20-day average is 12 lakh shares. The stock, despite today's fall, remains above key moving averages because it has had a very good year despite today's fall. It's still up 65% year to date, and as a result of which it continues to remain above very important levels. Another earnings reaction is HLE Glass Coat, and the stock is down 17% now. It is down in 4 out of the last 5 trading sessions. We had close to 20 lakh shares that have been traded. The 20-day average is less than 2 lakh shares on the stock. So 10x its 20-day average is when the stock is seeing these kind of declines. The stock broken below its 50 DMA and now at a very crucial 100 DMA level, which is at 486, and again has had a fairly decent year so far, up 33%. So and lastly, Urban Company, the stock was down for 5 days in a row as of yesterday's closing. It has snapped that 5-day losing streak today, up 7.5% on very strong volumes, almost 1 crore shares that have been traded on the stock, 20-day average of 30 lakh shares. And as of yesterday's closing, the stock was down almost 33% from its post-listing high, which was over 200 rupees, Reema.
Thank you very much for that. Let's begin the show. We've got lots of corporate conversations going on. First up, WeWork India reported their Q2 numbers. The company's top line went up by 17%. EBITDA margins came in at 20.3%, slightly lower compared to the prior quarter. Karan Virwani, MD and CEO WeWork India, is joining in. And Karan, congratulations. I think the company has achieved Ind AS PAT of 6.4 crore, which is the first true profitability if you strip out the tax credit from last year. So congratulations on that. But let me start with the top line and the margins. Revenue growth for you was about 17.5%. And yesterday we were chatting with a peer of yours, IndiCube, and their revenue was in excess of 30%, and they're confident about 30% sustaining for the rest of the year. So, juxtapose your performance with the industry in Q2 and what you expect on the top line and margins in H2.
Sure, Will, and thank you so much and good morning. I think to start off with, on the capacity side, if you see year over year or just from last year, we've grown over 21%, which is higher than the industry, the rate that the industry has grown. So capacity has grown. At the same time, we've seen occupancy move up drastically in the last 2 quarters, nearly 5% of occupancy add from 76 odd percent to now closer to 81% for this quarter. Revenue has gone up, like you mentioned, to 585 crores, which is our highest ever revenue, 7% quarter over quarter, 17% year over year. And just to correct, IGAP EBITDA, which is about 118 crores, has grown almost 45% Q over Q to now about a 20% margin, right? Which we're seeing with the business sort of ramping up and occupancy sort of moving up as well. And rightly, like you mentioned, 6.4 crores of actual proper operating cash, which was negative 34 crores just a year ago. We've seen that transformation and now hit this big milestone for the entire industry as well. If I have to just draw a comparable, I don't want to mention about other operators, but if you just look at the revenue base that we have, it's nearly 30 to 40% higher than anyone else in the industry or some of the industry benchmarks. So there is a scale factor playing in here. I think at lower revenues, we were growing upwards of 40% as well. Today, we're growing at, roughly about 17, 18%. Versus our net license fee has grown over 22% in the last 1 year itself. So we believe that the business at scale still continues to grow and will grow above 20%, and you will see that ramp up happen over the course of the year as well.
So 20% plus revenue growth, Karan, in the second half of the year?
Yeah, I think overall, just year over year, that's the kind of a growth that we're targeting. Yeah, we think that we are on track to get there for sure.
Karan, thank you for joining in. What about margins, as Rima was asking? And you've also earlier highlighted about wanting to be an infrastructure partner for GCCs. We heard you speak about it during the Global Leadership Summit as well. What is your strategy with regards to that? And of course, first your word on the margins.
So margins, are growing healthy. If you just see the EBITDA margin, which we measure on an IGAP basis, last quarter was about 15%. As of Q2, it's grown to about 20%. So that's been a 5% increase in margin. EBITDA was about 81 or 85 crores last quarter. It's grown to 118 crores this quarter, which is a 45% increase in the operating margin. IGAP equivalent PAT, which we also look at over the last few years, was at about 40 crores, which is about a 6.7 PAT margin for the quarter itself, and nearly 47 crores for the entire first half of the year. So business is operating well. Margins are hitting. Operating leverage is kind of kicking in, driven by demand and occupancy ramping up. And mature centers now are upwards of 84, 85%, which was nearly about 79% just 1 quarter ago. So we've seen a big ramp up in the occupancies of those centers as well. Our operating or our growth centers are also now operationally breaking even at a much lower occupancy than the portfolio. So that shows that the operating discipline in the new cohorts is also starting to play out, which will soon reflect in both the revenue and the margin coming in. Just an interesting point, almost 80% of our incremental revenue from here will basically flow down to EBITDA and then finally down to PAT as well. Just touching on, your point on GCC as a service. Yes, we are looking at productizing the entire GCC as a service platform. We're very focused on delivering just the infrastructure part of this. So that starts with workplace delivery, being able to have multiple models like an entry model, a scaling model, and then a maturity model for GCCs. Over and above that, we're doing services like transport, F&B, employee engagement, and even offering design build services for certain companies that just want their own space. The idea is to finally move WeWork from co-working to doing enterprise grade offices, which we're already doing and is about 20% of the business, to finally a proper infrastructure or a workspace as a service business where we're able to offer flexible spaces, long-term permanent spaces, but also cater to all type of design, build, operating requirements that companies might have in the future.
Karan, many more questions, but unfortunately out of time. Thank you very much for joining in. That's WeWork for you. Slip into a break. On the other side, we'll focus on crypto markets with Adeep Nurani from Market Wizard. Stay tuned.
CNBC TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and on Crypto Space today we have with us Mr. Adib Nurani, founder, Market Wizards. Mr. Nurani, hi, thank you so much for joining in. If you look at crypto as a segment or an asset class for the year 2025, it can perhaps be divided into two halves. The first half was all about the US president taking over and very friendly regulations coming in. Almost everybody was out to buy cryptos. The second half has been about profit taking with volatility. How would you read that through?
Thank you for calling me, madam, here. Good morning. Good morning, all the viewers. Well, the first 6 months were undoubtedly very good. The second 6 months were also expected to go up with a small profit booking, but the all news flow which came in after Trump coming in as the president, there were very, very bad news flows for the market, and then hence it was a surprise for all the investors and all the institutions. So once to get themselves safe, they have started booking the profits, but further down, I see that still there is a pressure left in the crypto space, and BTC will go to newer highs before it goes down and corrects much more below the 1 lakh level.
Mr. Nurani, also, when you look at crypto as an asset class yet again, what is the quantity of your portfolio that you should be or can be holding in cryptos?
Well, I always say that if you have a suppose I have a portfolio of 100 rupees, then 10 rupees should be allocated into crypto. If you are a conservative investor, if you are a little bit risky investor, you can go up to 20-25%. Out of the 10 rupees which you invest, or out of the 20 rupees which you invest, around 70 to 80% should be into BTC, and remaining 10-15% in altcoins, and remaining 5 to 7% in memes and all small coins, so that small coins will not eat away all your profits if it goes down or rug pull is happening. And at the same time, your bigger part, which is BTC, will keep all your portfolio safe.
The way the prices have been volatile, and as you mentioned as well, that the Bitcoin will perhaps hit a newer high before it goes in for a profit taking, and levels of below a lakh as well. What charts would you look at? What would you advise to people who are investing, wanting to invest afresh as well?
Well, if you look at the charts as an investor, you first need to look at the cycle of the BTC, which occurs every 4 years, wherein halving is factored in, wherein all the news are factored in, wherein everything, all the supply and all that is factored in. So as an investor of long term, you need to see quarterly charts wherein you will find how the cycle is working. But the problem with the investors today is they go and see weekly or monthly charts. In BTC, that doesn't work that way. So if you are a trader, you can go into the intraday charts. If you are a swing trader, you can go to a hourly or daily chart. But then what people do is they go to daily chart and see how do I invest in BTC. To be invested in BTC and to invest in BTC, you need to understand the complete cycle of BTC. And if you understand the cycle of BTC, no volatility will make you impatient. You will be patient and you will hold BTC forever, I would say.
All right. So are you saying that it is the long-term investors who actually end up making money rather than the short-term guys who are trying to just about play the trend?
Yes. If you are a short-term guy, you need to do intraday or maybe swing trading of 4, 5, 7 days. But if you say I have to hold it for 4 or 6 months or 1 year, BTC will not give you a lot of money because it has got a cycle of 4 years. So after 1 and 1.5 years of good profit booking, good rally, it will give a profit booking. Usually the cycle goes in that way. 1.5 years is good rally, 2.5 years is consolidation and downtrend. So what happens with people holding it for 6 months or 1 year, they get into that trap of 2.5 years, which is of downtrend. So that's the problem. So for BTC, I would suggest for everyone, either go for intraday or few day swings or go for long-term investment. Don't hold it for few months. It will not give you good returns if you don't time in properly. And usually people will not able to time in properly because there is a lot of news flows and there are a lot of institutions playing around.
You mentioned that 70 to 80% of a portfolio should be Bitcoin, perhaps 15 to 20% of altcoins. Within the altcoins, what would you want to watch out for? And when you say 5 to 7% perhaps can go in for meme coins as well, what coins are we watching here?
Look, when I say altcoins will be all technology coins like Ether, BNB, Solana, and all those top altcoins. And if you go for meme coins is a subject like you can't mention a coin. If I mention something here, tomorrow that coin may change. So you need to keep going with the trend, and you need to put very small money in those meme coins which are running, because every now and then meme coins coming up and going down. So you can't suggest meme coin in the public forum. But then yes, for altcoins, go for top 10 altcoins, and top 5 would be BNB, Solana, Ether, maybe Ripple, and all that kind of coins, and BTC being the king, we have already defined it. So I wouldn't suggest on the public forum because it keeps changing, ma'am. If I say something and after a week it is being rug pulled, then you and me will be blamed that you said that meme coin bought it.
Absolutely. That is the kind of risk meme coins hold. But when they give you a return, they give it to you in plenty. But as you said, it should be perhaps a minimal of your holding, and that too also for a short term there. Adib Nurani, as always, thank you so much for joining in and making sense of this subject called Bitcoins and cryptos, of course. With that, we'll go for a very short break. When we come back, we'll talk more about markets and stock specifics.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Continuing our focus on corporate conversations, we are now being joined by the management of CE Infosystems. It was a muted second quarter. The revenues were up, but the operating performance was weak. Rakesh Verma, the co-founder and CMD of MapmyIndia, now joins in. Mr. Verma, good morning. Thank you for joining in. Now, with the kind of growth that you have had in the first half of the year in terms of top line, what are you guiding for the full year? And what is going to lead that growth? Will it be the high margin business that will contribute more towards the growth in the second half?
To answer, first, let me thank you for inviting me to your channel. To answer your question very direct, the answer is yes, the second half we have been discussing, and we are very bullish about the Q4. And so the projections that we have given for the year, both in terms of the revenue growth and for the EBITDA or profitability, is going to be as planned, and that's how it looks like at this point of time.
Mr. Verma, morning. This is Rima here. Can you help us with the projections on revenues and margins for the full year and second half?
Well, as far as the margin is concerned, we have always maintained that it will be anywhere from 35 to 40%.
Okay.
And if you see the half year H1 also, it is more than 35. So it definitely will be closer to 40 than closer to 35. As far as the revenue growth is concerned, we are expecting for the whole year a revenue growth of anywhere between 20 to 25%. As of H1, it has been 14.7%.
Okay. But sir, your margins in Q2 were particularly depressed, I think closer to 24-25%. And there was this one-off technical services outsourcing expense for a specific government project. Does that reverse? Can it repeat? I mean, how do you get to EBITDA margins of closer to 40%? And what is the share of government revenue now?
As we explained it in the earnings call just a half an hour back or so, see, we are investing heavily into 3-4 areas. For the long term, when I say long term, I don't mean 10 years, I mean 1, 2, 3 years, investing heavily in 4 areas. One of them is the areas where related to the government business, which means related to road safety, related to defense, and related to railways. Now, when we are investing there, because we see very large opportunities that's coming, and particularly using our platform and product, not a classic services business. The other area we have already invested is from our international joint venture. And the third area we are investing is to make our product to the next level, the consumer-facing Mappls app. Now, particularly in Q2 and Q3, we get the opportunity to focus on this new businesses that we need to create, whether in terms of technology product or the opening up new business opportunities. And the operating revenue of Q1 and Q4 look like more from making sure that the revenues and the projects are delivered.
So, Mr. Verma, just to give you a number, how much of your total business now comes from the government? That's one. And two, there was a certain increase in expenditures like technical service outsourcing during the quarter. Are these expenses one-off? And do you believe that, or do you believe that these will increase going forward?
Okay. First is this was one-off. We have mentioned it in our presentation. Whether it will increase, not related to this particular initiative related to the road safety. It will come down. But we have other opportunities in railways and defense where something else may happen. But while we do this, we ensure that our overall EBITDA margin remains intact between 35 to 40%. Your question about
government share.
How much is the government's revenue share? Now, government's revenue share, if I say as of today, H1, it will be somewhere in the order of 20%.
Okay. Mr. Verma, short conversation, but we're out of time. Lots of earnings to track today. Thank you very much for joining in. That's MapmyIndia for you, talking about a 20 to 25% revenue growth for this year, FY26, with EBITDA margins at 35 to 40%. Stock, though, is down 5%, 20% lower from its 52-week high. But let's get to the big story, and that is Britannia. It is among the top losers following the resignation of Varun Berry. Mangalam joins in with a chat on this. Mangalam.
Well, if you look at, Britannia, what you'd know is that Varun Berry has been a phenomenal leader for the company. Ever since he joined and under his 13-year tenure, the company's revenue has actually increased by 2.5 times. The EBITDA has increased, or margins have doubled from 9% to almost 18%, and the net profit has jumped by almost 6 times. And all of that has equated to its market cap jumping 18 times. So when a leader of that sort leaves a company, the street does feel that, okay, there are some jitters, etc. But that was pretty much expected because he was there for 13 years. What the street is more, worried about right now is the abrupt end to this glorious leadership. Because if you notice, the company had actually appointed Rakshit Hargave as CEO with effect from December 15th. And the street actually liked that. Despite, softer than expected revenues, the volumes declining by about 3%, the street liked this transition. And they believed that, okay, there is a new leadership at the helm, which will take the company into a different direction. And the transition would have been smooth. One would have imagined that Varun Berry would stay on as MD for a bit. And thereafter, both Rakshit would take both the positions, MD and CEO. And understandably, Varun then put his, resignation, saying that he's willing to go ahead and serve the notice period. What the street is, not liking is the fact that the board has immediately accepted the resignation and waived off the notice period as well. And what that has done is it's caused a bit of a vacuum for the next 1 month, ever since, since Rakshit takes over as CEO, and he's also been appointed as the MD. And in that interim, they have N. Venkatraman, who's the CFO of the company, who joins in. So that there has to be a leadership transition is pretty much norm for businesses, but that it has been so abrupt has the street a little worried about, whether the leadership stability will continue or not.
So what are possibly the next triggers that are lined up for Britannia now that you have that vacuum at the top?
Well, a couple of things, whether there is vacuum at the top or not, the business is fairly strong. It is still the highest market share in the, premium biscuits category in the country, one of the largest in terms of reach, etc. as well. And the second quarter was a transitory quarter. Over 80% of their portfolio now comes in a 5% GST. So it's improved volume growth post GST. Varun Berry himself has said that, from mid-single digit volume growth, they're likely to go into high single digit volume growth because of the GST cuts. So that will play out in the third and the fourth quarter, the second half of this year. Continued margin improvement. Varun had actually put the company on a strong cost path as well. And now there is some predictability, stability in raw material prices, and then growth in adjacent categories. Right now, adjacent categories account for a very small portion of Britannia's overall pie, so to say, but has been growing extremely fast. So, croissants, dairy, and all these other snacking items that Britannia is coming out with could be on the path of making the company a total foods company. And finally, we'll watch out for new product launches and increased distribution, increased penetration in the hinterland of the country as well.
Interesting. Thank you very much, Mangalam, for explaining that so beautifully. Get into a break. On the other side, we've got another management waiting by to chat with us, Ather Energy, to talk about Q2 numbers and the outlook going ahead. Welcome back. It's the Nifty weekly expiry today, so it's a good time then to track the futures and options queue. Manglam is still with us. Manglam, this time tell us about the F&O space.
Well, if you look at the indices, for 2 days in a row, it's the IT index which has been outperforming, whereas the Nifty Bank has been underperforming, and that continues today as well. So the Nifty Bank actually is low by about 1/3%, and that's caused a bigger downtick on the Nifty right now, which is down about 1/4%. The IT index higher by about 1/4%, so that's limiting the downside that we're seeing on the index. And the pain of that we're seeing in the broader markets as well, where the mid-cap index is actually underperforming a little more, with more stocks in the red than the number of stocks which are in the green. So those crisscross lines come up for you. They're far and wide apart, with the red one being a little above the green one itself. The important part, however, the Nifty over the last 2 or 3 trading sessions has been finding some supply near the 20-day moving average. So we'll watch out for, 25,658 as a mark to watch out on the way up as a resistance. But the Nifty Bank, what is actually a resistance for the Nifty will actually be a support for the Nifty Bank. So 57,665, which is the 20-day moving average for the Nifty Bank, would perhaps be a bit of a support at a time when the Nifty Bank is underperforming a tad. Weekly options expiry, typically straddles are written, which is, a call and a put, usually at different strikes or the same strike. And right now the range is fairly defined, 25,400 put, which corresponds to closer to today's lows. That has seen a fair amount of writing. So the street believes that this is a mark that the bulls will hold to defend. In fact, the 25,450 put as well would see some writing. But on the way up, the 25,500 call writers, they haven't yet given up on their positions or conviction out here. In fact, 4 crore shares written out there. So which means that around 25,530 thereabouts, there could be some bit of resistance. So if one had to, bet on a narrow range for expiry, it would be 25,450 to 25,550.
Thank you very much for that. By the way, October mutual fund data, the equity inflows have dropped from almost 30,000. It's come down to 25,000, sub 25,000. That's the number, 24,671, which compares with 30,400. So on a month-on-month basis, the net equity inflow has moderated. Mid-caps have seen a bit of a drop. So from 5,000 crore of inflow the prior month in September, it's come down to 3,800. We'll await this. Do we have the small cap and large cap number?
The large cap numbers are also down on a month-on-month basis. The large cap number was just flashing on your screens a few minutes ago. The total AUM, that has seen an increase on a month-on-month basis, but the net equity inflow has seen a decline. That the large cap fund inflow is now at 972 compared to 2319. So that's a big drop that you have seen. So the large cap fund inflow has more than halved compared to last month. The small cap fund inflow, it's a marginal drop, but still a drop of almost 1,000 crores from last month. And the mid-cap funds too has seen a drop in inflows from 5,000 crores to just 3,800 crores.
There's one, sorry, go ahead.
Go on.
There's just one point. The moderation that we've seen, this is the 3rd consecutive month of moderation. In the month of July, the total net equity inflows were 42,700 crore rupees. In August, it came down to 33,400. In September, further moderated to 30,400, and this time it's declined to 24,671, which means from a high of 42,600 in the month of July, the net equity inflows have moderated by nearly. That's the picture that we should put up. So this volatility that we've seen in the market has resulted in some weakness in the equity inflows and the IPO markets. Not to forget that. Yeah.
Yes, and there's Anthony Heredia of Mahindra Manulife is joining in. Anthony, thank you for joining in. 3rd straight month of declines, but compared to prior months, this decline is appearing to be pretty substantial. Would you still be worried, or would you still look at it as a glass half full, saying that, you're still getting inflows of 25,000 crores every month despite the markets having gone nowhere?
So, hi. No, I would clearly take a glass half full view just for a couple of reasons. One, and I think Rima correctly pointed out that while net flows have dropped consecutively since July, you'll find that gross flows are pretty consistent around the 60,000-65,000 mark, which basically means that as markets have been volatile, as they've been range bound, there are people who are taking money off the table, booking profits, and so the redemption numbers are marginally higher. That's why the net flows drop. The second I would point out is there is a reallocation in a sense of investor interest from, I would say, just normal traditional equity to products within hybrid like multi-asset as well as gold ETFs, right? So if you get all of that in aggregate, the drop is not as stark. The final point I would make is frankly, as we saw gold and silver prices, I would say, retrace some bit of normalcy in the second half of October, at least I've seen flows in the industry come back to pretty much July, August terms, at least in November. So given all of that, I wouldn't be worried. I think, 25, 30, 35, these are all sometimes function of current market situations. You also know there have been a number of IPOs, so liquidity gets sucked out to that as well. So I wouldn't see any cause for worry, but clearly I would point out that products like multi-asset, especially since they're the only products in our product portfolios that have a gold and silver exposure, clearly seeing much larger interest relative to what they were 3 and 6 months ago.
Got that. So money is chasing multi-asset funds, gold funds, etc. Anthony, generally money chases returns and returns have been muted. And now especially return expectations have been moderated a lot. Everyone's been saying that don't expect the kind of returns that you got in the COVID heydays. So do you think there could be this drop that we're seeing in the net equity inflows over the last couple of months is here to stay now?
I would say that these numbers or this range of numbers is here to stay for, I would believe, this quarter and the next quarter. For us to see a uptick from here, I don't think it's a function of people's return expectation, because I would just point out that, and that probably speaks to what you just said, the interest in multi-asset funds are also a reflection that they are the category of funds that still have close to double-digit returns over the last 1 year, relative to equity funds being close to negative or zero, right? So there is money influenced by recency of returns that's going to multi-asset. But I would say flows, to my mind, stabilize at around 25,000 odd crores to 30,000 crores. SIP flows remain stable, continue to grow. But for us to go back to the 40, 45,000, I think we'll need some triggers which are market-related triggers for that to happen. And as you would know, those are impossible to predict in terms of when they will happen. But I would say the clarity around the tariffs front, probably the trade that's happening into emerging market equity, but India not being a beneficiary, starting to include India. Stuff like that, I think, will bring us back to the heydays of 40, 45,000. Till that point, my personal view is we would expect to be at 25, 30, and the lower return expectation is not really a factor in it.
Let's also get in Sandeep Bagla of Trust Mutual Fund. Sandeep, thank you for joining in. Would you concur with Anthony of taking this glass half full view despite numbers declining for the third month in a row, and the fact that the IPO pipeline is not drying up anytime soon? You still have bigger IPOs coming in the next 6 to 7 months. So do you believe that this number continues to remain around that 20-25,000 crore mark, and we should consider this to be the normal at least for the next few months?
Hi, good morning. So see, I have a slightly different take on this. See, we have to divide the data of inflows into two parts, the SIP parts and the non-SIP parts. SIP is the true reflection of the retail participation, and that has been steadily increasing, which is the effort of mutual fund industry and distributors. And that is steady at 29,500 crores, and it is increasing, slight increase. The other is the part where the large HNI investors, keep moving money from whatever has performed in the recent past, and that money will keep moving from, NFOs, IPOs, gold, silver, whatever is working, real estate. That is something which is non-core to the mutual fund inflows, and I have been saying this repeatedly. That if you look at July, I think. It was mentioned that there was 42,000 crores of inflows. That was because there were a lot of NFOs in that period, and a lot of this money comes in because the whole mutual fund machinery starts mobilizing money in a very concentrated effort. Last month, there were very few NFOs. There was one FlexiCap NFO of 1,700 crores, which is why the FlexiCap numbers have gone up. So I think whenever we are dissecting or analyzing about the mutual fund inflows, I think we should concentrate on the SIP flows, which are very, very steady. The rest of it is non-core, and it will keep moving around. And so I am not really worried about these numbers. The HNI numbers will keep fluctuating. from time to time. That is the non-core part of our flows. So the core is very much steady. It's on the increase. So it's absolutely stable in my mind.
Gentlemen, thank you for sparing time and joining us today to decode the numbers from the mutual fund industry for the month. And we'll discuss more on this going forward during the course of the day as well. Take a short break, more on the markets on the other side. Welcome back. Ather Energy reported a mixed quarter. Revenues were up, but expenses were also on the higher side. Market share saw an increase as well. Tarun Mehta, the co-founder and CEO of the company, is joining us now to discuss the road ahead for the company. Tarun, good morning. Thank you for joining in. Losses also were narrower compared to last year because there was a significant increase in your other income. It was up 50% sequentially, almost tripled from last year. Could you talk to us more about what is this increase in other income? And do you see PAT profitability coming in FY27 or maybe even the second half of this year? Tarun, you're on mute.
Hi, so this was a fantastic quarter for us. Revenue was up almost 60-65% over volume compared to the previous quarter. Considerable growth on almost every parameter. Losses did come down. Our fixed expenses, there was a one-time hit in Q2 because of the rare earth crisis. We could not, we haven't applied for subsidy for the majority of our vehicles. If you account for that, the fixed costs barely grew by, I think about maybe 10 or 15 crores. And without that, EBITDA losses had come down considerably. Other income is nothing but treasury income, which on the account of IPO is a little better this quarter. But overall volume is up, gross margin is up, especially once you account for the one-time hit because of rare earth crisis, and EBITDA losses have shrunk because our fixed costs are largely flat quarter on quarter.
The rare earth impacted revenues by 19.2 crore, right? The restriction on rare earth?
Up to about 1920, yes. Correct.
And at the EBITDA level, what was the impact?
It'll be a little higher because to ensure that we ran production well, we had to obviously expedite some logistics. So there'll be a little bit more impact, maybe another 5-6 crores. So you can think of this as a net about 25 crores impact, but largely one time because the crisis is behind us in Q3 as we speak, and also looks largely protected.
Got that. So your EBITDA, X of this one-time impact, assuming the rare earth impacted EBITDA by say 25 crore for simplicity, you would be closer to 105 odd crore, 105, 110 crore at the EBITDA loss. What is that number likely to look like Q3, Q4?
So, if you look at trajectory, our gross margin's been improving consistently. Even this quarter, we saw almost 100-150 bips improvement, despite actually Forex and dollar becoming more expensive. We expect this trend to continue because LFP continues to increase as share of business in our portfolio. And LFP batteries are relatively cheaper compared to NMC batteries. So this technology change led by engineering has been a considerable driver of margin improvement in recent quarters. Value engineering has been a very strong track record for us, and we expect it to continue paying dividends for another 2-3 quarters. And next year, we are expecting to enter our new platform, new low-cost scooter platform to enter our portfolio, which should further expand margins. So the overall margin trajectory is looking strong. On the revenue front, we've seen very strong success with our software attach rates. 89% of our consumers purchased additional software on top of the vehicle, delivering very strong margin support. And in our business model, we have not a very heavy fixed cost because we don't run our own dealerships. So that keeps our fixed costs relatively lighter compared to some of our peers.
So the EBITDA break even when, Tarun?
It's difficult for me to give that guidance. But I would say that at this point, operating leverage itself is doing the bulk of the work in taking us to EBITDA break even. While gross margin trend is very, very favorable and continues to get better, we believe operating leverage alone over the next few quarters should get us to a sustainable place.
And Tarun, your non-vehicle segment, 12% of top line, does that number increase or do you expect it to remain at these levels?
So the non-vehicle revenue for us is a few things. First is the sale of software, which, as I mentioned, has very strong attach rates for us and continues to be a strong margin driver. We are seeing early signs of this holding up well, even as we go more and more deeper in India. For example, in Madhya Pradesh, where recently we've grown our volume almost 3-4 times over the course of the last 1 year, we've seen our software attach rates opposite of what you would imagine. Our software attach rates have actually gone up. There used to be something like 50% attach rates that now hit 75%. So in newer markets, as we go deeper, we are not seeing software weakening at all for us. Particularly heartening has been our sale of accessories. Our accessory attach rate is also inching up every quarter. We've seen an almost, I think, 20-25% growth over the last few quarters at a pan-India level, with newer markets also holding up well. So as we go deeper, we are expecting this as a percentage of revenue to keep inching up. And finally, over a midterm, over let's say a couple of years, service revenues will keep compounding with a larger fleet size. It is still at a fairly young stage in terms of fleet size, with just about 5-6 lakh vehicles on road. As this value compounds, we expect service will also add considerable to our non-vehicle revenue. So overall non-vehicle revenue should grow from 12% over the next year.
Thank you. Tarun, great chatting with you. Out of time. Would have loved to get in a few more questions for another time. Well, with that, I think it's a wrap on this edition of Trading Hour. From the entire team, thank you for watching.
Stocks slipped back after notching gains on Monday despite positive global cues. Financials and consumer durables are the big drags while IT ekes out gains.
In a surprise, Britannia lets go of MD and CEO Varun Berry by waiving his notice period even as he proposed to serve it out. Incoming CEO Rakshat Hargave will now also be designated MD when he joins in December. The abrupt shuffle spooks the street.
A deterioration in asset quality of Bajaj Finance's MSME loan book prompts it to rein in growth, leading to cut in growth guidance for FY26. A shadow bank also says credit cost will be near the upper end of its guidance. The stock skids.
PhysicsWallah launches its near 3,500 crore IPO after drawing high interest from institutional investors for its over rupees 1,500 crore anchor book. The cash-generating educator says it expects to turn profitable soon.
Net equity inflows into mutual funds dipped in October, with large, mid and small cap funds seeing a decline in flows even as hybrids saw investments jump. Experts contend that interest in multi-assets and the IPO rush are likely to have drawn some funds away from equity funds.
You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me, as always, Ekta and Vinny. Well, the market actually is recovering from the lows. This morning, it was down a lot lower. The Nifty was down over 120 points. From there, we've seen a swift recovery. In fact, not just that, the Nifty's conquered past that 25,500 mark as well, causing a near 100-point rally from the lows. And what is it that has led the rally? It's a couple of these auto names and some of these FMCG names. So pull up, Bajaj Auto, which has spiked higher. Hero MotoCorp is doing well. Tata Consumer too. But they don't account for a bigger weight. Look at the Nifty Bank. That's the one that should come up for you, which at one point was down by almost 0.5%, is now curtailed its losses just to about 0.1%. So there's some recovery seen there. And I'll be curious to see what the IT index is doing as well, because for most part of today's trading session, the IT index was in the green, and now it's only extended its gains to about 0.33% on that one as well. So looking good, the dips are being bought, though we're still not in the green once again, but all the dips being bought around the 25,450.
Hi guys, yes, absolutely. But it's turning out to be a session where we are seeing a lot of stock-specific action as well. So if you were talking about the Bajaj twins, which have really taken it on the chin this afternoon. So we have Bajaj Finance as well as Bajaj Finserv down anywhere between 7 to 7.6%, reacting to numbers. ONGC also following suit with a cut of around 1.5%. From the broader markets, we have stocks such as Vodafone Idea, which is managing to hold up with a good gain post numbers. So that stock is up around 6%. And a couple of others such as Lenskart, which is yesterday's debut, is seeing follow-on buying in today's trading session. So that stock up around 1.6%. So interesting market in terms of stock-specific moves, and that seems to stand out in today's trading session. The advanced decline ratio, let's see whether that improves as the day goes along. Currently at around 1:2 on the Bombay Stock Exchange.
Right, those are some words coming in from the Prime Minister. He has been addressing the tragic incident in Delhi, where he is, speaking about how he's actually pained by that. Let's see, cut across to what the Prime Minister is saying when it comes to the Delhi blast. All right, it was indeed a tragic incident, and the Prime Minister addressing a rally, speaking about what took place last evening in Delhi. Our heart goes out to the victims, their families, and obviously everyone else who was pained by this. Let's take note of that and also move on and talk about a couple of these stocks which are moving and shaking around this afternoon. Vivek, as always, joins in.
Well, thank you so much for that. All of the action, especially in the broader end of the market, especially in the mid and small cap space, so many results came through post-market hours last evening. So quite a few stocks. First on the list, news flow as well. Syngene, very strong October data, almost 3.5 times growth on a year-on-year basis. On the back of that particular stock, one of the top gainers in the F&O space. Vikran Engineering, strong Q2, recent listing. Margin expansion has been quite steady, over 5% higher for that name. Syrma LGS, one of the standard performers as far as the EMS space is concerned. Good results. Along with that, the company has announced an acquisition of a couple of companies that cater to the defense market. So Syrma LGS too doing quite well in the session. Idea, Idea Vodafone, one of the top mid-cap gainers today, almost 6% higher, has reached double digits after quite a while. The losses have narrowed significantly on a year-on-year basis. And both of the graphite electrode stocks, both HEG as well as graphite, amongst the top gainers as far as the NSE 500 index is concerned. Good Q2 aiding the up move in both of these names. On the other hand, on the laggards, you have to start off with Britannia. The CEO resignation is something that has led to a bit of a sell-off. The Bajaj Fin twins, both Bajaj Finance as well as Bajaj Finserv, seeing quite a bit of a knock today. HUDCO, this was a largely inline set of numbers for the company, but despite that, a bit of a sell-off post the results. MapmyIndia CE Infosystem, the company has guided for a 20 to 25% growth rate. Street doesn't like that, almost 5% lower. And Trill, or Transformers and Rectifiers, yesterday hit the lower circuit, was down 20%. Today, at one point of time, was at the 10% lower circuit, has rebounded a little bit after that, but despite that, still down over 7.5%. The management clarified on the incident with the World Bank debarment.
Okay,
Right.
Vivek, thank you so much for that. Surely important ones to keep an eye out on. Just another stock that I would just like to mark is transformers and rectifiers. That continues to see a decline. Yesterday, posted its numbers, we'd seen the fall coming in. And today also, that is something that continues to be under pressure. So that will be something that we're watching out for. And other than that, obviously, latent view, that's another one which is buzzing in trade and positive up move for a couple of days. So keeping an eye out on that as well, Mangalam.
All right, so let's talk about a couple of earnings that came through yesterday. The Greenpanel Industries, they reported their numbers. Remember, quarter on quarter, there was an improvement in their margins and their volumes, but year on year, there was some weakness that continued as well. So let's call it a mixed quarter for them. Himanshu Jindal, who's the CFO of the company, now joins in. Thanks a lot, Himanshu, for joining in. As always, the first obvious question, H1, your revenue has been around 724 crores. The same time last year, when you joined in, or rather the last quarter when you joined in, you said you're targeting 1,700 crore top line for FY26. So just wanted to know, 1,000 crores pending for the next couple of quarters. Are you on track for that? And also, even in the plywood business, where you were looking at nearly 150 crore revenue in this year with 8% margins, you've done about 66 crores in the first half.
So that's right, Mangalam. Let me bring in some perspective as well. I think, the last 3 years, when you look at things holistically, we are in the business for a long term, obviously. You saw us losing market share, our revenues came down. Quarter one was not so different. We again lost market share. Domestic volumes were down, so were exports. So we had a bit of a, how do I say, bad quarter, a tough quarter one. And from there, I think we are coming back sequentially stronger on volumes, driven by our strategy of driving volumes, whether by push or by pull. We're doing all the basics that we can on the domestic front, connecting with our dealers, strengthening teams, reviewing everything again and again, putting up new products, supplementing them with, how do I say, brand campaigns, etc. So all of that is what has led to a sharp recovery, after a long time on our volumes, domestic front, MDF. And this is why you're seeing domestically, we have grown even YOY by actually 31%. Exports is a story which is, is subject to geopolitical pieces. More importantly, you also take a call on what you want to do.
Right. So what does that do to your full year guidance? Let's talk about that.
Yeah. So I think, digesting the quarter one, knowing where we are in quarter two, just to be very optimistic at this point in time, I think we are looking at let me say a high teen growth on sales overall. With a single high digit EBITDA to early double digit kinds of EBITDA this year. Yeah.
Okay, so we have the SIP inflows at around 29,529 crores. So it's similar on a month-on-month basis. Himanshu, sorry for that digression.
Record high. Record high still for them, doesn't matter.
So we just continue to be building in terms of gains on the SIPs. So nothing really to, be deterred about. It's a record high again for the SIP figure, which has come through on a month-on-month basis, just a little higher on a month-on-month. So continuing in terms of momentum, 29,529 crores. Is what we've recorded. But just getting back, Himanshu, in terms of the conversation, you did say that exports have picked up for you considerably. So just give us a sense in terms of what your export growth was this quarter. Where exactly are you seeing that pick up in terms of geographies? And what is your guidance for the remaining part of the fiscal as well?
I incidentally mentioned my domestic is doing much better, 31%. Okay.
But yeah. I did hear you already spoke about domestic, so I just wanted to touch a little more upon the exports as well.
Exports is an opportunity for us, very honestly. Yeah, it depends on the volumes and the margins, right? It's a filler, yeah. And then there are geopolitical pieces which play out also. So, for example, in quarter one, you saw what happened in Middle East. We supply a lot to Middle East. Therefore, our volumes were hit, right? YOY. Sequentially, we are where we are. We are almost flat, to be honest. Yeah. So for the full year, like I said, counting in exports, counting in domestic, I think domestic should do very well for us. Counting both of these in, I think, like I said, high teen growth is possible this year. Yeah. Please do remember there was a degrowth of 15% in my volumes last quarter in Q1. Yeah. So we are in a way recovering from where we were. It's a tick-shaped recovery. Let's see how we progress during the course of the year.
Sure. Himanshu, just a quick word in terms of net working capital days. They've come down 30 days versus 47 days. How are you seeing utilization, and do you see this net working capital days reduce further from here on in terms of efficiency?
See, reducing from here, we'll see. But yeah, right now, I think the consistent endeavor is to basically improve our working capital base, reduce investments, or let me say, optimize them in line with sales, right? Allow me a few more months and quarters to in this industry, and I'll be able to share more, right? But now, right now, we know that a lot of my peers have been aggressive on credit. We'll see how things go by. I don't want to increase credit, but at the same time, let's see how the equation moves, yeah, and then we decide accordingly. Vinny, you should also remember that my balance sheet is super strong. We have very little leverage. We have no fund-based utilizations of our working capital any which way. Right. So that is my strength, and that is what is going to help me, rebuild and become stronger again. Yeah.
Okay, all right, Mr. Jindal, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Greenpanel Industries. That stock is down around 2.8%. They're looking at high teen revenue growth for FY26. Bullish in terms of the domestic growth this time round for the year. We'll take a short break, but up next, we're going to be connecting with Mr. D.K. Saraf, who is the former PNGRB chairperson and former ONGC CMD, as PNGRB has restored APM allocation for CNG transport segment. We're going to be talking about that in just a bit. Stay tuned for that conversation. Welcome back. Well, further recovery in the market, so looking good. Maybe the SIP numbers really fueled sentiment on the upside. We have the Nifty, which is just about lower by around 30 odd points, and the Midcap Index, which is down around 67 odd points at this point in time. So not doing too badly as we speak. The specific stocks which stand out again continues to be the entire banking space. The PSU Bank Index has been underperforming. So maybe the PSU Bank Index should come up for you. And let's see how that's doing. Still down around 0.8% at this point in time. But let's talk about one specific piece of news. City Gas Distributors and Focus as high-level expert committee on natural gas has recommended restoration of APM allocation for the CNG segment. We have with us DK Saraf, who's the former chairperson at PNGRB, and he was also the former CMD at ONGC, and in fact is the author of this report, has made key recommendations in this particular report. Mr. Saraf, thank you very much for joining in. If you could just start by giving us the rationale behind the recommendation for an increase in the APM gas allocation to CGD.
You see, today, natural gas forms only 6% in our energy basket. Globally, it is 24 to 25%, and Indian government has the mandate to increase it to 15%. So from 6% to 15% we have to go. And the rationale of increasing the share of natural gas in the energy basket is also very clear, because it is more environment friendly as compared to petrol and diesel, the liquid fuels. It is far more environment friendly if we compare it with coal, and most of the times it is more economical than the liquid fuels, petrol and diesel. That may be partly because of the tax concessions which the government gives for the natural gas, but at the end of the day it is more economical so far as the consumers are concerned. So the government is giving so much of concessions to the natural gas sector, but still we are lagging at 6% only for so many years. Now, if we see the CGD sector out of the natural gas total sector, it amounts to almost more than 20% of the total consumption of natural gas in India, and that is the growth engine for increasing the natural gas consumption in India. So a couple of years back, it used to be very low. It used to be 15%. Today it is 20% in the the contribution of CGD sector. If we talk of number of vehicles which are run by CGD, they have grown 3 times over the last 7-8 years. And if you see the CNG stations in India, they have grown 4 times during last 5 years or so.
You know, Mr. Saraf, it's quite a... Yeah, I understand. It's quite a visionary report, and there are a fair amount of suggestions that there are for increased usage of CNG and natural gas, obviously taking into account the current environment issues that we're facing as well. What I also want to understand is on 2 particular suggestions, which have been long pending requirements or demands from the industry as well. One, removal of excise duties. This could reduce the prices. And second, inclusion in GST. On both of them, it does not address how the revenue shortfall for the states will be. I mean, what is the cost that one has to pay for removal of these excise duties, or probably what is the compensation that the government will have to pay to the states if they are included in GST? So what the cost to the government could be, does that report have a number on that?
Yeah, the report has a number on that. I may not remember that instantly, but the mechanism which the report gives is like this. Because if you, we said that the GST should, natural gas should be included in GST because the GST paid on various inputs by different manufacturers who are using natural gas, that GST is extended. What we suggested, we took care of the government's concern on revenue, And we said that you include natural gas within GST, but you put a rate of GST in such a manner that it becomes revenue neutral. When it becomes revenue neutral, it may not become revenue neutral to each state, but on an overall basis, it would become revenue neutral. And then government should devise a mechanism that how to address, because some states would benefit and some states would lose. Then how to transfer money from state X to state Y. So for that, government would need to introduce some mechanism, but it should be revenue neutral to the government. So it takes care of the interest of the government. It takes care of the interest of the concern of the industry as well.
Sure. Mr. Saraf, I just wanted to just narrow down on one particular point, which is the mandatory use of CNG in public and commercial vehicles in high polluting areas. Just give us a sense in terms of how feasible this kind of recommendation is, considering the current scenario that we are seeing in cities such as Delhi and Mumbai, and also the fact that at one point, at one end, the government is also focusing on the conversion to EVs. So just give us a sense in terms of the feasibility of such a recommendation.
You see, you may not remember because you are too young, but we remember in the early 90s when there was no CNG in Delhi, and how much pollution used to be there. And from that time till now, the number of vehicles have increased many, many times, maybe 10 times or 15 times. So it is, CNG which helped Delhi in controlling the environment and pollution within the city. But now we need to refresh that drive, that more and more vehicles need to be CNG run. And it may not be possible overnight. There could be some more incentives in terms of excise benefit to CNG vehicles, etc. So all those measures the government has to take. And on your point that what about EVs? So CNG is not competing with EVs. So EVs also should be encouraged. And we have seen that despite so much of incentivization on EVs by the government for last several years, the number of vehicles in EVs have not increased much. So CNG is the solution for the time being. And when the government is able to introduce more and more EVs, then the CNG vehicles can be replaced by EVs.
All right, Mr. Saraf, these are suggestions that you've given and they're well taken. Let's see what the implementation on those are. Just basis these suggestions, there was a spike in the stock prices earlier, but now all eyes on the implementation. Thank you so much for joining in. On the other side of the short break, we will have Manisha Gupta joining in with Chirag Sheth from the metal space to speak about that.
Welcome back. Joining us on the show now is Chirag Sheth. He's from Metal Focus. Chirag, hi. Thank you so much for joining in. First of all, your sense on the prices itself, because gold has seen a very volatile, big range. We've seen all-time high at 43.80, then a correction up to 39.25, and now we seem to be holding around that 41.50 mark. Consolidation done. Would you say that the gold is back towards its upside journey?
Well, Manisha, volatility has been the name of the game for quite some time now, in precious metals, both gold and silver. And I think we believe that that will continue to remain so over the next year or so. We believe that probably every quarter you might see these $400, $500 range between your highs and the lows, Having said that, I think, we said this last time as well, that fundamentals have not significantly changed for us to, probably alter our view. I think we continue to remain bullish. I think you are now seeing, gold starting to move out of consolidation. However, for it to move towards, probably $4,800, $5,000, you will require a bit more push from newer factors. But currently, I think we believe that gold prices could trade a bit in the range of 45, 4,600 on the upside and maybe 3,800 on the downside.
What's your also sense on the ETF buying? Because the AMFI numbers just came in a while back, and we've seen gold demand continue to be very, very strong, slightly lower than what we saw in September. But then September was clearly an aberration. But even with that, 7,800 crores is a huge, big number.
No, I think, look, in India, we've seen phenomenal demand probably for investment and ETF over the last probably a month or so. And I think that is something which is visible in the numbers as well. I think, look, Indians like a rising asset, and that's why, we've seen that despite this fall when came in, people didn't actually rush to the gold shops to buy their gold. But now with again gold prices coming in, we would not be surprised if November numbers also come out to be pretty robust.
What's your sense also on the central bank buying? Because the data does show that does it seem like it's on its way to 900,000 tons yet again this time? Because we've done more than 650 tons already till the month of September.
Yeah, I think our estimates continue to remain between 800 to 1,000 tons for 2025 as well. I think now gold is increasingly looked as a strategic asset for most of the central banks, given how geopolitics have, shaped up post the Russia-Ukraine conflict. And also with, the Trump presidency, I think more and more central banks are looking at increasing the gold holding. So I think a lot of them are looking at 5 to 10% of their FX reserves, at least in gold.
How are you also looking at India jewelry buying? Because the Diwali, Dhanteras week and the month went quite strong. Since then, November perhaps has seen a slowdown. At least that is what the jewelers seem to be telling us. But the wedding season is not too far away, already starting there. How much of a demand are we looking at in sense of bridal jewelry coming in for gold?
No, I think, look, we've seen this past 2-3 years that in the run up to Diwali, you normally see this euphoria building in. Once Diwali is over, you see market, kind of calming a bit. However, what was actually surprising is despite this drop that we saw, people didn't go to the shops to buy. I think somewhere people are waiting for prices to fall further. But now with gold prices again moving ahead, and as you said, we are already into the wedding season, we might see pickup in demand coming in. I think we still believe that bridal has been doing fairly well. I think it's the daily wear segment which actually got impacted quite significantly.
Chirag, how are you also looking at the silver prices going forward? Because 54.5 and almost 47, trading back above 50. This is as volatile as it gets.
Absolutely. Silver doing what it does best. But I think, look, we have been bullish for silver for at least 2-3 years now. And we believe that next year we could see $58 to $60 in terms of silver prices. I think silver fundamentals are far, far better than gold, given that the market is in deficit, newer demand, and all the investments which is going in artificial intelligence and newer technologies. I think that will probably keep silver demand pretty strong.
You said $60 an ounce in next year?
That is correct, yes.
All right. Chirag, as always, thank you so much for joining in. So the bullishness in gold and silver just about continues. The investment demand, the jewelry demand for India has been on the higher side. So gold and silver perhaps could be looking at all-time highs yet again in 2026. But with that, that's all the time that we have on this segment. We'll come back and talk more about markets on the other side.
Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty has seen a very good recovery from the day's lowest point. 130 points more higher from the day's lowest point is what the Nifty 50 is trading at. 25,570 around that mark. Just moved to the green and flip-flopping between the red and the green as of now. The Nifty. Bank Nifty too, more than 340 points recovery from the day's lowest point is what we're seeing for the Bank Nifty. So that is something that we'll be keeping an eye out on as well. IT continues to do well. Midcap is also managing to hold on to a slight bit of a gain in today's trading session as of now, recovered from the day's lowest point. So recovery, that is what we're seeing coming in for the market, specifically in some of the names from the Nifty 50. We are seeing Eternal, Dr. Reddy specifically. They've seen a bit of a run-up coming in the last 1 hour. But on that note, we're going to step into a very short break. Don't go anywhere. After the break, we'll have the management of WeMart to discuss their Q2 numbers. Stay tuned for that.
back. You're watching us here on Halftime Report. Bharat Forge, the stock continues to move higher. Good margins coming in. But let's talk about some more numbers. V-Mart Retail. The company reported a good set of second quarter numbers, aided by earlier onset of the festive season. We did have their second quarter update come by, and that is when Anand Agarwal, who's the CFO, joined us as well and did say that the festive season they are expecting good growth to continue. Thanks a lot, Anand. And the numbers are following what the update was. We did see good same-store sales growth, that reflecting to improved margins, etc. as well. But now that we have all of that and that's behind us, the question is, what next? The festive season, you have seen the sales of October. Bihar elections have taken place. We're likely to see early onset of exit polls, etc. coming today as well. How have the last month and a half been for you? And basis what you had told us earlier with regards to improved consumption during GST and the festive season, how are those numbers tracking?
Oh, hi, Mangalam. I think the numbers are still tracking well. We're still seeing better consumer sentiment. However, if I look at the Diwali gone by, this Diwali was a summer Diwali. So while the traction still is positive, we are still seeing growth. But if I compare Diwali to Diwali, last year Diwali was a winter Diwali. This year Diwali has been a summer Diwali. So thereby the value of the merchandise is not so large, or the growth in value terms is supposed to be slightly less. But irrespective of that, we are seeing early traction on winter. So winter has just set in, and we are seeing good growth coming in on the winter front. So for the full quarter and also for the full year, we still remain optimistic for delivering continued growth.
Okay. Sure. Mr. Agarwal, what about in terms of your overall store plans as well? Last time you spoke to us, you did highlight that you think and you believe maybe you could go above that store guidance that you all have given as well, which is at around 60 to 65 net store additions in FY26. This quarter, you all also have managed to add 25 stores. So what is that and what is the outlook there? Do you think you'll beat that guidance?
Yeah, I think so. We should definitely be looking at a much higher number. We already opened, in fact, 16 stores in October until date in this quarter. So 15 in the first quarter, 25 in the second quarter, and 16 so far. So we already have opened almost 56 stores this year, 59 stores this year. So I think we should be comfortably able to reach at least 70-75 plus store by the end of the year.
Okay. Mr. Agarwal, just wanted to get a sense. So for the festive season, you had anticipated around 20% growth earlier. That's what you had guided. Are you on track for that?
Yeah, at an overall level, I think we still are looking at overall 20% odd growth, not just for the festive season. I think for the entire year, we are looking at, around, 17 to 20% growth. Okay. Festive looks positive, but it's still, the winter and the summer difference still has to be factored in. So far, the going has been good. We are still seeing growth. We are still seeing like-to-like growth. So that's a positive sign. But I think we still remain on track to deliver a full year number of around.
What about, just what would that mean for your entire P&L? Because you're currently sitting on an EBIT loss, or your net loss has reduced to around 8.8 crores for the entire quarter. When do you possibly turn into the black, considering that your margins had improved this quarter as well?
So quarter 2 is typically a loss-making quarter. So quarter 1 we were profitable. Quarter 3 also should be very profitable. So on a full year basis, we'll definitely be profitable. There's no question around that. So in fact, this year we've reduced our losses in quarter 2 by almost 84%. So that's been a good positive sign, and that will flow in through to the full year, profitability numbers, which should also improve marginally from last year.
All right. Just a couple of questions on the digital business and the inventory days. Typically, the third quarter has higher inventory because, you have wedding season, etc. So just wanted to understand how that has panned out. And on the digital business, you have constantly mentioned that, this will just be an ancillary to your overall physical retail stores. And as the businesses grow, there would be reduction in investment out there and the losses will reduce. That has happened so far. So what other metrics are we tracking in the digital business? And on your inventory days, the wedding season demand, all of that?
The inventory is absolutely under control. So while at an overall level, the inventory looks slightly high, but in terms of inventory days, we have actually reduced our inventory days by almost 3% this quarter. On a go-forward basis, we are adequately stocked for the winter season. By end of December, inventory days should in fact come down to almost around 90-92 days, which is again an improvement of around at least 5 to 7%. So we are quite comfortable as far as inventory days, also in terms of the working capital days. As far as the digital business is concerned, like I have mentioned multiple times in the past, we are consciously reducing our reliance on the online business. We still maintain that we will be reducing our losses from the line road part of the business by almost 50% year on year. That's happened so far in this quarter, and that will continue to happen, till at least for the foreseeing, full year as well. So on a full year basis, our losses from the online business should come down at least by 50%, if not more.
Okay, losses will come down. And just a quick one, double-digit growth expected in FY26 and SSSG will be in mid to high single digits, right? FY26?
Yes.
Okay, great. Thank you so much, Mr. Agarwal, for joining us on the show and giving us insight in terms of the outlook of the company going forward as well. But on that note, we're going to slip into a very short break. More on the markets on the other side.
Welcome back. Well, for the markets, there's been a recovery, but I just want to point out a couple of stocks which are reacting to their export data. So Syngene, for example, is higher in today's trading session, so that stock should come up for you. The export data has been positive for them. It surged 68% month on month, according to a Macquarie report, but not that much for Cohance, where the exports have declined around 69%. So Cohance Life Sciences, which is still to report its numbers, also is down in today's trading session, down around 2%. And Blue Jet Healthcare also, where the exports have declined 5% month on month. So Blue Jet Healthcare should come up for you. That stock down around 2% as well. With that, it's a wrap on Halftime Report. Stay tuned. Business Lunch up next.
Stocks open with cuts but stage a recovery even as global cues remain positive. Financials come off the lows but are under pressure while IT metals and autos eke out gains. In a surprise move, Britannia lets go of MD and CEO Varun Berry by waiving his notice period even as he proposed to serve it out. Incoming CEO Rakshit Hargave will now also be designated as managing director when he joins in December. The abrupt shuffle spooks the street. A deterioration in the asset quality of Bajaj Finance's MSME loan book prompts it to rein in growth, leading to a cut in growth guidance for FY26. The shadow bank also says that credit costs will be near the upper end of its guidance. The stock skids. Net equity inflows into mutual funds dipped in October, with large, mid and small cap funds seeing a decline in flows even as hybrids saw investments jump. Experts contend that the interest in multi-asset and the IPO rush are likely to have drawn some funds away from the equity markets. Following the car explosion in New Delhi, Prime Minister Modi and Defence Minister Rajnath Singh assure an in-depth investigation into the incident and promise that the perpetrators will be brought to justice. Home Minister Amit Shah also chaired a high-level meeting at his residence a short while ago. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormus Fatakia, and it's been a very strong recovery from the Nifty in a few minutes from there, at least in the last couple of hours. At the lowest point of the day, the index was at around 25,450, and from there, it's seen a rebound of almost 120 points and has almost moved into positive territory. Of course, mind you, it's the weekly options expiry today, so we need to brace for such kind of volatility anyway. The banking stocks that were leading the index down have led to the recovery as well, and the Nifty Bank too has now recovered almost 300 points from the lows of the day. A couple of earnings reactions. Bajaj Finance, of course, that continues to remain at or near the lows of the day. There is no respite for that stock. 7.6% lower now on the stock, on the verge of breaking below that 1,000 rupee mark, which it did in intraday trading. So almost 8% lower for Bajaj Finance, and consequently Bajaj Finserv, which reports results today, and that too now is trading with losses of well over 6.5%, almost close to 7% now for Bajaj Finserv as well. Just pull up Bharat Forge. Numbers came in just a few minutes earlier. The earlier guidance was the fact that the North American exports will continue to suffer in the second half as well. But the bigger takeaway is the fact that the domestic business will do more than enough to offset the impact of that weakness seen in the exports to the North American market. And as a result of which, as you can see, after that brief dip that came in after the first bit of the guidance, the stock has recovered again and has moved towards the highest point of the day, 1.5% higher for Bharat Forge. But the other big announcement that came in last evening was from Britannia, and that stock too was among the top losers today, and that is following the resignation of Varun Berry. Mangalam is joining in on this to take us through more on this. Mangalam.
Well, what has spooked Britannia today more than anything else is that the board did not give any notice period to Varun Berry. So Varun Berry has been the MD CEO of Britannia for over a decade right now, and an exemplary leader out there as well. Under his tenure, the revenues grew by about 2.5 times, the profits grew by 6 times, the market cap of Britannia itself was up 18 times. Yes, the street was hoping for a transition. They were hoping for a smooth transition. So on its part, the company had announced Rakshit Hargave as the CEO with effect from December 15th, with the understanding that maybe Varun Berry, when he leaves as the MD, Rakshit will be appointed as MD and CEO. Varun, in his resignation, did say that he was willing to, extend his transition or extend his services for a smooth transition in the notice period as well. But the board has accepted that resignation with immediate effect and waived off notice. What this has done is left a hole in the company's top for the next 1 month. No MD right now, but Natarajan Venkatraman, who's a CFO, has been appointed as the interim CEO. So this transition jerk is something that the street is not liking, and which is why the stock is lower by about 4%. Although from a business standpoint, the next half of this year looks fairly strong for Britannia, with the GST-related benefits coming up and showing in their volumes.
Mangalam, thank you for that update there on Britannia. That stock, unlike Bajaj Finance, has seen a minor recovery from the lows, so almost 4% lower now. At one point was also down 6.5. Now, city gas distribution companies, well, they had a bit of a spike in the last couple of hours, but they too have cooled off from the highs. And that's after the oil and gas regulator, PNGRB's high-level committee on natural gas, has submitted its report on planned reforms for city gas distributors. Now, the proposals include the restoration of APM allocation for CNG transport segment, the inclusion of CNG as a cleaner fuel in the vehicle scrappage policy, mandatory using of CNG in public and commercial vehicles in high polluting areas. Fleet conversion mandates have also been recommended. Now, we also spoke to DK Saraf to understand what could the planned reforms mean for city gas distributors. Listen in to what he had to say.
Natural gas should be included in GST. Because the GST paid on various inputs by different manufacturers who are using natural gas, that GST is extended. What we suggested, we took care of the government's concern on revenue, and we said that you include natural gas within GST, but you put a rate of GST in such a manner that it becomes revenue neutral. When it becomes revenue neutral, it may not become revenue neutral to each state, but on an overall basis, it would become revenue neutral.
Now, moving on to the primary markets then, we also spoke to Prateek Maheshwari, the co-founder and whole-time director at PhysicsWallah, whose near 3,500 crore rupee IPO hit the market today. Listen to what he had to say.
We are fastest Indian company to achieve 3,000 crores of top line in less than 5 years of the timeline. Offline, you rightly mentioned, offline at a steady state is a 15 to 18% margin business. But I'm number 5th player in offline. My market share is less than 7%. So there's a huge headroom to expand. It will be a compounding story for next 10 years. The stores, the 170 stores which we have opened recently will turn profitable, so the second year is the year when the offline stores turns profitable, and third year is when the offline stores start generating, at return of capital happens at third year, and if you see my market penetration, it's not even 7% as compared to my competition, so there's a huge headroom to expand in offline, which will give me enormous revenue growth.
We just spoke about Bharat Forge a few minutes earlier, and Sudarshan is now here to take us through those numbers. Sudarshan.
So considering the ongoing tariff situation and the geopolitical situation that we have been seeing over the last few months, there was an expectation that Bharat Forge might miss estimates, but surprisingly, on both standalone and the consolidated basis, company has come out with earnings, and earnings have looked much better than expectations. So I'll just give you two numbers. On both standalone basis, look at the EBITDA margin. It's much above than 27%. It has come around 28%. On consolidated basis also, margin has come in 18% versus our expectation of 16%. But beside that, two important lines that I'll talk about that company Mr. Kalyani has given in his statement. So when he talked about that North America export business may remain weak in H2 FY26, the stock had seen a sharp decline. It had gone to as low as 1,314. But after that, there was another line that the weakness, what will be seen from the export business, North America export business, will be not only fully offset, but industrial and defense will outperform, and it will do more than offset. And look at the stock. Currently, it's up almost 4% from lows of 13-14. It's up more than 5. And that's the reason. So not only the earnings have come in much better than expectations, the big move in the stock you are seeing on the back of positive commentary that we have got from Kalyani.
Oh yes, not to take away from the fact that the earnings were also better than expectations. Sudarshan, thank you for that. 3.5% higher now on Bharat Forge. When we addressed the stock at the start of the show, it was 1.5%. So it has seen a significant move from those levels as well. Take a short break. More news and updates on the other side. Welcome back, and on to the latest news from the heart of Delhi, where at least 8 people have been killed in a car explosion near the Red Fort. Home Minister Amit Shah chaired a high-level security review meeting a while ago. Let's go across to Timsy, who has more details on this. Timsy.
Well, as you rightly said, after the explosion that was heard right in the heart of Delhi at the Red Fort, to be precise, outside gate number 4 of Red Fort's metro station at about 6:52, that is when the explosion happened. Union Home Minister last evening itself took a detailed review, went to the spot, went to LNJP hospital where the victims and the injured were taken. And today in the morning, as we speak, we are outside Home Minister's residence, where he chaired a meeting with senior officials on this particular matter. Present in the meeting were Director IB, DG NSG, DG NIA, DGP Jammu and Kashmir, who had joined virtually, and Delhi Police Commissioner. It is being learned from sources that the traces are going back to the ammonium nitrate that was being seized yesterday itself from Faridabad in a joint operation between J&K police and Haryana police. It is understood that the car which was carrying the explosives, which actually where the explosion happened, had a Haryana number plate, and that is understood to have left from Faridabad early in the morning yesterday itself. As we speak, the Delhi police have registered an FIR last evening, late last night to be precise itself, under UAPA, Explosive Acts and BNS Act, Section 16 and 18 of UAPA, Section 34 of Explosive Acts, and Section 1031, 1091, 61(2) of BNS, under which the investigations as we speak are underway. No formal statement as yet from any of the top governments, but Prime Minister himself in Bhutan actually said that those behind this blast will not be spared. It is being learned from sources, however, no official confirmation as yet, that there could be a Cabinet Committee of Securities meeting tomorrow when the Union Cabinet meeting is being chaired. But all this right now just being speculated, just being considered that it could happen. As we speak, no formal confirmation from the government as yet, whether it is a terror act or not, whether there will be a Cabinet Committee of Securities meeting or not. But yes, as we speak, detailed investigations being chaired by Union Home Minister himself, Union Home Secretary taking the helm along with Union Home Minister, being briefed about the matter, and now investigations underway.
Timsy, thank you for that update. In fact, let's also listen into the Prime Minister as to what he said on his state visit to Bhutan.
मैं कल रात भर इस घटना की जांच में जुटी सभी एजेंसियों के साथ, सभी महत्वपूर्ण लोगों के साथ संपर्क में था, विचार विमर्श चलता था, जानकारियों के तार जोड़े जा रहे थे। हमारी एजेंसियां इस षड्यंत्र की तह तक जाएगी। इसके पीछे के षड्यंत्रकारियों को बख्शा नहीं जाएगा। All those responsible will be brought to justice.
And Sandhya is now here with a roundup of the progress on the probe being conducted and the angles that the agencies are working on. Sandhya.
So, Abbas, multiple agencies are examining the case. As our colleague Timsy mentioned, that how Delhi Police has filed an FIR under sections of UAPA, Bharatiya Nyaya Sanhita and Explosives Acts. Though NIA has not officially taken over the case, but NIA has extended full support and is helping Delhi Police with the investigation. There is another case about which we need to talk. This case pertains to Kashmir Police. Last month, at multiple locations in Kashmir, posters by Jaish-e-Mohammed, terror outfit Jaish-e-Mohammed, were pasted, and in those posters, Indian security forces were threatened. Based on that, Kashmir Police filed an FIR, and recently Kashmir Police conducted multiple raids and searches at multiple locations in Jammu and Kashmir, Faridabad in Haryana and Saharanpur in UP. Kashmir Police arrested 8 accused who are allegedly linked with terror outfits like Jaish-e-Mohammed and are allegedly being operated by handlers from Pakistan and other countries. Now, all these agencies, Kashmir Police, NIA and Delhi Police, they are coordinating among each other and they are trying to establish this one thing, whether this Faridabad module, which got busted by Kashmir Police recently, where explosives worth 2,900 kg along with remote and, timers and other chemicals, other weapons with ammunition were seized by Kashmir Police, whether this Faridabad module has anything to do with, has any connection with Delhi explosions or not. Another thing which all these agencies are trying to establish here, Hormaz, a name has come up in the investigation.
Right.
Dr. Omar, who is as of now said to be a resident of Pulwama. Now the agencies are trying to establish whether Dr. Omar has anything to do with the blast or not, because as of now he's said to be connected with these 8 accused and a member of Jaish-e-Mohammed.
Santya, thank you for that update. And as the air quality now in Delhi NCR worsened to the severe category, the Commission for Air Quality Management has imposed stage 3 of the graded response action plan. Timsy is joining in with more. Shivani is joining in with more on this.
Well, absolutely. Air quality in Delhi NCR has officially entered the severe zone, forcing authorities to trigger a stage 3 of the graded response action plan, or the GRAP, starting today. The citywide average AQI has jumped to 425, with several hotspots showing even higher readings. Bhavna, for example, is at 462, Alipur is at 442, Chandni Chowk at 416, and so are various other regions and areas in Delhi NCR. With pollution levels rising sharply, the administration has moved to tighten curbs. Under GRAP Stage 3, all non-essential construction and demolition activities are now banned in NCR, along with the closure of stone crushers and hot mix plants. Municipal bodies have been instructed to intensify road cleaning and dust control in the city. Importantly, the worsening of air quality has now begun to affect the school and Delhi general life in Delhi. Schools have now been asked to shift to a hybrid model for class 1st to 5th, meaning online classes and more flexibility for younger children in Delhi NCR to save them from toxic air. Doctors are also advising residents, especially children and elderly, to not step out during the morning and the evening hours when pollution levels peak. So while enforcement has now stepped up with GRAP Stage 3 in place, the immediate priority remains protecting public health as Delhi once again battles the hazardous winter air. Back to you.
Shivani, thank you for that update. Take a break for now. More news and updates on the other side. Let's now get to the latest from Donald Trump. The US president has once again hinted at an impending trade deal with India. Listen to what he had to say.
Well, right now the tariffs are very high on India because of the Russian oil, and they've stopped doing the Russian oil. It's been reduced very substantially. Yeah, we're going to be bringing the tariffs down. You know, we're making a deal with India, much different deal than we had in the past. So right now they don't love me, but they'll love us. Again, we're getting a fair deal, just a fair trade deal. We had pretty unfair trade deals. They're very good negotiated, Sergio, so you have to take a look at that, if you would, please. But we're getting close, Scott. I think we're pretty close to doing a deal that's good for everybody, right?
Meanwhile, the deadlock over the US government shutdown seems to be ending with the Senate passing a key measure. The bill now needs to be passed by the House and signed by President Trump. Listen to what he had to say about the deal.
If it's a deal I heard about, that's certainly, you know, they want to change the deal a little bit, but I would say so. I think based on everything I'm hearing, they haven't changed anything, and we have support from enough Democrats. And we're going to be opening up our country. It's too bad it was closed, but we'll be opening up our country very well. I will be. I'll abide by the deal. The deal is very good. We're not going to be giving $1.5 trillion to people that came in from jails and from, you know, the gangs and drug dealers and all of these others that they wanted to be given health care, which would have hurt our health care system.
I take a leave on this edition of Business Lunch from me and the team. Thank you for watching. Midcap Radar on the other side.
very good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vivek Iyer. Well, it's turning out to be a session where, yes, we have recovered from the day's low, definitely. So in the green for the markets, we have the Nifty, which is up around 44 odd points. And we have the Bank Nifty, which has recovered significantly as well in today's trading session. So good going with the mid-cap index up around 0.2% as well. So green on the screen, advanced decline ratio still on the declining side. So let's see whether or not it favors the advances as the day goes on. But as of now, looking good.
Good afternoon, Ekta. Absolutely right. A smart recovery in the second half is what we are witnessing so far. We have a lot lined up on the show. Many important managements post Q2 and an important IPO too that's opening up. So let's start off with the top headlines. Stocks open with cuts but stage a recovery even as global cues remain positive. PSU banks and realty under pressure while IT and autos eke out gains. Midcaps in line.
Britannia Engineering surges after reporting its Q2 numbers. Consolidated revenue surges nearly 11% while margins expand.
HUDCO under pressure despite reporting a decent set of Q2 numbers. The company saw its net interest income jump 17.5%. Management tells CNBC-TV18 that they are well on track to achieve net interest margin of around 3.3% by the end of FY26.
CarTrade Tech confirms CNBC-TV18 Newsbreak as the company states they are in talks to acquire CarDekho and BikeDekho. Stock, however, slips almost 6% from intraday highs.
Vodafone Idea surges over 8% as losses narrow in the second quarter. The ARPU also rises by over 1% sequentially. Well, welcome to Midcap Radar. Like we've been speaking, it's a sharp recovery that we're seeing. An important IPO is around the corner. MB Photovoltaic Power's IPO has opened for subscription earlier today, and the company is looking to raise close to 2,900 crore rupees via the issue. To discuss this and more, we are joined by Suhas Donti, who is the whole-time director, president, and chief executive officer at MB Photovoltaic Power. Thank you so much, Suhas, for joining us, and we wish you all the best for the ongoing IPO. First up, break up the usage of the IPO proceeds for us. We understand close to 2,900 crores is what we are raising. How much are you looking to go ahead and repay the debt in your subsidiary? What will be left after that? And pre and post listing, what will be the debt on the books?
Yeah, thank you very much for having me on the show, and it's a pleasure to be here today. Before I get into the use of proceeds, I'll just take a minute and talk about the background of MV. We are India's leading solar module and cell manufacturer, so we are an integrated player who is second largest in the country today. And we have manufacturing experience of 18 years and been a profitable company.
Suhas, a lot of the information you're giving us is flashing on the screen for our viewers. We are a little short of time, lot of earnings. If you could just come down to the details itself.
Sure. Absolutely. So our issue size is 2,900 crores. Out of that, 2,150 crores is the fresh issue, and the balance is the OFS portion. That's 750 crores. So out of the fresh issue, we are repaying the debt of 1621 crores. And today, our long-term, that was the long-term outstanding debt in our balance sheet. And the remaining will be the general corporate purposes, which is about 530 crores.
Okay. All right. Just give us a sense, just line up the capex for us. It seems to be quite ambitious. So if you could just reiterate it for our viewers. And how exactly are you going to fund it? How much of, say, the IPO proceeds is going into capex?
Yeah, absolutely. So we have a 7.8 gigawatt of module capacity and 2.94 gigawatt of cell capacity. We are adding another 2.5 gigawatt of module capacity that is going to get completed in this year. And there is an integrated capacity of 6 gigawatt of cell and module, which will take our capacities to 16.3 gigawatt of module and to 8.9 gigawatt of cell. So that is the 6 gigawatt of integrated capex that we are talking about. That is totaling of 5,500 crores of capex, out of which 60% is the debt that we have secured from IREDA, our long-term lenders. That is 3,300 crores of debt, and balance will be funded through internal accruals.
Understood that. So now, you've spoken about the capex plans as well. Now, going forward, what is the sustainable growth rate for a company? Because looking at FY25, of course, it's been a very, very sharp jump. Going forward, sustainable growth rate, will you grow in line with the industry? Will you go faster than the industry? The reason we're asking is that there has been significant competitive intensity that is ramping up. So in that backdrop, can you grow at the same rate that you've grown past?
Absolutely. So, given our 18 years of manufacturing experience in this industry, we have seen many cycles, right? And if you look at our growth of revenue or margins per se, if you look at the revenue, it is growing with the capacity that is being added. So the reflection of the capacity addition is shown in the revenues. And EBITDA growth is backed by the backward integration the MV has done in 2024. So we commissioned our first cell manufacturing facility in September 2024, which gave the rise to the EBITDA and the profit margins in FY25. And that is continuing to reflect in the first quarter of FY26 as well.
Okay. Just wanted to get a larger sense, Suhas, that, what exactly are you anticipating in terms of returns? For example, are the peak returns behind in the industry simply because of the kind of competition that we're seeing? We have bigger players entering the industry as well. At this point, what's the competitive landscape for your like?
No, wonderful question. And I think, again, right, given our experience in manufacturing and being one of the first manufacturers of TOPCon cells in India and having one of the largest capacities of TOPCon cell manufacturing in India, we have always been at the forefront when it comes to technology, quality, and product availability in India. So, given that we have a strong acceptance of our products by the large-scale developer community, and key accounts make up a large chunk of our revenue. And given that position, I think the company is in a very strong position even going forward, and we hope to continue at the current levels of profitability as well as EBITDA, given the standing of the company in the industry.
Okay, Suhas, thank you so much for joining us. We wish you all the best for the IPO. A short conversation, but we invite you once the listing day, and we hope to get a lot more concrete details in terms of the financial aspirations that you hold. But moving on, we'll now slip into a short break. Manish Gulati from HEG joins us next to discuss their Q2 numbers and more.
Welcome back. Well, for the markets, it's turning out to be a steady session now. So up around 52 odd points currently for the Nifty, and we have the Midcap Index, which is up around 120 odd points as well. But let's talk about one specific company. HEG is in focus. It posted what was a good set of Q2 numbers. The company's revenue grew around 23%, while the net profit surged too. To discuss the quarter gone by and the way forward, we have with us Manish Gulati, who's the Executive Director at HEG, to join in to discuss more on this. Mr. Gulati, thank you very much for taking the time out. Well, the revenue growth was around 23% this quarter. Just give us a sense in terms of what the utilization levels were and how did it compare with the industry? Because earlier you've said that utilization levels can get to around 85%. What was it this quarter? How does it compare?
No. For the 2 quarters gone by, the Q1 and Q2, our capacity utilization has been in the excess of 90%. And the revenue growth which you see quarter on quarter, Q2 versus Q1, yes, we have sold more in Q2 compared to Q1, which you can see in the top line. And through the year, we hope that we should be close to 90%, as compared to the last year, which was close to 80%. So, and if you compare it with the peer group, I can safely say that our capacity utilizations are better.
Okay, so Mr. Gulati, you're outpacing your peers, especially in terms of capacity utilization. Can you give us a volume growth guidance for FY26? And have you been selling, the higher volumes Q2 versus Q1? Has this been done at a higher realization?
First, when it comes to realizations, they are, I would say, they are still at the same level. The top line growth, which you see, is mainly because of volume, higher volume sold in Q2 versus Q1. And if you ask me to compare the last year volume growth versus this, so the last year it was close to 80%, and FY26, we hope to be close to 90%. For the first half, it's more than 90%, it's 90 plus. So I think by when the balance 2 quarters are done, we should be close to 90%. So that's the kind of volume growth. But as I said, the prices are still stagnating for the last 2 quarters.
Okay, so prices are still stagnating for the past 2 quarters, but you are expecting a volume uptake. Those are the Bajaj Finserv numbers. The revenue is up around 11%. That's obviously Bajaj Finance plus the insurance arm in terms of the numbers that Finserv is reporting. Net profit is up around 7.5% to 2,244 crores. More details in terms of the internals, but as you can see, both the twins have been on the downside in today's trading session, primarily reacting to Bajaj Finance numbers. But Mr. Gulati, just getting back to the conversation, if you could give us a sense in terms of how the graphite electrode prices have moved. Prices were expected to be flattish in Q2. How exactly have they moved? And what is the way forward?
Prices have been quite flattish between Q1 and Q2. And although we were expecting prices uptake in the second half, but it's still taking time with the kind of steel production we are looking at. There's still a decline in the first 9 months of calendar year 25 to 24. If we compare, there's a decline, 1.5, 1.6% decline. And even if we exclude China, it's very, very flattish for the markets we cater to. So we are hoping that in quarters to come, 2-3 quarters later, when the steel production starts to show growth, and ours is derived demand from steel production, particularly from electric arc furnaces. So the demand for graphite electrodes should go up. And the new electric arc furnaces, which are coming, which we can see, they're under construction. About 11, 12 have come. 20 million metric tons is expected soon in the next 1.5 years. So we are hoping that in times to come, there'll be an uptick in demand.
Understood that. Give us a sense, you said that you're hoping for an uptick in demand. Give us a sense of the impact that the US tariffs have had, especially as far as the export order book is concerned. We understand 10 to 12% of the total production goes there. So despite the fact that you've been operating at 90% plus capacity utilization, has exports continued to remain a headwind?
Well, we are also watching the situation, and we are hoping that the tariff of today, 50%, settles down to a more reasonable level as it has been settling down with other countries. So that's what we are looking at. 2025 is almost getting over, And 2026, we hope that in the next 1 month, 2 months, 3 months, it settles down and our sales continue as before to US. Even if it is not, as I've said in the past, that our markets are very well diversified. We are dealing with supplying to almost 35 countries. That includes Europe, Middle East, Southeast Asia, almost everywhere. And US accounts for 10 to 12% of our sales. So we are, I think, quite geared up to handle the tariff situation. Of course, it will be, it's a very important market for us.
Okay, all right. More on that later, Mr. Gulati. We've run out of time. Thank you very much for joining in and speaking with us. So that's the management of HEG, stock up 4.5%. We'll take a break. Up next, we'll get you an exclusive conversation with the management of Swiggy. Expect 18 to 19% growth in the food delivery business. That's the word coming in from Swiggy's food marketplace CEO Rohit Kapoor. In an exclusive conversation with our colleague Shilpa Ranipeta, Rohit also adds that the company is eyeing EBITDA margins of 5% in the medium term. Listen in.
I think the guidance that we've given even to analysts and markets is in that range of 18 to 20%. And it's on a large base, so the food delivery industry is now 10 years old. Also, profitability has emerged in the industry, which is very important because the growth and profits have to go hand in hand. We do believe, though, that given what we see of penetration levels, etc., in the medium to long term, it's our job as well, because as key players in the market, as we focus more on affordability, because India will grow, GDP per capita will increase. So over a period of time, this number should move up.
Right.
Now, are we guiding to that? No. But are we working towards, just a basic fact is that there are segments where it has to become more affordable going forward. And that's a key focus, yeah.
Right, so, but then you just mentioned profitability also. Are we still sticking to the profitability timelines? At least for food delivery business, when can we expect, PAT positive?
No, we don't. We're giving EBITDA, and in this business, there's not much under EBITDA. So, and we had a very strong quarter on profitability. Again, we released the results about 10 days back, 10-15 days back. We continue to guide in the medium term to a 5% EBITDA margin. And remember, 5% is on GOV. So when you compare to percentage of revenue EBITDA, it's much higher.
All right.
Yeah.
And I want to talk about Bolt, and you've also been talking a lot about affordability. Currently, how much of the orders are coming on Bolt, and are you further scaling Bolt as a proposition going forward?
See, Bolt is already scaled up. It's already double-digit percentage at our level of volumes. That's significant. I think what we have is now rich data on which consumers, which use cases prefer speed as a primary vector of choice, right? And I think we're getting much sharper in terms of making sure that those consumers see Bolt on a very regular basis. More propositions are available to them on Bolt. I think that's the focus. Speed is always going to be a vector of interest for consumers.
Well, that's the word coming in on Swiggy. They say that they're targeting 5% EBITDA margin in the medium term. Well, with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.
Hello, good afternoon. Welcome to MF Corner on CNBC-TV18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, today what we're going to be discussing is every parent wants to ensure the best possible future for their children. With Children's Day around the corner, we have Nasser Salim, who will be joining us to talk to us about children mutual funds. It's important to start saving, right, for your children's education, because that's the key. Or whether they want to go abroad. How will you start investing and how will mutual funds help you invest here is what we'll be talking about, right? Because it's key that you start investing at the correct time. There's going to be Forex that will be there as well. There'll be inflation, education inflation. That's much higher than the return that you get as well, right? 10% in terms of increase, in terms of inflation we see every year for education. How will all of this actually pan out with mutual funds? Let's bring on board Nasser Salim, Managing Director at Flexi Capital, who is going to join us to talk to us about the investment schemes that are most suitable for securing your child's financial future. How will we see that headed from here on is what we'll be discussing as well. Normally, you would also go for an option that could be even a normal oriented fund. But is that much better than a children-oriented fund? Normally, children-oriented mutual funds are more goal-based mutual funds. These are mainly designed typically to help education or marriage of the children as well, and then you have to start investing for a long period of time. So longer the time period, more beneficial it is in terms of achieving these goals, and they're more goal-oriented investments that come in. Let's bring on board Nasser as well now. Nasser, good afternoon. Thank you so much for joining us on the show as always. Let's start by talking about the solution-oriented funds, that is children mutual funds, versus maybe you would say a traditional investment option that is there. How is it different and how should one go about it in terms of their portfolio?
Good afternoon. Thank you so much for having us over again. It's always a pleasure, Vinny, to be on your show. We're facing some technical glitch. I'm just going to fix it, trying my team to do it. But yeah, to your question on solution-oriented children's funds, mutual funds, Vinny, solution-oriented funds broadly are goal-based funds, designed specifically to help parents invest for their children's long-term needs. These are typically for education or marriage, and we obviously know all about them. On the other hand, traditional products, Vinny, focus on safety and fixed returns, but often struggle to keep up with rising education costs or inflation, right? Or even exchange rate fluctuations if the child plans to go for higher education abroad, stock overseas. So essentially, while traditional options prioritize stability, Vinny, children's mutual funds balance growth and discipline to help parents systematically build a larger corpus for their child's future. And broadly, these funds, invest in equity, debt, or even hybrid instruments, depending on the scheme's end objective.
Okay, that's interesting. Obviously, that's mainly for that end objective. Now, which mutual fund schemes actually stand out in 2025 as the best option for children's education planning? And what have been their past performances, if somehow we could look at it and compare it as well?
Yeah, again, so there are a few of them available to investors, Vinny, and I think, the broader ones come in from the larger asset managers, for education planning, and one is from the SBI stable, then the other one is from ICICI, and there's HDFC. I think all these three, the reasons why we've kind of shortlisted some of these basis past performances, because there's a clear, record of 5 and 10 year data available for us to kind of analyze and judge. I think each of these have delivered very superior risk-adjusted returns when you compare it to the benchmark, Vinny. Broadly, in 3-year returns and in 5-year returns, which are more important here because, they range between 34% all the way up to 14 to 18%. SBI, for example, is given a 5-year return, almost 34% annualized return. ICICI Prudential in the same time period is given close to about 20-odd%. And HDFC, again, comes in at close to about 19-odd%. So these are very, very, attractive returns with risk-adjusted returns, which are fairly stable. And obviously, investors need to be thorough with their investment goals, risk appetite, and compare costs and returns, and only then make an informed decision. But these are some of our top shortlisted funds for children.
top stock listed funds for children's, and obviously it's Children's Day, so parents, if you're watching, any of these funds would look nice. SBI Magnum Children's Benefit Fund, ICICI Prudential Childcare Fund, as well as HDFC Children's Fund is what Nasser has mentioned. Nasser, obviously there's going to be a lock-in period, right, for this investment. How does that pan out, and what is the flexibility that one can have then? And given the risk profile and everything, like you mentioned, that everyone has to focus on, how will that pan out, and how should the flexibility actually work? Is it only post this period of lock-in that there will be some flexibility?
So clearly, I'll tell you, so basically most children's funds have a mandatory 5-year lock-in or until the child turns 18. I mean, that's one of the most important parameters set by AMFI and by SEBI, and whichever is earlier. So the key is 5-year mandatory lock-in or until the child turns 18, whichever is earlier. It would obviously encourage parents to stay invested and avoid, temptation to withdraw early, and that is why there has been a lock-in introduced. Helping in the investment compound, right, for education or for other long-term needs as it may be. In terms of flexibility, Vinny, to your question, these funds allow you to choose between equity-oriented and hybrid options broadly. And flexibility is limited during the lock-in. So obviously parents should plan. I mean, this is a very important point. They need to plan their liquidity needs before committing to any of these schemes or options. And finally, I think one of the most important matters, that really is of very importance is the risk profile, which is of equity-heavy funds like, SBI Magnum or ICICI Prudential Childcare Fund, for example, which suit parents with longer time horizons and higher risk appetite. I think this is something which is very, very akin to all, funds that are being solicited in the market, that we need to understand the risk profile attached with them. Whereas certain balanced funds like the HDFC Children's Fund work better for conservative investors who want some stability through their debt exposure. So out of the three, the SBI and the ICICI are more equity heavy, whereas HDFC is a little, it's a balanced and a hybrid approach, which has some long-term stability through debt exposures. And the choice, honestly, really depends on, on your time period of investments, comfort with market volatility and investment goals, Vinny.
Okay. And, is it advisable to solely have children's mutual fund, or is it better maybe a combination, is that one could build a better corpus as a parent? Vinny, again, a very important question. Thank you for raising this. While these funds are great for goal-based and disciplined investing, Vinny, the most effective way to build a strong corpus for your child, or for one's child, is through a combination of these and diversified, well-researched quality mutual funds. I think, again, we have kind of shortlisted as a AMFI-registered MFD. We can shortlist some of the top-performing funds for you and your viewers. We've gotten some of them to the, again, from different asset managers. We've got DSP, we've got HDFC as a combination of diversified quality funds. We've also got something from Parag Parekh. There's also, Kotak multi-asset for, it's an Omni fund of fund, which is hybrid in nature. And then there's ICICI Prudential passive multi-asset, which is, again, it's a diversified quality fund. So a combination of these, may work very well. And again, it's subject to, your own discussions with your advisors and your financial planners. I think diversification into different funds obviously mitigates, concentration risk, or spreads the risk rather. And the power of compounding works best when you start early. Even small, consistent SIPs, when you can grow significantly over 10 to 15 years. And children's funds are usually to anchor, one's plan, but combining them with diversified funds does add growth, balance, and flexibility. I think ultimately, even starting early and staying consistent is what turns small savings into a meaningful legacy for one's child's future. Absolutely. Being consistent, starting early is something that will turn into a legacy for your children as well. And obviously, that is something that turns out to be positive. Diversification also plays a key role there as well. Thanks so much for that. But what are the key factors now as a parent one should prioritize before starting an SIP for their child? Are there some factors that they should keep an eye out on?
Absolutely, Vinny. Again, first, principle is start early. The sooner you start, the better it is. And the more time your money gets to grow through the power of compounding. The eighth wonder of the world, as we all know, is the power of compounding, which is crucial as education or marital expense costs double every 5 years due to inflation, right? Secondly, I think the plan has to be more realistic in nature by setting a target amount for higher education, common and other goals, and factoring in inflation, which is and exchange rate fluctuations. Why inflation? Because each year we get hit, inflationary pressures, and then there's exchange rate fluctuation because of INR, dollar, various other major currencies. If the target location is abroad, a mix of diversified funds may help balance growth and stability instead of relying only on traditional means of investments, Vinny. For example, I'd like to put out an example for you here and for your viewers. If one's today to invest in an equity fund, a monthly SIP of 20,000, roughly at a estimated return of about, say, give or take 12% historically on equity, then accounting for inflation, the roughly corpus that you'll see, which is in about 15 years, is about 5.8 million INR, which is about 58 lakhs, which could be used for one's education or even managed, for example. So you see how a kind of a plan which has got realistic goals, realistic assumptions, may be achieved sooner. The other very important point is that you need to have a comprehensive financial plan for emergencies between all of this. When you're reviewing your portfolios on this account, and finally, reviewing your SIPs periodically, Vinny, is prudent, makes prudent sense, and makes necessary adjustments as your income or goals evolve over the period of and over the course of the year, over the years. And this obviously ensures that one's portfolio performance is on track with the end objectives that have been estimated for.
Absolutely, Nasser. Thank you so much for taking us through, how one should go about it as a parent in terms of investments and what they should go as well in terms of children's mutual fund. What should be the diversification there? But thanks for that. On that note, we're going to slip into a very short break. On the other side, we'll be discussing the best ways to optimize your portfolio allocation amidst all the flurry of NFOs that have come in as well as existing funds. So stay tuned for that conversation. Welcome back to MF Corner on CNBC-TV18. Now, with the surge of new fund offers entering the market alongside with a vast range of existing schemes that you already have, investors are facing a lot of complex landscape with choices. You are spoilt by choice, right? So how should you start picking out these from the new NFOs, or should you go for the existing NFOs? What is the balance between risk and return here? How should we be viewing that? And do not forget, between just April to October, today's Amphi data, including itself, there have been 139 NFO launches that have come in. So we're going to be discussing all of this with Nasser as well. Nasser, with so many NFOs launching, how should investors evaluate whether to invest in an NFO or maybe stick to something that is an established mutual fund?
Right, Vinny. Amidst the flurry of NFOs, you rightly said over 130 plus NFOs launched in the previous years. I think investors need to be very, very selective and not get carried away by the type and more by the hype and FOMO, right? I think one of the biggest issues that we face, even as MFDs, is that a lot of investors keep asking us about these new fund offers. The key is to first understand what an NFO really offers, Vinny. The cheap NAV offered at launch doesn't make it obviously more attractive than an existing fund. What matters more is the portfolio diversification, fund strategy, category, and fund manager's track record. I think established funds, that have a performance history, makes it more easier to conduct a quantitative analysis of risk and return, and hence we prefer to invest in the existing, funds over NFOs. That's I think one of the other very important points. The other one is, of course, if investors, want really to invest in an NFO, Vinny, they need to evaluate whether the NFO fits their existing portfolio and adds diversification instead of just overlapping with current holdings. When we review and analyze a lot of portfolios at our end, when we, for prospective clients, we see there's a lot of overlapping because a lot of NFOs have just been piled in their portfolio. Now, they need to check, investors need to check if NFOs offer a distinct theme or a strategy, Vinny, that is unavailable in your existing portfolio. I think investors should also check the performance of the fund manager, the AMC, and other qualitative aspects of the NFO. It would be favorable to invest in NFO only if it brings genuine innovation or strategic value to their portfolios.
Absolutely. Genuine innovation or strategic value. Then it makes a difference to add or enter into these NFOs or start something with an NFO. Nasser, what about portfolio allocation strategies, right? Like, how should one be viewing it? Is it strategic, tactical, dynamic allocation? What works best in today's volatile market as well? The points that you mentioned, yes, taking that into account as well, whether it adds anything to your portfolio, but a strategy maybe to optimize your returns.
No, absolutely. I think, again, a very, very pertinent and important question that, we face as when we meet clients. I think, Vinny, strategic allocation works best as the foundation of a portfolio construction. Is generally invested for a long-term period, right? It's a steady mix of equity, fixed income, hybrid, and other assets based on one's objectives, risk tolerance, and time horizon. I think, on the other hand, tactical allocation is about taking advantage of short-term opportunities, Vinny. It helps in capturing market inefficiencies without losing sight of the long-term plan. I think that's very, very important. For example, to capture sectoral growth, particularly in the current period, themes such as consumption. We see a lot of fund houses talking about consumption. There has been some NFOs also that have been launched on the NFOs for consumption trends. I think consumption as a theme, for example, is something which is gaining a lot of popularity. The other one, of course, there is some talk about metals and then there's some talk about power and infra. There's also some trends on infrastructure, for example, to kind of which are being not talked about. So I think this is contingent upon one's goals in current market situation. I think a dynamic allocation automatically adjusts your exposure or one's exposures between equity and debt based on market valuations or indicators, Vinny. I think it is usually best for investors who want professional, rule-based rebalancing without timing the market themselves. Sure. For example, investing in a hybrid or a multi-asset fund may the ideal dynamic allocation for that.
Okay. And Nasser, just a quick word, we're absolutely out of time, but the biggest red flag that one should keep an eye out on in an NFO when you're investing?
So clearly investors, should start by checking for overlap of securities in their portfolio funds, Vinny, objective and category. If the new fund holds similar stocks or sectors as your existing ones, it doesn't diversify. Be cautious of high expense ratios or unclear investment mandates. Very, very important, which can reduce returns without adding value. And last, not the least, avoid chasing current fad. Instead, check for funds, AMC's performances over various NFO and fund managers' performances in the past. I think these are some of the most important red flags that one can look.
Okay, Nasir, thank you so much today for joining us on the show as always and helping us break down all the difficult questions that come in from the viewers in terms of mutual funds as well. Thank you so much for that. And viewers, thank you so much for tuning in as always. Last hour of trade is still left and you have closing bell up next for that.
Headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Taiwanese index, though, is trading with healthy gains of almost close to 1% now.
I think we're pretty close to doing a deal that's good for everybody, right?
Support stands at the swing low of 25,318.
They have cut their AUM growth guidance from 24 to 25% versus 22 to 23%.
25,630 on the Nifty, about a 0.25% higher.
What makes us a unique company is one thing is our community building playbook.
Inclusion of CNG as a cleaner fuel in the vehicle scrappage policy.
What the street is more, worried about right now is the abrupt end to this glorious leadership.
The rationale of increasing the share of natural gas in the energy basket is also very clear because it is more environment friendly as compared to petrol and diesel.
हमारी एजेंसियां इस षड्यंत्र की तह तक जाएगी.
It's turning out to be a session where, yes, we have recovered from the day's low, definitely. So in the green for the markets, we have the Nifty, which is up around 44 odd points.
Well, it's a good and a better looking screen, I guess. Better is the right word because, we've climbed a lot from the lows of the morning and we're up 120 points in the Nifty. That was the day so far in terms of the price action from 9 o'clock in the morning. This is closing bell. We'll track the last hour for you. Lots of single stocks we'll talk about. Of course, a big story coming your way in just a bit. And of course, so we are coming to you from the CNBC-TV18 Motiro Oswal studios. I'm Prashant. Rima and Surabhi with me here. And Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, it's now a 250-point recovery from the day's low. The day's low today was 25,450, and we're knocking at the doors of 25,700.
Not looking bad at all. And guys, just note the PSUs today. For one reason or the other, for instance, for a Hindustan Copper, it's after numbers. But even otherwise, PSUs are having a nice party today. Look at BEL, look at BHEL. Yeah, that's the one that delivered numbers. There's NALCO continuing its good run after its numbers earlier in the week. So overall, NMDC Steel, NMDC, all PSUs are up. Let's pull up the PSU index if we can. That's definitely a very, very green side of the market. Hi, Nigel.
Well, that's right. And we have crossed the 20-day MA on the Nifty as well, which is the level that we couldn't get past yesterday. So for the time being, we are holding above that mark. You like to see that, but I think we're still in a range. We need to close decisively above this 25,700 odd to put us on course to around the 26,000. And the Nifty Bank for the second day running, that's a relative underperformer. Needs to get its act together, get to around that 58,500 odd mark, and then lead the way because today as well it's underperforming. But otherwise, a pretty good looking screen because in the start of trade, the number of stocks that were declining were close to 2:1. Now we're pretty much at even Stevens.
Also the Nifty weekly expiry today.
Yeah.
So the last 1 hour, 60 minutes to go for that, yeah.
Yeah, and I was talking about PSUs. We put up the CPSE index, which actually put up the Nifty PSC index, which is doing even better. And within that, the defense space is really charged up. The defense index, which is obviously PSU and private both, that one's up almost 2% right now. So just thought I'll add that in terms of trends. Overall, looking pretty good across the market.
In the evening, people will be glued to the exit poll results, Bihar exit polls. I mean, politics has kind of gone to the, the back burner in that sense. And people are not really focused on some of these state elections, but Bihar is going to be an interesting one. And last phase ends exit polls, and then 14th is when the actual results come through. So we'll see. 120 though on the Nifty at this point. Well, it's an action-packed last 60 minutes coming up here. So let's quickly run you through what's coming up. So start was choppy, not anymore, looking much more steadier. We're back above the 25,600 levels. IT and auto stocks are building on gains. Solid commentary from Bharat Forge, and we'll get you more details on those numbers. And what else? I mean, the mutual fund inflows, right? And I think Surabhi will talk in greater detail about this one, the SIP book, etc. So fine print of the monthly numbers. It's interesting and important data point there. The Bajaj twins are both selling off. Bajaj Finance, and on the back of it, what's happening with Bajaj Finserv as well. So we've been, of course, covering this from the morning. So some more fine print here. Asian Paints will report numbers and Tata Steel will report numbers. So will Max Financial. So some previews coming up in just a bit from now. Well, there is a flash at the bottom of the screen. That's a big CNBC-TV18 exclusive. And we'll have our colleague Yash joining us on it in just a bit from now as we break that story. JSW Steel looking to sell up to 50% stake in Bhushan Power and Steel. That is essentially the big story. Remember, Bhushan Power and Steel was embroiled in all this controversy with the Supreme Court, cancelling and ordering the liquidation of Bhushan Power and Steel. Remember, JSW had won it, was the highest bidder. They got the asset. Supreme Court ordered liquidation, cancelled the NCLT order. Then, of course, the top court went back on its order, and all was clear once again for JSW, which owns this asset. So more details at the bottom of the screen. Stocks, I think, is spiking as we speak right now. Let's just stay with the flashes for 90 seconds more. We'll go across to Yash, but let's just quickly wrap out the trading calls as well with Mitesh, who's with us, and then we'll go across to Yash. Mitesh, good afternoon. Good to have you here. What are your calls?
Good afternoon, Prashant. So I think, the market has bounced back, and, I was saying that we need to get past, possibly we'll head towards 25,757, 800 zone. And beyond that, we'll gain more strength. So I think this bounce back should extend, and we should possibly test 25,750, 800 area. And let's see how the market reacts from there. For the time being, I have two long calls. MLM is something which is breaking out. So keep a stop just below levels of 3,700, which is 36.99 is the recommended stop, and look for a target of 3,790. And persistent is a buy with a stop below 59.40 for targets of 16,100.
Got that. Mitesh, stay with us. I just want to get a view on JSW Steel as well. But let's get the story first, right? Yash is now joining in. Yash, what are you picking up?
So, of course, as you can see the flashes on the bottom of the screen, what we've been picking up from our sources is that JSW Steel is looking to sell up to 50% stake when it comes to Bhushan Power and Steel. This is the same asset which, of course, was under the Insolvency and Bankruptcy Code. NCLT had awarded this asset to the highest bidder, that was JSW. Then, of course, it went into problems at Supreme Court, but finally the asset got awarded to JSW again. So, of course, JSW has rights to this particular asset, and they are looking to sell up to 50% stake, as far as Bhushan Power and Steel is concerned. What we've been given to understand, we've written to the company on this particular query, and JSW Steel has replied to us saying that the company's strategy includes evaluating various opportunities, both organic and inorganic in India and overseas, including potential collaborations aimed at enhancing scale, efficiency, and global competitiveness. However, we would not like to comment on speculation. Also, what we've been given to understand from our sources is that Japan's JFE Steel at this point of time is the front runner to acquire this 50% stake when it comes to Bhushan Power and Steel. Just a little history. As I said, first NCLT awarded, Supreme Court overturned that order, but very recently Supreme Court flipped on its own order and again gave this asset to JSW. The company, that is Bhushan Power and Steel, has about 4.5 million tons of integrated steel capacity, and as far as JSW's acquisition is concerned, that amounts to about 19,700 crore rupees.
Okay, all right. Yash, just stay on. We've got Aditya Sood also joining in to talk about the market. And of course, this important story. This is pretty big. Aditya, what do you make of things? Because after being mired in a lot of controversy and legal issues, finally the asset was cleared by the Supreme Court again. So what do you make of JSW's strategic intent to part with 50% of the asset, raise some cash in the bargain? I mean, your first thoughts?
Obviously, it puts a value to the asset, I think so straight away, which obviously was a distressed sort of a buyout. And obviously, it is a well-known fact that JSW has a long history of turning around, doing successful acquisitions and buying distressed assets. Yeah.
Would you have preferred for JSW to sort of keep this within its fold, integrated, and then reap the benefits of any upturn in the cycle? Or do you think this way of, getting in, buying the distressed asset, turning it around and selling at least a part of it off for hopefully a tidy sum, would that be a better strategy?
I think so. It is a better strategy from the sense that, there could be a geopolitical angle also. We have seen, just Nippon Steel and Mittal also announcing a very large steel capex in Telangana. ArcelorMittal was going with a smaller 8 million ton capacity, but clearly this clearly demonstrates the fact that for this is one sector which can have a lot of FDI coming into India, quite like financials recently.
And do you like, the ferrous space overall, Aditya? Would you allocate fresh money in the past, recent past, when metal stocks overall have been doing fairly okay? Where is ferrous in your larger scheme of things? And within that, say if you talk about top players, JSW, Tata Steel, how would you break up the allocation?
I think so. JSW is more inward looking in the sense that, by investing into Tata Steel, you have to essentially take a call on, global steel prices. They are fairly insulated as far as the steel scenario in India is concerned. So I think so in the pecking order, JSW is preferred over Tata Steel, clearly.
Okay, all right. Just to close the loop on this, this is clearly a big story that's coming in there. But the way this deal is done is going to be quite interesting, because as Yash is mentioning, that they're looking at unlocking value in Bhushan Power and Steel. Just to give you a few numbers, JSW Steel holds 83% stake in this particular asset. The promoter entity holds the remaining 17%. So we'll have to see how much they're looking to sell. Which party is looking to sell how much, and then what happens to JSW Steel's holding in Bhushan Power and Steel that's currently going at an EBITDA per quarter run rate of around 750 to around 800 crores. So ballpark, they're in that vicinity of around 2,600 to 3,000 crores of EBITDA, this particular asset. So how much value they'll unlock? Currently, this asset is a subsidiary of JSW Steel. If the stake falls below 50%, it becomes an associate entity. So various permutations and combinations, the structure of the deal is something that we'll have to track. It's clearly value unlocking in this particular asset, but how it flows back to the promoter and how it flows back to the company, that's something that we'll have to check. So, an interesting deal and a large one, unlocking value in an asset that almost got pulled away from them earlier this year. Interesting developments. Yash, I'll also keep my ears to the ground. Have got various hints on this particular deal. So we'll try to fill you in with the latest, but the structure of the deal will be important to track. That said, let's move on. Bharat Forge, that's in focus, post its numbers. Sudarshan joins us to help us out with some analysis on that. Sir? So in the midst of geopolitical tensions and tariff uncertainty, Bharat Forge has come out with its earnings for Q2 FY26, and those earnings have looked better than expectations on both consolidated and standalone basis. So first talk about consolidated basis, I'll talk about two numbers. EBITDA, company has reported EBITDA of rupees around 730 crore against our expectation of around rupees 612 crore. Margin has come in at 18% versus expectation of around 16.2 to 16.3%. Similar trends have been seen on standalone basis, where margin has come in much higher than 28%, while expectation was around 26%. After that, stock had seen a slight up move. But in the case of Bharat Forge, the main focus remains on the commentary of Mr. Kalyani. Now, after the commentary came, after the first commentary, the stock has taken a sharp knock. It had hit the low of 1314. What did he say? He said North American business, exports to North American business will remain weak even going into H2 FY26. But after that positive commentary came that India industrial business and the ramp up that company is doing in defense business will more than offset the weakness that company will see from exports to North America. And after that, stock has seen a sharp recovery, and currently also it's up almost 4%. And from the lows, intraday low, the stock is up almost 6%. So on the earnings front, beat, outlook, cautious, but slightly on the positive side.
Okay, all right. Thanks a lot for that, sir. Well, Aditya, coming across to you, what's your view on this stock, Bharat Forge, and basically a company that's into a little bit of defense, auto ancillary is their core business, but they've been talking about diversifying as well. Your view?
So I think so. Defense, clearly there is a lot of tailwind today. The only problem that we find in this stock is with valuation. It has been a very richly valued auto anch play because obviously defense is embedded. I think so. The key for Bharat Forge going forward is that at what point in time they look to list the defense subsidiary once it scales up separately, because we have had, a bit of order inflow here from Armenian government also, essentially. So I think so. It is more about a capital allocation play from here on. We want to be very, very focused on valuation in most of these companies, because clearly the auto cycle is very important for Bharat Forge, which is The US classic truck cycle needs to be monitored very, very closely. So our view is that, one has to be very focused on valuation.
Aditya, on Tejas Networks, we've spoken about it multiple times, and you've explained the rationale on the opportunity why you like Tejas Networks. So, don't want to get into that, but the question is, considering the relentless fall in the stock price, are you still holding on to Tejas? Are you looking to average now at lower levels?
Sure. So, essentially when we first bought Tejas, it was closer to a 400 rupees stock. The stock rallied to 1400 odd. Possibly, the stock has not done well for last 12 months. Obviously, we have seen a very, very sharp fall. The key for Tejas is going to be two critical variables. One is that, when do they get this 15 to 20,000 crore order from BSNL, which is for the 3 to 4 lakh, towers incrementally. That is a key for us. The second point here is that, we continue to monitor the capability of the company very, very critically. Since they have now started to jointly market the Open RAN product in the global market with both Rakuten and NEC, we expect at least 3 to 4 orders to come through, which could be in the vicinity of, $10 to $15 million. The long-term thesis continues to be that, Tejas is a stock that one can easily hold over the next decade. Obviously, a lot will depend. Near-term stock performance is closely tied to, the way order inflow will, sort of pan out. Just highlighting one very critical thing for Tejas. Last year, they ended up spending $80 million in R&D. I clearly struggle to find companies which can spend so much in R&D. Obviously, they'll reap the benefits over a 3 to 5 year period.
So still holding on to it?
Yeah, I think so. Makes sense to hold on or to average. We have been slowly buying the stock as well.
Okay. By the way, those are interesting comments coming in from the Vodafone Idea analyst call. The company is talking about discussions ongoing about those AGR dues. Now that the court has clarified that the scope of this relief, if the centre so chooses to grant it, doesn't have to be just 9,500 crores. It can go up to, reviewing the entire AGR demand itself. And the stock has done well. Pull up a longer chart. This is today. For those who have had the grit to trade Vodafone Idea from about 6.5 rupees in I think it was August, to about 10 and a quarter today. So it's been an up ride, but not one without volatility. Very quickly, last word on this, Vodafone Idea. Any thoughts before we let you go?
Very difficult to have, strong views wherein you have seen a lot of dilly-dallying from the Honorable Supreme Court. But I think so now we are in relatively better territory since, the court has mentioned that, the ball is in the court of the government. I think so structurally we are very, very positive on the prospects of telecom. But one thing is very, very clear that there needs to be some capital infusion in this company. In fact, we like Tejas on this theme. Vodafone is obviously, quasi-owned by the government of India. And we believe that there is a huge push towards, using indigenized equipment in the telecom sector.
Interesting. Let's see what happens. You're right, but at least it seems to be now, all clear from the courts. So that's one piece out of the way. Thank you for joining in, Aditya. Good to get your perspective on all the stocks that we've discussed. Well, with that, let's quickly move on and figure out how the FNOQs are shaping up. Today is Tuesday, so it is weekly expiry. Nigel, how's it looking?
Well, the Nifty was trading above the 20-day. In the last few minutes, there's been a bit of a, big move, seesaw move that we saw there. But on a closing basis, the bulls will want the Nifty to close above that 20-day. So that's the important mark, because yesterday as well, we couldn't get past that. Today, for the second day running, the Nifty Bank that's actually been leading the way. That is a relative underperformer in today's trading session. So that underperformance is actually hurting. Otherwise, we could have been trying to scale higher highs in today's trade. Moving to the options data, interesting piece out there. 25,650 put, 25,600 put. Both of them are fairly active in trade. But on the upside, the 25,725 is going to be a bit of a resistance mark. I say this because the 25,700 call, well, that is very, very active in today's trading session. At the start of the day, the premium is around 25 rupees. So that's why the 25,725 mark becomes important. On the downside, 25,600, that should hold, going by the kind of put writing you've seen at around the 25,600, 25,650 mark. Stocks in focus, Vodafone Idea, the one that we're just talking about. Come in for a bit of a short covering bounce out there. Stock up, open interest down out there. BEL in line with, a lot of these public sector units that are doing well today. That as well has come in for a bit of a short covering bounce because that stock as well has popped up in trade. And there is signs of fresh buying on Bharat Forge. So that one is seeing a huge open interest build up, particularly in the last 1 hour or so. And the stock is well up 4.5%. And finally, Bajaj Finance. The stock is down. It's moved towards the low point of the day and the open interest has swelled up as well. So some shorting is what we're seeing on this counter. Net, close about 20 DMA, something that's high. And the Nifty bank's underperformance, well, that's something that's plaguing the bulls in today's session. Back to you.
Thank you very much for that. Hindustan Copper is another stock reacting to numbers. The stock has surged close to about 7.25%. Get into a break. On the other side, we'll get chatting with Alok Agarwal of Alchemy Capital Management. Stay tuned.
Welcome back. Okay, so we've been talking about all the mutual fund trends. Let's look at some specifics now. The inflow numbers that have come in for the month of October are a mixed bag. a slight dip coming in equity flows, but it's not looking too bad. First, on the big headline number itself, we've seen about an 18 to 19% dip in the total equity flows that have come in at just under 25,000 crores. However, when we talk about equity flows coming down, guess what's shot up? Flows in hybrid funds. That's clearly telling us that investors are getting a little more savvy and are looking to diversify their bets away from pure play equities as well. If you talk about hybrids, then that's what I'm talking about. The inflows have picked up once again to that level of around 15,000 crores. And earlier in this year as well, we've seen hybrids pull in a huge amount of capital. While I talk about hybrid funds, let's look at MAFs, or the multi-asset allocation category. These are funds that invest, across fixed income, equity and commodities, including commodities like gold. And they have drawn in a very decent amount of money at about 5,300 crores. Speaking of gold, the flows into gold ETFs tell us that investors are still chasing price. If you thought that those highs of over 1 lakh rupees for 10 grams would scare people away from investing in gold, no. As the price of gold has rallied, so has the money flow in gold ETFs. In September, that number was as high as 8,300 odd crores. It's come down slightly, but at 7,700 crores, it's still nothing to laugh at. So gold ETFs pulling in a huge amount of money. Now that brings me to the rest of the equity categories. So since we're talking about a month-on-month deceleration, let's see where that drop is being felt. So across the spectrum, large cap, mid cap and small cap, most of the equity categories have seen a dip come in. The dip in the large cap category is fairly pronounced, with the large cap funds pulling in under 1,000 crores in the month gone by. Something to note here, the flexi cap category has actually held on very, very smartly. Flexi cap funds have actually pulled in almost 9,000 crores in October. So investor preference continues to be for flexi caps. Just to quickly talk about NFOs, we've seen a very healthy offering on NFOs as well. A lot of these offerings are actually on the passive side, so ETFs or index funds, a total sum of about 18 NFOs pulling in a little over 6,000 crores. Last but not the least, yeah, that's the NFO picture that I'm talking about. Last but not the least, if we talk about the SIP picture, that is the biggest silver lining, because SIPs are steady, and now the monthly SIP inflow number is inching towards that historic milestone of 30,000 crores of inflow every month. We're just under that at about 29,500, but the SIP story is steady while investors are diversifying away from equity as well. Okay, so that's the mutual fund story. With that, let's quickly get back to the market. Alok Agrawal, head of Quant and the fund manager at Alchemy Capital, is joining in. Alok, thank you very much for being with us. I was just narrating the highlights of the MF picture. But what's your sense? I mean, for the equity market, it's been very, very range bound. How do you sum up the Q2 earnings season? And do you think the market will have the legs and steam to break out into fresh highs, in the coming few weeks or months?
Yeah, hi, Surabhi. Thanks for calling us here. And the earnings season has to be summed up as something very positive so far. About 80% of the companies by market cap in Nifty 500 have already reported numbers. And the aggregate earnings seems to have grown a little over 15% year on year. And this 15% number is the best number we have had in the last 6 quarters. So, and this is up till September. So the benefits of lower GST rates and the pickup of the consumption and the festive boom, that should be seen in the upcoming quarters. So we enter into this third financial year quarter with a much better numbers, and these numbers of 15% growth is much higher than the estimates as well.
Alok, but the wait for the clarity on the India-US trade deal continues. So ahead of that, and as we wait for that, how are you positioning yourself? Are you participating in the market? If yes, via what? Are you fully invested? Are you buying the stocks which could be potential beneficiaries of a trade deal? Or is there a defensive tilt to your portfolio?
So our portfolios are more tilted towards companies and segments which are likely to see the higher visibility of growth, irrespective of the trade deal. So yes, the whole market possibly seems to be obviously waiting for this trigger of trade deal to go through. There are, looking at the sound bites, there are quite high chances that the question is of when and not if, and possibly in the days to come, we might have that deal go through. How much could be the final rate? That is anybody's guess. But it looks likely that at least the additional 25% that was imposed because of imports from Russia, the oil imports from Russia, that should at least go away. That's the kind of estimates that the market is building into. But in our positioning, we're not specifically looking at those names that could be the beneficiaries of that trade deal going through. For us, those which are having structural growth, especially domestic driven, they are the ones that are driving us, our exposures there, our overweights there.
Do you want to comment on Trent? And the other one is Bajaj Finance. Both big wealth creators for the market. They're growing, albeit at a slower rate compared to their own historical track record. Valuations, I mean, stocks have corrected. How do you feel about Trent and Bajaj Finance now?
Both these companies are actually the sector leaders, as well as they have kind of defied growth, what the whole sector was growing at historically. And for their supernormal profits, especially as compared to the whole sector, they were obviously given very high valuation premiums as well. But those growth numbers, as you rightly pointed out, have been slowly coming off from their historical trends. And hence the markets possibly seem to be adjusting to their valuations now. And the valuations still continue to be at premium. Their growth numbers are still better than the sector numbers. But the kind of higher growth, additional growth that they used to produce, those numbers look like a suspect now. That's the reason the adjustments are there. I do feel that some of our funds, we may be owning some positions in these stocks as well. But yes, they need to possibly have higher growth numbers to come through for those higher valuations to sustain.
Will you buy Trent or say Bajaj Finance at this juncture?
We would await higher growth numbers to come through. Currently, looking at the guidance by some of these companies as well, the growth numbers are still not looking as great. So possibly we'll want to wait out the period where the growth numbers start bouncing back to those higher trajectories that were there in the recent past.
What about some of these consumer tech companies? Again, there is growth, but valuations are expensive. You know, fairly expensive, many of them. In fact, there's some research which shows that I think 7 out of the 11 consumer tech companies which recently consumer tech companies, internet tech companies have reported losses in Q2. Where do you stand on them? On those, that entire segment? Which stocks do you own in your portfolio? And which ones are you comfortable buying right now?
This is a great space when you look at the overall story and the overall addressable markets. But yes, as you rightly pointed, to find out real winners there, those which are not just winning, which are also delivering those profits, that becomes quite difficult. In our exposures, we do have exposure to the leaders in the food delivery and in the payment side, because both these companies have already started turning around. They've started reporting profits, as well as on the consumer tech on the beauty side. So these three segments, you notice that the turnaround has already happened. The profit numbers are already going through. But yes, for others, we might want to await their numbers to go through that cycle of losses. And once they come into the profitable side, and more importantly, here the winner takes it all. So it's very important for us to focus on the leaders only. And yes, the story and the distribution side, the whole tech side, on the consumption side, that looks quite set to do quite well. But we need those that can execute pretty well here.
All right. Hi, Alok. Good afternoon and good to see you, Ben. Nigel on this side. What about metals? Metals, you know, the valuations come secondary. First, it's the sector with momentum. And some believe that you should stick to momentum. And if you've done that, actually, you've made big money. Whether it's ferrous, non-ferrous, everyone's doing very, very well. Some of these ancillaries also are doing well. What's your view? How are you all placed on metals? It's a tricky space because China is yet to recover. But nonetheless, if you bought, you're making good money.
Yeah, hi Nigel. Yes, we are quite positive and overweight on metals, and both the non-ferrous and the ferrous side. The way to sum up would be like, if you look at especially the non-ferrous side, a lot of these metals used to have surpluses due to which there were higher inventories in the system globally. But what has happened in the likes of aluminum, if you notice, roughly 60% of the market is controlled by China, and China has put a cap on the overall production. So, and they have reached that cap. So, 60% of the supplier in the world is not wanting to increase its production. Out of the remaining 40%, a lot of that comes from European nations who face a cost escalation because of higher energy costs. So, suddenly the incremental supply looks tighter in a world that is naturally growing, plus the geopolitical changes are such that the manufacturing is picking up, the electrification is picking up. So suddenly we find that non-ferrous metals like aluminum, zinc, etc., which historically had longer periods of being in surplus, now they trade at deficits. the inventory levels are coming down, and you see some important levels being broken on their prices globally as well. So the positioning in the metal space looks quite good. And we are overweight. We do see better times ahead for harder assets, especially the non-ferrous side.
And on the non-ferrous side, Alok, I believe you are playing that special situation, the demerger that's in the works, and the company that you could get access to zinc, aluminium, smaller parts of steel, as well as oil and gas. Is that the one, the large conglomerate?
Yeah, I can add silver to that as well.
Yeah, silver is there. Got it. All right. So Vedanta is the one I think that you're like. Just wanted to confirm that. You'll believe there's still more money to be made out here?
Yeah, absolutely. So it's a rarity that like you have multiple exposures to different assets like aluminum, zinc, and silver primarily, and all three being in an upcycle. And visibility on that upcycle looks quite bright from here on. So to that extent, the earnings growth visibility is quite good. So our positioning is on the positive side in these.
Okay, all right, Alok. And as we have seen in the past, it's now for Mr. Agarwal to go ahead and do something silly to lose this sort of an advantage. Otherwise, the company appears pretty well placed. But we have seen what they've done in the past. So hopefully, they've learned from past mistakes. Thanks a lot for joining in. Well, time to slip into a short break. As always, Nimesh is waiting for us on the other side. He'll tell us what's going on in dealing rooms. We'll also get you a couple of technical calls. Don't go anywhere.
करें।
Welcome back. Well, the markets are at the day's high. We're at the crucial 25,700 mark. 25,725 for the day is resistance, going by the call action that we've seen at 25,700. Weekly expiry, last 20 minutes to go. That said, let's get in Nimesh. Nimesh, tell us, D-Street Chatter, what are you picking up?
Hi, Nigel, a sharp intraday recovery, right? At 12 o'clock, we were down almost 100 points, and now we're up 120 points. So, looks like I think market is sensing something in terms of the Bihar election. Today, by the end of the day, we'll hear the exit poll as well. So, I guess that's something which Street is anticipating, so watch out for that. But in general, there is an expectation that after the Bihar election outcome, and I post that the anticipation would be in the US deal as well. So these are the two important triggers I've been highlighting for the last couple of days. Having said that, from a flow perspective, even today it's slightly negative is what I understand. And I've been saying for the last 2 days that there is selling in the broader markets from larger FIs, and that played out yesterday. And maybe today as well, there are selective stocks which are under pressure, even in a pullback market. Financials are a bit dragged today, largely on the back of that Bajaj twins. But interestingly, I was reading a note from Morgan Stanley. They put out a note in the afternoon. It's a tactical buy on Bajaj Finance, and they believe that after the 7% fall, it's a good buy. It's a good bet to buy. So a bit of contra view as well from Morgan Stanley on Bajaj Finance. As I said, of course, the Bihar election and US trade is important. But there is selectively buying happening in the PSU names. Today, for instance, auto stocks are doing good. Tech has seen a bit of a bounce back of late. So there is selective buying happening. But I guess the bigger move, if has to happen, has to be on the back of Bihar election and the US trade deal.
Okay, all right. But there are plenty of stocks as well that are going to be in focus, and some large trades. A little bit of a drink in there as well. So tell us, which are the companies?
Okay, but that's not my first stock. My first stock is Deepak Fertilizer. That's been buzzing off late. There is the buying interest has emerged, is what I understand. And for that, a leading domestic mutual fund has been an active buyer, is my sense in Deepak Fertilizer of late. So that's the first stock. The second stock is Tilaknagar Industries, something which Nigel will be very happy to listen to. I mean, the stock has been consolidating of late, but I believe there's going to be a large block deal in Tilaknagar after the earnings. So that's something to track there. The third name is Lodha Developers. There was a small block in the afternoons, and after that you've seen a bit of recovery in Lodha Developers today. I understand from a buyer perspective, a leading family office was a buyer in today's block deal. So not sure there will be disclosures, but if there is, it will be interesting to see as to who sold. But it looks like a family office was a buyer there. And the last name is Eternal. Second time in a week it's coming to my chatter list. I understand the selling pressure from a leading long-only fund is largely over. Some buying has emerged. There are buy flows today from larger domestic mutual funds. And maybe you'll see delivery-based buying as well in today's trade in Eternal.
Thank you very much for that. By the way, one more stock, Yatra. Strong numbers. The company's top line went up 50%. Net profit is up 95% on a year-on-year basis. And that stock has gained close to about 15%. Rocket, in the last 10 minutes, post the numbers. Mitesh is back with us for a few BTST calls. Mitesh, what do you have?
Yeah. See, on the BTST side, I think, very clearly with the market trading in the positive side, we'll go with the long calls. So PI Industries is a BTST with a stop at 37.75 or maybe a rupee below that. Look for a target of around 38.15, 38.20 and maybe more taken on a positional basis. And that about, I think, State Bank of India is a BTST with a stop at about 9.45 for targets of 9.60 to about 9.65.
Okay, all right. Thanks very much for that, Mitesh. More later. There's about 19 minutes to go for the market closing. The big talking point, as we've been saying, is the Bihar elections. So polling for the second and final phase of the assembly elections is underway. Will continue till 5 p.m. And later in the evening, we get exit polls. And of course, final results, the actual results on the 14th. CNN18's Pallavi Ghosh is now joining in with just the setup. The lay of the land in terms of how to look at this election. And I don't know if I can ask you the question, Pallavi, who's ahead or slightly ahead?
Well, I'm not going to take that guess at all, because one thing we can be sure about results is that one can never be sure about it. But there's a reason why the NDA think that they have the edge ahead, because when I traveled extensively to Bihar, frankly speaking, I never saw a strong wave against Nitish Kumar. There was no strong anti-incumbency. Yes, in some pockets, there was a little bit of anger. But I think what could be the clincher for the NDA is of putting money directly into accounts of women. We are waiting for the Election Commission to come out with the final data about what really was a voting percentage of women versus the men. But if you look at those data which we saw on the ground. You look at those queues up on our screens as well. It's very clear that a large number of women came out to vote, and that is something which could swing heavily in favor of the NDA. The stability or a stable governance, that's also been a kind of a USP for the NDA. And in sharp contrast, this whole tag of, perhaps bringing in back the Jungle Raj days, lawlessness, or the Lalu Prasad Yadav regime, despite the fact that his son is now at the epicenter of the Mahagathbandhan or the alliance. I think that is something which makes many women wary, large number of young also wary, because what they're looking at is coming back home to Bihar and working there. And that's only possible if they get job opportunities. The private sector is only going to come in if the investments increase, and investments will take place only if there's a semblance of law and order, at least a reassurance coming in from the state government under the NDA that we are going to ensure law and order. With a double-engine Sarkar, which is the BJP or the NDA in power at the center, as well as at the state level, we can reassure you that there's enough reason why you should be coming back home. So the NDA is very confident, but equally confident is the other coalition, where we just have to wait for 2 to 3 days, or rather for our exit polls really for later this evening to get a sense of which way it's swinging.
Pallavi, thank you very much. That's an extremely sort of important bit to watch. With, of course, as we've been saying, we'll figure out. There's always sometimes this big difference between what exit polls say and what the final results are. We will see whether it's a wide spectrum today, this evening. But Pallavi said, I mean, in her travels, it looked like the NDA was doing well. We'll see what the polls show once the polling booths shut. Pallavi, thanks once again very much for joining us with that. Now, Bajaj Finance is something we want to focus on once again. Stocks down sharply. Gaurav is here with just these numbers once again. Gaurav, over to you.
Well, yes, when we look at the numbers for Bajaj Finance, we were expecting good set of numbers. And if we look at the numbers, company has fairly delivered the same. In fact, profit that increased almost by 24% on a year-on-year basis. We saw net interest income and PPOP increasing almost more than 20%. And in fact, when we look at net interest margins, they remain flat. But what was negative is that the commentary. Now, remember, this is one of the stocks which is seen as a proxy to consumptions play. And specifically, given that there are multiple tailwinds of GST cut and rate cuts, we were expecting some kind of increase in the AUM. Now, when we look at AUM growth for second quarter, it was strong at around 24%. But going ahead, company has cut the guidance, AUM growth guidance, which was given at 24 to 25% to now at 22 to 23%. And the main reason why they are attributing this guidance cut is the slowdown in MSME and the mortgage segment. In fact, for MSME, they are expecting just 10 to 12% growth on a year-on-year basis for FY26. Second headwind that came in the result is that the asset quality. Now, when we look at credit cost, it fairly remains stable sequentially. In fact, company is saying that the guidance that they had given of around 1.85 to 1.95%, credit cost will remain in that guidance, but it will be at the upper end. But when we look at gross NPAs, we saw some spike coming up, and this was specifically again from the MSME segment. So it seems that the company is being a little bit pessimistic in the SME side, and that is the reason why when we look at brokerages, we did not see any kind of bullish notes coming up from brokerages. In fact, the tone of brokerages also became a little pessimistic. When we look at valuation, now this stock currently trades at around more than 5 times price to book if you look at the forward valuation. And given that there are some concerns about the growth, we saw Street did not take it in a good way. As we speak, the stock is down more than 5% today.
Yeah, it absolutely is. It's been down 6-7% with absolutely no sign of buying at the lows. So a lot of disappointment. The market was not prepared for some of these asset quality issues, and then therefore cutting back on the growth estimates. It was just not ready for this after a 45-50% rally this year. That's Bajaj Finance. Thanks very much for that, Gaurav. By the way, since we're talking financials, look at Shriram Finance. And look at the chart on Shriram Finance. Interesting, upthrust on it. Days high on Shriram Finance as Bajaj Finance struggles in today's trading action. Anyhow, for now, let's move on. Asian Paints is going to be in focus. Will it paint a nice shade of green or not in the second quarter? Let's ask Manglam. Manglam?
Well, the difference is the business and the stock. The stock has been painting a fairly good shade of green over the last few days. You know, from the lows, it's up around 25%. The Street senses a change in sentiment in the paint space, especially given the competitive intensity. The Street believes is perhaps behind. The valuations also not very demanding as they were earlier. But just from a business standpoint, the second quarter has been weak because of heavy and extended monsoons. Weaker product mix. The competitive intensity has still been high. We've heard that from Berger as well, and increased cost of sales. So all of that would bear down on the company's overall performance. But remember, the same time last quarter was one of the weakest quarters that the company had reported in recent memory. So on account of that favorable base, optically these numbers, at least on the EBITDA front and the net profit, would look fairly strong. We're looking at a 1% revenue growth, 7% growth in the EBITDA. Margins are around 16.3%. Remember, this is an increase year on year, but it's still lower than the company's own guided band of 18 to 20%. And the net profit on a lower base grows by about 25% as well. Volume growth of anywhere between 4 to 6% is something that the street will like. But remember, a disappointment this time around may not disappoint the street when it comes to stock price performance, only because they believe the worst is perhaps priced in.
Thank you very much for that. One person, Rakshit Hargave, has caused so much tumult in both the paint and the cookie industry, biscuits. Thank you very much for that. But Asian Paints in focus, of course, today on the back of the numbers. Jay Bala of CashTheChaos.com is also joining in. Jay, for the markets, it's been one step forward, one step back. It's been largely range-bound. What's the setup looking like for the near term?
Hi, Rima. Yeah, you're right. The market has been choppy and flip-flopping. But I still believe the markets are bullish, and we don't want to see a print of 25,153 as long as the market can stay above that. I think new highs are due. But if 25,153 were to come through, I would expect a revisit of the August lows, and that will delay the medium-term bullishness. But things are looking still positive in the short term. So we want to see Nifty take out 26,104 before it can print 25,220 and 25,153.
Got that. So the August low is 25,113.
No, the August low is 24,337. That's quite far off. So if 25,153 were to come through, that will drag the markets lower as a form of a correction somewhere to the August low. So that's the reason why 25,153 is very important. And if we can stay higher before 25,153 and it prints 26,104, we're getting record highs for the markets.
Stay on, Jay. Need to get into a break. We'll come back and continue the conversation.
Welcome back. Let's focus on Tata Steel. Comes out with a set of numbers tomorrow. And let me run you through the key points that you should be tracking. Top line consolidated growth of around 4%. EBITDA number should jump up by around 38%. And on a low base, remember there are plenty of one-offs below the operating line. It's expected to be a big PAT number. But the key numbers you have to track for Tata Steel, one is the India business, EBITDA per ton, 14,200. That's the important number. On Europe, well, $10 per ton is what we are working with out there. Let's run you through a few factors. For the India business, there'll be a contraction in realizations on a quarter-to-quarter basis, but there'll be some saving because of lower coking coal costs. So that works in their favor. Standalone volumes, though, will be up on a sequential basis by more than 15%. Why is that? In the first quarter, there was one of their blast furnaces that underwent a shutdown. So the benefit of operating leverage will play out there. Moving to the Europe business, well, they expect to report a positive number of around $10 approximately, which will be more or less constant on a sequential basis. Netherlands business, that will continue to power ahead because they'll start getting the benefit of the lower raw material cost, while the US losses will continue because of lower steel prices and higher costs as well. But you look at that asset together, Europe will be a positive number. Management commentary on debt, capex, demand trends as well as pricing is what we'll track. Tomorrow, HUDCO comes out with its set of numbers. And since we're talking about Tata Steel, Jay, come in, tell us about the metal index. Where is that one headed?
Yeah, so the metal index was the first to hit a fresh 52-week highs along with the auto index, and it's still looking bullish. And the last time when I spoke, I said 10,000 area is likely to provide support for the Nifty metals index. And it did come there and it started bouncing from there. I think another set of fresh record highs are due for the Nifty metals index, possibly heading closer to 11,000 and beyond. So still positive on selective metal names.
Okay. Jay, a view on Bajaj Finance after a stupendous rally this year. I mean, today is it's a result casualty today. Has it broken any important levels, or is this a dip that should be bought?
Yeah, see, the short term, it's just peaked, but in the medium term, it's got higher highs to come through. We'll look at important support in the region of 975 to 930. So this is a short term peak from the July lows, but in the medium term, it's got higher highs to come through. So to answer your question, it's probably looking like a buy on the dip.
Let me extend that question to overall financials, Jay. I mean, what is the Nifty Bank telling you now? Is that the best index to play? Is there anything else you'd buy in financials?
Yeah, I think we should shift our focus to private sector banks. The public sector banks have led the rally, and the baton is likely to get passed to the private sector banks. And the Nifty bank index, it's probably got higher highs to come through somewhere about 59,940 to 60,000. But the previous swing highs registered in October, November, that needs to be crossed. But it's looking quite bullish. It hasn't completed the final high it saw from the April lows. So the recent high that we saw in October, that's, in my opinion, is not the final high. We are looking for higher highs to come through 59,950.
You know, Jay, a lot of, as a technician, right, a lot of stocks going one way and then going the other way, completely opposite reactions day on day. And we've seen this play out over the last, take Newland as an example today. Look at today's reaction, look at yesterday's reaction, look at HBL, yesterday's reaction, today's reaction. And we're noticing this more and more. I mean, so you don't, you can looking at yesterday's move on HBL, you could make the case that maybe it's starting a fresh impulse move, etc., but smash today, right? So yeah. How would you look at some of this? Not for these stocks, but in terms of what's going on.
Yeah, see, the markets, these flip-flops are pretty important, although they look random. They register fresh net 52-week highs, net 52-week lows. In that account, these new highs and then flip-flopping still makes sense. So, that's the market breadth that's speaking to you. So as long as, they are clocking fresh 52-week highs and then pushing back lower on B results or any other bad news, it's actually still a positive as it contributes to the net 52-week highs. So we are looking for markets to, push higher as the breadth widens. And these are probably, a flash in the pan in the medium-term uptrend. So I believe these turbulence will get bought later on.
Just pulling out to the global scene, Jay, what do you see ahead for the NASDAQ? I mean, every day that debate just gains more and more momentum, right? Today we got to know that SoftBank has sold a huge amount of NVIDIA stock. They've cashed out, they've made a huge amount of money. But what next? Either on the NASDAQ or some of these Mag 7 stocks?
See, all major indices in the US are nearing a terminal high, but that terminal high is for the short term. In my opinion, I believe we are looking for a bullish reset for the US markets. The S&P is a good barometer, and that's a much broader barometer, houses tech stocks and the Mag 7 stocks. So I'm anticipating another fresh 52-week high to come to, or which will be a fresh record high beyond 69.20. But post that, we are looking for a sharp correction. But that, as I said, that will be a bullish reset for 2026. Looking into 2026 and beyond, I'm anticipating the S&P to scale 7,500 and beyond. But in the short term, post the next high beyond 69.20, I'm anticipating an April November correction that's about 38.2 of the entire move.
Okay. All right, Jay, just stay on. We'll quickly recap today's trading action, then come back to you. And the trading action has been on the bullish side, actually. The bulls have managed a 100-point rally, actually a 130-point rally on the Nifty. And if we talk about today's leaders, just in terms of the sectoral color, it's IT, defense, a little bit of auto, and definitely the PSU space. All of them have done quite well. So let's look at the Nifty winners then on the large cap screen. Mahindra & Mahindra, last hour flourish. The stock's up about 2.5%. On the PSU side, names like BEL, beyond the Nifty, something like a BHEL, Nalco, all of these stocks on the PSU pack, they've had a good session. Interglobe Aviation, 3.5% on the higher side. Then let's see what else on the Nifty worked. Adani Ports, about 2% up. HCL Tech, Eternal managed to come back today, 1.5% higher. And Bajaj Auto had a decent session, 1 to 1.5% on this stock as well. And the large cap giants like Bharti, Infosys, L&T, HUL, all of them kept chipping in between 0.5% to about 1%. On the downside, the disappointment really came in from the Bajaj twins, Bajaj Finance. We've been discussing that stock through the day, 7% lower after earnings that really missed the mark. It took down Bajaj Finserv with it, and ONGC was the other one that was losing some ground. So that's the large cap picture. On the broader market side, I mean, 0.5% up on the mid-cap index, and it was really all about individual stocks there as far as mid-caps are concerned. Vodafone Idea, Bharat Forge, these are some of the big movers. Bharat Forge and even Hindustan Copper, some of the big earnings movers on the upside today. Well, the bell has gone. The day has come to a close, a day of steady gains for the market. Well, that's where the team of Closing Bell will take your leave, but do stay on. Markets Forwards comes up next.
Strong rebound by Indian equities today. Markets regained most of last week's losses as global cues turned positive. Nifty hovered around the 25,700 mark. Broader markets moved in line with the blue chips. Overall market breadth remained neutral. In a surprise move, Britannia parts ways with MD and CEO Varun Berry, waiving his notice period despite his offer to serve it out. Incoming CEO Rakshit Hargave will also take over as MD upon joining in December. The abrupt leadership shuffle spooks the street. Worsening in the asset quality of Bajaj Finance's MSME loan book has prompted the lender to rein in growth, leading to a cut in its FY26 growth guidance. The shadow bank also said credit costs will likely be near the upper end of its guided range. The stock slipped in response. Sajjan Jindal led JSW Steel to sell up to 50% stake in Bhushan Power and Steel. Japan's JFE Steel is the frontrunner. That's an exclusive. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Rima Tendulkar. Rima, turned out to be a great session for the markets. We did manage to see that intraday recovery. We managed to sustain those gains. So good going.
What a turnaround, right? Midday, the Nifty was down around 25,450. And finally, when we close, we are almost at 25,694. 120 points up for the day. From the day's low, it's about a 250-point recovery. And you've got to hand it over to some of the big winners of the day. So to just run you through them, IndusInd Bank did well. Defense stocks were higher. In fact, the Nifty Defense Index was the best performing sectoral index. BEL was up. M&M, Adani Ports, Eternal saw gains. HCL Tech continues with the rally. In fact, HCL Tech is up 2% today. Yesterday also it was up nearly about 2%. Shriram Finance reacting to numbers, and that stock did well. On the way down, it's Bajaj Finance, Finso weak in trade, and ONGC too reacting adversely to the numbers. We'll talk about all that and more. Let's quickly tell you what we have for you on our show today. We start with the top movers and shakers with Vivek. Britannia's management shakeup has caught the street off guard. Bajaj Finance under pressure as the asset quality worsened. JSW Steel may offload around 50% stake in Bhushan Power and Steel. And then the key market events to watch out for tomorrow. But first up, as always, let's get a handle on the big movers of the day with Vivek.
Well, thank you so much for that. Again, a session where you actually saw, especially in the later half of the session, where advances far outpaced the declines. Now, some of the gainers largely stocks that moved on the back of strong results. Vikran Engineering, a recent listing, very strong margin expansion as far as Q2 is concerned, ended high by almost 4%. Sirma LCS, one of the biggest outperformers as far as the EMS space was concerned. Also, a couple of acquisitions announced. The street clearly like that, again, high by over 3.5%. Idea, clearly one of the stocks of the day, especially as far as the mid-cap space was concerned, 8% higher. Losses narrowed, ARPU improved. Under the back of that, street cheered by taking this particular stock to double digits. HEG as well as HPA Graphite, both of these stocks post results did very well. The management of HEG said that demand is quite strong, capacity utilization levels are quite high. And also Bharat Forge, despite the fact that the management said that H2 could be slightly muted as far as the North America Class 8 truck orders are concerned, they said that the India industrial as well as defense space is something that's doing quite well, high by over 5.5% for Bharat Forge. On the other hand, quite a few laggards, you can't look past Bajaj Finance growth guidance or something that was trimmed over 7% lower. HUDCO, despite a good set of numbers as far as Q2 was concerned, this particular stock saw quite a bit of a sell-off today. MapmyIndia, FY26 growth guidance at close to 20 to 25%. Street didn't like that, almost 4.5% lower. And Trill, transformers and rectifiers, yesterday hit the lower circuit. Today, another session where the stock hit the lower circuit. Street didn't like the weak Q2 and also the fact that the company is facing problems as far as World Bank is concerned.
Thank you very much for that. Let's get in our guests, Jay Bala and Sudeep Bandyopadhyay of IndiTrade Capital on the show now. Gentlemen, afternoon. Jay, since we're continuing the conversation from closing bell, I'll come to you when we talk about stocks. But Sudeep, one stock, if you had to pick from the big earnings that we had over the last 24, 48 hours, which one stands out for an investment?
Well, I think, I may sound biased, but I do like Bharat Forge. I think, we were all waiting for them to talk about the defense business, and they did talk about the defense space and the Indian industrials. And this is where the future growth is going to come for this company. And, that's exactly what they talked about. While the US business probably will be in a little bit of a slow kind of a pace, but the India business is growing, and that has a potential to grow significantly from current level as well. And we are keenly watching that space. So the commentary from Bharat Forge was a music to the ears for the investors there. And that's pretty much the reason why the stock did go up today.
Okay, all right. So that's on Bharat Forge. But let's get to the big corporate story today. Shares of Britannia declined in trade following the CEO and MD Varun Berry's surprise exit. Incoming CEO Rakshit Hargave will also take on the role of MD when he joins the FMCG major next month. Manglam is here with more details on this story. Manglam, big leadership shake-up.
Well, what has spooked Britannia today more than anything else is that the board did not give any notice period to Varun Berry. So Varun Berry has been the MD CEO of Britannia for over a decade right now, and an exemplary leader out there as well. Under his tenure, the revenues grew by about 2.5 times, the profits grew by 6 times, the market cap of Britannia itself was up 18 times. Yes, the street was hoping for a transition. They were hoping for a smooth transition. So on its part, the company had announced Rakshit Hargave as the CEO with effect from December 15th, with the understanding that maybe Varun Berry, when he leaves as the MD, Rakshit will be appointed as MD and CEO. Varun, in his resignation, did say that he was willing to, extend his transition or extend his services for a smooth transition in the notice period as well. But the board has accepted that resignation with immediate effect and waived off notice. What this has done is left a hole in the company's top for the next 1 month. No MD right now, but Natarajan Venkatraman, who's a CFO, has been appointed as the interim CEO. So this transition jerk is something that the street is not liking, and which is why the stock is lower by about 4%. Although from a business standpoint, the next half of this year looks fairly strong for Britannia, with the GST-related benefits coming up and showing in their volumes.
Bajaj Finance also on the radar today, and that too under pressure after the lender trimmed the FY26 growth guidance as the quality weakened, particularly for MSME. Gaurav is now joining in to fill us in with the numbers and what led to the 7.5% fall in the stock price.
Well, as when we look at Bajaj Finance, the number looked fine. In fact, numbers came in line with the street's expectation. When we look at profit, that increased almost by 24% on a year-on-year basis. And in fact, PPOP and net interest income, that also increased somewhere in the range of 22 to 23%. In fact, when we look at net interest margins, they remain flat. Credit costs that remain stable on a sequential basis. But what went wrong is the commentary from the management. Now, Bajaj Finance is one of the stocks which is seen as a proxy for consumption play. And specifically given that there are multiple tailwinds like rate cuts and GST cuts, Street was expecting AUM growth to sustain. But now management actually trimmed the AUM growth guidance from 24 to 25% to 22 to 23%. Now they are attributing this cut in guidance specifically to mortgage and SME segment. In fact, for SME segment, they are expecting growth to remain somewhere in the range of 10 to 12%. Second factor is that credit cost guidance that they had given of around 1.85 to 1.95% in the beginning of the year. Now they believe that the credit cost for entire FY26 will remain at a higher end of the guidance. Given that they are also seeing some kind of stress specifically from the MSME, and they also said that they have trimmed down almost 25% of the unsecured MSME exposure. So it seems that they are seeing some kind of stress in the MSME segment, and at the same time, they're also seeing some struggle in the growth in terms of MSME. Now, given that the valuations are also high for Bajaj Finance, it seems that the market did not take it in a good way. And as a result, when we look at the stock performance, it was down more than 7% today.
Okay, all right. Well, Sudeep, this is one set of stocks which were in focus today, the Bajaj twins. What's your sense in terms of the results reported by both of them, and would you be a buyer of these counters?
Well, I won't be a buyer. I think look at a kind of valuation at which Bajaj Finance and even Bajaj Finserv is quoting, the margin of error is non-existent. And, the moment there is a bit of a weakness in anything, I think the market is punishing them. Of course, the growth guidance coming down was one setback. And the asset quality related issues on the MSME front, which they have talked about, I think did spook the market. Remember that, it's quoting as between 5 to 7 time book, whichever year you consider. whereas State Bank of India does trade at a 1.1 time book. Now, when the things are a bit challenging on the MSME front, which is where NBFCs get a lot of exposures from, it's probably better to move to larger lending entities like a bank, where the MSME exposure is significantly lower. And when it's quoting at a much, much lower valuation, why not look at that? I think that's pretty much the logic which Bajaj Finance is facing today. And that's why we did see the sell-off.
Jay, Bajaj Finance 7% down today, but it's still up more than 40% on a year-to-date basis. What's the stock price telling you?
See, both Bajaj Finance and Bajaj Finance are in the late stages of their long-term rally. In the short term, the rally seen from July to November, that's possibly coming to an end. But in the medium and long term, it's still got higher highs to come through. But got to be very conscious that it's probably got a few months of uptrend once the support comes in about 975, 935 for Bajaj Finance. And I haven't looked at Bajaj Finance or the exact support levels, but yeah, even a similar structure for that. But yeah, it's still got higher highs to come through with a short-term blip, short-term downsides to work with the levels I've mentioned.
Okay, all right. Well, now let's get to a CNBC-TV18 exclusive. Sources say that JSW Steel is looking to sell up to 50% stake in Bhushan Power and Steel. Japanese steel giant JFE Steel is expected to pick up the stake. Yash is here with details on what he's picking up from his sources. Yash.
Well, very interesting transaction as far as the M&A space for JSW Steel is concerned. What we've been given to understand from our sources is that JSW Steel is looking to sell up to 50% stake in Bhushan Power and Steel. Now, this asset, that is Bhushan Power and Steel, is the same asset which JSW acquired first under NCLT, under the Insolvency and Bankruptcy Code. That decision was then overturned by the Supreme Court, which going ahead was again, overturned in favor of JSW Steel, where JSW Steel was allowed to acquire this asset for the revival of the asset. What we've been given to understand from our sources is that Japan's JFE Steel is the front runner when it comes to picking up this 50% stake from JSW in Bhushan Power and Steel. We've written to JSW Steel also on this particular query. The company, in response to our query, has said that JSW Steel's strategy includes evaluating various opportunities, both organic and inorganic in India and overseas, including potential collaborations aimed at enhancing scale, efficiency and global competitiveness. However, the company would not like to comment on speculation.
Thank you very much for that. Sudeep, JSW Steel, does it make sense to monetize this asset? Should they have kept it in their fold to wait and see how the cycle plays out? What is your own sense? We have to wait for the deal to happen, but this is what we picked up from our sources.
No, as a strategy, Rima, I think it's a good strategy. They needed to monetize because the group has been expanding in multiple areas, and there is liquidity requirements from a group perspective as well. So it does make sense for them to monetize, and getting an international player with a track record and credibility definitely adds to the overall JSW Steel reputation. So I think it's a good step. Let's see what valuation and what kind of deal they get.
Okay, all right. Jay, would you have a call on the stock, on the technicals?
Yeah, on the metal sector is one of the strongest, and JSW was the leader there. I've been putting out in my notes to CNBC for quite some time now. But it's getting quite late in the rally, and it's still bullish. I'm bullish on the metal sector, but you might want to look at other stocks. I've been bullish on Sandur Manganese and Hindustan Copper and many other names. So you might want to look at other names here rather than JSW Steel. So it's not the best bet at current levels. Maybe you can look at metal sector as an investing opportunity.
Metals has had such a good run, 22% up for the metal index year to date. In that, JSW Steel was up about 33%, and Hindustan Copper reacting to numbers and stock surged 7.5%. But it's been a very, very busy day for midcap earnings stock. Bharat Forge, for instance, gained up close to about 6% after reporting a healthy set of numbers. Sirma SGS perked up. Rate gain, though, delivered a mixed bag. Sudarshan joins in with a report card.
So first about Bharat Forge, earnings were better than expectations on both consolidated and standalone basis. So two numbers. In consolidated basis, company has reported EBITDA of rupees 730 crore. Our expectation was around rupees 600 crore. Margin too has come in higher than 18% against our expectation of 16.2 to 16.3%. On standalone basis, also company has reported margin of more than 28%, while our expectation was around 26%. But what has led the stock to move sharply higher was the commentary. So first, company has talked about that North America business, that is exposed to North America business, will remain weak in H2 FY26 as well, after the stock had seen a sharp fall. But following that, company is saying that India industrial business and the ramp up in defense business that company has been undertaking will more than offset the weakness that company will see in the North American exports business. That led to a sharp gain in the stock, and at the close it was up almost 6%. Talking about rate gain, at one point the stock was down almost 6%, but it has seen a sharp recovery as the commentary came in. Revenue was up 8.8% sequentially. Margin has come in at 18.2%, higher than the guided range of company, that is of 15 to 17%. Also, company is saying that it's aspiring to double-digit organic revenue growth by FY27 and beyond. That led to a sharp recovery in the stock. At the end, it was down 2%. Last one is Sirma SGS. Earnings were very strong. Revenue has increased by 38%. EBITDA has seen an expansion of 62%, and margin has moved to 10% from the level of 8.5%. Also, company has maintained the guidance on revenue front of 30% growth for FY26, and it has raised margin guidance from 9% to 9.4 to 9.6%. And also for FY27, company is saying that growth is expected to be more than FY26, and that has led to a sharp increase in the stock price. Also, at the close, it was up almost 3%.
Okay, all right. Thanks very much, Sudarshan, for that. So a lot of stocks in focus. Sudeep, anything that you like from the broader markets in terms of any mid-cap earnings that have stood out to you?
Well, I think Sirma earnings were pretty good, and I do like the Sirma earnings. This is one space which we have been monitoring. Of course, the valuations are not cheap, so one has to take a long-term view when they're entering this. The other company today, which I did like the commentary, is RateGain. I have been, recommending RateGain for quite some time. In between, I think they were a little wobbly and things were not looking too good. But the management commentary today was very strong, and I do like that. I think this is one segment, travel and tourism, which is what they cater to, which is growing rapidly world over. And the scope for this company is humongous. They also have been taking a strategy of acquisitions through which they have been growing, but organic growth is also supporting, and that's what the management commentary talked about. And I think it's very, very encouraging. The market initially didn't like, but then subsequently it recovered quite a bit.
Indeed, and the acquisition that they did has been completed in November, so it will start showing up in the financials in Q3 onwards. Jay, you want to leave us with some trading ideas for tomorrow, the coming week, the coming month?
Yeah, I think you might want to look at Aurobindo Pharma. It's actually breaking out of a trend line that started from the high of 2025, and that's probably signaling this prospect for Aurobindo Pharma to hit somewhere about 1,500. The stop loss about 1,065. And the IT sector also is starting to perk up, and you might want to look at Coforge. Coforge with a stop loss of 1711 for a short-term objective of 2025.
Okay. All right, Jay, as well as Sudeep. Well, on that note, we're going to let you go. Thanks very much for joining in and giving us all of that perspective. On that note, it's time for a short break. We'll get you the top corporate voices along with key market events to watch out for on the other side. Stay tuned.
Welcome back. SIP inflows have hit a record high in the month of October, according to data from the Association of Mutual Funds, AMFI. SIP inflows have been steadily rising since July due to steady retail participation and now very close to that 30,000 crore mark. However, equity fund inflows on a net basis have eased by 19% on a month-on-month basis. So from 30,000 crore, it's come down to 24,500 crore. Hybrid funds continue to attract interest, and gold ETFs are also attracting investors despite the record high prices seen on the yellow metal.
All right, well, the top corporate voices from the day, PhysicsWallah's co-founder Prateek Maheshwari told CNBC-TV18 that the firm is the fastest in its segment to cross 3,000 crores in revenue. He added that the company's online reach is still only about 7%, leaving plenty of room for growth. Maheshwari also highlighted that profitability is in sight, with cash from operations rising over 2 times.
CEO of Ather Energy, Tarun Mehta, told CNBC-TV18 that the rare earth magnet shortage impacted the company's second quarter revenues by 19 crore and a little about 4-5 crore more at the EBITDA level. But he assured that the issue is now behind them. The non-vehicle revenue, the software revenue, is expected to grow faster and grow from the current 12% of their revenues. He added that a new low-cost scooter platform will start contributing from next year, and providing a timeline for EBITDA break-even remains difficult.
And KPIT Technologies management told CNBC-TV18 that the company has secured a multi-year deal worth $100 million this quarter. The company reported a 2.3% decline in organic constant currency revenue, decline of 2.3% sequentially, but expects meaningful growth in the fourth quarter.
So Q2 was negative, Q3 will be flattish, and Q4 will see meaningful growth. That's the word coming in from KPIT. But before we wrap, we'll bring you some of the key market events to watch out for tomorrow. Gaurav is standing by. Gaurav.
Well, yes, as we head tomorrow, we have got earnings. First, let's talk about Tata Steel, Asian Paints, Ashok Leyland, HL. All of these companies will come up with the earnings. And along with that, we have got companies like Honasa Consumers, Nazara Tech, Sansera Engineering, IGL. These companies will come up with the earnings. From the gold market, we will see Senco Gold and PN Gadgil. Now, these companies will also release their second quarter's earnings, so we will closely watch out on that. But apart from that, we have CPI data which will be coming in. Now, why this is important is that we have already seen inflation print below 2%. So this data is going to be a crucial point, given that there is already a speculation that there may be another rate cut in December. Apart from that, finance minister's meeting will happen, and this will be a pre-budget meeting. So that is also something that we should be watching out for tomorrow. We will see 2 new companies getting added in the market. First is Tata Motors CV, and second is the newly listing company of Grow. Remember, Grow actually came up with the IPO to raise more than 6,000 crores and got subscribed more than 17 times. We also have RBL's EGM, which is Extraordinary General Meeting, happening tomorrow, where they will be discussing and getting a nod from shareholders for the Emirates NBD deal. Remember, Emirates NBD is going to invest more than 26,000 crores in the bank for 60% stake. Apart from that, we also have new IPO which will be coming up, which is Tenneco Clean Air. They will be launching their IPO to raise more than 3,600 crores. From IPO to other market, when we look at Vedanta, that is also one thing to watch out for, because tomorrow is the date when NCLT will rehear the case of Vedanta demerger. And lastly, from the global markets, we will be watching out on OPEC monthly meeting report that we will be getting, and let's see if anything material comes out from that report.
Okay, all right, Gaurav, thanks very much for that. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The Union government invokes anti-terror law after a car blast near Delhi's Red Fort metro station killed at least 12 people. Home Ministry transfers the probe to the NIA, India's principal counter-terror agency, on an official visit to Bhutan. Prime Minister Modi says agencies will get to the bottom of the conspiracy. Positive global cues lift the Lal Street market regains most of last week's losses. Nifty nears 25,700. Net equity inflows into mutual funds dip for the third straight month, even as SIP inflows hit another record high. US President Donald Trump says we are pretty close to doing a deal with India, adds the tariffs will be reduced at some point. India faces 50% US tariffs, which is the highest in the world, along with Brazil. US Senate passes a spending package to end the government shutdown. The bill will now move to the House for a vote and then to the President's desk for approval at 42 days. This is the longest government shutdown in the US history. SoftBank sells its entire stake in Nvidia for nearly $6 billion. Investments in OpenAI and PayPal help SoftBank's profits double in Q2. Vision Fund alone reports a gain of $19 billion. I'm going quiet, sort of, says legendary investor Warren Buffett in his last letter to shareholders as the CEO of Berkshire, ending a tradition that started 6 decades ago. Also expedites the transfer of his $149 billion estate to charity before handing over the baton to Greg Abel. Construction and demolition activities banned across Delhi as air quality worsens. Schools shift to hybrid mode from nursery to class 5. Residents advised to avoid outdoor activity during early mornings and late evenings. 122 seats across 20 districts go to polls in the final phase of Bihar Assembly elections. Polling takes place at over 45,000 booths. Election results will be announced this Friday. Catch our coverage of the exit polls starting 7 p.m. tonight. Just a month after winning a reprieve in the Supreme Court, Sajjan Jindal's JSW Steel plans to sell up to 50% stake in Bhushan Power and Steel. Sources say Japan's JFE Steel is the front-runner. That's an exclusive. And world's first armless female archery champion Sheetal Devi does the impossible yet again, becomes the first para-archer to qualify and compete with India's able-bodied team. We speak to archery champion a little later on the show. All right, our top story this evening. The Home Ministry has transferred the Red Fort car blast case to NIA, India's principal counter-terrorism law enforcement agency. At least 12 people were killed and several others were injured after a powerful car explosion ripped through Delhi's Red Fort area last evening. As per the police, the blast took place inside a moving Hyundai i20 car at a traffic signal near Red Fort metro station close to 7 p.m. As per reports, investigators traced the car to a man from Pulwama in Jammu and Kashmir. The national capital has been placed on high alert with strict vigil being maintained at the airport, railway stations and bus terminals. Home Minister Amit Shah held multiple high-level meetings to take stock of the situation. Prime Minister Modi, who flew to Bhutan this morning on an official trip, sent a message from the capital. He said that the government will get to the bottom of the conspiracy.
हमारी एजेंसियां इस षड्यंत्र की तह तक जाएगी। इसके पीछे के षड्यंत्रकारियों को बख्शा नहीं जाएगा। All those responsible will be brought to justice.
I'm here at the Red Fort. Behind me, you can see the Red Fort. And I'll ask my camera person to pan at a corner over there where there's a white tent. That is the exact crime spot. That is where the explosion happened. This is one of the busiest signals of this particular area of Chandni Chowk. And as we speak, Home Minister Amit Shah has taken a meeting in the morning with the senior officials of IB, NSG, Delhi Police, also NIA, and now the case has been formally handed over to NIA because in the FIR, several sections of BNS, of UAPA and of the explosive acts have been invoked. To be precise, Section 1618 of UAPA, Section 3 of Explosives Act and Section 103(1), 109(1) and 61(2) of BNS have been invoked. Remember, there are traces that are being drawn because of the explosives, the huge amount of ammonium nitrate that was being seized in a joint operation between Jammu Kashmir Police and Haryana Police at Faridabad. The vehicle which got exploded actually had an HR, that is Haryana number plate, and it is understood from sources, the police is sharing informally also, that the vehicle started from Faridabad in the morning yesterday itself around 8:30, and it reached this car parking at Red Fort at about 3 p.m. and then at 6:52 p.m. is when the explosion happened.
All right, let's talk about the day's market action. Positive global cues lift the last street with the Nifty nearing the 25,700 mark. 40 Nifty stocks closed in the green. Broader markets moved in line with the benchmarks. And staying with the equity markets, SIP inflows have hit a record high in October, according to data from the Association of Mutual Funds. SIP inflows have been rising since July due to steady retail participation. However, equity fund inflows eased, slowing down 19% on a monthly basis. This is the third straight month of a decline in overall equity inflows. Interestingly, gold ETFs managed to attract investors despite record high prices. Inflows managed to stay above 7,700 crore rupees despite some decline compared to September. Now, brokerage firm Citi has said that there is a possibility that the government is considering hiking excise duty in petrol and diesel after Bihar elections. In a note, Citi has said that a one rupee hike per litre generates revenue worth 17,000 crore rupees for the government. If the excise duty is hiked, this could have an impact on some oil marketing companies. All right, on to a CNBC-TV18 exclusive. We learn from sources that JSW Steel is looking to sell up to 50% stake in Bhushan Power and Steel. Japan's JFE Steel has emerged as the frontrunner to pick up stake in the firm. Yash Jain is here with the details. Yash, please take us through what your sources are telling you.
Well, very interesting transaction as far as the M&A space for JSW Steel is concerned. What we've been given to understand from our sources is that JSW Steel is looking to sell up to 50% stake in Bhushan Power and Steel. Now, this asset, that is Bhushan Power and Steel, is the same asset which JSW acquired first under NCLT, under the Insolvency and Bankruptcy Code. That decision was then overturned by the Supreme Court, which going ahead was again overturned in favor of JSW Steel, where JSW Steel was allowed to acquire this asset for the revival of the asset. What we've been given to understand from our sources is that Japan's JFE Steel is the front runner when it comes to picking up this 50% stake from JSW in Bhushan Power and Steel. We've written to JSW Steel also on this particular query. The company, in response to our query, has said that JSW Steel's strategy includes evaluating various opportunities, both organic and inorganic in India and overseas, including potential collaborations aimed at enhancing scale, efficiency and global competitiveness. However, the company would not like to comment on speculation.
Right, thank you, Yash, for that. Shifting focus now, US President Donald Trump has reiterated India's purchases of Russian oil have been reduced substantially. Speaking to reporters at the White House, Trump said, and I quote, "We are going to be bringing the tariffs down at some point. We are going to be bringing them down," unquote. He also added that his administration is making a deal with India, and a much different one than they had in the past.
Right now, the tariffs are very high on India because of the Russian oil, and they've stopped doing the Russian oil. It's been reduced very substantially. Yeah, we're going to be bringing the tariffs down. You know, we're making a deal with India, a much different deal than we had in the past. So right now, they don't love me, but they'll love us again. We're getting a fair deal, just a fair trade deal. We had pretty unfair trade deals. They're very good negotiators, sir. Just you have to take a look at that, if you would, please. But we're getting close, Scott. I think we're pretty close to doing a deal that's good for everybody, right?
Sergio Gore has been sworn in as the U.S. ambassador to India and as special envoy to South and Central Asia. U.S. President Donald Trump, who presided over the ceremony, expressed confidence that Gore would strengthen economic ties with India and deliver an outstanding performance in his new role. The US is inching closer to ending the longest government shutdown. The Senate has passed a spending package to end the shutdown. The bill will now move to the House for a vote and then to the President's desk for approval. The bill was passed in a 60-40 vote with nearly all Republicans joining, 8 Democrats voting in favor. The deal will fund the government until the end of January. We told you first, and now it's official. CarTrade has confirmed that it's in talks to acquire CarTrade and BikeDekho. CNBC-TV18 had reported earlier that the deal will be valued at over $1.2 billion. Sources had also indicated earlier that Insurance Dekho acquisition may be re-looked at later stage. The initial public offering of PhysicsWallah opened for subscription today. The price band for the issue has been set in the range of 103 to 109 rupees a share. The first day of the issue saw subscription led by employees, retail investors and non-institutional investors. As of 4 p.m., the EdTech's overall subscription stood at 6%. PhysicsWallah has also raised around 1,560 crore rupees from 57 investors, with global names like Goldman Sachs, Franklin Templeton on board. The initial public offering of Pine Labs was subscribed over 2.4 times on the final day of bidding. As of 4 p.m., the subscription was led by the portion reserved for qualified institutional buyers, followed by retail investors. The Fint has managed to raise 1,753 crore rupees from 70 anchor investors. The IPO is a combination of a fresh issue of sale worth 2,080 crore rupees and the remaining portion allotted as offer for sale. All right, let's take a short break. Coming up next, construction and demolition activities are banned across Delhi as air quality worsens. More details to come in a bit. Welcome back. Legendary investor Warren Buffett has written his last letter to shareholders as the CEO of Berkshire Hathaway. In an 8-page letter, the Oracle of Omaha reflected on his life, succession, and offered some words of wisdom. Firstly, Buffett is keeping a significant amount of Class A shares until Berkshire shareholders develop a level of comfort with his successor, Greg. He believes that level of confidence shouldn't take long. Buffett praised Greg, who is set to take over as CEO from year-end. He said, and I quote, "Greg has more than met the high expectations I had for him when I first thought he should be Berkshire's next CEO. My hope is that his health remains good for several decades. With a little luck, Berkshire should require only 5 or 6 CEOs over the next century." End of quote. Speaking about his own health, the 95-year-old Buffett said, "Though I move slowly and read with increasing difficulty, I am at the office 5 days a week where I work with wonderful people." End of quote. He also had some words of advice. He said, and I quote, "Decide what you would like your obituary to say and live the life to deserve it." He ended the letter with a poignant message: "Choose your heroes very carefully and then emulate them. You will never be perfect, but you can always be better." End of quote. Warren Buffett is also expediting the transfer of his $149 billion estate to charity before handing over the baton to Greg. Now, SoftBank has reported a solid set of numbers, with the company posting a $19 billion gain on its Vision Fund. The company also announced that it has offloaded its entire stake in NVIDIA for over $5 billion. Rachna Dhanrajani joins us now with more. Rachna, please take us through SoftBank's plans.
Right. SoftBank's exit from NVIDIA marks another bold move by Masayoshi Son. He's cashing out of the world's most valuable AI chip maker just as he builds his own AI ecosystem. Now, this isn't the first time SoftBank has walked away from NVIDIA. Back in 2017, the Vision Fund was among NVIDIA's earliest backers, building a $4 billion stake before selling it all out in 2019 and missing the historic rally that followed. But this time, the story is different. NVIDIA's meteoric rise has already helped power Masayoshi Son's comeback, and it shows in this quarter's earnings, as it drove SoftBank's profit to a record 2.5 trillion yen, or that's about $16 billion. That's far exceeding the market expectations. And so this sale worth $5.8 billion comes alongside record-breaking earnings. The company's Vision Fund posted a $19 billion gain, held by soaring valuations in OpenAI, Oracle, and PayPay. SoftBank's total revenue rose to 3.7 trillion yen, while pre-tax income more than doubled from last year. The stock has also been on a tear, jumping 78% in 3 months, its best performance since 2005. And in a move to attract more investors, SoftBank has announced a 4-for-1 stock split effective January 1st. Now, Sun is putting those NVIDIA gains to work, committing $30 billion to OpenAI, $6.5 billion to chipmaker Ampere, and working with TSMC on a $1 trillion AI manufacturing hub in Arizona. For Masayoshi Son, this is more than a profit story. It's a pivot from investing in AI's biggest winners to building the infrastructure behind it. SoftBank is betting that this time the AI boom will have their name written all over it and not just as investors.
Right. Thank you, Rachna, for that update. And staying with global earnings, electronics giant Sony posted strong numbers in the second quarter. The company has also announced a share buyback of up to $648 million. Revenue for the quarter rose 5%, while operating profit jumped 10% on an annual basis. The company has also raised its full-year guidance, expecting operating profit to rise 8% from the previous fiscal year. Back home, 122 constituencies across 20 districts have gone to polls in the final phase of Bihar Assembly elections. Polling is taking place at over 45,000 booths. The results will be announced this Friday. CNN News 18's Arun Dhanta joins us now with more from Purnia.
We are in Purnia, which is under the Simanchal region. Of course, it's a very, very politically important region, and therefore you can see we are here in one of the polling booths, and that's how these people are welcoming voters here. This is, of course, a special initiative being done by here the administration to really give that thumping welcome to the voters. And as Election Commission has been speaking about this, that they are putting all their efforts and energies to bring more and more voters to the polling booth. And talking about polling, we have seen in this Simanchal region last time 60% voting taking place, which is a huge, and the same thing is being expected this time also. You can already see that people have started queuing up here outside the polling booth. We are in Purnia Assembly at this point. Let me quickly give you a brief about this entire region, how it shaped in 2020 assembly elections. There are 24 seats in the entire Simanchal region, and out of those 24 seats, 12 went to the NDA in 2020 and 5 to the Congress party, 1 to RJD. And also, of course, we have seen MIM played a very crucial role here, winning 5 seats.
Another big story that we're tracking, the Delhi pollution. The government has invoked stricter anti-pollution measures in Delhi NCR as air quality slipped into the severe category. Shivani Bajaj reports on the new restrictions that take effect.
Well, absolutely. Air quality in Delhi NCR has officially entered the severe zone, forcing authorities to trigger a stage 3 of the Graded Response Action Plan, or the GRAP. Starting today, the citywide average AQI has jumped to 425, with several hotspots showing even higher readings. Bhavna, for example, is at 462, Alipur is at 442, Chandni Chowk at 416, and so are various other regions and areas in Delhi NCR. With pollution levels rising sharply, the administration has moved to tighten curbs. Under GRAP Stage 3, all non-essential construction and demolition activities are now banned in NCR, along with the closure of stone crushers and hot mix plants. Municipal bodies have been instructed to intensify road cleaning and dust control in the city. Importantly, the worsening of air quality has now begun to affect the school and Delhi general life in Delhi. Schools have now been asked to shift to a hybrid model for class 1st to 5th, meaning online classes and more flexibility for younger children in Delhi NCR to save them from toxic air. Doctors are also advising residents, especially children and elderly, to not step out during the morning and the evening hours when pollution levels peak. So while enforcement has now stepped up with GRAP Stage 3 in place, the immediate priority remains protecting public health as Delhi once again battles the hazardous winter air. Back to you.
Right, thank you, Shivani, for that. And we have an amazing piece of news for you. World's first armless female archery champion, Sheetal Devi, has done the impossible. She's become the first para-archer from India to make it into the able-bodied team. The 18-year-old from Jammu and Kashmir was born without arms and shoots arrows using her feet and shoulders. But she dreamed bigger, to compete against athletes without disabilities in the able-bodied category. Sheetal will now represent India at the Asia Cup Stage 3 in Jeddah. Here's a snippet of my conversation with her. आपने एक बहुत ही काफ़ी पॉपुलर शो में अमिताभ बच्चन जी से कहा था कि आपका सबसे बड़ा सपना है कि एबल बॉडी कैटेगरी में compete करना है. उस मोमेंट में जब आपका शॉर्टलिस्ट हुआ, जब आपका सिलेक्शन हुआ, क्या चल रहा था आपके दिमाग में?
मेरे दिमाग में तो मैं खुश थी बहुत कि मैं सिलेक्शन हुआ मेरा, क्योंकि जब मैं केबीसी में थी तब भी मैंने कहा था कि मुझे एबल बॉडी के साथ खेलना है, मेरा सपना है. क्योंकि जब से मैंने स्टार्ट किया है तब से ही मतलब पहले से ही मैंने एबल बॉडी के साथ खेला था. पहला नेशनल में एबल बॉडी के साथ था तो वहाँ पे मैं हार गई थी. तो तब से ही मेरी एक जिद थी कि मुझे एबल बॉडी के साथ खेलना है और एबल बॉडी के साथ ही मेडल जीतने.
काफ़ी ये रिकॉर्ड ब्रेकिंग अचीवमेंट है शीतल जी, इंडिया की पहली पैरा प्लेयर हैं आप. मैं आपसे जानना चाहती हूँ कि इस कंपटीशन में आपके लिए क्या बदल जाएगा? ट्रेनिंग बदल जाएगी? मेंटली किस तरीके से आपको अब आगे का जो रास्ता है वो तय करना है?
देखो मैम, बदला तो कुछ नहीं है क्योंकि सेम वही रहेगा. जैसे पैरा में हूँ वैसे ही एबल में भी, तो बदले वालेगा कुछ नहीं, सेम ही रहेगा. मतलब
जो आपके आसपास के लोग हैं वो काफ़ी बचपन में आपको टोका करते थे, आपके पेरेंट्स को टोका करते थे, लेकिन जैसे ही आपको सक्सेस मिला लाइफ में, उन लोगों का जो बिहेवियर है वो आपकी तरफ बदलने लगा.
हाँ जी मैम, देखो पहले भी देखा हो मैंने या आपने भी देखा हो कि जब हम कुछ नहीं होते तो तब हमसे कोई बात नहीं करना चाहता है. जब हम कुछ बनते हैं तो तब हमसे सारे लोग हमसे बात करना मतलब चाहते हैं या मिलना चाहते हैं। तो जब से मतलब हम सक्सेसफुल होते जा रहे हैं तो वैसे ही लोग मिलते जा रहे हैं।
जैसे आपने कहा कि अभी लोग आपसे मिलना चाहते हैं, ये बात बिल्कुल सच है कि आपसे बहुत लोग मिलना चाहते हैं, लेकिन मैं आपसे ये जानना चाहती हूँ कि आप किससे मिलना चाहते हैं? कोई ऐसा इंसान है जिसको आप बहुत ही ज्यादा लुक अप टू करते हैं?
फर्स्ट पे हैं दलजीत जी, मुझे उनसे मैं मिलना चाहती हूँ। तो
ये मुझे पता चला है कि आपको दिलजीत दोसांझ काफी पसंद है। कोई उनका फेवरेट गाना है जो आपको कुछ ज्यादा ही अच्छा लगता है?
गाने तो उनके बहुत अच्छे हैं, बट मेरे को ना याद नहीं रहते।
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Gold exchange traded funds in India continue to see strong investor interest amid global uncertainty. Data from the Association of Mutual Funds in India shows that the gold ETFs attracted more than 7,700 crore rupees in net inflows in the month of October. That's a slight dip from the record 8,300 crore rupees plus in the month of September, but still far ahead of the inflows into large cap, mid cap and small cap funds. So far in the year 2025, the cumulative net inflows into gold ETFs have crossed 27,500 crore rupees. Globally too, investors can't seem to get enough of the safe haven asset. They poured in $8.2 billion into the ETFs for the month of October, marking it the 5th straight month of inflows. The World Gold Council data shows that the global value of gold ETF assets has now climbed to about $503 billion. But what is driving this rush? And joining us now to take this discussion forward is Vikram Dhawan. He's head of commodities and fund manager at Nippon India Mutual Fund. Vikram, hi, thank you for joining in. And what a year this has been so far for 2025. I'll talk about gold and silver both, but gold first, and strong, stupendous numbers coming in for that one. The last 2 months itself has seen 16,000 crores of inflows come into the market. Are you, first of all, looking at November going the same way?
Thank you very much, Manisha, for inviting me on your show. Despite the strong flows into gold ETFs, let's talk about India first. The gold ETF, and I mean, if you include the silver ETF AUM also, they are barely 2% of the total mutual fund AUM. So by any stretch of imagination, Indian investors are far from being equal weight or underweight. So this is something which is still work in progress. Even globally also, I mean, last year, these various surveys which were done, roughly about 70% of the managed money was either underweight or had no exposure to precious metals. That figure is still, about 40-50%. So still, it is work in progress both locally and globally. And I think there is a bit of a inclination now towards regulated instruments, and whatever demand destruction we saw on the physical or on jewelry side, it is more than being compensated by investment products like ETFs.
Vikram, the last couple of months clearly have been record of sorts. I mean, we've seen in the last 2 or 3 years on how even as you said, the numbers are pretty strong as compared to the overall pie there. But the last couple of months have been quite on the stronger side. Record numbers, and this is coming at a time when gold is hitting record highs as well. Are these the new participants, or are these equity participants who seem to be moving to gold ETFs in some sense?
So I think it is a combination of both. Primarily, I think what is playing out in the in the precious metals market is the asset allocation story. I mean, we are seeing now for the past 1 year that some sort of a global reset is happening in asset allocation across the world. We saw the central banks doing it now for more than a decade, diversifying away from dollar. I think it is now gone to the main street. That is one story which is continuing. I think there, as far as the asset allocation is concerned, the allocation to precious metals, especially gold, is more on account of hedging and diversification and risk management. And I think that is not something which is tactical, or it is more focused on what kind of returns the investors can expect. Silver, in case of silver, obviously, there is this green tech story at the background. There, the flows could be partly tactical because of the higher volatility. But I think overall, the mentality of the investors, at least what we come across, both large and small, is that majority of them are looking towards precious metals as more of a diversification, and any extraordinary returns which occur is a bonus.
All right. Just coming back to gold one more time, Vikram, and with the kind of pattern that we are looking at, have you seen a lot of redemptions come into the space, or is it still net inflows that we are looking at? The last 2 months clearly have shown that, but November till time, and I'm not asking for numbers, but just about a pattern and a feel that you have from markets.
So, Manisha, I think something very interesting has happened in 2025 is that we have seen some sort of a behavioral change in the investors, not only in India, but across the world. There is definitely, more interest towards investment products, which also include gold bars and coins, and ETF also obviously is at the top of it. So, and at the same time, we have seen demand destruction, double-digit demand destruction in jewelry. And at first, it was seen to be cyclical, maybe beginning of the year or end of last year. But I think this trend has persisted for long enough to be structural. So what we are seeing is that investors are not only trying to relish the ornamental beauty of gold. They're also trying to relish the financial and the economic attributes of the metal also. So I think this is one change, which means that physical demand, while will be very important, but I think investment demand will now be a very significantly more important part of the market. I mean, this was one of the first years actually on record where the flows into coins and bars and ETF put together far outpaced the flows into jewelry. So I think this is one trend which will perhaps is what is driving the prices and slightly changing the nature of the gold market.
Oh, absolutely. Vikram, coming on silver as well, and that clearly has been a story of the year, outperforming gold on one side, and clearly the kind of inflows that we've seen onto this one. And physical markets investment yet again continues to trump what we've seen in sense of jewelry buying or cutlery or statues for that matter. And then ETF has been a story to reckon. What are the kind of numbers that we're looking at and the kind of temporary freeze that we saw come in the month of much of October and then now November as well? Is it anywhere near to opening now?
So, Manisha, again, I mean, despite these fantastic numbers, ETFs across the world and especially in India are still a very small part of the overall physical market. I mean, I would say that on a best case scenario for gold, we may be about 3 to 5% of the total market, which is largely physical. In silver, it could be slightly higher, but again, maybe 5 to 8% or maybe 9%. So we are still pretty much the rounding off number of the market. India still remains largely a physical market. But again, what you have to appreciate is that despite higher prices, we have had record season in both gold and silver, which means that the overall demand, while has been slightly down, but has stood up in the face of higher prices. Now, particularly about ETFs, I think the bulk of the flows, the larger flows continue to be from the asset allocation point of view, multi-asset strategy point of view. Yes, there is an element of tactical, investment and trading also, which obviously happens in every asset class. But broadly, what we have seen, and I think this was very much clear by the correction that we saw in gold and silver prices, that we saw roughly about 150 tons of gold coming out of gold ETFs and futures and other products, and roughly about 1,200 coming out of silver. And I think after that we have seen recovery in prices, which means that largely or rather I would say the tactical part of the market is still in minority, not in majority. But again, I think there is obviously a flip side to it. As more and more investors migrate to ETFs, which are liquid, and liquidity means that while there is an ease of subscription, there is also an ease of redemption. So you will see that this kind of market will have slightly higher volatility within the bull run than what we have seen in the past bull markets.
Vikram, it's quite safe to say that 2025 belonged to precious metals in some sense. All-time highs on one side and the kind of gains that we've seen and the interest and headlines that it continued to make. 2026, and we do understand this about gold and silver, and you would know as well, and allude to that, please, that we don't see years of this kind of a run-up when it comes to gold and silver in sense of a bull run there. How would you then approach 2026? What would you advise investors also in sense of prices and investment?
So obviously, we have, the market, which is, which is driven by the fundamentals. And as long as the fundamentals or the key, drivers of the prices are, remaining significant or strong, you would see the bull market continuing. But again, the intensity of the bull market may vary. And please appreciate that gold is one security which has been around. Gold and silver are securities which have been around for thousands of years. So they tend to have slightly, protracted consolidation and corrections also. we are not hinting at that that's going to happen anytime soon. But fact of the matter is that this is one market which will test your patience and and punish your impatience, as the case may be. But looking ahead, I think most of the drivers. I think if I were to pick up just one, fundamental part of each metal, when we talk about gold, it is definitely the so-called debasement trade. And even if you're not a believer in debasement trade, I mean, the numbers are pretty compelling. The global debt is almost $100 trillion. We're just talking about the sovereign debt, which is now either crossed or approaching $100 trillion. And the scariest part is that none of the the indebted nations are actually talking about austerity or cutting expenditure or increasing taxes, because obviously it is very, very unpopular strategy, especially in a democracy. Similarly, for silver, if you see, yes, the climate change is pretty much out there. I mean, by certain forecast, in the second half of this year, the global temperatures in most of the regions are expected to be 1.5 degrees higher than the long-term averages. So I think these things are pretty much there. Out in the open to see. But obviously, manifestation of these things will not happen overnight or in the close. I'm not saying we're going to have a debt crisis anytime soon, or we'll have a climate crisis anytime soon, but these are all very long-term trends which takes years and decades to, set in. So only a prudent investor who's looking for long-term, wealth creation would be interested in them. And if you are somebody who's looking towards instant gratification, I would suggest that maybe there are better plays in town to approach.
Fair point that, Vikram. As always, thank you so much for joining in and making sense of all those numbers and what they really mean actually on paper. And as you said, I take point on that gold is 3 to 5% of ETF investment and silver perhaps at a 9%, but still a very, very small number when you look at the overall quantum there. Thank you so much for your time. And on that note, we will take a short break. Don't go anywhere because this discussion on gold and silver continues as we return. Welcome back. You're watching Commodity Champions. Now we turn our attention to the recent advisory on digital gold. The market regulator, Securities and Exchange Board of India, that is SEBI, has warned investors to be cautious before investing in digital gold or e-gold. SEBI stated that instruments covered under its regulatory framework include exchange-traded commodity derivative contracts, gold exchange-traded funds offered by mutual funds, and then electronic gold receipts traded on stock exchanges. However, anything outside of these, like digital gold, e-gold, is not notified as a security nor regulated as a commodity derivative, and therefore poses risks to investors. To understand the implications of this advisory and why this was flagged, we speak to Gaurav Mathur of SafeGold. Gaurav, hi, thank you so much for joining in. And this is not the first time that SEBI has come out with a warning like that. This perhaps is the second time in 3 years that we are hearing something like that. One, what is your reading on that? And two, as a company who has been in the business for the last 5 to 8 years, how are you reacting to this?
So, Manisha, thanks for having me on the show. I think, well, we always try to look for the positive in sort of all the situations. I think two things are clear. One is obviously it's a growing market, and the fact that it's a free competitive market, and obviously customers are loving digital gold as a product. It's growing rapidly, growing in leaps and bounds, because people ultimately have the convenience of a financial product, and they can get physical delivery whenever they want. And I think that is driving popularity of digital gold. Now, when any product that is not regulated by the financial regulators, I guess growth in popularity this sharply, that's when the regulators start taking notice. I think for us as an industry, not just us as a company, but as an overall industry, we've always wanted to be regulated. I think we've made numerous representations to various authorities, various regulators, sort of inviting them to develop a regulatory framework for the business. And I think I take this as a signal that the authorities are looking at the growth of the industry, and they will hopefully come out with a regulatory framework which will help us grow sort of even faster, build more robust protections. That being said, I guess my takeaway as a consumer should be that, look, there are obviously multiple players active in the digital gold business. It's dominated by a few, 3 or 4 large players, but there are lots and lots of small players. So as a consumer, my takeaway would be, look, do your due diligence, look carefully at who is your digital gold provider. Don't just blindly go and buy digital gold. When it's not regulated, it means that, each player is quite different. So, all of the large players and ourselves particularly, we have great protection in terms of, the trustee custodian structure. So customers don't take any counterparty risk on us. When they buy gold from us, the money goes to the trustee. Only when there is gold in the vault does the trustee release funds to us. If we were to be insolvent, the gold stored in the vault is protected. The trustee will distribute it to the customers. It's 100% backed, in fact, a little more than 100% backed. So we'd like to believe we're a very, very robust structure. Customer protection is in place, but not every digital gold player has this. So my net takeaway is that, be careful with which digital gold provider you go with. And, obviously the category is doing well, and hopefully the authorities will come up with a regulatory framework for the industry in time.
Gaurav, before the break, we were speaking to Vikram from Nippon, and he said even as we are hitting record highs in sense of ETFs, it still is just about 2% of the total AUM. And this is after many years, really, but clearly the last couple of months is what really matter right now. So if you are looking at ETFs as just 2% of the market, I'm assuming digital gold could be around that or even lower?
So if you just look at inflows this year, net inflows this year, my best guess is we're about 70% of what gold ETFs are, so we are a little lower. And AUM will also be lower. Now, ETFs have been around for 20 years, digital gold has been around for 6 or 7 years. So yeah, I think AUM is far lower, but it's growing much faster than all other categories. So I'd say if you look at overall growth, it's the fastest growing avenue for investing in gold in India.
Gaurav, also comment on the fact, how long have you been around? And in the last 6, 7 or 8 years since you've been around there, how many more partners do you have at this point in time? Because the kind of names that we see, and these are all very, very big, incredible names, right from apps to fintech companies to trading platforms to even jewelers for that matter.
So we have 135 or 140 different partners, and these are all household names that we work with, people like Cred, Jupiter, PhonePe, Amazon, Tanishq, Bluestone. So there's a vast range of, both fintech platforms, e-commerce platforms, and the large jewelers that work with us for digital gold. And the other thing that we're very proud of is, I think, not just us, but all the Indian digital gold companies, we're the leading digital gold market in the whole world. So we are now going out to, Singapore, Thailand, Vietnam, UAE, Saudi Arabia, and then hopefully go to the West also. But it's Indian companies that are leading the way and are the market share leaders in digital gold in all of these markets and growing rapidly. So I think this is one industry that we're very proud that, India is by far the market leader. And I think regulations are more amenable in other parts of the world. Regulators are a little more nimble, giving us formal licenses. So it's a market, not just that we have 100, 120 partners or 130 partners over here, but many other countries. We've got all the leading banks in the UAE working with us. We've got the largest mobile company and largest fintech, both in the UAE and in Thailand. We have banks in Singapore. So it's just very, very large institutions across the world that are working with us, not just in India.
Gaurav, so as you mentioned, you made various representations to the government, and clearly the regulator is taking notice as the market seems to be growing the best at right now. What kind of regulations would you want? What are these representations that you have made to the regulator, and why is it not getting sorted? Because kind of numbers that you're sharing, and the fact that you're not just now working in India, but outside India as well.
So I think the heart of all regulation, if you were to distill it down, is customer protection. And this just boils down to the fact that if a customer buys 10 grams of gold, the regulatory framework has to ensure that there is 10 grams of gold kept in the vault. It is secure, and nothing happens to that 10 grams of gold without the explicit direction of the customer. I think that's the first part. But the second part that we've really spent a lot of time trying to educate the various authorities about is that we are fundamentally the only way or the best way to actually reduce imports of gold in the country through the metal leasing program that we run. Now, we pioneered that in the world. Now, again, India was the first country in the world to have retail metal leasing. We're the first company that did it. And what we do is we let people lease out their underlying gold to jewelers, and it's many of the large established jewelers work with us, and they borrow gold, which is owned by consumers. And this directly reduces imports. We've now, in fact, teamed up with a bunch of jewelers, and we collect physical gold. So if you have a gold coin at your home, you can go to a partner jeweler, deposit it with them, and you can start earning a yield on this. I think in the last 6 or 12 months that we've been doing this, I think we've collected more gold than most banks have collected under the gold monetization scheme. So we're directly reducing imports, mobilizing, the 30 or 35,000 tons of gold that Indian households have. We're actually mobilizing that, bringing that into the market, letting them earn a yield, and reducing imports by that amount. So I think the main demand with the authorities is that, please make a framework for digital gold leasing or for gold metal leasing from retail customers, and it can revolutionize the overall financial sector. I mean, to give you a simple sense, and I'll use dollars because the numbers are so big, we've got about $850 billion of just gold coins and bars owned by Indian households. This is not jewelry, just gold coins and bars. And our narrow money supply, M1, is about $730 billion. So you've got more, gold coins, which is a hard currency asset that you can use, that is sitting idle in Indian households. And the government's tried gold monetization scheme. It's been a spectacular failure. We've shown a path how it works. If you could just regulate it, we could actually, pull some of that $850, $900 billion of gold coins sitting in people's households and lend it out on a much larger scale. You can lend it globally. You can, get capital. India can be a provider of capital to the world because we've got so much gold. And if you have a good framework, we can actually be the global leader by a huge margin in this sector. We have the technology. We've proven that it works. And if we can get a great regulatory framework for it, I think we can really build a world-beating sector which will help India, but it can also, dominate the entire world.
Gaurav Mathur, thank you so much for joining in and explaining that. So as you said, it's a great product and a lot of upside to it as well, and a lot of positives, but just that the government doesn't regulate it yet, and that is what is creating all of this uncertainty, especially with SEBI coming out and warning it. But as Gaurav tells us that there is a lot of work being done, not just in India, but outside India as well with Safe Gold. Well, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.
Hello and welcome to News Center. I am Ashmit Kumar. Now, the Home Ministry has transferred the Red Fort car blast case to the NIA, India's principal counter-terrorism law enforcement agency. At least 12 people were killed and several injured after a powerful car explosion ripped through Delhi's Red Fort area last evening. As per the police, the blast took place inside a moving Hyundai i20 car at a traffic signal near Red Fort metro station, closer to 7 p.m. As per reports, investigators traced the car to a man from Pulwama in Jammu and Kashmir. The national capital has been placed on high alert with strict vigil being maintained at the airport, railway stations and bus terminals. Home Minister Amit Shah held multiple high-level meetings to take stock of the situation. Prime Minister Narendra Modi, who flew to Bhutan this morning on an official trip, sent a message from Thimphu. He said that the government will get to the bottom of the conspiracy.
हमारी एजेंसियां इस षड्यंत्र की तह तक जाएगी। इसके पीछे के षड्यंत्रकारियों को बख्शा नहीं जाएगा। All those responsible will be brought to justice.
I'm here at the Red Fort. Behind me, you can see the Red Fort, and on the right of my side at the back, there's a white tent. That is the exact area where the explosion happened. That has been cordoned off. The entire Red Fort area, the entire market of Chandni Chowk has been today shut down, and the area of explosion has been cordoned off by the Delhi police. Now the case has been formally transferred to NIA to look into the matter, and as per the FIR that was registered by the Delhi police initially, the police registered the FIR under UAPA sections, Explosives Act and BNS. The incident is being linked to the traces of ammonium nitrate that was recovered in Faridabad on Monday in a joint operation between Jammu and Kashmir police and Haryana police. At Faridabad, the car which actually where the explosion happened, which was carrying the explosives, had a Haryana number plate and is understood to have left from Faridabad early in the morning.
Well, joining us now to take this discussion ahead is with us former Director General of Police SP Vaid and former Additional Director General of Police PK Jain. Mr. Vaid, Mr. Jain, thank you so much for joining us. Mr. Vaid, let me come to you first. The case has been handed over to the NIA. The anti-terror UAPA law has been invoked. The government officials are calling it a case of conspiracy, a warning that they will get down to the bottom of the conspiracy and those conspirators will not be spared. The question that I want to first begin with is, why is the government shy of using the T word, the terror word? Is there a strategic rationale behind it? Mr. Vaid.
See, as far as I understand, Ashmit, it is a terror incident. I have no doubt about it from my experience in Jammu and Kashmir. I don't think there is any lack of linkage between this terror incident of last evening near Red Fort and the complete terror module of doctors, which was unearthed by JNK police with the help of Haryana police, that is Faridabad Commissionerate, UP ATS and Delhi police. I think all these are linked and I'm sure agencies will come out with all the details. It takes time for the investigating agency to collect all the facts and then come out with the details of the investigation. It takes time. For me, it's easier to say I'm talking out of experience, but not on any evidence. I think the agencies will speak on the basis of evidence, and I'm sure this is a terror module of the Pakistan-based terror outfit Jaish-e-Mohammed, which is actually, as I have been repeatedly saying, the creation of Pakistan ISI and Pakistan Army. You must hit Pakistan Army and the Pakistan ISI because all these are their creations. So unless you break their backbone, you're not going to completely eliminate them. Yes.
That's a very interesting point, Mr. Ved, that you make with respect to the Pakistani connection and then subsequent action that is required. We'll circle back to that in just a couple of minutes. But before that, Mr. Jain, same question to you. Given the new module that was discovered in Faridabad, the module involving doctors, the linkage that the I-20 car has shown back to Pulwama, the fact that it was driven from Faridabad, the very same location where nearly 3 tons of highly explosives were found, 2,900 kgs. Does this indicate to your mind and your experience, does this look the work of an outfit that is backed by, say, a Jaish-e-Mohammed, or does it also perhaps possibly look like the work of a local module like an Indian Mujahideen or a Simi?
Thank you very much, Ashmit, for having me here. I would not agree with anybody who says that this is a local module. This is a module which has been specifically sponsored from across the border. The linkages with Jaish-e-Mohammed have already come up during whatever little initial investigation has been made. And all these people who come from, all these 7 accused who've been arrested, they all come from the same area, Shopian, Pahalgam and close by Pulwama, etc. areas. So the linkages are very clear. It is only unfortunate that the recoveries were made rather late. It was about a week back that the recoveries were made in J&K, and now the recoveries from Faridabad yesterday. And imagine the quantities they had collected: 3,300 kilos of explosive material, explosive liquid, guns, AK-47 and 56, what all they had. It is, I mean, yesterday's action only looked like as if it was out of desperation, because the entire module had been cracked and some people had been arrested. This guy was also Dr. Aman, whoever is Umar or Aman, whatever his name is. So he probably thought that this was the end of the road for him. He'll be either caught or he'll be killed. That's why this was the last ditch attempt of his, having committed harakiri. So I would say that it is unfortunate that the educated people like doctors have been so radicalized that they want to, damage this country by 1,000 cuts. Had this material not been caught at this time, you can imagine how many places the explosions would have taken place, how many lives would have been lost, and what kind of damage would have been caused to the internal security scenario of the country. So I think it is it's always said that the police and the intelligence agencies have to succeed every time, and the terrorists have to succeed only once to prove that the system is not working. Well, we have been working very well. The police has done a fabulous job. They have already identified the owner of the car. I'm told that in Faridabad case, where this room was rented, a car used to bring bags and used to keep them in the room, and they used to lock it away because nobody was staying there. And in my opinion, it was the same car which was being used for ferrying material from Jammu and Kashmir to Faridabad repeatedly on many occasions. So I think as Mr. Ved has very correctly said, the agencies will get to the bottom of it. There is no second opinion about that. And as and when it happens, many more people will be taken into custody, arrested. Their sympathizers, their protectors, their supporters, their financiers, everybody would be taken to task. And in my opinion, the links are all going to lead back to Pakistan and ISI.
Right, Mr. Jain. Let me ask one more follow-up question, Mr. Jain, while I have you. You mentioned the 2,900 kgs of explosives that were recovered from Faridabad. Just to put that in context for our viewers, the explosives used in the 1993 Mumbai blasts, that was just 200 kgs. 2019 Pulwama attack, that was 250 kgs. This is 2,900 kgs that we're talking about. That's the size of 3 I-20 cars. That's the scope of recoveries that were made. Any reasons why Delhi was not put on high alert after recovery of nearly 3 tons of highly explosive material?
The recovery was made in the morning only. I'm sure that the message had been sent across the town, because Delhi was the only probable target. Why the material was not stored in Delhi was because Delhi is always under the eyes of the agencies. So they had gone to Faridabad in the NCR region to stockpile their entire explosive. So Delhi was always on alert, and I'm sure that after this particular cache, the police forces had been put on alert. Now it is only unfortunate that one of the accused conspirators could not be arrested. So he was moving around in this car with some explosive, which he activated in Lal Killa, Chandni Chowk area. Ashwin.
Right. Mr. Ved, same question to you. The morning there's a recovery of 3 tons of explosives that are made. Any rationale why Delhi police or the authorities did not put Delhi on high alert at the time of recovery itself? Is that a preventive measure that perhaps could have been taken, should have been taken?
See, Ashmit, as Jan sir said, the recovery was made only in the morning, and then messages must have been given. And, by the time it reaches the last policeman on this patrolling, it takes time. And obviously, it's not possible, physically possible to check every car in a city like Delhi where I think lakhs of cars ply. So unfortunately, this third suspect or whatever number is, this Dr. Umar managed to escape, and then he had whatever quantity. I also personally believe that it was a desperate attempt, as Mr. Jan was saying, because he saw that all his colleagues have been arrested. The whole terror module has been busted. The recovery has been made, and next is his number. Before he could be nabbed, he thought, let me go for a major action. And what place better than the Red Fort, from where Honorable Prime Minister addresses the country, and that too peak hours around 7. That is the peak hour for the Delhi traffic when offices are closed, and to inflict maximum casualty, maximum damage. And I personally believe it was a much deeper, a much bigger conspiracy for a huge terror incidents, or not only in Delhi, in other parts of the country. And we, because of recovery, this is the desperate attempt that he made in the evening.
Mr. Ved, we're running out of time.
Yeah.
Right. Mr. Ved, we're running out of time, so I'll come back to you for a quick final comment. And this, I'm circling back to the original point that you had made in terms of consequences that now need to follow. The commentary from right up from the Prime Minister downwards is clear that there is a conspiracy at play, and that the conspirators will not be left. They will be brought to justice. That's the language being used. Cut back to a couple of months where the language of the Indian government was that an act of terror will be considered an act of war. What is the ideal way forward now when we look at such an attack, which has possibly the backing of something like a Jaish-e-Mohammed? Mr. Ved.
See, the policy of the government of India is very clear that Operation Sindoor is on, and any linkages with the Pakistan, which we need to establish, I'm sure agencies will do that. Once it is established, the Pakistan has to bear consequences, and we must see that Pakistan pays for it. And Pakistan, I mean not the people of Pakistan, but Pakistan controlling Pakistan Army, the Pakistan ISI, who call the shots in Pakistan and run the whole system. I think the consequences Pakistan must bear, and unless you hit where it hurts the Pakistan Army and the ISI, just killing one odd terrorist here and there doesn't make difference. So we must hit Pakistan Army, break its back, and Pakistan ISI. That is what India will have to do. Hitting terror camps is fine, but the mother of all evils is Pakistan Army and the ISI.
Right, Mr. Ved, Mr. Jain, thank you so much for sharing more light, throwing more light on perhaps what the road ahead may look like. I'd like to thank both of our panelists for giving more perspective on that. But that's all the time that we have on this segment. We're running into a very short break. We'll come back on the other side. We'll bring to you the focus on the ongoing Bihar elections. Phase 2 of Bihar polls underway. Welcome back. You're watching News Center. Now let's shift focus to the high-stakes political battle in Bihar. The state's longest-serving Chief Minister Nitish Kumar is seeking another term amidst anti-incumbency and speculation over his health. Meanwhile, Rashtriya Janata Dal and Congress-led Grand Alliance is looking to make a comeback with Tejasvi Yadav leading the charge. The new wildcard Jan Swaraj Party, founded by Prashant Kishore, is eyeing inroads of its own. The people of Bihar have cast their votes and we will know the verdict on Friday. Unemployment remains a key concern in Bihar, and both alliances try to tap into this segment during their campaigns. RJD's Tejasvi Yadav pledged a government job for every household, while the NDA has promised 1 crore jobs. Their campaigns also focused on other extensive welfare schemes, including free electricity and financial support for women. The special intensive revision of voters' lists emerged as a major flashpoint, with opposition parties accusing the Election Commission and the ruling NDA of vote theft. Bihar has witnessed a strong voter turnout this time around, but will it opt for double-engine model once again, or will the opposition wrest control? To help us understand and to answer some of these questions, joining us now to discuss this is Sandeep Shastri, political analyst and vice president at the Nifty University, and Ninad Sheth, senior journalist. Gentlemen, thank you so much for joining us, being a part of this conversation. First, Dr. Shastri, let me come to you. One of the key features of the polling that we've seen in phase 1 and phase 2 has been the high voter turnout. How do we look at the numbers of people that are stacking up at the polling booths eager to cast their vote?
Ashmit ji, there is no empirical data to suggest that a high voter turnout either supports the incumbent or the challenger. I think there are examples of both. But I think what higher voter turnout in the two phases indicates to me is the abiding faith that the citizens of Bihar have in the democratic process, the enthusiasm with which they have come forward to vote in the democratic process. I would also add quickly 2 points. I think what is crucial in this high voter turnout is 2 factors, what I call the new MY factor. Earlier, people used to talk of the Muslim Yadav MY, but I think there is a new MY, which is Mahila and Yuvak. How is the woman vote turning out? Last time women voted much more than men. Is the same trend going to continue? And if that happens, I think it would be very much an advantage to the NDA. The other factor is the youth vote. Bihar is the state where 1 out of every 4 voters is in the age group of 18 to 30, the highest anywhere in the country. And the youth have serious concerns relating to employment within the state. They have concerns with regard to the quality of education and skills that are imparted to young people in the state. Now, how does that impact the way they vote, I think is going to be crucial. So I would look out for these 2 factors, the way women vote and the way youth vote, and both factors cut across the caste question also.
That's a very interesting perspective. Mr. Sheth, let me take that up with you. When you look at the elections, the Bihar elections, what to your mind is the biggest swing demographic? Is it the MY formula that Dr. Shastri is proposing, which is Mahila and youth? Or will you be, or is your assessment indicating that perhaps the traditional caste-based voting that we've seen is something that will prevail across phase 2 of polling?
I think that, across both phases, there is going to be history repeating with, however, 2 or 3 subtle changes. The first is, I think this election will be remembered as the first step of the sectoralization of the Yadav vote. The younger Yadav vote is restive. The younger Yadav vote is not a pocket borough of anyone, and I think you're going to see that playing out in the coming results. The second very, very crucial thing that you will see playing out in my experience from what little travel I did in Bihar is that the women voter who has voted for the first time, and one of the reasons why there is a higher turnout is the women voter. They got a 10,000 rupee, in their accounts recently just before the elections. But there are also other indications which have suggested in the previous elections that Narendra Modi has a connection with women voters, and I think that's going to help. The third thing which we have to bear in mind is that does Nitish Kumar get 50 plus seats? As I said, this is going to be a history repeating election in my opinion. opinion, they're coming back. But the leverage of Nitish Kumar will depend on whether or not he delivers 50 plus seats. If he does not, his relevance after so many years of dominating the polity will go down. Finally, I would like to say a sad thing. We should bear in mind that Bihar, had it been an independent country, would have the 13th largest population in the world. And yet it has only 10% of people, of the working age people who are wage earners in the organized sector, or barely 10%. And I do not see that changing whoever wins. So to me, their struggles continue, and there the real danger is democracy delivering in Bihar.
That's an interesting analogy there, Mr. Sheth. Dr. Shastri, let me get you back in on this conversation. This understanding that you and Mr. Sheth have proposed that there will be a young vote, there will be a Mahila vote that will cut across caste lines. What I want to ask you is traditional seats, especially in regions like the Simanchal region, which the Mahagathbandhan looks upon as a safe bet, whether it's Kishanganj, Kathiawar, Purnia, these seats which again have seen high voter turnout. Are these seats no longer safe? If we are to assume that the youth will be voting on employment, on jobs, on governance?
Ashinji, my own reading of elections in India and also in Bihar shows me that the safe seat concept is today no longer relevant. No seat is safe, and every party, every leader is made to struggle and work the hardest to be able to retain their seats. So there may be a party, there may be an alliance which has an advantage in a region, but that advantage cannot lead to a complacency that we are going to win there. And this is clearly demonstrated in the way the two alliances stretched themselves to the limits to be able to reach out to the voters. And also, I would make the point, Ashinji, that in this election, Bihar voter clearly shows that they don't go by the promise, but they go by the performance. That parties may make a galore of promises, a range of issues they may put up before the voter, but at the end of the day, the voter goes by performance. Also, every election has seen unemployment, price rise, inflation being among the top 3 of the 5 issues that people say are plaguing or impacting their lives. But when they go into that polling booth and look at the EVM in front of them, I'm not too sure whether these 3 issues are in the forefront or at the background, whether a new set of emotional issues have come in to be able to define and decide how they are going to vote. And this has been a huge dilemma and paradox. You say that unemployment, price rise is a critical issue, but when you go and vote, another set of factors seem to have had an impact.
Let me bring in another new dynamic, and that new dynamic is by the name of Jan Swaraj Party. Prashant Kishore fighting these elections, saying that either pre-elections or post-results, I will not be conforming to any particular alliance. Mr. Sheth, let me come to you. What is your understanding of the impact that Prashant Kishore is likely to have? Will he be a kingmaker? He's himself saying that, look, I don't want to be a part of any alliance. But in the same breath, is he also likely to perhaps cut away at the vote of the NDA of the ruling alliance?
You know, there has been a romantic association with the non-political, non-party space. It started way back in the 80s when there was a project called Lokayan which studied it. We saw India's most successful startup in Aam Aadmi Party, and its failure has shown in Delhi that people are skeptical about the non-party, non-allied alternative. I personally think that Prashant Kishore is only going to be a footnote in this election. He does not matter beyond the media rhetoric. I do not see Bihar as a place which is yet ready for such an offering, although he does, obviously cuts through the clutter and tries to appeal to the young. It's very, very, for example, very, very brave of him to say that he will remove prohibition the day he comes. These are very interesting, exciting ideas, but I think Bihar is not yet ready to that extent. And when I said that there will be a caste vote, I do not mean that the caste will become irrelevant. Only a 1.5-2% swing of, for example, the Yadav vote secularizing and voting as Hindu can change the election. So while caste may retain its identity, that little swing is what people are looking for. That is the difference which makes winners and losers in Bihar. And I think therefore that Prashant Kishore will just be a footnote.
Interesting footnote there that he'll only be a footnote as far as Bihar elections are concerned. Final questions. Dr. Shastri, let me come to you. I was doing some number crunching ahead of this discussion. Of the total number of seats that are going to polls across the elections, 243 seats, 32 of them were decided by a difference of less than 5,000. Given such close margins, Chirag Paswan himself has a total of 29. 32 seats were decided by less than 5,000 votes. Does that mean that a Prashant Kishore factor or an AI-MIM factor could perhaps play the role of a swing vote in favor of either the Mahagathbandhan or the NDA?
I would agree with my co-panelists that Prashant Kishore may have caused a lot of excitement and may have had a lot of people coming to his rallies. I'm not too sure whether it converts itself into votes. I'm not sure whether it will impact on the EVM machine. I think the voter of Bihar wants a clear verdict, is clear about wanting a particular party or alliance to come to power. I think it will be a close race. There will be many seats which are fought very closely. And there may be a few seats influenced by the Swaraj Party or by the AIMIM. But then I think the larger number of seats are going to be decided and fought between the two alliances. And that's going to be the crucial issue in the polling today and last time.
Well, Bihar elections always attracts the attention of the broad nation as to the direction that the state is likely to take going forward from here. We'll, of course, know the results of the Bihar polls by Friday later this week. I'd like to thank both of our panelists for joining us and sharing their insights into the ongoing Bihar elections. But that's all the time that we have. It's a wrap on this edition of News Center. Thanks so much for watching. The news and updates will continue right here on CNBC-TV18.
Ladies and gentlemen, what an absolute honor it is to have with us the Honorable Chief Minister of Maharashtra, Mr. Devendra Fadnavis. As we were walking in, I was telling him that the unanimous opinion here of people who have been at the Global Leadership Summit this morning, especially the global leaders that we've had, they've all said that if there is one infrastructure transformation that they've been most impressed by, it is what has happened in Maharashtra, what has happened specifically in Mumbai. And I was also telling him that we were worried that, will people be on time or not? People were actually here ahead of time because the infrastructure has improved. So, Mr. Fadnavis, congratulations to you
so much.
and your team for getting the job done. But आपसे पूछना चाहूँगी सर कि अभी तक तो जो आपने इंफ्रास्ट्रक्चर डेवलपमेंट कर लिया वो अभी उसका रिजल्ट हमको देखने को मिल रहा है. अब आप क्या प्रायोरिटाइज करेंगे? अब किस प्रकार का आप कैपेक्स डालेंगे इंफ्रास्ट्रक्चर डेवलपमेंट में? हमें क्या उम्मीद, क्या अपेक्षा आपसे रखनी चाहिए?
देखिए, मैं सबसे पहले तो आपको कहना चाहता हूँ कि अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है. क्योंकि मुंबई और एमएमआर रीजन ये एक ऐसा रीजन है कि जो भारत की अर्थव्यवस्था को एक पावर हाउस के रूप में, एक ग्रोथ इंजन के रूप में ये डेवलप कर रहा है. और जो हमारे प्रधानमंत्री मोदी जी का सपना है इंफ्रास्ट्रक्चर लेड ग्रोथ का, उसके साथ साथ जो एक प्रकार से अर्थव्यवस्था को विस्तारित करने का जो उनका सपना है उसको पूरा करने का काम हम लोग कर रहे हैं. इसलिए अभी आपने जो देखा तो आपने कहा हम लोग यहाँ समय पर आए, तो कुछ लोगों ने मन में कहा होगा कि समय पर तो आए लेकिन बीकेसी में आने के बाद बहुत टाइम लग गया. तो मैं इसीलिए आपको बताना चाहता हूँ कि व्हाट इज द नेक्स्ट प्लान. आप जब ये वर्ली बांद्रा सी लिंक से बांद्रा में आते हैं तो अभी हम लोगों का एक प्लान चल रहा है कि हम बांद्रा से सीधा एक टनल ये बीकेसी में लाएंगे और बीकेसी से सीधा उस टनल को हम एयरपोर्ट ले जाएंगे. तो जिसमें आपको उसके बाद ये जो बीकेसी का जो कंजेशन है और वेस्टर्न एक्सप्रेसवे का जो कंजेशन है वो ख़त्म हो जाएगा. अभी हमारा जो बांद्रा वर्सोवा सेक्शन है उसका काम चल रहा है. बांद्रा वर्सोवा के कारण वापस हम लोग वेस्टर्न एक्सप्रेसवे जो मुंबई का 60% ट्रैफिक कैरी करता है उसको डीकंजेस्ट करेंगे. वर्सोवा से लेकर हम लोग दहीसर और दहीसर से लेकर भाईंदर, इसका काम हमने ऑलरेडी चालू कर दिया है, जिसमें कुछ टनल्स है, कुछ ब्रिजेस है, वो हमारा हो जाएगा. और फिर अभी 3 दिन पहले हमने हमारे रिकॉर्ड तोड़ने का तय किया, क्योंकि जो अटल सेतु है दैट इज़ अ 22 किलोमीटर्स ब्रिज, सी ब्रिज, जो अभी देश का सबसे लंबा सी ब्रिज है. अभी हम लोगों ने भाईंदर से लेकर तो विरार तक एक 24 किलोमीटर सी ब्रिज को मान्यता दी है कि जिसका भी हम आने वाले दिनों में काम शुरू करेंगे. तो आप ये समझ लीजिए कि मुंबई को और फिर विरार से अलीबाग तक मल्टी मॉडल कॉरिडोर का काम हमने शुरू किया है. तो एक प्रकार से एमएमआर रीजन में एक लूप तैयार कर रहे हैं हम लोग, कंप्लीट एक रिंग रोड जैसा हम लोग तैयार कर रहे हैं, जिससे आने वाले दिनों में मुंबई पूरी डीकंजेस्ट होगी. और उसके साथ साथ जो ईस्ट वेस्ट कनेक्टिविटी है, उस ईस्ट वेस्ट कनेक्टिविटी के लिए थाने से बोरीवली के टनल का काम हमने शुरू किया है. तो अभी थाने से अगर बोरीवली आना है तो आपको 2 घंटा 2.5 घंटा लगता है, आप 20 या 25 मिनट में आएंगे. उसके बाद मुलुंड से गोरेगांव तक के टनल का काम हमने शुरू किया है, जहाँ 1.5-2 घंटा लगता है, आप 20 मिनट में आएंगे. और ऐसा ही हम लोगों ने थाने से सीधा नई मुंबई एयरपोर्ट तक एलिवेटेड रोड का काम हम लोग शुरू कर रहे हैं. तो कुल मिलाकर अगर आप इंफ्रास्ट्रक्चर का विचार करेंगे तो मैं ऐसा मानता हूं कि आने वाले 5 वर्षों में देश में सबसे ज्यादा इंफ्रास्ट्रक्चर अगर कहीं तैयार हो रहा है तो महाराष्ट्र में और एमएमआर रीजन में हो रहा है.
सर, आपने कहा कि ये ट्रेलर है, पिक्चर अभी बाकी है. पिक्चर का रिलीज डेट बता दीजिए.
देखिए, पिक्चर का जो रिलीज डेट है, ये हमारा पिक्चर ये किश्तों में आने वाला है, तो इसलिए सीक्वेल्स में आने वाला है. इसलिए इसके अलग अलग डेट्स है, कुछ डेट 26 में, कुछ 27 में, कुछ 28 में. पर मुझे ऐसा लगता है कि 2030 तक मोस्ट ऑफ इट विल बी एबल टू कंप्लीट.
तो आपने बताया कि इंस्टॉलमेंट्स में और सीक्वल्स में हमें वेट करना पड़ेगा. तो कुल मिला के किस प्रकार का कैपेक्स का आप अनुमान कर रहे हैं कि जैसे आपने बताया कि एमएमआर का इंफ्रास्ट्रक्चर डेवलपमेंट की बात कर रहे हैं?
देखिए, आज अगर हम विचार करें तो एमएमआर रीजन में जो हमारे काम चल रहे हैं, दे आर वर्थ 4 लाख करोड़, 4 लाख करोड़ के काम चल रहे हैं। और अब अगर हम इसमें जो हमारा वाडवंड पोर्ट है उसको मिला दे तो वाडवंड पोर्ट इटसेल्फ विल बी 1 लाख करोड़। तो ये वाडवंड पोर्ट तो एक प्रकार से मैं प्रधानमंत्री जी का धन्यवाद दूंगा कि ये एक ऐसा गेम चेंजर है। हमारे यहाँ अभी सबसे बड़ा पोर्ट जो है वो जेएनपीटी है, और जेएनपीटी की अभी जो क्षमता है कंटेनर ट्रैफिक हैंडल करने की, वो अब देश में सबसे बड़ी क्षमता जेएनपीटी ने तैयार की है। वाडवंड पोर्ट ये जेएनपीटी से 3 गुना बड़ा है। यहाँ नेचुरल 20 मीटर्स डीप ड्राफ्ट है। तो ये जिस दिन तैयार होगा उस दिन वाडवंड पोर्ट ये दुनिया के पहले 10 पोर्ट में होगा, और अगले 30 साल 40 साल महाराष्ट्र और देश की अर्थव्यवस्था को, और जो एक प्रकार से उसकी अगुवाई ये वाडवंड पोर्ट करेगा। और इसमें सबसे बड़ी बात यह है कि पोर्टलेट डेवलपमेंट की हम बात करते हैं तो हमने देखा कि जेएनपीए का पोर्टलेट डेवलपमेंट ये थोड़ा एक गोल्डन ट्रायंगल में रह गया, लेकिन अब हमने ऐसी व्यवस्था की है कि समृद्धि हाईवे और शक्तिपीठ हाईवे, ऐसे 2 जो हमारे हाईवेज है, इसके कारण पूरे महाराष्ट्र को हम पोर्टलेट डेवलपमेंट का लाभ देंगे, और महाराष्ट्र का ऑलमोस्ट एवरी डिस्ट्रिक्ट विल बी कनेक्टेड विद अ सुपर एक्सप्रेसवे विद द वाडवंड पोर्ट। तो मुझे ऐसा लगता है कि जो एक ग्लोबल सप्लाई चेन में हम लोग एक भूमिका निभाना चाहते हैं, उसके लिए वाडवंड पोर्ट और जो हमारे हाईवेज, ये जो इकोसिस्टम हम तैयार कर रहे हैं, ये इकोसिस्टम पूरे तरीके से इसको बदल देगी।
सर, आपने कहा कि जिस दिन बनेगा इट विल बी वन ऑफ द टॉप 10 पोर्ट्स इन द वर्ल्ड। किस दिन बनेगा सर?
इसका पहला जो चरण है वो 3 साल में बन जाएगा। वी हैव ऑलरेडी स्टार्टेड द वर्क। और मैं वापस कहता हूं कि देखिए, मोदी सरकार क्या डिफरेंस लाता है ये मैं आपको बताना चाहता हूं कि 1992 में 1992 a Supreme Court committee was set up, and the Supreme Court committee said that this port comes under Dahanu natural area, so it cannot be built. और उस दिन वो समाप्त हो गया था। 2014 में मोदी जी की सरकार आई, हमारी सरकार यहाँ आई, तो हम लोगों ने देखा कि देश में वाडवंड पोर्ट से ज्यादा अच्छी जगह ही नहीं है। इतना नेचुरल डीप ड्राफ्ट कि जहां दुनिया की सबसे बड़ी वेसल आ सकती है, ऐसा कोई दूसरी जगह पूरे भारत में नहीं है। तो इसलिए हम लोगों ने महाराष्ट्र में, मैंने एक स्टडी शुरू किया कि हम लोग जो सुप्रीम कोर्ट का ऑर्डर है उसमें से कैसे बाहर निकल सकते हैं। तो ये ध्यान में आया कि इफ वी फाइंड आउट अ न्यू वे, जो राइट ऑफ वे फॉर द वाडवंड पोर्ट, तो हम इसमें से बाहर आ सकते हैं। और हमने प्रयास करके 2 सालों में एक नया राइट ऑफ वे ढूंढ कर निकाला। हम लोगों ने वो सेंट्रल गवर्नमेंट को प्रेजेंट किया, मोदी जी ने हमको उसके लिए मान्यता दी। एक जॉइंट कंपनी हमने सेंट्रल गवर्नमेंट के साथ तैयार की। वी वेंट टू द सुप्रीम कोर्ट, वी ऑब्टेन्ड ऑल द परमिशंस। सुप्रीम कोर्ट ने एक जज की कमेटी तैयार की फॉर गिविंग ऑल द परमिशंस। उसके सामने जाकर हमने सारी चीजें 1 साल तक सारे हियरिंग्स कंप्लीट किए, और उसका काम भी अब हमने शुरू किया है। अब वाडवंड पोर्ट का काम एक्चुअली जगह पर शुरू हो गया है। और इसके साथ साथ मैंने एक और मांग की थी। मैंने कहा हम जब पोर्ट के लिए रिक्लेमेशन कर रहे हैं तो दुनिया में आप देखेंगे तो सारे मेजर एयरपोर्ट्स आर द रिक्लेम्ड एयरपोर्ट्स, दे आर ऑफशोर एयरपोर्ट्स। तो मैंने कहा कि भारत का पहला ऑफशोर एयरपोर्ट ये वाडवंड के साथ बनना चाहिए, क्योंकि यहाँ एयरपोर्ट है, यहाँ एयरपोर्ट बनेगा, बाजू में जो हमारी बुलेट ट्रेन है वो बुलेट ट्रेन वहाँ है, और हमारा जो रोड है वो भी वहाँ तक जा रहा है। तो एक मल्टी मॉडल कनेक्टिविटी यहाँ पर हो जाएगी। और ये मैंने मांग की, प्रधानमंत्री जी ने तुरंत कहा कि इट इज़ अ गुड आइडिया, और उन्होंने कहा कि यहाँ हम एयरपोर्ट भी बनाएंगे। तो हमारे मुंबई का तीसरा एयरपोर्ट, दूसरा तो हमने बना दिया, तीसरा एयरपोर्ट हम वाडवंड में बनाने जा रहे हैं, जो देश का पहला ऑफशोर एयरपोर्ट होगा। और जो एक प्रकार से, चूंकि ये मुंबई है, बाजू में नई मुंबई है, तीसरी मुंबई जो बन रही है, ये हमारा जो न्यू मुंबई का एयरपोर्ट है उसकी विसिनिटी में तीसरी मुंबई बन रही है, और चौथी मुंबई हम बनाएंगे वाडवंड में।
आपने पूरा एक कॉम्प्रिहेंसिव रोड मैप हमें दिया सर, उसमें आपने बुलेट ट्रेन का जिक्र किया था, तो उसी पे मैं आपसे पूछना चाहूंगी कि पटरी पे कब आएगी?
नहीं, पटरी पे आ गई। 2019 में एक्सीडेंटली हमारी सरकार चली गई थी और एक्सीडेंटली दूसरी सरकार आई थी, तो एक्सीडेंटल सीएम ने उसको स्टे कर दिया था और उसका सारा काम बंद हो गया था। लेकिन वापस जैसे हम आए, हमने विद इन 3 to 4 months उसको पटरी पे लाया, लैंड एक्विजिशन कंप्लीट किया और अब जोरों से काम चल रहा है। अब कोई रुकावट नहीं है और होपफुली 2028 या 29 तक हम लोग बुलेट ट्रेन देख पाएंगे। और मैं आपको कहना चाहता हूँ, ये बुलेट ट्रेन यहीं आ रही है बीकेसी में, और बीकेसी में बुलेट ट्रेन का जो स्टेशन है, उस स्टेशन के ऊपर हम लोग देश की एक बहुत ही आइकॉनिक इस प्रकार की एक बिल्डिंग तैयार कर रहे हैं, विच विल बी लाइक अ कमर्शियल हब। एक बहुत जबरदस्त ऐसा कमर्शियल हब हम लोग तैयार कर रहे हैं और उसी के डिस्पर्सल के लिए ये जो मैंने आपको जो टनल की बात की थी, ये टनल हम लोग तैयार कर रहे हैं।
I want to talk about the fiscal capacity of the states, sir, because हर स्टेट गवर्नमेंट में ये एक चैलेंज है, ये एक कंसर्न है। आपने भी मेरे साथ पिछले जो कॉन्वर्सेशन, पिछला इंटरव्यू में इसकी बात की थी, इसको एक्नॉलेज किया था। तो हाउ डू यू बैलेंस द स्टेट्स फाइनेंसेस सर बिटवीन इंफ्रास्ट्रक्चर डेवलपमेंट एज वेल एज द वेलफेयर स्कीम्स दैट यू आर आल्सो रनिंग?
देखिए, आपकी बात तो बिल्कुल सही है कि हम लोगों ने या पूरे देश में अलग अलग राज्यों ने जिस प्रकार से वेलफेयर की स्कीम्स को हाथ में लिया है, उसका एक स्ट्रेस ये हमारे बजट पर होता है और उसका कहीं ना कहीं हमारी इन्वेस्टमेंट की कैपेसिटी पर भी उसका एक परिणाम होता है। लेकिन मैं ऐसा मानता हूं कि आज हम जिस प्रकार की अर्थव्यवस्था में हैं, उस अर्थव्यवस्था में अगर आपके पास प्रोजेक्ट है, अगर आपका प्रोजेक्ट क्लीन है, अगर आपका प्रोजेक्ट बैंकेबल है, तो पैसे की कोई कमी नहीं है। और फॉर्चुनेटली मिस्टर शक्तिकांत दास जी यहाँ पर है, तो वो बता पाएंगे कि हमने महाराष्ट्र की अर्थव्यवस्था को हमेशा फिस्कल पैरामीटर्स पर एकदम परफेक्ट रखा है। आज भी आप देखिए, हमारा डेट जीडीपी रेशियो 17% पर है। देश में अभी कई राज्य 25, 26, 28% पर पहुंचे हैं, हम लोग अभी भी 17-18% से ऊपर नहीं जा रहे। तो मुझे ऐसा लगता है आज हम लोग ये 4 लाख करोड़, 5 लाख करोड़, 10 कुल मिलाकर सेंट्रल गवर्नमेंट और स्टेट गवर्नमेंट का मिलाकर आज महाराष्ट्र में 11 लाख करोड़ के प्रोजेक्ट चल रहे हैं। तो ये जो सारा पैसा आ रहा है, इसका कारण यही है कि हमारे जो इन्वेस्टर्स हैं उनको ये विश्वास है कि महाराष्ट्र इज कैपेसिटी टू रीपे। हमारा ट्रैक रिकॉर्ड भी वैसा ही रहा है। हम लोगों ने फिस्कल डिसिप्लिन काफ़ी बड़े पैमाने पर रखी है। तो मुझे लगता है कि वी आर ट्राइंग टू मतलब स्ट्राइक अ बैलेंस कि जहां वेलफेयर स्कीम्स और हमारी जो इंफ्रास्ट्रक्चर की नीड्स है इसको हम लोगों ने बैलेंस करने की कोशिश की है।
आपने पिछली बारी मुझे बताया था कि वेलफेयर स्कीम्स जैसे कि लाडली बहन स्कीम है, उसका एक प्रकार से ऑडिट चल रहा है, क्लीन अप चल रहा है, तो वो काम अब समाप्त हो चुका है या उसमें और कार्य बाकी?
नहीं, अभी उसका एक पोर्शन हमने कर लिया। जो डाउटफुल अकाउंट्स हमको लग रहे थे उनको हम लोगों ने रोककर अभी उसका फिजिकल वेरिफिकेशन हमने शुरू किया है। तो इट विल टेक अराउंड 4 to 5 months मोर।
मैं ज्यादा राजनीतिक सवाल पूछना नहीं चाहती, लेकिन पूछती हूँ आपसे, बिहार के इलेक्शन के बारे में एक रिकॉर्ड टर्नआउट हुआ है, तो आप उसका क्या मैसेज ले रहे हैं ये रिकॉर्ड टर्नआउट को लेके?
देखिए, दो चीजें हैं। एक तो रिकॉर्ड टर्नआउट इसलिए है कि एक प्रो इनकम्बेंसी वोट ये यहाँ पर लोगों ने दिया है। और दूसरा मैं ये कहना चाहता हूँ कि देखिए, SIR के कारण जो हमारी वोटर लिस्ट का क्लीन अप हुआ है, वो क्लीन अप के कारण आज इस प्रकार का वोटिंग हुआ है। तो मुझे ऐसा लगता है कि एक ये मॉडल तैयार हुआ है SIR का, और ये पूरे देश में करने की जो घोषणा इलेक्शन कमीशन ने की है, मैं तो उसका स्वागत करता हूँ।
आप स्वागत कर रहे हैं SIR का, लेकिन ये जो उम्मीद थी कि SIR की वजह से कटौती होगी, बढ़ोतरी नहीं होगी, आप कह रहे हैं कि टर्नआउट में बढ़ोतरी हुई है SIR की वजह से?
बिल्कुल, क्योंकि ये जो सारे नाम थे, जो कुछ डुप्लीकेट होंगे, कुछ गलत होंगे, कुछ बांग्लादेशियों के होंगे, कोई और किसी के होंगे, तो कुल मिलाकर उसके कारण वोटर लिस्ट जो होती थी वो फूलती थी। उसमें एक अननेचुरल इस प्रकार का नंबर आता था, विच वॉज नॉट द एक्चुअल नंबर। SIR के कारण एक्चुअल नंबर आया। तो आप, जैसे मैं मुंबई की बात करता हूँ, हमेशा मुंबई का वोटिंग आपको 50% दिखता है। क्यों दिखता है? जिस दिन SIR हो जाएगा उस दिन इसी लिस्ट के ऊपर मुंबई का 65% वोटिंग दिखेगा। तो ये हम करीब पिछले 25 सालों में हम लोगों ने हमेशा हम लोगों ने मतलब इलेक्शन कमीशन ने ही, क्योंकि ये तो कोई पॉलिटिकल पार्टी का काम नहीं, इलेक्शन कमीशन का काम है, लेकिन इलेक्शन कमीशन ने पिछले 25 वर्षों में हमेशा समरी रिवीजन किया। और समरी रिवीजन में प्रॉब्लम ये होता है कि आप जैसे कोई शहर, अगर मुंबई जैसा शहर है, इस शहर में कई लोग ये माइग्रेट करते हैं। कोई कांदिवली में रहता है, फिर बोरीवली चला जाता है, कोई मालाड में रहता है, मुलुंड में चला जाता है। तो ये जब माइग्रेट करते हैं तो उनका वहां पर भी नाम होता है, और यहाँ जाने के बाद उन्होंने फॉर्म 9 भरकर या 8 भरकर अपना नाम ट्रांसफर करना चाहिए, वो नहीं करते, वो फॉर्म 6 भर देते हैं और अपना नाम यहाँ भी कर देते हैं। तो इसके कारण भी प्रॉब्लम्स होते हैं। कई बार कुछ लोग माइग्रेटरी लोग होते हैं जो लोग अपना नाम डलवा देते हैं। तो ऐसी सारी चीज़ों का जो क्लीन अप होना चाहिए था, ये क्लीन अप पिछले 25 सालों में नहीं हुआ है, और उसके कारण हमारी जो वोटर लिस्ट है उसमें कई लोगों की संख्या बढ़ी हुई है। स्पेशली जहां अर्बनाइजेशन है वहां पर तो ये बहुत ज्यादा हुआ है। तो मुझे लगता है कि ये जो प्रोसेस अभी समरी की जगह इंटेंसिव जो रिवीजन करने का निर्णय ये इलेक्शन कमीशन ने लिया है, ये बहुत अच्छा है। और मैं तो ऐसा मानता हूं कि आने वाले दिनों में इलेक्शन कमीशन ने ये कंप्लीट हमारे जो वोटर लिस्ट है इसको ब्लॉकचेन में कन्वर्ट करना चाहिए, ताकि कोई भी व्यक्ति किसी भी राज्य से कहीं पर भी जाए, किसी भी जगह से कहीं पर भी जाए, तब भी वो आइडेंटिफाई होना चाहिए, ताकि एक नाम बार बार ना आए, या इस प्रकार से उसको भी आसानी रहे कि नाम, आज किसी को अगर नाम इधर से उधर ले जाना है तो यहाँ से वहाँ उनको फॉर्म भरना है, वो फॉर्म यहाँ आकर कटवाना है, ये बड़ी प्रॉब्लम्स है, तो वो प्रॉब्लम भी दूर हो जाएगी।
सिंस वी आर टॉकिंग अबाउट इलेक्शन, सर आपसे पूछना चाहेंगे, BMC इलेक्शंस, कॉर्पोरेशन के इलेक्शंस कब तक होने की उम्मीद है? देखिए,
इलेक्शन कमीशन ने जो इंडिकेशन दिया है उसके अनुसार जनवरी में वो इलेक्शंस होंगे ऐसा दिखता है, क्योंकि अभी हमारी जो छोटी कॉर्पोरेशन है या जिसको हम नगर पालिकाएं कहते हैं, उनके इलेक्शन ऑलरेडी घोषित कर दिए हैं। 2 दिसंबर को उसके चुनाव है, उसके बाद जिला पंचायतों के चुनाव होंगे और फिर कॉर्पोरेशंस के चुनाव होंगे।
2 आखिरी सवाल आपसे पूछना चाहूंगी। एक तो यूएस के साथ जो हमारी बायलैटरल ट्रेड एग्रीमेंट की बात चल रही है, नेगोशिएशंस अभी फिलहाल चल ही रहे हैं, आपके स्टेट को भी इससे काफ़ी डिफ़िकल्टीज़ है, काफ़ी चैलेंजेस हैं, क्योंकि कई सेक्टर्स हैं जो टैरिफ की वजह से इम्पैक्टेड है। उम्मीद की जा रही थी कि एक एक्सपोर्ट रिलीफ पैकेज बनाया जाएगा, फिलहाल उसका कोई खुलासा हुआ नहीं है, तो आप स्टेट के लेवल पे इसको कैसे डील कर रहे हैं?
देखिए, जिस समय ये सारा टैरिफ वाला मसला हुआ उस समय हम लोगों ने इसका हमारे ऊपर क्या इम्पैक्ट हो सकता है इस दृष्टि से काफ़ी स्टडी किया। हम लोगों ने एक स्टडी ग्रुप भी तैयार किया। हमारा जो नीति आयोग का हमारा जो महाराष्ट्र अवतार है मित्रा, उसमें हम लोगों ने एक पूरा इसका कॉम्प्रिहेंसिव नोट तैयार किया। और जैसे प्रधानमंत्री जी ने हम लोगों को एक संदेशा दिया कि इसको आपदा मत समझिए, इसको अवसर समझिए। और 2 संदेश उन्होंने दिए कि लुक फॉर अल्टरनेट मार्केट्स और ज़्यादा से ज़्यादा ईज ऑफ डूइंग बिजनेस करके आप जो कॉस्ट है बिजनेस की, कॉस्ट ऑफ डूइंग बिजनेस शुड बी ब्रॉट डाउन सो दैट इसका इम्पैक्ट बिजनेसेस जो है वो उसको एक प्रकार से सहन कर पाए। तो हम लोगों ने ये प्रयास किया कि जहाँ एक और अल्टरनेट मार्केट्स क्या हो सकते हैं इसका विचार भी हम लोगों ने किया। और साथ साथ हम लोगों ने एक मिशन हाथ में लिया कि 100 बिग रिफॉर्म्स, और 100 बिग रिफॉर्म्स के लिए हम लोगों ने एक कमेटी तैयार की और एक वॉर रूम तैयार की। और एवरी मंथ दिस वॉर रूम इज मॉनिटरिंग द रिफॉर्म प्रोसेस। सो हम लोग 100 बिग टिकट रिफॉर्म करना चाहते हैं, जिसमें से करीब 23 हम लोगों ने कर दिए हैं। और इसको जो वॉर रूम है मैं खुद उसको संचालित करता हूँ। सो सीएम्स वॉर रूम ये इसको ट्रैक करता है कि भाई ये रिफॉर्म हुए कि नहीं, इसकी प्रोसेस हुई कि नहीं, प्रोसेस होने के बाद वो नीचे तक पहुंची कि नहीं, इसको हम कर रहे हैं। तो मुझे ये लगता है कि निश्चित रूप से हम लोग इसको अवसर के रूप में इसका इस्तेमाल करेंगे। बड़े पैमाने पर हम ईज ऑफ डूइंग बिजनेस करेंगे, कॉस्ट ऑफ डूइंग बिजनेस को नीचे लाने की कोशिश करेंगे। और नए मार्केट्स ये हम लोग ढूंढ रहे हैं। और हमको तो मतलब हम ढूंढ रहे का अर्थ है कि बिजनेसेस ही हमको कहते हैं। हम लोगों को सिर्फ उसमें जो हर्डल्स है, उसमें जो उनकी अड़चन है, उसको हमको दूर करना पड़ता है, वो हम लोग कर रहे हैं। तो मुझे लगता है कि निश्चित रूप से हम लोग इस इम्पैक्ट को सहन करेंगे।
आपने कहा कि 100 में से 23 रिफॉर्म्स, आपके जो 100 रिफॉर्म्स का प्लान है वो हो चुके हैं, तो बाकी कब होंगे सर?
नहीं होंगे, क्योंकि देखिए ये एक लंबा प्रोसेस होता है रिफॉर्म का। और इट इज नॉट जस्ट अ रिफॉर्म ऑन अ पेपर पर रिफॉर्म करना बड़ा आसान होता है, लेकिन उसको सिंक इन करना, उसको नीचे तक पहुंचाना, उसके लिए एंड टू एंड इस प्रकार की व्यवस्थाएं खड़ी करना, ये भी करना पड़ता है। तो हमने प्रयास ये किया है कि अगले पूरे मतलब हमने 1 साल का समय दिया है 100 रिफॉर्म्स के लिए, उसके बीच हम कर लेंगे।
आप प्रयास की बात कर रहे हैं और मैं जानती हूं कि आप बहुत ट्राई कर रहे हैं कि आप स्टार्टअप्स को भी महाराष्ट्र में एक स्टार्टअप हब बनाएं। अभी अमिताभ कांत जी स्टार्टअप से बात कर रहे थे, दिल्ली में है, बेंगलोर में है, मुंबई से कोई नहीं था सर। तो स्टार्टअप्स को बॉम्बे में और मुंबई में शिफ्ट करने का आप किस प्रकार से आगे प्रयास करेंगे?
आपने अमिताभ कांत जी का ट्वीट नहीं देखा? आप जब स्टार्टअप इंडिया का रिपोर्ट प्रकाशित हुआ तो अमिताभ कांत जी का आप ट्वीट देखिए, उन्होंने ही ट्वीट किया हुआ है स्टार्टअप इंडिया के रिपोर्ट में स्टार्टअप कैपिटल इज नॉट बैंगलोर, इट इज नॉट हैदराबाद, इट इज महाराष्ट्र, इट इज मुंबई। बाय एब्सोल्यूट नंबर्स एंड बाय एब्सोल्यूट इन्वेस्टमेंट महाराष्ट्र ही नंबर 1 है स्टार्टअप में। इसलिए हाँ, लेकिन और हमको करने की जरूरत है, वी कैन नॉट बी कॉम्प्लेसेंट। लेकिन आप ये समझ लीजिए कि आज देश का स्टार्टअप हब ये महाराष्ट्र ही है।
तो आप क्या मैसेज देना चाहेंगे सर जाने से पहले, बिफोर वी स्टार्ट द फेलिसिटेशन? You've got startups, you've got industry leaders, you've got students. What is the message that you'd like to leave with them about Maharashtra?
देखिए, हमारी तो टैगलाइन है महाराष्ट्र रुकने वाला नहीं है, we are not going to stop। और ये आप समझ लीजिए कि भारत की जो एक हमारा प्रधानमंत्री जी का मिशन है विकसित भारत 2047, उस विकसित भारत 2047 के साथ हमने विकसित महाराष्ट्र को अलाइन किया है। और पूरी ताकत के साथ हम महाराष्ट्र को एक ग्लोबली कॉम्पिटिटिव इस प्रकार का स्टेट इस रूप में हम देख रहे हैं। और ये करते हुए मैं एक कहना चाहता हूं कि मैं ये नहीं कहता कि हर चीज़ में वी आर द बेस्ट, और भी कई राज्य हैं जिन्होंने बहुत अच्छा काम किया है। तो महाराष्ट्र में हम लोगों ने ये पद्धति रखी है कि जिस राज्य ने जो अच्छा किया है हम उससे वो लेते हैं और उससे अच्छा करने का प्रयास करते हैं। तो हमारी कुछ मामलों में कंपटीशन अलग अलग राज्यों से और कुछ मामलों में हम अलग अलग देशों से भी कॉम्पीट कर रहे हैं। तो वी वांट टू बी ग्लोबली द बेस्ट।
सबसे ज्यादा कंपटीशन विद इन द कंट्री आपकी किसके साथ है सर?
नहीं,
Who's your fiercest competitor?
मैं ऐसा नहीं मानता किसी के साथ। इट्स हम लोग तो कॉम्पिटिटिव फेडरलिज्म में हैं, तो इंडस्ट्री के मामले में अगर हम विचार करें तो गुजरात है, कर्नाटका है, तमिलनाडु है, इसके साथ हमारी कंपटीशन चलती है। अगर आप अलग अलग सेक्टर देखिए तो अलग अलग सेक्टर में अलग अलग लोगों के साथ कंपटीशन। लेकिन एक बात आप ध्यान में रखिए कि अल्टीमेटली वन ऑफ द इंडिकेटर इज एफडीआई, और एफडीआई में महाराष्ट्र हैज कंसिस्टेंटली बीइंग नंबर 1, और इट्स नॉट जस्ट नंबर 1। अगर आप देखिए तो हमारे बाद के जो 3 राज्य है, उन 3 राज्यों का मिला के जितना एफडीआई है।
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The union government invokes anti-terror law after a car blast near Delhi's Red Fort metro station killed at least 12 people. Home Ministry transfers the probe to the NIA, India's principal counter-terror agency. On an official visit to Bhutan, Prime Minister Modi says agencies will get to the bottom of the conspiracy. Positive global cues lift Dalal Street. Market regains most of last week's losses. Nifty nears 25,700. Net equity inflows into mutual funds dip for the third straight month, even as SIP inflows hit another record high. US President Donald Trump says we are pretty close to doing a deal with India, adds the tariffs will be reduced at some point. India faces 50% US tariffs, which is the highest in the world, along with Brazil. US Senate passes a spending package to end the government shutdown. The bill will now move to the House for a vote and then to the President's desk for approval at 42 days. This is the longest government shutdown in the US history. SoftBank sells its entire stake in Nvidia for nearly $6 billion. Investments in OpenAI and PayPal help SoftBank's profits double in Q2. Vision Fund alone reports a gain of $19 billion. I'm going quiet, sort of, says legendary investor Warren Buffett in his last letter to shareholders as the CEO of Berkshire ending a tradition that started 6 decades ago, also expedites the transfer of his $149 billion estate to charity before handing over the baton to Greg Abel. Construction and demolition activities banned across Delhi as air quality worsens. Schools shift to hybrid mode from nursery to class 5. Residents advised to avoid outdoor activity during early mornings and late evenings. 122 seats across 20 districts go to polls in the final phase of Bihar Assembly elections. Polling takes place at over 45,000 booths. Election results will be announced this Friday. Catch our coverage of the exit polls starting 7 p.m. tonight. Just a month after winning a reprieve in the Supreme Court, Sajjan Jindal's JSW Steel plans to sell up to 50% stake in Bhushan Power and Steel. Sources say Japan's JFE Steel is the front-runner. That's an exclusive. And world's first armless female archery champion Sheetal Devi does the impossible yet again, becomes the first para-archer to qualify and compete with India's able-bodied team. We speak to archery champion a little later on the show. All right, our top story this evening. The Home Ministry has transferred the Red Fort car blast case to NIA, India's principal counter-terrorism law enforcement agency. At least 12 people were killed and several others were injured after a powerful car explosion ripped through Delhi's Red Fort area last evening. As per the police, the blast took place inside a moving Hyundai i20 car at a traffic signal near Red Fort metro station close to 7 p.m. As per reports, investigators traced the car to a man from Pulwama in Jammu and Kashmir. The national capital has been placed on high alert with strict vigil being maintained at the airport, railway stations and bus terminals. Home Minister Amit Shah held multiple high-level meetings to take stock of the situation. Prime Minister Modi, who flew to Bhutan this morning on an official trip, sent a message from the capital. He said that the government will get to the bottom of the conspiracy.
हमारी एजेंसियां इस षड्यंत्र की तह तक जाएगी। इसके पीछे के षड्यंत्रकारियों को बख्शा नहीं जाएगा। All those responsible will be brought to justice.
I'm here at the Red Fort. Behind me you can see the Red Fort, and I'll ask my camera person to pan at a corner over there where there's a white tent. That is the exact crime spot. That is where the explosion happened. This is one of the busiest signals of this particular area of Chandni Chowk. And as we speak, Home Minister Amit Shah has taken a meeting in the morning with the senior officials of IB, NSG, Delhi Police, also NIA, and now the case has been formally handed over to NIA because in the FIR, several sections of BNS, of UAPA and of the Explosive Acts have been invoked. To be precise, Section 1618 of UAPA, Section 3 of Explosives Act and Section 103, 109, 1 and 61.2 of BNS have been invoked. Remember, there are traces that are being drawn because of the explosives, the huge amount of ammonium nitrate that was being seized in a joint operation between Jammu Kashmir Police and Haryana Police at Faridabad. The vehicle which got exploded actually had an HR, that is Haryana number plate, and it is understood from sources, the police is sharing informally also, that the vehicle started from Faridabad in the morning yesterday itself around 8:30, and it reached this car parking at Red Fort at about 3 p.m. and then at 6:52 p.m. is when the explosion happened.
All right, let's talk about the day's market action. Positive global cues lift the Wall Street with the Nifty nearing the 25,700 mark. 40 Nifty stocks closed in the green. Broader markets moved in line with the benchmarks. And staying with the equity markets, SIP inflows have hit a record high in October, according to data from the Association of Mutual Funds. SIP inflows have been rising since July due to steady retail participation. However, equity fund inflows eased, slowing down 19% on a monthly basis. This is the third straight month of a decline in overall equity inflows. Interestingly, gold ETFs managed to attract investors despite record high prices. Inflows managed to stay above 7,700 crore rupees despite some decline compared to September. Now, brokerage firm Citi has said that there is a possibility that the government is considering hiking excise duty in petrol and diesel after Bihar elections. In a note, Citi has said that a one rupee hike per litre generates revenue worth 17,000 crore rupees for the government. If the excise duty is hiked, this could have an impact on some oil marketing companies. All right, on to a CNBC-TV18 exclusive. We learn from sources that JSW Steel is looking to sell up to 50% stake in Bhushan Power and Steel. Japan's JFE Steel has emerged as the frontrunner to pick up stake in the firm. Yash Jain is here with the details. Yash, please take us through what your sources are telling you.
Well, very interesting transaction as far as the M&A space for JSW Steel is concerned. What we've been given to understand from our sources is that JSW Steel is looking to sell up to 50% stake in Bhushan Power and Steel. Now, this asset, that is Bhushan Power and Steel, is the same asset which JSW acquired first under NCLT, under the Insolvency and Bankruptcy Code. That decision was then overturned by the Supreme Court, which going ahead was again overturned in favor of JSW Steel, where JSW Steel was allowed to acquire this asset for the revival of the asset. What we've been given to understand from our sources is that Japan's JFE Steel is the front runner when it comes to picking up this 50% stake from JSW in Bhushan Power and Steel. We've written to JSW Steel also on this particular query. The company, in response to our query, has said that JSW Steel's strategy includes evaluating various opportunities, both organic and inorganic in India and overseas, including potential collaborations aimed at enhancing scale, efficiency and global competitiveness. However, the company would not like to comment on speculation.
Right, thank you, Yash, for that. Shifting focus now, US President Donald Trump has reiterated India's purchases of Russian oil have been reduced substantially. Speaking to reporters at the White House, Trump said, and I quote, "We are going to be bringing the tariffs down at some point. We are going to be bringing them down," unquote. He also added that his administration is making a deal with India, and a much different one than they had in the past.
Right now, the tariffs are very high on India because of the Russian oil, and they've stopped doing the Russian oil. It's been reduced very substantially. Yeah, we're going to be bringing the tariffs down. You know, we're making a deal with India, a much different deal than we had in the past. So right now, they don't love me, but they'll love us. Again, we're getting a fair deal, just a fair trade deal. We had pretty unfair trade deals. They're very good negotiators, sir. Just you have to take a look at that, if you would, please. But we're getting close, Scott. I think we're pretty close to doing a deal that's good for everybody, right?
Sergio Gore has been sworn in as the U.S. ambassador to India and is special envoy to South and Central Asia. U.S. President Donald Trump, who presided over the ceremony, expressed confidence that Gore would strengthen economic ties with India and deliver an outstanding performance in his new role. The U.S. is inching closer to ending the longest government shutdown. The Senate has passed a spending package to end the shutdown. The bill will now move to the House for a vote and then to the President's desk for approval. The bill was passed in a 60-40 vote, with nearly all Republicans joining 8 Democrats voting in favor. The deal will fund the government until the end of January. We told you first, and now it's official. CarTrade has confirmed that it's in talks to acquire CarTrade and BikeDekho. CNBC-TV18 had reported earlier that the deal will be valued at over $1.2 billion. Sources had also indicated earlier that Insurance Dekho acquisition may be re-looked at later stage. The initial public offering of PhysicsWallah opened for subscription today. The price band for the issue has been set in the range of 103 to 109 rupees a share. The first day of the issue saw subscription led by employees, retail investors and non-institutional investors. As of 4 p.m, the EdTech's overall subscription stood at 6%. PhysicsWallah has also raised around 1,560 crore rupees from 57 investors, with global names like Goldman Sachs, Franklin Templeton on board. The initial public offering of Pine Labs was subscribed over 2.4 times on the final day of bidding. As of 4 p.m, the subscription was led by the portion reserved for qualified institutional buyers, followed by retail investors. The Fint has managed to raise 1,753 crore rupees from 70 anchor investors. The IPO is a combination of a fresh issue of sale worth 2,080 crore rupees and the remaining portion allotted as offer for sale. All right, let's take a short break. Coming up next, construction and demolition activities are banned across Delhi as air quality worsens. More details to come in a bit. Welcome back. Legendary investor Warren Buffett has written his last letter to shareholders as the CEO of Berkshire Hathaway. In an 8-page letter, the Oracle of Omaha reflected on his life, succession, and offered some words of wisdom. Firstly, Buffett is keeping a significant amount of Class A shares until Berkshire shareholders develop a level of comfort with his successor, Greg. He believes that level of confidence shouldn't take long. Buffett praised Greg, who is set to take over as CEO from year-end. He said, and I quote, "Greg has more than met the high expectations I had for him when I first thought he should be Berkshire's next CEO. My hope is that his health remains good for several decades. With a little luck, Berkshire should require only 5 or 6 CEOs over the next century." End of quote. Speaking about his own health, the 95-year-old Buffett said, "Though I move slowly and read with increasing difficulty, I am at the office 5 days a week where I work with wonderful people." End of quote. He also had some words of advice. He said, and I quote, "Decide what you would like your obituary to say and live the life to deserve it." He ended the letter with a poignant message: "Choose your heroes very carefully and then emulate them. You will never be perfect, but you can always be better." End of quote. Warren Buffett is also expediting the transfer of his $149 billion estate to charity before handing over the baton to Greg. Now, SoftBank has reported a solid set of numbers, with the company posting a $19 billion gain on its Vision Fund. The company also announced that it has offloaded its entire stake in NVIDIA for over $5 billion. Rachna Dhanrajani joins us now with more. Rachna, please take us through SoftBank's plans.
Right, SoftBank's exit from NVIDIA marks another bold move by Masayoshi Son. He's cashing out of the world's most valuable AI chip maker just as he builds his own AI ecosystem. Now, this isn't the first time SoftBank has walked away from NVIDIA. Back in 2017, the Vision Fund was among NVIDIA's earliest backers, building a $4 billion stake before selling it all out in 2019 and missing the historic rally that followed. But this time, the story is different. NVIDIA's meteoric rise has already helped power Masayoshi Son's comeback, and it shows in this quarter's earnings, as it drove SoftBank's profit to a record 2.5 trillion yen, or that's about $16 billion. That's far exceeding the market expectations. And so this sale worth $5.8 billion comes alongside record-breaking earnings. The company's Vision Fund posted a $19 billion gain, held by soaring valuations in OpenAI, Oracle, and PayPay. SoftBank's total revenue rose to 3.7 trillion yen, while pre-tax income more than doubled from last year. The stock has also been on a tear, jumping 78% in 3 months, its best performance since 2005. And in a move to attract more investors, SoftBank has announced a 4-for-1 stock split effective January 1st. Now, Sun is putting those NVIDIA gains to work, committing $30 billion to OpenAI, $6.5 billion to chipmaker Ampere, and working with TSMC on a $1 trillion AI manufacturing hub in Arizona. For Masayoshi Son, this is more than a profit story. It's a pivot from investing in AI's biggest winners to building the infrastructure behind it. SoftBank is betting that this time the AI boom will have their name written all over it and not just as investors.
Right, thank you, Rachna, for that update. And staying with global earnings, electronics giant Sony posted strong numbers in the second quarter. The company has also announced a share buyback of up to $648 million. Revenue for the quarter rose 5%, while operating profit jumped 10% on an annual basis. The company has also raised its full-year guidance, expecting operating profit to rise 8% from the previous fiscal year. Back home, 122 constituencies across 20 districts have gone to polls in the final phase of Bihar Assembly elections. Polling is taking place at over 45,000 booths. The results will be announced this Friday. CNN News 18's Arun Dhanta joins us now with more from Purnia.
We are in Purnia, which is under the Simanchal region. Of course, it's a very, very politically important region, and therefore you can see we are here in one of the polling booths, and that's how these people are welcoming voters here. This is, of course, a special initiative being done by here the administration to really give that thumping welcome to the voters. And as Election Commission has been speaking about this, that they are putting all their efforts and energies to bring more and more voters to the polling booth. And talking about polling, we have seen in this Simanchal region last time 60% voting taking place, which is a huge, and the same thing is being expected this time also. You can already see that people have started queuing up here outside the polling booth. We are in Purnia Assembly at this point. Let me quickly give you a brief about this entire region, how it shaped in 2020 Assembly elections. There are 24 seats in the entire Simanchal region, and out of those 24 seats, 12 went to the NDA in 2020 and 5 to the Congress party, 1 to RJD. And also, of course, we have seen MIM played a very crucial role here, winning 5 seats.
Another big story that we're tracking, the Delhi pollution. The government has invoked stricter anti-pollution measures in Delhi NCR as air quality slipped into the severe category. Shivani Bajaj reports on the new restrictions that take effect.
Well, absolutely. Air quality in Delhi NCR has officially entered the severe zone, forcing authorities to trigger a stage 3 of the Graded Response Action Plan, or the GRAP, starting today. The citywide average AQI has jumped to 425, with several hotspots showing even higher readings. Bhavna, for example, is at 462, Alipur is at 442, Chandni Chowk at 416, and so are various other regions and areas in Delhi NCR. With pollution levels rising sharply, the administration has moved to tighten curbs. Under GRAP Stage 3, all non-essential construction and demolition activities are now banned in NCR, along with the closure of stone crushers and hot mix plants. Municipal bodies have been instructed to intensify road cleaning and dust control in the city. Importantly, the worsening of air quality has now begun to affect the school and Delhi general life in Delhi. Schools have now been asked to shift to a hybrid model for class 1st to 5th, meaning online classes and more flexibility for younger children in Delhi NCR to save them from toxic air. Doctors are also advising residents, especially children and elderly, to not step out during the morning and the evening hours when pollution levels peak. So while enforcement has now stepped up with GRAP Stage 3 in place, the immediate priority remains protecting public health as Delhi once again battles the hazardous winter air. Back to you.
Right, thank you, Shivani, for that. And we have an amazing piece of news for you. World's first armless female archery champion, Sheetal Devi, has done the impossible. She's become the first para-archer from India to make it into the able-bodied team. The 18-year-old from Jammu and Kashmir was born without arms and shoots arrows using her feet and shoulders. But she dreamed bigger, to compete against athletes without disabilities in the able-bodied category. Sheetal will now represent India at the Asia Cup Stage 3 in Jeddah. Here's a snippet of my conversation with her. आपने एक बहुत ही काफ़ी पॉपुलर शो में अमिताभ बच्चन जी से कहा था कि आपका सबसे बड़ा सपना है कि एबल बॉडी कैटेगरी में compete करना है. उस मोमेंट में जब आपका शॉर्टलिस्ट हुआ, जब आपका सिलेक्शन हुआ, क्या चल रहा था आपके दिमाग में?
मेरे दिमाग में तो मैं खुश थी बहुत कि मैं सिलेक्शन हुआ मेरा, क्योंकि जब मैं केबीसी में थी तब भी मैंने कहा था कि मुझे एबल बॉडी के साथ खेलना है, मेरा सपना है. क्योंकि जब से मैंने स्टार्ट किया है तब से ही मतलब पहले से ही मैंने एबल बॉडी के साथ खेला था. पहला नेशनल में एबल बॉडी के साथ था तो वहाँ पे मैं हार गई थी. तो तब से मेरी एक जिद थी कि मुझे एबल बॉडी के साथ खेलना है और एबल बॉडी के साथ ही मेडल जीतने.
काफ़ी ये रिकॉर्ड ब्रेकिंग अचीवमेंट है शीतल जी, इंडिया की पहली पैरा प्लेयर हैं आप. मैं आपसे जानना चाहती हूँ कि इस कंपटीशन में आपके लिए क्या बदल जाएगा? ट्रेनिंग बदल जाएगी? मेंटली किस तरीके से आपको अब आगे का जो रास्ता है वो तय करना है?
देखो मैम, बदला तो कुछ नहीं है क्योंकि सेम वही रहेगा. जैसे पैरा में हूँ वैसे ही एबल में भी, तो बदले वाले का कुछ नहीं, सेम ही रहेगा. मतलब
जो आपके आसपास के लोग हैं वो काफ़ी बचपन में आपको टोका करते थे, आपके पेरेंट्स को टोका करते थे, लेकिन जैसे ही आपको सक्सेस मिला लाइफ में, उन लोगों का जो बिहेवियर है वो आपकी तरफ बदलने लगा.
हाँ जी मैम, देखो पहले भी देखा हो मैंने या आपने भी देखा हो कि जब हम कुछ नहीं होते तो तब हमसे कोई बात नहीं करना चाहता है. जब हम कुछ बनते हैं तो तब हमसे सारे लोग हमसे बात करना मतलब चाहते हैं या मिलना चाहते हैं. तो जब से मतलब हम सक्सेसफुल होते जा रहे हैं तो वैसे ही लोग मिलते जा रहे हैं.
जैसे आपने कहा कि अभी लोग आपसे मिलना चाहते हैं, ये बात बिल्कुल सच है कि आपसे बहुत लोग मिलना चाहते हैं, लेकिन मैं आपसे ये जानना चाहती हूँ कि आप किससे मिलना चाहते हैं? कोई ऐसा इंसान है जिसको आप बहुत ही ज्यादा लुक अप टू करते हैं? आप
फर्स्ट पे हैं दलजीत जी, मुझे उनसे मैं मिलना चाहती हूँ. तो
ये मुझे पता चला है कि आपको दिलजीत दोसांझ काफी पसंद है. कोई उनका फेवरेट गाना है जो आपको कुछ ज्यादा ही अच्छा लगता है?
गाने तो उनके बहुत अच्छे हैं बट मेरे को ना याद नहीं रहते.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
and welcome to Startup Street. I'm Ritu Singh, and with me are Arundhati Ramanan and Shruti Mishra. Here are the top headlines from the startup world. PhysicsWallah's initial public offering opens for subscription today. The price band for the issue is set in the range of 103 to 109 rupees a share. The EdTech's overall subscription stood at 6%, led by employees, retail investors, and non-institutional investors.
Pine Labs IPO subscribed 2.4 times on the final day of bidding. Subscription was led by qualified institutional buyers, followed by retail investors. Fintech manages to raise over 1,700 crore rupees from 70 anchor investors.
CNBC-TV18 News Break confirmed. CarTrade confirms that it is in talks to acquire CarDeco and ByteDeco. CarDeco's valuation was $1.2 billion in 2021. Sources indicate the Insurance Deco acquisition could also be relooked at a later stage.
D2C full-stack fulfillment startup QuickShift raises 22 crore rupees in a pre-Series A round led by Atomic Capital. Funds will be used to develop an AI-first platform, strengthen teams, enhance omni-channel programs, and expand operations across North and South India.
SoftBank sells its entire stake in NVIDIA for nearly $6 billion. The investments in OpenAI and PayPal helped SoftBank's profits double in the second quarter. Vision Fund alone reports a gain of $19 billion. Those are the headlines that we're tracking for you today. Now, in What's Brewing, AI startup Saverite Scalable Intelligence has just unveiled what it calls a new frontier in AI efficiency and scalability, the Omni Processing Unit, or OPU, a unified compute platform that blends CPU, GPU memory, and high-speed interconnect into a single composable architecture. With more than $100 million in pre-orders, partnerships with Samsung Foundry, ARM, and Sumitomo, and claims of dramatically improved performance and cost efficiency for AI workloads from edge to hyperscale, Saverite is making a play to redefine how AI is trained, deployed, and scaled. For more on that, joining us now is Shailesh Thusu, who's the founder and CEO of Saverite Scalable Intelligence, and no stranger to building transformative data platforms. Shailesh, thanks very much. It's great to have you on CNBC TV18. Let's start with the big picture. You're calling the Omni Processing Unit a new class of compute architecture. How is it fundamentally changing the way AI systems are built and scaled compared to today's GPU-centric world? And can you quantify for us how much faster an AI model can run on your OPUs?
Yeah, thank you, Ritu, for having me on your show. We set out to define a new processing unit for next generation of AI compute. So what we call as you said, the Omni Processing Unit. We 2 years ago, we created a team that was in Bangalore and in California. Working together, we have now created a processor that can run 10 times faster with only 10% of the energy used that is today. We see that AI compute needs are really growing really quickly, and what people need for every domain, the compute power is required. But energy is a huge issue. And in order to reduce the energy and the power required in order for us to really sustain the growth rate that the world needs, we created this OPU configuration.
Well, Shailesh, would you say this is the end of GPUs as we know them? Is that what you're talking about? Or are you positioning the OPU as a complement to the existing architecture? I mean, what's the pitch to investors?
Yeah, this is beyond a GPU. A GPU was designed originally for graphics, really creating graphics or pictures. It's been used very well for AI compute, but the efficiency of a GPU as far as its how much power it takes in order to process the AI type of workloads, it was never actually designed for that. So GPUs will, of course, stay on, but OPU will really the architecture is fundamentally designed from the grounds up in order to do all of the AI workloads. What we have done in it is we actually created something we call the multiplexes fabric. This fabric really offers us the connectivity that we require from what's traditionally called a CPU or a GPU or a memory or an interconnect. And those things then really create efficiently process the AI workloads. And so, no, it's not the end of the GPU. That's not how I would call it, but it is beyond what a GPU can do today.
Okay, not the end of the GPU, but beyond what a GPU can do. You already have more than 100 million pre-orders and, customers like Sumitomo Corporation on board. What is driving this early demand and what kinds of AI workloads are your partners most keen on?
Yeah, so from day one, what we decided to do was how do we get not only an energy efficient processor, but also something that can scale. That can scale because the AI workloads are really changing the market. And it's also the workloads themselves are changing and the type of AI is also changing. So we created a very configurable unit. And then in order to prove to our early customers, we then mapped that unit into a prototype system that's running in our lab today. This prototype system allows our customers to log in and ensure that the workload that they have today running in deployment can be run on our hardware without them having to change it. So this has enabled us to really create some very strong partnerships in Japan, as you said, with Sumitomo Corporation, in Europe, in a large leading OEM there. We have in India, we are making some very deep partnerships in India around not only creating the GPU, but actually doing a lot more design work going forward there.
Well, speaking of India, Shailesh, since you bring this up, how significant is India's role in Saverite's growth going to be and in shaping the global AI hardware landscape, you think?
I think it's going to be a very significant role. In fact, from day one, when Saverite was started, we started it simultaneously in both Bangalore and in California. Our teams are equally strong in both the sites. We've developed it together over the last 2 years at this point in time. And in fact, going forward, we see India as being a pivotal role. And in fact, we'll be likely be larger in India than even in the US. Now, we are going to also do much more in India going forward. Right now, we are in our phase of basically our OPU design points. But we are also designing what we call the Helix platform. The Helix platform is it's a platform in the way we deliver to our end customer an AI appliance. This appliance will be fully designed and manufactured in India and then deployed around the world.
All right. The Helix AI platform expected in 2026 will be made right here. But finally, just a big picture view, Shailesh, before we let you go. How do you see Saverite's technology shaping the next decade of AI? Will the winners be those with the biggest chips or those with the smartest, most efficient systems?
The winners are going to be those which can actually span it's not about the chip size, it's about the smartness, it's about how do you optimize for a given workload, given market. AI is a very large market and it's just starting. And it really needs to be optimized all the way from something that goes on your desk to something that goes onto full data centers and in the hyperscaler market. So it's just the starting of the journey, and we see that us being a very significant role going forward and being able to provide people options and really do sustainable AI for the future.
All right, Shailesh, we'll leave it at that. And thank you very much for waking up so very early, in your time to join us here on CNBC-TV18. We appreciate it.
Thank you. Thank you for having me on your show, Ritu. Thank you. Bye.
Well, moving on the hot seat today, customer engagement platform MoEngage has raised $100 million in fresh funding led by Goldman Sachs Alternatives and A91 partners. The Bengaluru and San Francisco-based SaaS firm plans to use the capital to scale its AI-powered marketing agents and accelerate growth across North America, which now contributes the largest share of its revenue. With this round, MoEngage's total funding crosses $250 million. And to discuss how AI is reshaping marketing automation and what's next for the company's global playbook, joining me now is Ravi Teja, co-founder and CEO of MoEngage. Ravi, welcome to Startup Street. You've often said brands are moving beyond legacy marketing clouds. So what's driving enterprises to switch to MoEngage, and how are you positioning the platform against incumbents like Salesforce or Adobe?
Yeah, thank you, Shruti, for having us on the show. For the viewers, we are an enterprise AI company in the customer data and engagement space. And as you rightly mentioned, a lot of our growth in the last few years have been driven by migrations of enterprise B2C brands from legacy marketing cloud platforms like that of Adobe and Salesforce. And since these legacy marketing cloud platforms have been built in the early 2000s, built on legacy technology stack, not easy to use for consumer brands and the marketing teams within those consumer brands. And it also takes so long to kind of launch, take the campaign ideas to life on these platforms. And MoEngage being an AI-powered platform built for the enterprise with our Million AI engine at the center of everything that we do. And it's also a very easy to use platform for marketing teams. And with AI decisioning, also we are seeing that rapid adoption and migration from legacy platforms.
We'll delve deeper into what you just said, but first let's talk about the fundraise. What's the key focus area for this capital? Deeper AI innovation or market expansion? And what kind of growth targets have you set for the next phase?
Sure, Shruti. So I think it's a combination of both. I would say a big part of our growth in the last 3 to 4 years has been driven by our growth in North America, Europe, and Middle East regions, and we want to continue to accelerate that. So we'll be expanding our sales and marketing and customer success teams in those regions to continue to kind of accelerate and grow at a 35% over 35% CAGR growth rate over the next 3 to 4 years. That's the growth rate that we are working towards. And the second part of this growth will also be driven by investments in terms of AI, basically accelerating innovation in our AI capabilities, especially around the Million AI sort of agents, which are purpose-built for marketing teams and product teams within B2C organizations.
Okay. Ravi, with everyone adding an AI layer today, how do you ensure your Merlin AI suite stands out? What's the moat, if you could break down how these AI agents are transforming a marketer's workflow?
Yeah, I think that's a great question, Shruti. And today, there are AI platforms available today, but many of these are horizontal platforms for enterprise companies. And I think the way we look at Million AI is basically a functional AI platform, purpose-built for marketing teams within B2C organizations. And basically, we are focusing only on the marketing teams and helping these teams grow revenue and customer lifetime value metrics. And for example, like we have AI decisioning capabilities, whether it regards to for example, like if you take a quick commerce company like a Swiggy, Instamart, we help them kind of identify which customer should receive the best offers or the most relevant offers, and also on the right channel and also on the right time, right? And that's only possible at the scale of when you look at a scale of tens of millions of customers, like some of these brands have. It's only possible leveraging all the AI decisioning capabilities, and for us, it's just not. And we are delivering real results, and we are also seeing strong adoption of our AI products from our existing customers.
Sure. Like I mentioned earlier, Ravi, North America is now your largest revenue contributor, and business there has doubled over the past year. What's driving that growth? And give us a sense of where the business stands today in terms of revenue and scale.
Yeah. So I think in terms of our growth in North America, it is being driven quite a bit with regards to enterprises across retail, financial services, travel and hospitality verticals, migrating from legacy marketing cloud platforms as well as multiple point solutions that are out there to a unified, organically built platform like MoEngage. And we are seeing quite a bit of that migration. And in terms of the scale of the business and today, like as North America contributes to over 30% of our business, and the overall company is at about $100 million in terms of annualized recurring revenue. So that's the kind of scale at which we are operating at.
All right, we've completely run out of time, Ravi. Many thanks for joining us on Startup Street, and wish you the very best for all your aggressive growth plans.
Thank you, Shruti.
On that note, it is time for us to head into a short break. But coming up next, wellness brand Baby Organo has raised 20 crore rupees in a pre-Series A funding round led by RPSG Capital Ventures. CEO and co-founder Riddhi Sharma joins us to discuss more about the firm's growth and expansion plans. Stay tuned. Welcome back. You're still with us on Startup Street. On the hot seat today, Ayurveda meets modern parenting. That's the philosophy driving one of India's fastest growing kids wellness brand, Baby Organo. Founded by husband and wife duo Riddhi and Ripple Sharma, the startup has just raised 20 crore rupees in a pre-series A round led by RPSG Capital Ventures with participation from Source.vc. The company plans to use the fresh funds to accelerate product innovation, scale marketing efforts and strengthen operations as it works toward a 100 crore rupee revenue target by FY27. With over 1 million parents already trusting its Ayurvedic formulations, from immunity-boosting drops to child-safe roll-ons and gummies, Baby Organo is looking to redefine children's health and wellness through the science and purity of Ayurveda. Joining me now to discuss this further is Riddhi Sharma, the founder and CEO of Baby Organo. Riddhi, thank you so much for taking time out and being here with us on Startup Street. You know, before we get into the fundraise, right, take us through the journey of Baby Organo. What prompted you to start the firm and what was the gap in the market that you were trying to solve for?
So thank you so much for inviting me on this platform. I think, you know, a mother's journey starts from her own experience specifically. So when I became a mother in 2018, my nanny was there for me, my grandmother was there for me to take care of my newborn, because as a new mother, I was facing lots of wellness challenges for my kid. So if it is about babies having a colic pain, babies having a cold and cough, I did not know what to do with all these problems, wellness problem for the kids. My grandmother was there to take care of me and my newborn. Then I started realizing about the power of our Ayurvedic herbs. Eucalyptus oil, the hing roll-on, all these things have helped me a lot to take care of my newborn. And then I realized that this could be the problem of many modern mothers, or they might not, their grandparents might not be accessible for them to transfer this Ayurvedic knowledge to alpha generation or next the beta generation of their kids. So this was the actual journey started for Baby Organo.
All right, so it started from your own journey of being a mother. But, you know, what does this investment mean for Baby Organo's next phase of growth? Where do you hope to use the funds that you've just raised and what's on top of the agenda?
So I think this round means a lot to us. It's not just funding, it's a validation of our purpose. So Baby Organo started from a very personal space, my own journey. And today having partners like RPSG Capital Ventures and Source.vc believes in that vision means we are moving in the right direction. So this partnership really gives us the strength to scale, to take Ayurveda for kids from Indian homes to global shelves. It means a lot to us.
Absolutely. And you know, you've built a strong consumer base among parents, right? What's sort of driving this growing trust in Ayurvedic care for kids? And if you could take us through your top performing products at this point?
So definitely our very top performing product is Ayurvedic Swarna Prashan drops. Now in Charak Samhita, it is mentioned that, you know, a Swarna Prashan is actually Ayurvedic vaccine for the kids. Now when I have started Bal Prashan, Swarna Prashan for my kid started building a strong immunity. And then I understood that, you know, the power of Ayurveda is not just a myth, but it actually works if it is blended with the modern parents and modern science and, you know, the Ayurvedic herbs. So I think when I started giving Swarna Prashan to my kid, I started experiencing the power of Ayurveda, the power of immunity, Ayurvedic immunity booster for kids. I started recommending to my circle around, you know, my friends who were having a kids of the same age. And I understood that the word of mouth, when a mother speaks about a product to another mother, it works well. And after Baby Organo journey started, nowadays also when we ask our customers, like, where did you hear about us? Most of the people says it is about our friends, our family members who has recommended us the Baby Organo products.
Sure. And if you could tell us a little bit more about, you know, your product innovation pipeline and the new launches that we can expect in the coming months, anything new on the agenda?
So I think very recent products that we have launched is the Ayurvedic cough syrup. So it is made of 100% Ayurvedic ingredients that is, you know, really safe for kids specifically. When it comes about the new product innovations, our immunity, gut health and wellness products are there into the pipeline. We have recently launched Panch Tulsi drops that is made with 100% Tulsi essential oils. That is again, you know, helpful to build the immunity, that is good for the cold and cough. So our entire range of products, which we are right now or which we will be launching in next phase of growth, would all be around immunity, wellness and kids health.
Sure. And you've mentioned a target of crossing 100 crore rupees in revenue by FY27, right? So what are you currently clocking? Where do you hope to end this year? And what's the roadmap to sort of get to this 100 crore rupee mark that you've set for yourself?
So I think we have mapped out very clearly our milestone. More products, a larger parent community, and a stronger repeat purchase metrics is what we will be focusing on. Our main focus will be around sustainable, healthy growth. So, not just chasing the numbers, we are trying to build a long-term brand that parents trust and love.
All right, so you're looking there to have a sustainable brand. All right, Riddhi, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you so much. Thank you so much.
While moving on, homegrown designer turned entrepreneur Masaba Gupta is busy transforming her beauty brand Love Child from a digital-first mass label into a bridge to luxury brand. CNBC-TV18 Shilpa Ranipeta reports that she's betting retail stores and fine jewelry to build the house of Masaba into a full-fledged luxury lifestyle empire. Take a look.
Can be an online first brand.
Masaba Gupta is not content with her beauty brand Love Child by Masaba being an online-only store. It operates in a highly competitive market filled with celebrity-led brands and global entrants. So she believes an omni-channel approach is a better bet, especially in the Indian context where experiential marketing is gaining traction.
I think I come from traditional brick and mortar understanding, given that the apparel brand has largely been an offline store and offline model for us. So I think we felt very confident that, if we have to do offline retail, we know how to do it. I know how to do it very well. And I also believe, Shilpa, that eventually at the end of the day, beauty is something that you want to touch and feel, especially in India. So this is our pilot store, as I call it. And without saying too much, I think we'll soon have a second very, very soon in another spot.
This first standalone store in Mumbai is just the first step in Masaba's plan to not just carve her 3-year-old beauty brand Love Child a niche in the fast-growing mass premium segment, but move it up the premium ladder to a bridge to luxury brand. The Level Up plan is not restricted to Love Child.
If you ask me, typically a brand doesn't change their stand for a long time, but within 3 years we've been able to go from being a lot more mass in our look and feel to being a little bit more bridge to luxury. But that's a part of the whole brand shift that's happening at the mother brand level. So apparel from bridge to luxury is becoming high luxury, and cosmetics from mass is becoming bridge to luxury. So I think it's just a game of playing catch up to what the consumer also really wants.
The effort is aimed at lowering Love Child's dependence on its own website for 70% of its sales. And as the beauty business grows, Masaba's next big bet is fine jewelry.
Fine jewelry is where I'm placing all my bets. I really think that suddenly you have this extremely exciting young woman or a middle-aged woman or a slightly older woman who's saying that I no longer want to save up and buy a big mega piece of jewelry for my wedding day, but instead I want to buy smaller pieces that I can actually wear day to day, and you invest in things that excite you on a daily basis. And I think fine jewelry is going to be the real growth, where real growth will be unlocked in the next few years.
While Masaba didn't disclose specific numbers, she says Love Child could soon rival or even overtake her apparel business in turnover. These aggressive moves come with a purpose. Masaba wants to achieve in 5 to 10 years what legacy luxury designers did in 20 to 25 years. In Mumbai, Shilpa Ranipeta.
That's Masaba's makeover. But in other news, SoftBank has reported a solid set of numbers, with the company posting a $19 billion gain on its Vision Fund. It is also announced that it has offloaded its entire stake in NVIDIA for more than $5 billion. Rashna Dhanrajani joins us now with more details on this. Rashna, take us through SoftBank's plans and why did they cash out of NVIDIA?
Right. SoftBank's exit from NVIDIA marks another bold move by Masayoshi Son. He's cashing out of the world's most valuable AI chip maker just as he builds his own AI ecosystem. Now, this isn't the first time SoftBank has walked away from NVIDIA. Back in 2017, the Vision Fund was among NVIDIA's earliest backers, building a $4 billion stake before selling it all out in 2019 and missing the historic rally that followed. But this time, the story is different. NVIDIA's meteoric rise has already helped power Masayoshi Son's comeback, and it shows in this quarter's earnings as it drove SoftBank's profit to a record 2.5 trillion yen, or that's about $16 billion. That's far exceeding the market expectations. And so this sale worth $5.8 billion comes alongside record-breaking earnings. The company's Vision Fund posted a $19 billion gain, held by soaring valuations in OpenAI, Oracle, and PayPay. SoftBank's total revenue rose to 3.7 trillion yen, while pre-tax income more than doubled from last year. The stock has also been on a tear, jumping 78% in 3 months, its best performance since 2005. And in a move to attract more investors, SoftBank has announced a 4-for-1 stock split effective January 1st. Now, Sun is putting those NVIDIA gains to work, committing $30 billion to OpenAI, $6.5 billion to chipmaker Ampere, and working with TSMC on a $1 trillion AI manufacturing hub in Arizona. For Masayoshi Son, this is more than a profit story. It's a pivot from investing in AI's biggest winners to building the infrastructure behind it. SoftBank is betting that this time the AI boom will have their name written all over it and not just as investors.
All right, Rachna, many thanks for taking us through those details. And with that, it is a wrap on this edition of Startup Street. From Shruti, Ritu and me, goodbye and many thanks for watching.
But I want to go across to just 1 second, Rashid. We'll come back in just a couple of minutes. If we have our colleague Shivani, who is joining us live from outside the Red Fort, where the blast happened yesterday, in which 8 people have died. Shivani, take it away. What's the latest? What are police sources telling you? What are the investigators telling you? How far have they gone in trying to solve the maze, or who was it behind the attack yesterday?
Yeah. So, Zaka, through the day, we've been picking up what agencies and police sources have been telling us. One, that ammonium nitrate has been found abundantly at the site here where the blast took place. So that is, of course, pointing the connection to this entire Faridabad module that has been busted by the agencies just in the run-up to this blast. What remains to be seen, though, is whether the DNA samples of Dr. Umar Nabi, who's a suspected bomber in this case, in the car, in that I-20 car, whether his DNA samples via his family matches, because there is, of course, yet his remains are yet to be identified. What we do know is that his car was parked for roughly 3 hours, right where I am, close to the Suneri Masjid parking. And he didn't get out of the car. That is what the police is saying after scanning the CCTV footages. He didn't get out of the car for 3 hours. So why was he sitting in the parking and in the car? And then he took his car out around 6:49. And in a few minutes from then, there was a blast that took place at the red light right in front of Red Fort. So of course, even as the FSL teams, etc., have collected evidence, they are going to go through the lab formalities. But what we are being told is that there is very much a link that is coming to light between what transpired at the Red Fort and what could be this Faridabad Al-Falah University module. My colleagues Arunima, Anshul, Ananya and others have also been, collating a lot of this information on record. We only know what the Home Minister has said after doing the review meetings earlier today, which is that the instructions are that each and every one of the conspirators and perpetrators should be brought to book. For more on that, let me go across to my colleague Arunima, who's joining us. Arunima, which way is the investigation focusing on?
So the National Investigation Agency has just taken over the probe from Delhi Police, also from Faridabad Police, Jammu and Kashmir Police, as well as Uttar Pradesh Police. Even though individually Jammu and Kashmir Police, Faridabad and Uttar Pradesh Saharanpur Police will continue to do their own probe, this all now seems connected, and therefore NIA will look at their investigation as well. It's possible that more than one FIR is registered, not just for the Delhi car blast case, but also for radicalization, for putting up posters, that Naugam Srinagar case that Jammu and Kashmir Police is probing. Investigators essentially are focusing on 4 questions. First and foremost, who's the handler? It is suspected that there was a Telegram, radicalization module, more than one platform on Telegram that was being run. And all these people who have been arrested, as well as Dr. Umar, who's been killed, they were radicalized on that platform. So first and foremost, even though it is suspected that Jaish-e-Mohammed was behind this attack, who was it that was behind this? Who's the handler? That's question number 1. Second, from where was the explosive procured? That's a very important question. My colleagues Anvit and Ankur have picked up after speaking to their sources that RDX could have been used. Now, ammonium nitrate prima facie is what police told our team. But if any trace of RDX has been found, then it changes everything. RDX is a military-grade explosive. It can't be bought off the shelf. Ammonium nitrate can still be procured because it is in urea, it is utilized for agriculture purpose, but RDX getting smuggled into this country is an act of war, so to say, from across the border. Question number 3, are there more people? At least one more doctor has been detained. So there is a possibility that this module is still getting unraveled. And number 4, if forensically it is established that Dr. Umar indeed was the Fidayeen bomber, then who gave him that instruction to carry out this Fidayeen blast and how?
Exactly. Absolutely. And on that, we've been getting you more of this entire Jaish-inspired module that seems to be behind this entire blast. Our investigations editor Manoj Gupta has been piecing together this Maulvi Irfan, who has been caught in the web of the agencies after those posters came to light in Naugam in Kashmir. And then this cleric was brought to the fore and investigations were conducting. Now this cleric is believed to be at the heart of the radicalization that has gone on of medical students, even in government medical institutions, both the ones that are in Kashmir and also, of course, the likes of Al-Falah University in Faridabad. This cleric Irfan is believed to be the one who was inspiring these medical students who later turned on to become doctors to carry out these attacks. And there is a definite imprint of a Jaish style, old school Jaish style Fidayeen attack module that has come to light. It seems there was an attempt to show the ability to conduct such blasts right in the heart of the national capital. For more on this, let me go across to my colleague Anshul, who's also joining us. Anshul, a lot of the investigation direction is going towards this Maulvi Irfan, who seems to be the primary radicalizer and also in contact with handlers in Afghanistan, apparently.
Well, definitely, but this still could just be the tip of the iceberg. There could be more such Maulvis who could have been carrying such operations across the country at this point in time as well. And there is no way to find out that exactly who are the people who are involved in this. And that is the reason why, even as we are speaking at this point in time, the investigation into the ammonium nitrate that was recovered from Faridabad, which was recovered approximately 7 to 8 days ago. The 350 kgs of ammonium nitrate that was recovered 7 to 8 days ago. And even after that, we are seeing that still those raids are underway. How many more people are involved? What is the exact involvement of this university? This is something that is being looked into. 6 more people have been taken into custody. The HR of this university is under the lens of the investigators, because he is said to be that one person who has played a pivotal role in bringing people from Kashmir all the way over here to the outskirts of Faridabad, and then eventually trying to go ahead and somewhere or the other brainwash them and get them to do the jobs that they want them to do. So this is definitely a large nexus, a sort of a new nexus that has come to the fore. The manner in which the bomb blast has been, or the blast has been has happened, that is a new modus operandi that has been seen. The manner in which the explosives were used, that is yet again a fresh sign of a new modus operandi that has been that has come out. So definitely there are a lot of first times that has happened in this entire incident, and that is the reason why the investigators are taking their time to come to a conclusion before saying anything on record. Remember, even till today, the only official version that has come in from the police was approximately an hour after the blast had happened, and the Delhi Police Commissioner had given a press brief. Post that, there has been absolutely no press briefing or no official statement or on-record statement that has either come in from the Delhi Police or any other agency for that matter. So definitely there are a lot of reports.
No, so NIA has taken over this investigation over now. While there has been no official clarification on exactly who is behind the blast and exactly who are the individuals linked, if there is a link to the Al Falah University cash recovery as well. But there are a lot of signs that are pointing out to what has transpired. And because the UAPA has been invoked, I want to go across to my colleague Ananya on that. Because the UAPA has been invoked, the Explosive Act has been invoked, it goes us to show that certainly terror has not been ruled out, and investigations are currently looking at this. At least at the investigation stage as a possible terror attack.
Well, you know, it's in fact a terror attack, because it's make it very, very clear that Section 16 of the Unlawful Activities Prevention Act, which is pertaining to, in fact, which is defined as the terrorist act, in fact, the Unlawful Activities Prevention Act of the UAPA has been invoked along with that Section 18 of the UAPA. Both these leading to, in fact, at least a life term and the maximum punishment going up to a death penalty. And this is, in fact, why, such stringent, laws have been imposed. In fact, UAPA is a law wherein which the accused can be held under police custody for over 30 days in one go. The investigators can ask for their, custody, and that is something that makes it very, very crucial. So definitely a terror attack is something that has not been ruled out at all as far as this investigation goes, and a watertight case is, would be prepared by the investigators as far as this particular blast is concerned, because it is only after 2011 that Delhi has seen such a incident happening again, and this is something that the investigators would be worrisome about. They want to put out a very watertight case as far as things are concerned.
Absolutely. Suffice to say that there are alarm bells ringing as far as the security apparatus is concerned. Yes, a cache of nearly 3 tons of explosive material was captured and discovered, but something has gone amiss for this particular suspected bomber, Dr. Umar Nabi, to manage to roam around the national capital region with suspected explosives and to even be able to detonate it. Whether it was intentional or it went off before the planning, that remains to be seen as well, because the sequence of events suggests that there may have been some plan to take it to a different location. He had stopped at a red light here at the Red Fort, in front of the Red Fort, and it went off. Was it planned or was it unintentional timing? Remains to be seen. But we're keeping a very close watch on all of these developments, even as we are waiting for the Prime Minister's arrival back into India, and tomorrow certain important cabinet meetings are also lined up. Back to the studio.
Well, Shivani's at the spot. Let's try and piece together, viewers, the route, because investigators have been able to map the complete route of the Hyundai i20 that was used in the Delhi blast. At 7:15 a.m. it's been spotted somewhere in Faridabad. But after that, the driver, who now we know is a suicide bomber and also part of the Faridabad module, Umar Nabi, was caught on CCTV camera at the Badarpur border. 50 CCTV cameras across the capital have now tracked this. The suspect vehicle was first spotted on camera at the Faridabad at 7:20 a.m. in Faridabad, and then after the timeline around 8:15, it is entering Delhi via the Badarpur border. 20 minutes later, the car is captured on CCTV again. This time it is seen at the Okhla petrol pump. Then further, by 1 p.m., the car was captured, or the vehicle was captured near Kashmiri Gate. Later seen moving through Daryaganj and eventually reaching the Suneri Masjid around 3:19 p.m. The car was parked between 3:19 p.m. and 6:48 p.m. at that very spot at the Red Fort parking. Moments before the explosion, the car, because at 6:52 p.m. the car started, Umar was the only guy who walks in, gets into the car and then drives it out right to the signal in peak traffic. That's when the blast occurs near the Red Fort. Investigators now reconstructing the entire route using CCTV footage and also trying to figure out where the car was in that intermediate period between about 8:20, 8:25 a.m. where it was spotted at a petrol pump and till about 1 p.m. at Kashmiri Gate. Where was that car? And why was it parked for 3.5 hours at the Red Fort parking lot? And who was behind the wheel? That now has been established as it was Dr. Umar Nabi, who was part of the Faridabad module. So now how this Faridabad module was busted, that's another story, viewers, and this becomes very, very interesting. The investigators, especially the Jammu and Kashmir police, stumbled on a poster that was put out somewhere around the 17th and 18th of October 2025 in Naugam, which was a Jaish poster. That poster and investigation into that led them to posters supporting JEM that was surfacing, and further in October itself in another region of Kaziganj and that area where Dr. Adil was seen putting out the similar posters. That led, and these investigations between 28th October and November 3rd, OGWs or terror workers were arrested in Naugam, who pointed and said, we did it at the instruction of a Maulvi Irfan, who is a Maulvi at the Naugam mosque. Maulvi Irfan then says that I am close to Adil, and he also names another person, Zamir Ahangar. Adil and Zamir Ahangar, when questioned, 3rd and 5th November, when cops knobbed Maulvi Irfan. Irfan used to be a paramedic at the Government Medical College in Srinagar, where Umar, Adil and Zamir, they were all students along with Muzammil. They were his students. So he's been in touch with them all through. He reveals leads of these doctors further, and then the Faridabad module where Adil is picked up from Saharanpur. Adil then reveals the whereabouts of Muzammil and Muzammil's accomplice or cohort or companion, that is Shaheen. And Umar Nabi is part of this group. November 5th to 7th, joint teams nab Adil Ahmed from Saharanpur. Adil had fled from GMC Anantnag, and AK-56 rifle recovered from his locker. Then 6 to 8, Maulvi Irfan reveals the role of another aide, Zamir Ahangar, who leads the probe to Dr. Muzammil in Faridabad, and the Al-Falah University comes into the picture. Raids are conducted November 9th at Faridabad residence, leads to a massive seizure of ammonium nitrate, timers and detonators. There is another accomplice, Ishtiaq, who is living in the Fatehpur Taga region, very close in another village in Faridabad, not far from Al-Falah University, where nearly 2,900 kilograms of ammonium nitrate is recovered. Also, the teams nab Muzammil's friend Shaheen from Lucknow, and an AK-47 is found in her car, and it's linked, and they know that these people are all connected to each other. The cops begin search for Muzammil's associate Umar Nabi, who's actually fled. He is suspected to be the driver of the blast car in Delhi, and 10th November in the evening, Umar Nabi goes ahead and conducts a Fidaiin attack. Now, this entire web, the core person in the center of it all is this Irfan, who is a Maulvi, who is a radical. He is also in touch with the Jaish-e-Mohammed and in Nangarhar. And after the 2021 incident, he has, and the takeover of the Taliban, the old contacts and the old routes were established.
Investigators are still finding out how the Ansar Ghazwatul Hind comes into play, especially after the neutralization of Zakir Musa. Irfan was in Srinagar around the time of Zakir Musa. We'll pause it at there, but there are more leads that will emerge when we'll continue to track those as far as the Delhi 10-11 case is concerned. We've kept you ahead all this while, and you can trust us to keep you ahead with first, confirmed and genuine news, no kite flying, viewers. Now, Zaka, let's switch focus and head back to the exit polls where the numbers are further trickling in, and will they be updated, changed based on the polling numbers of phase 2?
So we have declared so far phase 1 numbers, which is 121 seats. We will declare in 15 minutes at 7:30 the phase 2 seats that polled today. Our pollster Umesh Jha has just gone down. He's crunching the numbers even as we speak. Just a quick reminder of the poll of polls, the other pollsters who have also put out their numbers, and you can see from Matriz to JVC, People's Insight, People's Pulse. So on the lower end, we're looking at 130. I don't see anything that's lower than 130 for the NDA alliance. And at the higher end, we're looking at 165, 167. So essentially, you're looking at a range of between 130 to 167 for the NDA. For the India Alliance, at the lower end, I'm looking at 70, which is the first poll, the Matriz poll, and at the higher end, 108. That's a fairly big, almost 40-seat variance there. But essentially, directionally, all the exit pollsters seem to be predicting the direction of the poll result, which is that it'll be a reasonably comfortable win for the NDA. The Mahagathbandhan will be losing the second election on the trot in 2020 and now again in 2025. Rahul Shivshankar, Nistula Hebar, Rashid Kidwai, Rahul Verma and Nalin Mehta here in our studios.
Well, Zach, one will have to look at the poll percentages also, what the vote shares of all these various polls are. But the one that I've looked at, PMark, seemed to suggest there was a 3.5% to 4% difference between the NDA and the MGB. And if that is the case, that means there is significant consolidation in favor of the incumbent alliance, and that will be curtains really for the MGB, and they'll have to go into introspection.
Why do you think this is the case? I mean, this is turning out to be a far, I don't want to use the word easier, but seemingly an easier election.
A huge number of voters, if the vote share sort of increases for one by 4 or 5%, then there's a no contest really.
No, in this situation, this is a different election from 2020, which was under the shadow of COVID.
Correct.
So you could also see that people may not have wanted to come out to vote, several didn't. Then secondly, Chirag Paswan really dented the NDA, at least the JDU, in 32 seats. Where their margin, the margin polled by LJP candidates, was more than the margin of defeat of the JDU candidate there. That is no longer a factor here, and you had Mukesh Sahni on this side finally deciding to go here. The NDA was all together. Everybody who fought the 2024 Lok Sabha election, they were together in this. So it largely went to a bipolar sort of a situation. It was an either-or thing, and I think people spoke to their support basis, and they've come out to vote.
To add to the Chirag Paswan point, and Nistula was saying, out of 135 seats where his party contested last time, 32 they got more votes than JDU, but in 26 of those 32, the LJP got more than the margin with which the JDU lost. So that was the magnitude of difference. Now he's on this side.
They cut the votes, and now that's gone. But the MJP had a chance. They were on the ground early. They were drumming up support. 3-4 months, there was a huge amount. Did they time it too early? Did they peak too early? Or were they pulling the carts in different directions, Rashid Kidwai? Because these numbers, they will not be very happy with.
Absolutely. I think if an incumbent government, and that too a chief minister who has been there for past 20 years and wins with a greater margin, I think it's a very poor reflection on the the quality of opposition that's there. I think we need to look at how the NDA got smaller caste and smaller parties together, and that's also a very interesting story. I think the though they call it Mahagathbandhan, but Mahagathbandhan lacked that kind of diversity that the NDA has. There were a lot of work and rework was there last minute. Mukesh Sahni, I was just looking at, not to contest again Anand this figure, but in that India Alliance story, you know, there is no mention of Mukesh Sahni and VIP.
Yeah.
How is he doing? I mean, we're talking about
he was
left,
considered
we're
so
talking about
important
Congress,
that he's going to be
precisely,
made
a deputy chief ministerial one, and also talk about, you know, economically, you know, weaker sections. So there are, you know, glaring, you know, gaps and holes in some of the surveys and projections, and we must wait till 14th.
They did say we'll give you the deputy chief minister's chair, but the Congress didn't like the way he conducted himself.
That's a different story. But is
sidelined
he
him.
getting zero? Is he getting one?
Yeah, zero. As per at least for the first phase, zero.
So I see there is a lot of bandwagon approach also in the exit polls.
Which is what?
In the sense, bandwagon approach is quite.
You mean the horse is carrying the cart or the cart is carrying the horse?
Okay, Rahul, yeah.
So I think, again, now at this moment, most pollsters are basically giving advantage to NDA and disadvantage to MGB. So we are discussing why MGB might have got it wrong. One thing which I think the opposition didn't do well is basically seat coordination, right? On 11 of those seats, they are so-called having friendly fights.
There's nothing called friendly fight.
Second, like I think rather than peaking early, and maybe that's true, but what happened in the crucial weeks before nomination is that the opposition was not able to figure out who their candidates are. And so they were firefighting on the number of seats that they want to fight rather than running a serious campaign on the ground.
Right. Let's go across to a voice that is very, very mellifluous, very young. Maithili, namaste. आनंद बोल रहा हूँ.
नमस्कार, नमस्कार.
कैसी हैं आप? गला ठीक है आपका?
बहुत अच्छी हूँ जी. अब मैं रिकवर कर चुकी हूँ.
रिकवर कर चुके हैं. चुनाव में तो आपकी आवाज ही बैठ गई थी, इतना प्रचार करना पड़ा. पर बताइए, दरभंगा में सब ठीक है? सियाराम कहेंगे चुनाव के बाद?
सब बहुत सुंदर. जी जी जी.
कैसा गया बताइए?
मेरा एक्सपीरियंस बहुत अच्छा रहा और खासकर जो वोटर्स के बीच में जब जा करके उनके मन की बात को समझना, तो आसपास के क्या क्या सिचुएशंस हैं, क्या क्या काम करना है मुझे एक विधायक के तौर पर, उसका एक पर्सनल मैनिफेस्टो बनाना, तो ये सब मेरा एक काम रहा. और लोगों के बीच में जो एनडीए के लिए प्यार था, आशीर्वाद था, वो सब, क्योंकि मेरे क्षेत्र में ज़्यादा से ज़्यादा बुजुर्गों से इंटरेक्शन मेरा हुआ, महिलाओं से इंटरेक्शन हुआ, जितने हमारे यंग वोटर्स है, फर्स्ट टाइम वोटर्स है, उनसे इंटरेक्शन बहुत ज़्यादा हुआ. तो सब लोगों का मन है एनडीए को आगे ले करके जाने का.
बट एक बात बताइए कि प्रचार आसान है कि रियाज? बताइए.
दोनों में मैंने खूब मन लगाया है. रियाज क्या है, उसका जितना भी टफ पार्ट था वो मेरा बचपन से गुजर गया है. जो सर्दियों में बिना सोए आपको सुबह सुबह उठ करके रियाज करना, ये सब बहुत टफ रहा, म्यूजिकल जर्नी भी. लेकिन यहाँ पे राजनीति में जीरो से शुरू किया है, तो शुरू में थोड़ा कठिन लगा, लेकिन अब बहुत अच्छा लग रहा है.
अमित शाह जी आपके लिए प्रचार करने के लिए आए, कैसा माहौल लग रहा है बीजेपी एनडीए के लिए?
सब पॉजिटिव लग रहा है. 14 तारीख को हम लोग बस उस जश्न की तैयारी करेंगे. ऐसा.
हाँ, आप अपनी सीट में जीतेंगी? आपको
बिल्कुल मुझे लग रहा
है?
है. मुझे पूरा विश्वास लगता है.
एक बात बताइए, आप महिला भी हैं, युवा भी हैं, क्या फैक्टर था बिहार में जहां पर लोगों ने बढ़ चढ़ के वोट दिया? किस मुद्दे पर, किस विषय पर? जैसा आपने सोचा था और फिर आप ग्राउंड पे गई, तो फिर आपका क्या अंडरस्टैंडिंग, लर्निंग क्या अलग था? वाज इट डिफरेंट?
जैसे कि मीडिया पे हम लोग, मैं सोशल मीडिया की एक बहुत बड़ी कंज्यूमर रही हूँ. आपने जैसा मेरा जर्नी फॉलो किया होगा, तो मुझे ऐसा लगता था इस इलेक्शन से पहले, जब मैं राजनीति में एंटर नहीं की थी, कि जो जितना कुछ सोशल मीडिया पे दिख रहा है वही सब कुछ मतलब रियल है. हम लोग को वही रियल लगता था. जैसे कि मेरे प्रति विरोध जितना मैंने देखा, मैं बहुत डरी हुई थी कि जब मैं जाऊंगी तो मेरा साथ कौन देगा. लेकिन ऑन ग्राउंड जितने लोग मोदी जी को प्यार करते, नीतीश जी को प्यार करते, ये देख करके लगा कि सोशल मीडिया पे जो चल रहा है वो एक अलग ही दुनिया है. लेकिन ऑन ग्राउंड लोग बहुत ही ज़्यादा मन बना चुके हैं. और फैक्टर्स जैसा आपने पूछा, तो हमारे यंग लोगों को बहुत ही ज़्यादा उम्मीदें हैं जो एनडीए सरकार से. आने वाले समय में बहुत ही कुछ अच्छा होगा और इसको लेकर के सब वोट कर रहे हैं.
पर ऐसा लोग नहीं कहते थे कि नीतीश बाबू थक गए हैं, नीतीश बाबू चला पाएंगे कि सरकार? क्या ये उनकी लास्ट इलेक्शन है, बीजेपी वोट ले लेगी पर उनको मुख्यमंत्री नहीं बनाएगी? ये सब बातें चर्चा होती थी. आपसे कोई पूछता था नीतीश बाबू के बारे में ये सब?
ऑन ग्राउंड मैंने ये ऐसा कुछ नहीं सुना. और ये ओपोनेंट लोग टीवी पे बोलते हैं, ये मैंने सुना है. लेकिन जब मैं लोगों के बीच गई तो बहुत ज़्यादा पॉजिटिव था सब कुछ.
हाँ, पर सब आपसे कुछ पूछते थे या सिर्फ आपको गाना गाने को कहते थे? एक बात बताइए.
सब मुझे
सबने आपको कहा
आशीर्वाद
होगा,
देते थे।
बहुत गाने को कहा
गाना
होगा।
गाए बिना तो कोई छोड़ते ही नहीं थे। सबसे पहले मुझे सुनते थे कि मैं क्या कहने आई हूँ। और सबसे पहली चीज, लोगों के अंदर इस चीज को लेके भी बहुत उत्साह था कि मोदी जी ने मुझे प्रत्याशी के रूप पर अलीनगर में भेजा है। जैसा उन्होंने बोला था कि 1 लाख युवाओं को राजनीति से जोड़ेंगे जिनका कोई पॉलिटिकल बैकग्राउंड ना रहा हो। तो उसमें जब मेरा पहला नाम और एक एग्जाम्पल के तौर पर मुझे अलीनगर भेजा गया, तो लोग उस चीज को लेके भी काफी सराह रहे थे, मुझको और मोदी जी को भी। और ये हम लोग के लिए सौभाग्य की बात है कि अपने क्षेत्र में जाकर के काम करने का मौका मिल रहा है।
अच्छा, एक मैं आपसे जानना चाहता हूँ, एक इंसिडेंट, कोई घटना बता दीजिए जिसकी वजह से आपको लगा हो कि जो मैंने निर्णय लिया वो सही लिया, द डिसीजन आई हैव टेकन इज द राइट वन। सम इंसिडेंट जो ग्राउंड
शुरू के
जो
4
आपको
दिन
याद भी
was
रहेगा।
like,
जी,
शुरू के 4 दिन आई वाज ट्रॉमेटाइज्ड फॉर रियल, बिकॉज नोबडी वर जस्ट, मैं कैसे उस फीलिंग को बताऊं। रोज 4 दिन मैं रो रो करके वापस अपने कमरे में जाती थी कि क्या मैं सही जा रही हूँ, क्या मैं सही कर पाऊंगी, क्या मुझे जो इतनी बड़ी अपॉर्चुनिटी मिली है मैं उसको जस्टिफाई कर पाऊंगी अपने पूरे इस जर्नी में। लेकिन 4 दिन के बाद जो मुझे शक्ति मिली ना, जब सारी महिलाएं मुझे शक्ति देती थी, मैं पर्सनली बहुत लोगों से जाकर के मिली, सबका आशीर्वाद लिया, और वो जो मोटिवेशन मिला ना कि मुझे अपने ऊपर इतना भरोसा हो चुका है कि चाहे कोई मुझे कितना भी विरोध करे, ट्रोल करे, लेकिन मैं अपने आप को अगले 5 साल में अच्छे से प्रूव करके दिखाऊंगी।
आपके गले में अभी भी खराश है, तो आज आपसे मैं आग्रह नहीं करूंगा। जिस दिन आप जीतेंगी, जिस दिन निर्णय आएगा, उस दिन आपसे फिर बात करेंगे, तब आपसे खूब गवाएंगे, तब आपको फिर गाना होगा, तब तक गला आपका ठीक हो जाए, यही प्रार्थना है।
थैंक यू।
ऑलवेज